as its listed entity being all about the studios and production. And then we'll keep an eye on what happens with Thales in the defence space. Thales has said to agree to buy a 35% stake in XL Technologies, a maritime robotics company, and it plans to acquire the rest of that business as NATO meets this week, Guy.
Yep, plenty going on, plenty to factor in. Index level very quiet. Below the surface, some quite significant M&A taking place this morning. We'll track all of that. We'll work out what it's all going to mean. But I think from the get-go this morning, not a lot of action in the European equity space. Nil-nil is kind of where we are right now. The FTSE 100 is barely budging. Some of the action actually in terms of the M&A stories that Anna was talking about in the 250, so maybe watch that market this morning for a bit more action. The Stock 600 going nowhere. I'm not expecting anything from any of these major markets this morning. I'm interested to see what we see in the tech story this morning after the narrative coming out of Asia. But actually, I think the M&A story is going to provide us maybe with the highlights of the Monday morning session. Tom, sectors?
Right now, you talked about technology. That is leading the losses as a sector, down 0.6%, but having been amongst the strongest by the close on Friday in Europe. Basic resources also weaker by 0.5%. Utilities, which had been near the top of the list on Friday, also a little weaker by 0.5%. Autos, so far, top of your list in terms of European sectors and performance, with gains of almost 1%. Travel and leisure also up by 0.8%, Anna.
Yeah, looking for movement then in some of the individual stock names that we were talking about. We have some of them opening up already, actually. And so in the defence space, Thales is down by 1.4%. Exail, which is the business that Thales is buying 35% of, and then maybe the rest of at some point, a maritime robotics company, that stock is up by 2.9% this morning. Both of those are French listed, so that's a defence deal. We talked about defence M&A on the horizon. That is certainly an interesting place to think about where more M&A opportunities might come to fruition. ITV, interestingly, not really moving all that far on the back of the deal news, it would seem, up around 0.2%, so not much movement there. And EasyJet yet to open. It closed at 558.20, and the fifth offer from Castlelake coming in at lots higher than that. So we would expect it to go higher, but will the market still continue to be a little bit skeptical about sort of, you know, whether this can actually come to pass?
August the 3rd is now the next date in terms of the kind of the put up or shut up deadline, so that's obviously still looming. But yeah, 690. So in theory, we could be up by 25% this morning.
Yeah,
so we're not going to
subject to some execution risk.
Subject to some exection risk.
Other airlines, others in the travel space are doing quite relatively well. So we'll see. We don't have that print yet on EasyJet. So Ryanair is up 1.7%. You've got AAG gaining 1.5%, and TUI Travel up 3% as well.
Okay.
Oil prices are coming down. So that's another kind of thing to bear in mind.
Yeah, something else for the mix. Let's bring in this Monday morning Obi Ejikeme, who is a global equities fund manager over at Carmignac, and the perfect person to take stock of the global equities trends that we're seeing right now. Obi, nice to see you. Thank you for coming in. It's a kind of complicated picture right now because we've got the overall narratives, we've got plenty of rotations to talk about, whether that's within tech or between tech and other things or between different geographies. Set us up with your overall kind of the overall landscape for global stocks at this point, this Monday morning.
Good morning. I think the big picture story here is how is this year going to finish? You know, we've had a first half of very focused trades around.
You're going to say it's a game of two halves?
It could be, yeah, a game of two halves. Yesterday felt like it was a game of four halves.
Yeah.
Look, I think we've had a first half which has been very focused on one specific narrative, and you know the stocks have done pretty well as a result of that. But I think what's key is who takes the baton into the second half. Is what we saw last week, this sort of like momentum reversal, which felt like a bit of repositioning by the fund management community. Is that the start of a bigger trend, or is it just a one-off? And I think what we should all be really thinking about is, if this trend of AI and the growth story of AI has been the main story of the first half of the year, can it really persist into the second? And if it doesn't, actually, it's quite optimistic because there's a lot of stocks that have been left behind.
So last week, you flagged this, that last week, if you were looking at factors that the market is trading on, that momentum was pretty weak, last week. If we're looking at Stock 600, momentum was pretty weak. And we saw instead the market preferring things that were heavily shorted and some growth, more cyclical names. What do we take away from that experience last week and bring that into the second half of the year?
Look, I think it's a bit more simplistic than that, actually. It was a sort of anti-AI, anti-tech trade, and everything else that's sort of not really taken part in the rally this year, sort of a bit of a comeback. And I think that's the risk for the second half of the year, and primarily because expectations in this AI boom story are extremely high, to the point where we're seeing levels of optimism that we haven't seen for many, many years. And as a result, I think the risk to those stocks remains quite significant. There is no room for disappointment. So what the market did last week is essentially say, we're going to take a bit of chips off the table from the optimistic side and put a bit of money into some of the laggard parts of the market where there hasn't been such a great story.
That sounds really straightforward. You just got to sell a bit of that, take some profits, buy a bit of this. Where it's really, doesn't the whole index just come down if tech gets battered?
No, I think and I think that's where I'm somewhat more optimistic than the average person. I think look, the tech sector and the AI part of the market is a dominant part of the market, but actually I think it's sucked in so much capital that there is actually a risk that as money starts to move out, it goes into so many other areas of the market. And don't forget, there are some parts of the market that really haven't participated. The consumer hasn't participated. We've seen oil prices come down recently.
Yep.
All these things are a net catalyst to stocks which really haven't seen much of a run this year.
So indexes can maintain their current multiples even if we sell tech.
I think we're coming back to a stock pickers market and less of a narrow theme market.
Yeah.
I think actually, because so many stocks have been left behind here, it's actually going to be quite a good news story. So you've seen all the charts of the equal weighted S&P, so strip out the big names, and how it started to turn a bit versus the market cap weighted index. I think that's going to be the story, and potentially the story of the second half, is we go to more stocks, less narrowness, and that could be...
Where does Europe sit in that story?
Well, ironically, because Europe doesn't have as many of the AI-themed stocks within its index, it's been one of the laggards. So the money's been sucked into the emerging markets, which I still think is a good long-term trend. But actually, the relative story here could be some of that money comes back into Europe, into areas where there hasn't been such a buoyant tech theme.
Is that also making an assumption that the growth story in Europe starts to improve, that the consumer starts to look a little bit more resilient? You mentioned lower oil prices and how maybe investors haven't really seen that read across to the consumer space. Is that part of the thesis for Europe as well?
Look, I think on the margin, these are all helpful things. And they've all been headwinds. I mean, we saw when we had the problem around geopolitics and the oil price going up, it was a sell Europe, sell the exporters story. So as a result, actually, if we start to see a bit of a reversal of that trend, I think on the margin, Europe could become more interesting. It's just because these stocks have been sort of left behind. So there's a chance for a bit of a re-rating.
So if we see pullbacks in memory names, which in the second quarter was the area of the sort of most excitement, not the hyperscalers, but if we see a pullback there, should we not think about that as a broad de-risking then? We should see that as more of a broadening of markets. Will we be able to keep our heads and think that, do you think?
I think it will be challenging. And of course, every single time we have one of these little pullbacks, it will feel a bit more violent than it has in the past, partly because these stocks have gone up a lot. And so, I think you have to be selective, and that's what we're doing. We're selectively looking for the names that I think will be the long-term trend, but at the peak of a growth cycle, and that's what we're talking about here. Cyclically, these stocks have grown phenomenally this year. We think they're going to slow as we go into next year. So on the margin, you can't own the same proportion of those stocks as you did when they were growing at the fastest rate. So I think that's all that's going to happen. A bit of money's been taken out of those stocks, and you want to be a bit more selective.
Are stocks going to be the best hedge against tech, or are there other areas of the market that you want to look at? Bonds traditionally have done this, but it looks like the bond-stock correlation story is maybe reversing. What else do I do in a portfolio to hedge maybe a rollover in tech?
Look, I think because the tech narrowness, and I'm being a bit careful about the tech narrowness, the AI tech narrowness. Even within tech, obviously, there's the software part, which has completely done the opposite of the AI part. I think that the problem has been there's so much money has gone into that part, the rest of the market actually is now becoming the natural hedge. The beta of the volatility of all other stocks in the market versus the NASDAQ and the AI sort of theme is actually quite low. So your natural hedge is actually becoming just focused on areas outside of the AI theme.
Obi, give us your thoughts on M&A right now. I'm not sure what conclusions to draw from the wave of M&A that we've got. I mean, a couple of spring to mind, and I don't know which you favour, but UK assets are maybe still too cheap. Is that one of the conclusions? We've got EasyJet, we've got ITV, asset sales taking place there. Or you weave in the defence sector, where we're seeing some deals taking place as well, and this is a broader theme. What do we take away from the M&A sort of flurry that we have this morning?
Yeah, look, I'm going to put M&A and the IPOs all into the same bucket. I mean, this just shows you that there's a level of confidence around the investor market at the moment. And that typically happens when the stock markets are at the high. We're getting closer to later cycle than we were earlier in the cycle. So I think it's all tells us about investor confidence. But, I guess it's back to the theme that we've been discussing this morning. That confidence has been primarily driven by a very narrow theme or thematic within the market, this AI theme. And I think, the fact that the other parts of the market haven't really participated means that I think this is kind of relatively healthy. If it was a full bull market and every part of the stock market was participating in this, I'd be a bit more concerned. But the fact that there's still room to run in other stocks is quite positive.
Specifically on UK equities, is M&A a catalyst that we should be thinking about? If you want to get exposure to UK stocks, how much of that is part of the story?
Yeah, look, the UK stock market suffers from what we don't have, or what we have in other parts of the market. So it doesn't have the growth story. So if it's acquisitions for growth, I think that's a great thematic to latch onto. And that's one of the areas that the UK stock market typically, because it's an income-focused, return-focused market, I think it's where it kind of lacks. So if it's acquisitions for growth, investment in the future, I think that's a good story.
If we're late cycle, why would we rotate into the rest of the economy? If we're heading towards a late cycle, why is the rest of the market going to benefit?
But the bull markets always end with the laggards of the trade or the laggards of the cycle being the best stocks. And so, if we are getting closer to the end of the cycle, you've got to look for the stocks that haven't really participated.
Where do you think the end of the cycle is? How far away do you think we are?
Well, if you were just talking about the AI and the tech growth, you would argue that we're certainly closer to the highs. But I used some examples earlier on. Consumer confidence around the world is near record low levels. You've got oil prices are just coming up high. So actually, there are parts of the market that you could argue that are actually very early cycle. So, it depends how this plays out. If we see the consumer start to recover, oil prices come down, inflation starts to be a bit less of a problem, then actually we could be at the beginning of a bull market in the consumer. So not as late as even I'm suggesting.
Okay, we'll leave it there. Obi Ejikeme, Global Equities Fund Manager, joining us from Carmignac. Quick scan of the situation at the moment. You've got EasyJet up. We'll talk about that in just a moment. The Core 6 looks like this. You are seeing a more mixed picture. Tech is down. You've got ASML under a little bit of pressure. Defence is up. Rheinmetall is up by 0.8%. Let's find out where we are watching this M&A story play out most aggressively this morning. Chloe's got all the details of that.
Good morning, Guy. Indeed, we are seeing EasyJet jumping this morning. We're up more than 10% after accepting this latest fifth bid from Castle Lake. And so this is a takeover offer of more than £5 billion after weeks and weeks of EasyJet calling the approach highly opportunistic. It seems that now the deal was just sweet enough for EasyJet to accept it. And so we are seeing investors react very positively to that this morning, and we're up very strongly. We're also seeing that read across into European airlines more generally. We've got the British Airways owner, IAG, Ryanair and TUI all up in the green this morning. This is obviously a sector that's been struggling quite a bit with higher fuel prices and consumer confidence being knocked down a little bit. But now those oil prices are coming down, and there might be also a bit of enthusiasm around a potential deal wave that might be coming for that sector. And so we're all up in the green there. We're also going to be watching out for another M&A story, which is the Thales and Excel deal. So Thales has agreed to buy Excel Technologies in a deal worth 3.9 billion euros. This is boosting the shares for Excel a little bit. This is a submarine, a drone-making company, marine robotics, etc. But for Thales, we're a little bit weak because potentially the price tag is looking a little bit steep, even though it does make strategic sense. So we've got this happening now. We've also got Continental down a little bit after agreeing to sell its industrial technology unit, ContiTech, to Lone Star Funds at a valuation of 4 billion euros. This is now a streamlined company that is focused only on tires, but it seems That is something that investors are not reacting to super strongly this morning. We're down about 2.6% there. And finally, let's just have a quick look at tech companies here, because all those AI-related companies, tech companies in Europe, are seeing quite a lot of weakness. Actually, we saw a lot of that caution around the sustainability, the durability of this AI-driven rally, and that led to a bit of weakness in Asia that is now spilling over into Europe. And we can see BE Semi in particular down actually more than 7% this morning.
Chloe Melly with stocks on the move this Monday. Coming up, shipping in the Strait of Hormuz shows some signs of recovery days after unexpected U-turns and unexplained U-turns and detours. We bring you the details and the latest next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television. Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to the opening trade. Monday morning, Monday the 6th of July, and this is the picture on European stocks. Flat, really. It's not flat to negative, though. That's what the futures picture had suggested. There's a little more positivity, but it really is pretty flat, isn't it? US futures are pointing a little bit higher. That's catch-up. NASDAQ futures up by 1%. We have around two-thirds of sectors, Guy, in positive territory this morning, led by media.
We'll take the positive story, the ITV narrative. Let's fold in another M&A story as well, and that is surrounding EasyJet. So here's what EasyJet shares are doing right now. We're trading at 617. We're up by 10.5%. The offer price from Castlelake, though, is 690. So we're way away from that. So why is the question? What is the market seeing here that it's concerned about? We've got a takeover offer in principle. Kenton Jarvis looks like he's kind of on board and pushing this. So why aren't we trading at 690? Why are we trading at 615? Let's try and answer that question. Let's bring in Bloomberg transport reporter Danny Lee. Danny, what do you make of this?
It's a real head-scratcher. I think there are one of two reasons at the very least, whether the offer is not high enough for some key investors, particularly when you look at founder Stelios, who has still a huge affection for EasyJet and what he built up over many, many decades. And then you've also got the Competition Commission, both in the UK and in Europe. Where will they land effectively on this takeover approach from Castlelake, a US investment firm? They're not European citizens or European entity, and they will need a partner in all of this. So at the end of the day, whether the market is reading this share price jump of 10% as this could still have more hurdles with this takeover in principle offer is a real question mark. So I think there is still a lot that the market and investors and shareholders are looking to wait and see, have more clarity on over the next coming month as we do get to that next put up and shut up offer on August 3rd.
Yes, interesting then. Does that take us some way to answering the question around what happens, what needs to happen to actually get this deal done then? Danny, you've referenced a few things there, getting key shareholders on board, satisfying regulators, bringing in or perhaps solidifying the position of these European-based individuals who've been brought into the mix, former EasyJet employees, I think, in one case, to try and get this over the line. That's still quite a long list, isn't it?
Yeah, well, I think when you look at the now and until then, we will see Castlelake do its due diligence. I think they will have taken already a close look, and they've already got experts like the former EasyJet executive Peter Bellew on board to help steer and guide them. But you know, as you said, there is still a lot that raises questions about who exactly Castlelake may partner with. But at the end of the day, the momentum in the European airline M&A space is quite significant. We've already seen the likes of Lufthansa and Air France, KLM, be very active with the likes of ITA, SAS Scandinavian. We've still got TAP Air Portugal still yet to be resolved. And so with the likes of EasyJet coming into the fray and the prospect and the overhanging question of the future of EasyJet as an entity, there's a lot that remains to be seen.
Okay, so Danny, what do they do with it? I spoke to Carsten Spohr a few days ago. I spoke to Luis Gallego a few days ago. They both run Lufthansa and IAG. I spoke to Ben Smith, who runs Air France. They're interested in bits of this business. Is that the future of EasyJet? Is this a breakup now?
I think when you look at the bigger rivals who are circling at the end of the day, I think that the kind of conclusion is EasyJet is more valuable as a sum rather than as a whole. When you look at how you can carve out particularly the UK and the potentially the Swiss parts of the business, and you know, maybe IAG could be interested in just the continental Europe parts aside from Switzerland, then you could see someone like Lufthansa or Air France KLM looking at other parts to shore up its parts of the business where it's weak in Europe and in the UK. You do see a lot of the European airlines, the larger European airlines, looking at the attractive slots, the runway slots in Europe that EasyJet has access to, and potentially that order book. There's a big question around this huge order book that EasyJet has, over almost 400 aircraft, and then obviously its fleet size of around 350 aircraft. It's a big size, and with the supply chain pain you've seen in the airline industry, and also just how hard it is to get new aircraft, I think for these larger carriers, they'll be looking quite excitedly at the prospect of maybe breaking apart a really successful European budget carrier.
Danny, thank you very much indeed with that update, and we'll see, of course, how that potential deal progresses. Danny Lee with that offer being accepted, at least in principle, from EasyJet Castlelake, around $5.2 billion US. Meanwhile, oil prices, and this was part of the story, of course, in terms of the challenge for EasyJet, oil prices are fluctuating this morning in a narrow range as flows through the Strait of Hormuz continued, and OPEC Plus signalled higher supplies. Let's bring in Stephen Stupczynski, Bloomberg's Asia energy reporter and team leader, I should say. Stephen, where are we in terms of recovery of tankers through the waterway? What have we seen over the weekend? What does it tell us about the appetite in terms of the risk appetite of those shipping companies? Where do things stand currently?
Yeah, I mean, at the beginning of the weekend, there were some fears that maybe you would see a tightening of Hormuz transit because we had some unexplained U-turns on the Omani route out of the Persian Gulf through Hormuz. There were also reports about how Iran was sending radio transmissions that the strait is closed only to their route. It's open, and you need to have permission to go through, which maybe would have scared or spooked some captains or suppliers or owners to kind of get their ships away. But then we saw some more ships go through the Omani route yesterday, and things are kind of status quo. We are not, you see this chart on the screen, we're not nearly anywhere towards a pre-war level, but we are higher. We're elevated since the U.S. and Iran signed their interim peace deal. And I think there is an expectation that we will continue this gradual increase upwards. I think the fact that we're sort of in this level, we're higher, not super high, but trending higher. This does indicate potentially some ease in the market. I think there is some expectation that this will continue and ramp up as more ships come to the region. But of course, we're going to have to really wait and see carefully. I would characterize the ship owners and those around are cautiously optimistic. You're not seeing a rush, but you are seeing more ships go through than they normally would.
I know we've got some interesting reporting as well, Stephen, around the UAE and its ability to shuttle some of its product out of the Strait or out of the Gulf via the Strait of Hormuz to other vessels that are waiting. Interesting, using some of the tactics that we've seen by some of the more, the dark ships around the world, using some of their tactics to get through the Strait during times of war, during times of tension. I guess this speaks to the resilience of the flow, even though it was much reduced during the time of war.
Yeah, I mean, I think that's a very interesting thing to point out because, they adopted these new tactics. They figured out ways around it. And while, we had the chart on the screen a moment ago, those are ships that we can see. There might be a lot more dark transit happening that we just aren't aware of right now. And that was the case for many weeks in the war. ADNOC was shuttling in and out its vessels, all dark, same, not just oil, liquefied natural gas as well. They were getting it in and out, but not just are we talking about ships? These companies have found other ways as well. I mean, you have Saudi Arabia also using its east-west pipeline, kind of shipping more of its oil into the Red Sea and through the Bab el-Mandeb Strait as an alternative to get its oil flows to its Asian customers. So when you take those alternatives, you take the dark shipments, and then you take the flows that we can see, we are painting a much brighter picture. There are some suppliers that their output, Saudi Arabia, for example, is much nearer to the pre-war levels than we were weeks ago because of these alternatives, because they're allowing their super tankers to go through Hormuz again. So I think the market is pricing that in, and that's why oil prices are back down to those pre-war levels for both Brent and WTI.
Yeah, 71.85 on Brent right now. Stephen, thank you very much. Stephen Sapchinsky, Bloomberg's Asia Energy Team Leader. And interesting then that OPEC Plus over the weekend stuck to its plan to raise output, although, some of that's coming from the Gulf, and we do and don't have a handle on how much is coming out with their transponders. But some of that's supposed to come from Russia as well. I mean, Ukraine has been taking aim at some of that infrastructure, so that's certainly something to watch.
But apparently we're heading for a glut. A lot of oil potentially on the market, touching that kink in the curve. We'll watch that very carefully. What have we got coming up?
We're going to focus on AI in the UK specifically. New report out of HSBC. This is Bloomberg. The frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes.
more danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
What happened was you were up.
Happy Monday. This is the opening trade. We are 30 minutes into today's session. You're up 0.1% across the European benchmark. So building on the record highs that we got by the close for European stocks on Friday. Very strong session, or at least a strong session, I should say, over in France, with the CAC current adding 36 points, up 0.4%. Also some strength here in the UK. The FTSE 100 up 37 points, up 0.3%. Travel and leisure is certainly playing its part. The DAX gaining just 39 points so far in the session, Guy.
Okay, so a little bit of momentum when it comes to the index levels, beginning to pick up a little bit of pace. 378 up, 207 down. So a reasonable ratio, certainly on the upside, but volume remains light. We are missing the United States. The US will be back a little bit later, maybe to provide some guidance. The overnight story out of Asia, weakness in the tech space. And you can certainly see that on the Stock 600. But at the upper end of the Stock 600 and the broader markets, you've got some really interesting M&A stories as well that are worth focusing on. EasyJet is one of them. It is up this morning, but it's not at the Castle Lake offer price, so that is signalling maybe the merger arbitrage kind of story still suggests some risk is out there that this transaction won't happen. We're trading at 611, but we are incrementally continuing to push higher and higher. XL is being taken out by Thales. That stock within the French market up by nearly 4%. And Leonardo, the defense space is up this morning, but Leonardo is outperforming. And the reason appears to be that we have reports in the Italian media this morning that Italy is maybe looking to up its defence spend, and that is being factored back into obviously one of its big primes, which is Leonardo. It is up by 4.4%, Anna.
Yeah, important week for defence with the NATO meeting taking place. Let's get an update, though, on some of the other stories we're following this morning. Chip stocks in South Korea whipsawed in today's trade ahead of a crucial week for tech investors. Samsung is set to report preliminary earnings tomorrow, while SK Hynix is seeking to raise $29 billion in an ADR listing. That's due on Friday. EasyJet, as we've just been hearing, has agreed in principle to a takeover offer of more than £5 billion from Castlelake, which swooped in as the UK budget carrier was reeling from soaring jet fuel prices and suppressed demand after the Iran war. So this fifth offer seems to have been accepted, but the stock not trading at the offer price just yet. And over in football, the US star striker Folarin Balogun will be allowed to play against Belgium after FIFA reversed his one-match ban. Bloomberg understands it follows a phone call between President Trump and the FIFA boss, Gianni Infantino. Belgium's team says it's, quote, astonished by FIFA's decision and is reviewing possible options to appeal. Tom.
OK, let's turn to tech right now. Ireland's economy is uniquely dependent on jobs from US tech companies. More than 6% of the workforce is employed in the tech sector, higher than the EU average. But now many, like Meta, are culling jobs as they invest in AI, creating widespread employment anxiety. Joining us now is Olivia Fletcher, our Dublin Bureau Chief Reporter, who's been looking at this for us. Olivia, so concerns about what AI is doing, the investments in AI by some of the big hyperscalers, and Meta's example, of course, and what that does to the jobs market in Ireland. How exposed is Ireland, is that nation and its economy to AI disruption?
I mean, yeah, ultimately it is more exposed than a lot of other countries. And the reason that is because, like you say, there's this kind of informal arrangement that Ireland has with a lot of these multinationals. You know, over the past few decades, companies like Meta, Apple, Amazon, Google have all set up in Ireland. And, you know, they pay a lot of tax here, but also in return, you know, they really boost Ireland's economy. You know, without them, Ireland would be in a fiscal deficit. And, you know, they also have brought thousands of jobs. What's changed in the last few years is that, you know, a lot of these companies have kind of been restructuring. You know, after the pandemic, a lot of jobs were cut at these companies. And, you know, the companies kind of attributed that to overhiring during the pandemic. But you know, in the last year or so, a lot of jobs that are being cut is because, you know, these companies are saying that they're investing billions of dollars worth into AI efficiencies. So they're no longer going to need certain roles that Ireland happens to have a lot of. Content moderation, legal, trust and safety. You know, those are the kind of roles that are being impacted that Ireland has a lot of. Obviously, it has some core engineering jobs, although perhaps not as many as, you know, LA or Tel Aviv. And so, you know, it's hugely worrying for the Irish economy.
Okay, so we're then wondering how Ireland's labour market will be impacted by all of this. Will there be more unemployment? Will there just be churn? And I guess the government is going to be focused on this as well. What can the Irish government do in this context?
Yeah, I mean, the Irish government produced a strategy in the last few months to try and figure out how it's going to, you know, kind of combat this issue. It's probably going to be one of the first governments that's having to deal with this at quite, you know, the significant scale that it is. You know, in the report, the kind of key takeaway was that it wanted to reskill and upskill, and, you know, to try and create that next kind of stack of higher quality research and development jobs that Ireland would like more of. But also on the flip side, Ireland wants to kind of see this as, you know, as a benefit as well. Obviously, it recognises that there's going to be disruption, but also it really wants to try and harness this opportunity. And, you know, it's hosting this summit in autumn. It's inviting CFOs like Sarah Fryer, we've reported this morning, from OpenAI. And, you know, these companies, you know, we've reported last year, for example, that OpenAI and Anthropic actually are expanding in Ireland. And, you know, that is with some kind of core engineering roles. So, you know, there were kind of two sides of the coin. Ireland probably will be impacted by a lot of these jobs, but it really has to try and climb up the stack and, like, create these next kind of high-value jobs. And, you know, whether it can or not is another question, but it's really important because it just cannot be understated how much Ireland relies on these companies that have totally transformed the economy. So it really needs to kind of up the game and kind of create this kind of next level of jobs.
Okay, Olivia Fletcher, our Dublin Bureau reporter, thank you for that. Meanwhile, here in the UK, startups raised $17 billion in venture capital funding during the first half of 2026, marking the strongest opening to a year since 2022. That is according to new analysis from HSBC, Innovation Banking, UK and Dealroom. AI startups raised $12.6 billion, setting a new annual record in just 6 months. Joining us now is Emily Turner, CEO of HSBC Innovation Banking UK. Emily, thank you for joining us. So we have an update. We have significant inflows and investments, particularly in AI. Does the momentum continue? What are you seeing?
Yeah, this is a great time to be in the innovation economy in the UK. When I think about the $17 billion that you just referenced, there's really two parts of it. One is scale, and that's AI, as you mentioned. Two is maturity. Not only is it that we're seeing scale in the number of deals, but we're importantly seeing scale in the size of deal. For many years, there was a question around, could the UK support larger and larger deals? And we've seen that. In the first half alone, we saw 28 companies raise over $100 million, and 4 companies raise $1 billion. And it wasn't just $1 billion for late-stage companies. We actually saw the first seed-stage billion-dollar raise in this market, which puts us on the stage with every other market in the world.
Yeah, I think you're referencing ineffable intelligence with that seed round of over $1 billion US. How reliant, though, are we on dollar funding still for these deals?
So at the end of the day, entrepreneurs need funding, and funding is globally mobile, and I think that's a good thing. And so yes, at seed stage, we've seen 77% of rounds led by UK-based investors, but it goes to only 16% if you look at 250 plus. So there is indeed a real tailing off of the UK ability to participate and to lead rounds as you go later and later, and importantly, larger and larger. That said, the fact that money is coming in speaks to the quality of talent, the quality of businesses being built here, and their ability to scale.
Is the second derivative changing? Is this accelerating? I
definitely think this is accelerating, the trend that we're seeing. I think we're seeing that in two ways. So one is if we look at the UK market, 68% of funding came from large deals. If we look at the US, that's 91%. And we're moving in that direction. So I think in the UK, we have to assume that we're moving in that direction where a larger number of large deals happen and they are at larger and larger amounts. And so that will create more and more concentration in the market, but the market will grow across it. Two is the trends that we're seeing globally, meaning deep tech, AI, really research and discovery driven companies, that plays to the strengths of the UK, be it in deep tech, areas like quantum, as well as in things like biotech and importantly AI.
How much of this is university related?
So the UK is, universities in the UK are a huge strength. We've seen over the past few years, 20% of companies raising venture capital coming out of UK universities, which is a real standout on the global stage. Importantly as well, we have some of the best universities in the world. That said, universities are not the only place that we see startups coming from. And one of the key things back to your earlier question around is this continuing. We're seeing what I think of as founder factories. So if you take a company like Deliveroo, 57 new companies have come out of people who came from Deliveroo. We're seeing the same thing with DeepMind. Tom mentioned Ineffable. The founder there comes out of DeepMind. So more and more we're seeing companies not just have great outcomes themselves, but the founders and the employees, not just the founders, have learned the skills, have proven themselves, and they can attract the capital to then go after the next company.
Emily, is AI sovereignty, is it a thing that is discussed at this level, at this size of business that you're talking about here? I mean, Tom was recently in Paris, and a lot of executives quite alarmed by the way the US administration had been managing certain rollouts, certainly around Anthropic. Is AI sovereignty something that is energizing the sector here or alarming it? What's the read?
I think like any market that's very active, you're going to see people at all ends of the spectrum. Overall, though, I think that the tone is very bullish. AI sovereignty here, you can see steps like the launch of the Sovereign AI Fund, which is becoming quite active, as well as a number of other steps. That's super important. And what we see in the UK, but also in Europe, is that public sector money plays a real role in these markets. And so that's a driver that we don't see in other markets.
Okay, so thinking about the public sector takes me to the next thought, which is that we've got, I mean, not a new government, I suppose, but a new leader coming in at some point, and we have a pretty good idea who that's going to be. There's all kinds of reporting about things they might be tempted to do. Big changes to the tax system, not to do with tech, but it might impact tech and entrepreneurialism, I suppose. Many governments have wrestled with ways to get the pension industry in the UK to better fund startups and innovation. I mean, where should the government be focused in your mind?
Yeah, so I mean, I think to your point, there's still a lot that we don't know. But two things that we do know are, one, that over the last few years, there's been investments in things like the British Business Bank, giving them more balance sheet, more ability to invest to the public sector and invest.
And has that been material? Is that something to continue?
So that is definitely something to continue. I mean, the British Business Bank invests both directly and through funds in this market, and so that is something that we see to continue and very much support the market. But so that's one part where you say Office of Foreign Investment, British Business Bank, the industrial strategy, all of those things have laid out a real path for growth and are creating real tailwinds for this market. Two, as you say, and to your point, sort of we don't know what is coming, but if we look at what's happened in Manchester in the recent past, there's been a real commitment to things like skills, education, and infrastructure. And if I think about what's needed to succeed in venture capital, and importantly in venture capital startups in this country, those are three important drivers. So if we keep skills, infrastructure, and that sort of broader push for growth in mind, that supports here.
So some Manchesterism that maybe the tech sector won't mind seeing.
It's interesting that you reference Manchester, because you do hear in the ecosystem right now real anxiety that Burnham is going to come in and kill the goose that lays the golden egg. I mean, do you think that's overwrought in terms of some of the concerns that have been flagged by pretty prominent names in our eco startup system here in the UK?
I think it's too early to tell what's going on, but I do think we've got tailwinds, we've got the macro trends, and ultimately, as I said before, capital is global in nature, as is talent.
Yeah.
And between the fact that we've got great science, to the question before on universities, we've got great discovery here, and then we've got huge demand, I think all of those things will be driving the market.
So ultimately, when we next see you, okay, so what are the trends that you're watching out for? Kind of what comes next? As this thing starts to gather pace and evolve, what are the things that you're looking for? What's the next key milestone that you're going to be watching for?
Well, thank you for saying that you're going to invite me back.
You seemed surprised when you came a moment ago. You're like, I'm back.
So I'll take that first. But I think it's a few things. So one is we need to see a pace of new company formation. So in the first half of the year, we saw just over 800 companies formed or getting their first venture capital. Generally speaking, we're on a track for 1.6 thousand a year, so we're hitting that target. Two is this late stage that I talked about. Right now, we have 217 unicorn companies in this market, where 18 of them are new year to date. We need to see that continue, and importantly, not just at unicorn valuations, but we need to see those companies attracting real revenues and showing real traction on a global scale. So those are the things that people should be looking out for. How many companies are not just valued highly, but also have enduring customer relationships that they're able to really capture value, not just from customers here, but around the globe.
Emily, you're always welcome. Nice to see you. Thank you very much indeed for coming to see us. We appreciate it. Emily Turner, HSBC Innovation Banking UK CEO. What have we got coming up? Defence tech is another part of this story as well. We'll turn our attention to what is happening at NATO. President Trump heading for the NATO summit. It is taking place in Turkey. Obviously, we are watching this very carefully on a number of fronts. Clearly, the story around Ukraine is part of that. We think there's going to be a meeting with Ukrainian President Volodymyr Zelensky. All of that to be discussed next. This is Bloomberg.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg this weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome back. 48 minutes into the equity market session, and Europe is actually a little higher than we first thought it would be this morning. You've got anything between kind of 0.2 and nearly 0.5% in terms of the upside that we're getting. There's plenty of M&A out there that we're folding into the narrative as well this morning. Defence M&A in France. You've got the EasyJet narrative playing out in the FTSE 250 as well. So there's some interesting themes running through the market as we await the arrival, the sort of re-emergence of the United States. Tom.
Yeah, with NASDAQ 100 futures pointing up by more than 1% right now. Let's look ahead to what else we are watching throughout today then and this week. Later today, the British Chambers of Commerce quarterly economic survey will come out on Tuesday. It is the NATO summit starting in Ankara. There's also the Paris Court of Appeal ruling in the Marine Le Pen trial, potentially very significant for the politics of France. Samsung earnings as well on Tuesday, significant for the chip story. And on Wednesday, UniCredit will announce the results of its extended tender offer for Commerzbank. On Thursday, EU finance ministers meet in Brussels. The UK Prime Minister nominations open as well. And on Friday, SK Hynix makes its Wall Street debut.
Let's return to the defence theme, which will run throughout this week. We're working our way towards a NATO summit. President Trump is travelling to Turkey to confront wary allies and meet with the Ukrainian President, Volodymyr Zelensky, about ending the war with Russia. Tensions are high due to friction over European defence spending, the war in Iran, and President Trump's persistent interest in acquiring Greenland. Let's head to Ankara now, where Piotr Skolomovsky is our Central and Eastern European team leader and has decamped there to cover the summit for us. Piotr, good morning. So what can we expect then from the talks with Zelensky? This comes with some baggage, some history, as we know, but I think many European leaders would like to see plans made to return some focus to the Ukraine conflict.
Good morning. Yes, indeed. So Zelensky is going to meet Trump when both of them arrive for the NATO summit tomorrow. Zelensky has basically two goals. One is obviously he wants to get the peace process started. We've seen that because of the war in Iran, the talks have been pretty much stalled. So there were no talks. Witkoff and Kushner were busy trying to negotiate the other peace plan. And right now, the idea is let's sit down and try to resume those talks. Whether that's going to happen, it's not very clear at this point. Trump talked to President Putin over the weekend, and obviously, but it doesn't seem like Russia is ready to negotiate or ready to actually give up anything or talk about any concessions. Another thing that's really pertinent and really urgent for Zelensky when he meets Trump is air defenses. Ukraine has just went through a very massive strike overnight from Russia, a second one massive strike in less than a week. This time when we look at the numbers, in terms of the ballistic missiles, they intercepted literally zero, which means air defenses have really been depleted, and they rely on U.S.-produced Patriot missiles to shoot down Russian ballistic. There's no better weapon to actually shoot down Russian ballistic missiles. So he will definitely push for U.S. to provide them and push for other allies to chip in as well. And he's already been talking about this morning, that this is a topic that he's going to not only talk to Trump about, but also to other European allies who apparently have those U.S.-made Patriot missiles in their stockpiles.
Yeah, building them is the huge bottlenecks in building those Patriots right now. Piotr, let's talk about 5% defense spending. How fast do the Americans want Europe to get there, and how fast is Europe capable of getting there?
Well, of course, Europe literally has no chance. Well, they have no option not to get there, because at this point, Americans are obviously the goal is to get to that point by 2035. That was the agreement at the Hague summit last year. But what we're hearing from the Americans recently is they want this to happen quickly. Some allies are definitely over the line, and they are ahead of the schedule. We talk about the Baltics, Poland, where 5% has already been reached. With others, it's more of a patchy picture. But as I said, I mean, there is really no choice in front of Europeans not to do that and not to do that quickly, because we're already seeing very clear signs from US that it's pulling out of Europe. First of all, they're reviewing troops, so over the next 6 months we'll know how many troops are going to stay in Europe. Secondly, we've already seen signals of, for example, capabilities being reduced when it comes to forces that NATO has in terms of a crisis. So that's where US is also pulling out. And they've already said that they are not going to deploy long-range capabilities or long-range strike capabilities to Germany, which was planned for next year. So all of that shows that Europe has really no choice but to go to 5% as quickly as they can.
Going to stress a few budgets. Piotr, thank you very much indeed. Piotr Skolomowski joining us from Ankara ahead of the NATO summit. Let's turn back to what we see in markets this morning. Joining us now, Skylar Montgomery-Koenig from our MLive team. Good morning. You're still interested in the yen?
Yes, absolutely. I think it's quite interesting because it's well appreciated that authorities don't want a significantly weaker currency, and that the currency is kind of stuck between this weak fundamental backdrop and intervention on the other side, with the bias just being the slow drift up as people continue to use it as a funder, as volatility is low into the summer. But I think what's maybe underappreciated is that authorities also don't want a very strong yen or a sharply stronger yen. And the reason for that is that it's detrimental to the equity market, right? If you have a stronger currency, that means that exports are more expensive for foreigners buying it. It means your equities market's more expensive. And it also means foreign earnings, once translated back into the yen, aren't as strong. And there's been a very big push to support the equity market, and it's been very effective. I think the other bit is that it's just inflationary. And so, you know, we're looking for what pushes it lower or higher, and I think the path of least resistance is just kind of this slow, boring trend, which maybe isn't as exciting.
Would you go as far as saying managed depreciation of the yen?
I think, yeah, that's certainly the direction that we're looking at, in that all of the policies seem to be wanting to support the equity market in terms of this kind of structural push that you've had for equities to not have as much cash hoarding in Japan, to have return on equities. And it means that you have this like shift that Japan's going a different direction than everyone else, where, for example, the US has this increasing demand for capital, but Japan is increasing buybacks, it's increasing dividends, and that's a structural support that the government's pushing for.
This is still a big change that's unwinding kind of slowly, isn't it? That's kind of, when the BOJ started hiking rates, a lot of people said this is a big moment because the carry trade has been this cheap source of funding for so many in global markets for a long time, and you thought that gap might close quickly, but then actually the gap has been, it hasn't closed that quickly, and there's still big interest rate differentials between Japan and the United States. So it's sort of a story that keeps on. We keep on talking about it. It doesn't go away.
Yeah, I think part of it is through the 2010s, you didn't have big interest rate gaps. You didn't have carry as a consideration in the same big way that you do now. But if you think about it, if I'm a foreign investor buying Japanese stocks, buying Japanese bonds more likely, if I am buying in dollars, then the differential is in favor of me hedging that flow. And so it's the same way if I'm a Japanese investor buying stocks abroad, then it's very much against the yen because it's a 300 basis point hedge that you're having to pay, and that's a big difference. And I think it's something that's underestimated as well in terms of currency performance that we're seeing, in that the pound was the best performing currency in the second quarter, and that's very much supported by high policy rate, and it seems unlikely that changes anytime soon.
Okay, Skylar Montgomery-Koenig, thank you very much from our Markets Live team. Talking of the pound, makes me wonder if anybody is working in London this morning.
I think we should play an extra 12 minutes here, to be honest. We're coming to the end of the show. We'll just do an extra.
I mean, I'm doing the pulse anyway.
As fraught as those 11 to 12 minutes were.
It was meant to be 11, felt like 12. Felt like half
historic victory.
Yes.
Mexico.
Anyway, Anna is playing extra time.
I am playing extra time, yes. Portugal and Spain's on later as well. Just public service announcement. The Pulse is next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Tech lifts U.S. stock futures at the start of a week in which South Korea's memory giants will put the AI trade to yet another big test. Russia carries out a massive air attack on Kyiv ahead of Donald Trump's meeting with the Ukrainian president at a NATO summit in Turkey. Plus, in corporate news, EasyJet shares jump after the budget airline agrees to a takeover by U.S. investment firm Castle Lake at the 5th attempt. Quick check on these markets then for you. Let's have a look at Nasdaq futures, playing something of a catch-up trade from Thursday into Friday. Over the weekend, of course, we were without the US on Friday, so we welcome them back today, and Nasdaq futures suggest they will join in to the upside. We've got the dollar against the yen very much in focus. 165 is a new target that Goldman Sachs has brought to the markets there, so we'll watch that one. Thinking about interest rate differentials, the fiscal story in Japan, of course, and the Brent crude price at 71.24, down by another 1.2% as we continue to watch a slow uptick in the visibility we have around transits through the Strait of Hormuz. Let's take a look at the European markets map, and this tells you a bit about where those gains are coming through the strongest. The CAC 40 is getting some of the better gains, up by 0.6%. The FTSE 100 up by around 0.5%. The DAX up by 0.4%. But most areas of Europe, we are seeing some positivity. Not so perhaps in Spain and the Iberian Peninsula. Maybe they're more focused on the football, which comes later. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse, live from London. I'm Anna Edwards, in for Francine Lacroix this morning. US futures signalled a mild rebound in technology stocks as the focus this week turns to Samsung's results and SK Hynix's $29 billion US stock market listing. Let's bring in Bloomberg's Anthony Stevens, who's been following or continues to follow the tech sector for us from his vantage point over in Asia. And Anthony, the AI rally back very much in the spotlight, and Asia and specifically South Korea has a lot to say about the tech narrative this week. We've got the SK Hynix story, we've got Samsung earnings tomorrow. Paint a picture of what this week has in store from the sort of South Korean tech landscape.
Yeah, so the first port of call will be Samsung earnings tomorrow. So the implied move post-earnings is a 5.5%. Just to put that in context, it's a pretty big move that's being implied. It will be the biggest move going back, I think, to 2021. And that is a factor of the stock's very high volatility in recent times. It's trading at around 90 vol, which is pretty high. What people expect is an absolute blowout quarter already. And so the guidance for record results, after record results, what does the order book look like into 2027, 2028? That is what people are going to be focusing on. Very similar to Micron, which came out with blowout numbers and then proceeded to trade down for the next couple of days. So people are hopefully trying to avoid that dynamic with some clear and clean guidance. Now, coming into today, we actually had Samsung raise semi prices as well, memory prices on semis as well, and Micron expand capacity. So this memory trade has very complex demand-supply dynamics going for it. Now, moving on to Hynix, they price the largest ADR since Alibaba, and it starts trading on Friday. Why that is interesting is this company obviously does not need that much money, but it wants to tap a new investor base to potentially increase its valuation in line with US peers. Micron, for example, taps that liquidity in the US market and on some days trades more than the entire South Korean market put together. So you can see the kind of riches that are at play for Samsung, for Hynix's ADR. That being said, what is very important for ADR players is some clarity on the fungibility of the instrument, and also the fact that in the past, these large ADR listings has not been positively correlated with future returns in those markets.
Okay, and then take us on to some of the other the clues we're getting around NVIDIA, Anthony, because if I can get positive or negative stories around NVIDIA this morning. If I look at the Hon Hai numbers, I get a pretty positive take on what's going on at NVIDIA because Hon Hai is a supplier to NVIDIA. But if I look at what's going on in the Asian PCB stocks, I get something a little less positive from the printed circuit board names of all things. So how does that add up? What are you taking away from the NVIDIA story?
Yeah, and it's very similar to the memory story, right? The memory story right here, right now, is super strong. What does it look like going into the future with the future of the AI infrastructure build? And that's what this NVIDIA AI rack story is all about. It's about the Kyber rack architecture, which is basically a large box, very complicated box that is meant to hold NVIDIA's top-of-the-line chips, and they're having some significant problems making these large infrastructure rack boxes related to the printed circuit board complexity. Now, the printed circuit boards in the past have been relatively simple, conglomerations of plastic and metal. Right now, they are extremely complicated, and as a result, the share prices of the materials and the chips and the capacitors and all other tiny equipment that go onto these circuit boards have gone through a massive bull market. A lot of stocks in Taiwan and Japan are up 200, 300% on the back of that. Any sign that NVIDIA is hitting its technical constraints, and according to reporting by SemiAnalysis, this is going to be delayed until 2028. So it does sound like a significant technological hurdle. Any sign that this hurdle is insurmountable will crash forward demand for all of these components, and that is what is at play here. It's not the strength of the demand right here, right now, as guided by Hon Hai. If we're talking about 2028 guidance, and this is a very important dynamic for the AI trade overall, there is visibility in 2026 and 2027, which is why the stocks have done so well. Now we're talking about 2028, and the future becomes harder and harder to predict when you're getting this granular and this technologically complex.
Okay, yes, absolutely. Really important distinction on the different time horizons involved. Anthony, thank you very much. Bloomberg's Anthony Stevens with the latest on the tech trade as seen through South Korea from Asia this morning. Let us think about that, widen the conversation with Monica Defend, head of the Amundi Investment Institute, who joins us now. Monica, good morning. And no doubt you were listening there to all of the twists and turns of the AI story as it goes through the Asia markets today and here into Europe. How are you thinking about AI stocks at this point? Are you still leaning into the AI trend as a key engine? Are you being more selective within the AI space?
We're turning more selective. Actually, what we identified is the entire value chain of AI with the upstream, midstream, and bottom stream, where, for example, Europe can take the lead. And in this evolution of the AI trade, maybe it's better to be selective, as we said, including in Asia, and focus more on those that can deploy most of the value, meaning the bottom stream.
Yes, so where does that leave Europe then, Monica? What are the kinds of sectors that you lean into if that is your intention?
Well, definitely industrial is going to be a key sector because of its weight on the market and because those are this is the sector where we have the AI enablers, and this is where we think the value and the performance might come from. It has been lagging a little bit behind versus the upstream, so this is where the opportunity sits. Beside that, we have also the defense sector, the financial sector, the healthcare. So there is more a sector's story than really a beta trade that we expect for the remainder of the year. And this is where Europe might be well positioned.
And Monica, are you still leaning into the emerging market Asia names or geographies that have done really well so far out of the memory trade? I'm thinking, of course, of South Korea, of Taiwan. Do you lean into those further, or do you rotate into Europe from there?
No, we still be invested in emerging market, but as you said, more selectively. When it goes to the Korean market, basically is three stocks, right? So it is also a matter of not being overly concentrated, but being selective. We've been turning a bit more cautious on China and India, where, for example, the structural growth story is still there. And with oil prices retracing lower, this can be a nice benefit for the Asian equity market.
Monica, thinking about some of the central banks we will hear from this week, well, notably the Fed, of course, we'll get Fed minutes. What do you think will be useful in that context? Because the market adjusted quite hawkishly after the last FOMC, but then a little more dovishly just last week, listening to what Kevin Walsh had to say and some of the weaker labour market data. So what's at stake this week in terms of that Fed narrative and how supportive it is for stocks?
Well, you know, what has been said last week in the panel between Lagarde, Walsh, Baylis is really this shift from forward guidance to framework guidance. This is probably the only convergence we might expect in the central bank, which, when it goes to the Fed, leave us with kind of strategically opaque move on, given that tactics and strategy are not yet clear, and that we need really to work on the reaction functions of the central bank. So not being focusing on the next rate hike or cut is what we had in mind, but definitely our job is getting a little bit more difficult because we really need to dig into data, wage dynamics, CPI. We do not expect the Fed, though, to hike this year.
You don't expect the Fed to hike. Are you expecting other central banks to? I mean, the BOJ has been hiking. It's on a different path maybe to others. A lot of expectation around the BOJ, and many people pointing to maybe if the BOJ moved faster, then the currency wouldn't be as undervalued as it is, as we watch some sizable moves in the yen this morning.
Well, we do expect the BOJ to hike in October, but this will still leave them in the accommodative place, just because they're still below their natural rate. When it goes to the currency, they probably will continue to talk about, make announcements, but there is not material space for them really to act. So probably it will be more verbal than a material action out of the BOJ.
And if we're dealing with a Fed, Monica, that's more opaque, and some of that is by design, they don't want to give forward guidance, does that mean more volatility, do you think?
Yes, definitely. This will leave us with the front end that will be extremely reactive to data and to this uncertainty, if you want, on forward guidance. It is very difficult to take a directional position on duration, though we still like the 5 years, and the steepening of the curve is probably the most structural theme we see on the fixed income market right now.
Monica, thank you. Thanks so much for your time. Monica Defend, head of the Amundi Investments Institute. Let's return to the UK corporate landscape. Shares in the UK budget carrier EasyJet soaring this morning after agreeing in principle to a takeover offer from the US firm Castlelake worth more than £5 billion. The beefed up offer was Castlelake's fifth attempt after the two sides sparred over several weeks. Let's bring in Danny Lee, Bloomberg Aviation and Transport reporter, watching this story carefully for us this morning. Danny, what can you tell us then about the flight path, if you like, leading up to this latest offer? As I say, this was the fifth time, and it looks as if, you know, they've at least won over the management team.
Yeah, at least now that EasyJet has accepted an in-principle offer from Castlelake, and now that beefed up share price, beefed up offer of 690 pence a share, that has allowed the stock, EasyJet stock, to move much higher this morning on the open in London. Although, interestingly, that share price jump is still far from that offer value that Castlelake has given. So it may be something where shareholders may be still tempted and may expect more hurdles or even bigger offers still to come. But at the end of the day, we will still see Castlelake do its due diligence, and then we will see a more formal bid put in place by August 3rd. So yeah, there's still a long runway to go, but indeed, at least now management is engaging, and now Castlelake have got a foot in the door.
And what needs to happen then for the two sides to actually land this final deal then, Danny?
Well, now at least once Castlelake does its due diligence, puts in an offer, it will be up to then the board to accept the offer and then put that through to shareholders. Critically, the shareholders are going to be so important in all of this in a really big way. The fact that the founder of EasyJet, Sir Stelios, and his family own around 15% of the airline still. They've not said anything so far related to the overtures of Castlelake. So whether they're on board is going to be a critical factor in whether the current fifth offer given by Castlelake is going to be enough. But on top of that, the fact that Castlelake is a US entity, it's going to need a partner from Europe or the UK to come and get involved with its bid. That remains a hurdle around clarity of who maybe Castlelake will do a partnership with in order to then satisfy the regulators on putting this deal together, and ultimately how the regulators, the competition regulators, might entertain it. But clearly it's a busy time for European airline M&A because there's a lot of airlines, pretty sizable airlines, being snapped up or being absorbed by the bigger airline groups like the Lufthansa's and the Air France KLM's, and the fact that EasyJet is just another, and its future, there still remains a question mark of whether it will remain intact in the future, because we see a lot of the airlines looking at parts of the EasyJet assets out there.
Okay, thanks very much, Danny. Good to get your insights. Bloomberg Aviation and Transport reporter Danny Lee. The aviation sector, of course, has been shaken up by developments in the Middle East over recent months. Coming up, shipping in the Strait of Hormuz shows signs of recovering days after unexplained U-turns and detours by some tankers. We'll get more details. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on television. Context changes everything. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London. Let's show you some live pictures from the Iranian capital, Tehran, where the funeral of the supreme leader, Ayatollah Khamenei, is continuing. He was killed, of course, on the first day of the Iran war in February. Some 20 million people are expected to attend the week-long funeral. His casket will be taken through the streets of several holy cities over the next few days, before being buried in his home city of Mashhad on Thursday. Back to the markets, and oil prices are fluctuating after 2 days of gains as crude markets weigh resilient flows now through the Strait of Hormuz. Major OPEC Plus members have agreed to another modest increase to their collective oil production quotas for next month, adding to the prospect of more supply eventually hitting the market if a US-Iran peace pact can stick. Let's bring in our Bloomberg Horizons anchor, Abir Abu Omar, who's covering the story, of course, from Dubai for us. Abir, good morning. Are we seeing then a full recovery in tanker traffic through the waterway, to the extent it is possible to see with transponders on or off, or are operations still proceeding pretty cautiously?
Good morning, Anna. Full recovery is a far cry from what we're seeing right now. We're seeing movement through the Strait of Hormuz. We're seeing more movement than what we have seen over the past couple of months or so. But compared to pre-war levels, we're still very much below that average. Since Monday, we've seen an average of about 34 vessels, tankers, go through the Strait of Hormuz. That is way lower than the average before the war, which was about 100. Now we're seeing 20 ships or so making their way through the Strait of Hormuz on a daily basis. This is both with ships having their lights on or off, as we have been saying over the past couple of weeks, or since this MOU came into effect. So we're still keeping an eye on the movement through the Strait of Hormuz. There's still some caution when it comes to operators making their way through. We have heard from several ship owners that they're sticking to routes that were laid out by Iran. Now, we've reported on the story that some ships over the weekend have had to do U-turns. While we don't know the exact reasons behind why those reversals in the ship movements throughout the past couple of days or so, we can probably argue that the reasons behind that are because Iran had been adamant on having ships stick to routes that they have laid out near their borders, and ships that haven't or that do not stick to those routes have been prone to attacks over the past couple of weeks or so. We reported on an attack about a week ago or so, Anna, and so this is what we've been reporting on. This is what we've been monitoring. So in a nutshell, yes, there is movement. Yes, it is positive, but it's not at pre-war levels yet.
Yes, and up to recently, a lot of our reporting has been concerned about shortages of all kinds of energy products due to the closure of the Strait, Abir. But more recently, we're starting to hear people talking about the potential for a glut. And with that in mind, interesting to see that OPEC Plus is sticking to its plan to raise output.
Yeah, you're right. I mean, about 180,000 barrels or so starting next month. And really that prospect of bringing a glut into the market has been laid out by the likes of Goldman Sachs, Morgan Stanley, saying we might see oversupply by the end of this year, but it might be coming even before that. And one of the reasons behind this, Anna, is because a lot of those buyers during the midst or in the midst of the war have had to replace their oil from other sellers with not knowing when exactly the Middle Middle East will reopen. So the real problem here is just exactly how or who do those Middle Eastern or Gulf exporters sell their oil to. There's no prospect of near-term selling to countries, particularly in Asia. And so this oversupply glut added by, or the addition of those barrels by OPEC Plus is possibly going to add more to the market. And that's why we're seeing Brent crude prices at around $70, $71 a barrel. Those are levels that we have seen only before the war. And the average estimate by a lot of these banks is laid out at around $70 to $75 a barrel by the end of this year, Anna.
Abir, thanks very much. Bloomberg Horizons anchor Abir Abu Omar on the latest developments in the Strait of Hormuz, and thinking about how that leads us into, how that affects the global economy. Bloomberg Economics says that the path for central bank interest rates has shifted higher for years to come. Its latest forecast for borrowing costs shows trajectories elevated by 0.5 percentage point or more through to 2028 as a result of President Trump's war against Iran. Bloomberg Economics Director of Global Economics is Jamie Rush, and he joins us now and can give us some more insight. Jamie, good to have you with us on the programme. So oil's roughly back to pre-war levels, is it? But rates are not. And that's the interesting sort of breakdown in the transmission, I suppose, that's behind your research. What are you saying then about the way that oil prices take us to a sort of higher for longer rates environment?
Well, I think there's a lot of what we, as economists, would call path dependency at play here, right? So faced with exactly the same conditions, central bankers can behave in completely different ways because they're shaped by their recent experience. And the current cohort of central bankers obviously has 2022 front of mind. They're also feeding that into their models and the way they think about the economy. Of course, they have a big incentive to talk tough on rates and then not actually validate on that. And I would say that even though we are expecting interest rates to stay higher for quite a prolonged period of time, it's not quite as much as the market is expecting. And I think it's partly because of that belief that you have to talk tough on inflation, you get all the credibility benefits, but then you don't validate the expectation, and you get a slightly stronger economy as a result.
Yes, and so that's notable that, I mean, the market adjusted quite a lot after we heard the talking tough of Kevin Walsh around the latest FOMC meeting. Before that, the market adjusted very quickly when we heard the Bank of England talking pretty tough. And on the BOE side, we unwound some of those expectations of hikes. Maybe we're seeing something a little similar on the Fed as well. I mean, do you think then that we will look back on 2026 and say this was the year that central bankers, yes, talk tough, but almost with the intention of if you talk tough, you don't necessarily have to follow through with tough action?
Well, I think, the US is a kind of a special case, isn't it? Because over there you have a labour market which is seemingly holding up absolutely fine. Interest rates, therefore, cannot be super restrictive. So I think you have this extra layer to think about in the US case. The idea is that we've learned over the past year or two that the US economy can withstand significantly higher interest rates without slowing down. Yeah. And so that tells you they had to stay there.
Okay, Jamie, thank you very much. Jamie Rush, Director of Global Economics for Bloomberg Economics, out with that really interesting report. Let's have a quick look at US futures then. We, of course, were without the US on Friday, so US futures showing us something of a catch-up through Friday's session, through the weekend. NASDAQ futures notably strong, up by 0.9%, and not really shaken very much by one interesting line I saw coming through. SK Hynix reduces its ADR deal size to $28 billion. That's taking it down from $29 billion previously. That's not much of a big change, but it might at the margin shake sentiment around the tech trade perhaps as we wait for SK Hynix to do that ADR deal at the end of this week. So we'll watch that as it develops, but NASDAQ futures looking pretty positive right now. Coming up, we will pivot to the defence story as NATO leaders prepare to meet in Ankara. We'll discuss what is at stake with Elizabeth Broer from the Atlantic Council. How significant is it that this is taking place in Turkey, the relationship between Erdogan and Trump possibly centre stage then? That is next. This is Bloomberg.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. Tech lifts US stock futures at the start of a week in which South Korea's memory giants will put the AI trade to yet another test. Russia carries out a massive air attack on Kyiv ahead of Donald Trump's meeting with the Ukrainian president at a NATO summit in Turkey. Plus, EasyJet shares jump after the budget airline agrees to a takeover by US investment firm Castle Lake at the 5th attempt. US President Donald Trump is traveling this week to this year's NATO summit, which takes place in Ankara. Turkey is going to face wary allies and meet with the Ukrainian President Volodymyr Zelensky about ending the war with Russia. Tensions are high due to friction over European defense spending, the war in Iran and Trump's persistent interest in acquiring Greenland, all topics that will be on the agenda. Let's get more with Bloomberg's Piotr Skolomovsky, who's in Ankara for us. Piotr, how are the relations then between President Trump and Europe heading into this summit? They've been stretched on a number of fronts of late.
Indeed. Good morning, Anna. So the situation is this. Only last week, President Trump took to social media to point out that U.S. is spending huge amounts on defense still. He did it twice already. Obviously, he was talking about total spending, and obviously, U.S. dwarfs, in terms of its size, the amounts that the European is spending, which obviously doesn't augur well for the meeting itself. Europeans are probably going to hear again from Trump that they're not spending enough. Although over the last few weeks, NATO Secretary General Mark Rutte has been really making an effort to point out to Trump and to the U.S. that Europeans are stepping up, and they really are. It's $250 billion as over the last 2 years that in terms of the increases. Most of the countries are on the way to this new target of 5% on defense. But they continue hearing from U.S. There's this continued drumbeat of complaints that this is still not enough. And we're probably going to hear more of that during this summit. To allay those concerns, tomorrow NATO is going to present a number of deals during the industrial forum where, again, Rutte is trying to show Europeans are not only stepping up, but they're actually taking the responsibility for their own spending. So whether that's going to be enough to sway Trump, who also, and his administration has also been sending those signals about, if you're spending more, you will have also certain benefits you can enjoy from the U.S. So all of that will obviously play out over the next 2 days.
And over the weekend, then, Piotr, we saw Russia and Ukraine exchange a series of attacks once again. Talk us through those strikes, and if the summit may offer an opportunity to end the war. That is certainly one of the priorities that the European leaders are going to this NATO meeting with. They want to have some movement. Now the Iran conflict seems to be largely behind us. They want some movement on that front.
Exactly. So Zelensky is going to be here, and together with Europeans, we'll probably are going to have this concerted effort to focus Trump after the Iran war is pretty much under control. Now, over the weekend, we had an exchange of fire again, and it's this pattern we've been seeing for the last few weeks, where Ukrainians are hitting deeper into Russian territory and destroying refineries and really inflicting huge damage. But at the same time, Russia is also being more and more effective when it comes to their ballistic strikes on Kiev. So, for example, we had a big, massive strike last week which killed 30 people, or more than 30 people. We had another one today when the death toll is now 11 and counting. And this actually shows the situation where obviously Ukraine is fighting back, but at the same time it needs interceptors, and they are US-produced Patriots that are really, the stockpiles of those have dwindled because of the war in Iran, and there's going to be an appeal from Zelensky to Europeans and also to the US, and probably that's going to be a topic when he meets Trump tomorrow, that more should be delivered so that Ukraine can have the upper hand. But when it comes to peace plan or peace talks, they still seem to be quite remote at this point, and it doesn't seem like President Vladimir Putin is anywhere near willing to actually resume those talks and agree to any concessions.
Piotr, thank you. Thanks for the reporting. Bloomberg's Piotr Skolomowski with the latest in the run-up to that NATO summit. And ahead of the NATO summit, we're joined in studio by Elizabeth Braw, who is a senior fellow at the Atlantic Council with us on set here in London. Elizabeth, very good to have you with us. In terms of the mood being created by this summit, and often it is interesting to see what kind of mood President Trump is in with the other members of NATO. How significant is it that it's taking place in Turkey? And obviously he finds common ground with President Erdogan in a way that maybe he doesn't so easily with other leaders in Europe.
Yes, NATO can really thank its lucky star, or maybe clever planners, that it is taking place in Turkey. I think it would be difficult to think of a country that would be better to hold the summit in this year. So imagine if we're held in Denmark, for example, or Italy, that would just not go very well. But Trump is already in a good mood because it's taking place in Turkey, and has said that he's going because President Erdogan asked him, which is really quite something. So that is really a very good thing for NATO.
Okay, so that's a good backdrop, and maybe he's having a meeting with Erdogan ahead of the NATO summit, we understand. But then he goes quickly into a meeting with Volodymyr Zelensky. Is that where things fall apart? This comes with some history and some baggage, we know. Can they find some common ground, either on supply of Patriot missiles or trying to interceptors, or trying to get anywhere close to any peace talks?
I think President Zelensky has a trump card, as it were, this time, which is that Ukraine is doing really well on drones, and so well, in fact, that Ukraine has been assisting Gulf states with drones and training on drones so that they can better defend themselves against Iranian attacks, which is really a very good thing for those countries and for the war between the US and Iran, as it were. So he is not just a supplicant this time, or a beggar, if you like, but actually somebody who comes with abilities and equipment that others want.
And I assume that President Trump is going to continue to pile pressure on Europeans to spend more. I think we heard from the US ambassador to NATO that the 5% target, yeah, sure, there's a date in the future, but as far as the Americans see it, they just want it to be done as soon as possible, that other countries get up to that kind of level.
Indeed, and what we have seen is that a number of European countries really have gone to great lengths to get there. But so look at Estonia, for example, Poland, Germany, which has committed massive amounts of money to defense. And indeed, the Germans and others are growing their armed forces, because we have to remember, yes, you can use drones and technology all you want, but at the end of the day, if you're going to grow your defense and your military capabilities, you do need a few more humans. In fact, you need a lot more humans, and they are putting in efforts into recruitment, training, all of that.
Yes, in the UK context, interesting, my eye was caught by a headline coming through from PA this morning that says that UK fighter jets have intercepted Russian maritime patrol aircraft. And it does seem as if there are drip, more of these stories about the threat level posed by Russia to the UK coming out into the media. And I wonder if that is by accident or if whether that is part of what many defence chiefs have been calling for in this country for a long time, what they would see as a more honest conversation about the threat that Russia poses. I mean, what context do we need to add to these kinds of news stories?
Yeah, I think Russia is really trying to provoke NATO and individual NATO member states ahead of summit. So, for example, the attacks on really quite fierce and brutal attacks on Kyiv over the past few days. I don't think that is a coincidence that those have taken place just ahead of the NATO summit. Similarly, the provocative behavior around UK waters, but also around Baltic Sea countries' waters. And it's interesting, it's always short of a military attack. And so this is what I focus on a daily basis. And we have seen so much growth in this area, which is called sub-threshold, so below Article 5. They keep poking us, but yet they don't engage in military attacks because they know that in that case NATO would respond. American prevarications notwithstanding, NATO would respond. But if you do these sort of poking maneuvers, then what can the affected country really do?
Okay, so yeah, these sub-threshold, below Article 5 triggering actions that you see Russia doing. I mean, which are the most worrying then, Elizabeth? What nature do these attacks take?
It can be anything from sabotage to suspicious incidents involving undersea infrastructures, so cables and pipelines. And what we have also seen in recent weeks are that there are suspicious drone visits to offshore installations. And so it feels like it's something new every week or sometimes every day. We've seen parcel bombs attempted to be delivered onto airliners. We have seen weaponization of migration. And so all of that shows that Russia really doesn't care about being a respectable country or being seen to be a respectable country. It just wants to cause harm. And by the way, also financial losses to commercial companies, because most infrastructure is operated by commercial companies.
And what is America's view of that now as we head into this NATO meeting?
So this is an area where European countries, European NATO member states and also other countries are far ahead of the United States. So the US is used to thinking about the world in sort of a black and white division between war and peace. And here in Europe, we're just seeing these provocations for much longer. And as a result, we're better prepared, especially in the Nordic-Baltic region, but also elsewhere. And this is extremely useful knowledge that European NATO allies can share with the US and Canada, and especially with the US.
Okay, useful if trying to find some levers then. Elizabeth, thank you very much. Thank you for joining us. Elizabeth Braw, Senior Fellow at the Atlantic Council. Let's stick with this defence theme. As President Trump pressures NATO allies to boost defence spending, a new arms race is then taking place. Countries are pouring billions into attempts to be the first to master drones, hypersonic weapons, AI and other emerging technologies. The $2 trillion race for the control of future battlefields is the subject of today's Big Take story. And Jerry Doyle, Bloomberg's global defence editor, is one of the names attached to the story. Jerry, give us a sense then of the size and the scale of the spending spree that we're seeing being undertaken.
Well, globally, countries are pouring north of $2 trillion into this sort of effort. The U.S. alone is pledging to spend $1.5 trillion in its next defense budget. A large percentage of that is going to go to new and emerging technologies like this. And it's kind of a rich country's game at this point. Obviously, it takes a lot of money to get involved in these new technologies, especially on the space side. But there's certainly opportunities for other countries that are able to invest in something like AI that might be able to get to a breakthrough first.
Yes, and where does advantage lie then, Jerry, in this? Is it just in who's got the deepest pockets, who can afford to spend the most, or is it about very recent battlefield experience, which some countries, sadly, of course, have?
I think it's a mixture of the two. Obviously, the more resources you have to put into research and development, the more results you're going to get. And especially, again, in areas like space, where you need to put satellites in orbit. Satellites are extremely expensive to make. Rockets are extremely expensive and difficult to make. Getting in that game, very expensive. On the other hand, artificial intelligence just requires some land, some power, some data centers. Chips, obviously, are hard to come by. In terms of who has the advantage right now, It sort of depends on the technology. You know, Russia, China, United States all have hypersonic weapons in their inventory, but Russia is the only country that has been using those in combat in its invasion of Ukraine. On the other hand, in the air campaign against Iran, the U.S. says that it used artificial intelligence to help plan those strikes. So it's operationalized that already. The impact of that, how well it worked, remains to be seen. But those examples of how things are actually being used on the battlefield may show us an idea of who has the edge at this point.
Jerry, thanks very much for the update. Jerry Doyle, Bloomberg's global defense editor. That big take story available, of course, on the terminal and on the Bloomberg website. Coming up, it is 9:43 here in London, Monday the 6th of July. Our attention turns to the second half of this year for the investor community. Coming up, the move from chocolate to Barbie via tech giants such as Microsoft. Intriguing. We will dive into 10 companies to watch from Bloomberg Intelligence. That is next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
This is the Pulse. I'm Anna Edwards here in London. Now, to technology, and Ireland's economy is uniquely dependent on jobs from the US technology companies. That is in Europe, of course. More than 6% of the workforce is employed in the tech sector, higher than the European Union average. But now, many, like Meta, are culling jobs as they invest in AI, creating widespread employment anxiety. Joining us now is Bloomberg's Olivia Fletcher, who's in Dublin. Olivia, good morning. So concerns about how AI will transform work everywhere, but why is Ireland particularly exposed then to these latest developments?
Yeah, I mean, ultimately it's because of this kind of informal arrangement that a lot of, some of the world's biggest tech companies have with Ireland. Over the past few decades, companies like Meta, Amazon, Apple, Microsoft have all set up in Ireland, and, of course, they pay lower taxes for that, but they've also brought to Ireland a huge boost to the economy and, crucially, employment. But that story has kind of changed in the last 5 years. A few years ago, after the COVID pandemic, a lot of these companies cut back jobs, kind of attributing that to overhiring during the pandemic. And in the last year or so, those companies have been cutting jobs as they make billions of dollars worth of investments into AI. That impacts Ireland slightly more than other countries, A, because we're a big tech hub, but B, unlike other tech hubs like LA or Tel Aviv, Ireland has more kind of a lot of the jobs here are kind of ancillary, like trust and safety and content moderation. For example, we reported last week, we were the first to report that TikTok was considering cutting 300 jobs in Dublin, but nowhere else, and that was in the trust and safety department. So, it's hugely concerning for Ireland, this tiny country on the edge of Europe that relies massively on these companies.
Yes, okay, so more exposed to these tech businesses can be great when tech's doing well, more worrying when there might be a lot of churn in the labour market. So how is Ireland going to be impacted by this?
Yeah, I mean, first of all, there's the impact on jobs. Like I said, TikTok was considering cutting 300 jobs, and a few weeks before that, Meta said that it was cutting 20% of the Irish workforce, which was well above the 10% global average that Meta was doing at the time and attributing to these AI efficiencies as well. So the immediate impact of that is going to be on kind of narrowing the tax base and impacting income tax. And, also it could have impacts on immigration as well. A lot of the tech workers I've spoken to in the last few weeks, they come from abroad to work in Ireland. They might have to look elsewhere for work now outside of Ireland. But it also raises much bigger questions about the future of Ireland as a hub for foreign direct investment. Whether Ireland is going to be able to climb up the stack and kind of create the higher value jobs that it needs. And, some researchers here have warned that, AI could eventually even come for those jobs in Ireland as well. Ireland is, the CEO of AIB, one of our banks, was on Bloomberg TV a few weeks back and, said Ireland might be losing these jobs, but will Ireland remain a tech hub? Yes, probably, because as long as there is that kind of tax incentive, Ireland will benefit from that. But it does raise big concerns about Ireland's future as an FDI hub. And, as we rely so much on these companies, it's a big concern for government here.
Olivia, thanks very much. Olivia Fletcher, our Dublin reporter, with that update on tech and the dynamics in Ireland. Sticking with tech, AI exuberance pushes big tech to new heights. Microsoft seems especially unloved at the moment. That's the take from Bloomberg Intelligence, which thinks the software giant is better positioned in AI than the market believes. The analysis is part of Bloomberg's 10 companies to watch for the third quarter, which includes everything from chocolate to Barbie. But let's start with the technology, and we'll do that with Bloomberg Intelligence Chief Content Officer, who is Tim Craighead, with us this morning here on set. Tim, good morning. So explain your view on Microsoft then. So the market got concerned about this along with a whole host of other software names earlier on this year. Some of those names have recovered some of their poise. What's the story with Microsoft and any lingering concerns or hopes you have there?
Yeah, well, look, and I'll put this into a little bit of broader context, if that's okay. The 10 companies that we have singled out here with this group today is part of a broader set of focus ideas. There's 160 of these right now. High conviction, differentiated, fundamental views. You find them all BI focused, by the way, if you got a terminal. And these 10 have specific catalysts coming up in the third quarter that we think are important. Microsoft, you set it up perfectly. Unloved, it's lagged. There's concern about the AI disruption trade, SaaSpocalypse, and all that sort of good stuff. But it remains the biggest, if not one of the biggest, LLM cloud providers. It's got a new suite as it relates to Office coming out in the second half. We think both of those will continue to surprise on the upside for revenue.
Okay, and so how do you play AI then through this list? Because you mentioned there Microsoft, and there is a large language model involved there, but you don't have any semis, I think, on the list. So how are you thinking about AI?
Yeah, we're always looking for hidden ways to play AI. So there's two on the list beyond Microsoft. One is a British company called Halma. It's an electrical equipment company, industrial company. It makes lots of health and safety related gear. But one of the things that they have built is a photonics business. optical sensors. And that plays into data centers. It replaces copper. It increases the bandwidth that reduces latency. It's a big deal, and one of the hyperscalers is a big customer of theirs. We think revenue will surprise. Telecom Malaysia sits right beside Singapore. That's been the big hub for AI in Asia, but they're running out of space. And this is now being built out increasingly in Malaysia. They provide the digital infrastructure.
Okay, you've got some slightly more cautious views on, this is a strange combination, chocolate firm Barry Callebaut and the Barbie maker Mattel. I don't know, do they go together? Things that children like, I'm not sure.
Yeah.
But what's explaining the more cautious view on these two stocks?
Well, in our focus ideas aren't all constructive. They are our cautious views. 4 of the 10 for this quarter are indeed cautious. These are different, but they are consumer companies. Barry Callebaut feeds into the chocolate business. They produce cocoa and process it for chocolate makers. Chocolate makers are actually using less cocoa in their formulas following the volatility and spikes of cocoa prices over the last couple of years. We think that continues, pressures volume, and El Nino, if indeed it's as big as everybody is now concerned, could actually end up having a negative cost impact for Barry Callebaut, so potentially a squeeze on 2 sides. Mattel is just simply facing a shift in toy demand towards things like building sets and trading cards. You know how crazy the trading card stuff has gotten as of late. Mattel had a big boost from the Barbie movie.
Yes.
Dolls are now not the thing, and we believe there's more revenue disappointment ahead for Mattel.
Okay, right, yes. You can't make a movie like Barbie every year, can you? That's not going to happen. Tim, thank you very much. Thanks for joining us. Tim Craighead from Bloomberg Intelligence. Let's skip forward to sports. And tennis legend Rafael Nadal has traded the tennis court for a career in business. The 22-time Grand Slam champion, who retired in 2024, has built his post-sport life around the expansion of his hotel brand, his tennis academy and foundation, as well as a supplements business. In an interview on the latest episode of Leaders with Francine Lacroix, the podcast, Nadal said he does not miss tennis after pushing his body to the limit.
I am not the kind of person that like to wake up every morning and don't know what to do. That's as simple as that. I need to have goals in my life. Even if I am very lucky and I could decide to do other stuff, just stay at home without plannings. But I don't understand the life that way. I am enjoying this process. And yeah, it's intense but interesting.
You played tennis for 23 years, 11 months a year. What do you miss about it the most? Do you miss it?
No, not now.
You don't miss it?
I always will be very thankful to tennis for all the experiences that I enjoyed thanks to tennis. In my mind, in a part of my mind, I always will be a tennis player. But I finished my career because was nothing else to offer, you know. So I don't miss tennis because I accepted, since I made that decision, that was the end for me. I was not able to keep going the way that I needed to keep going, you know, and I had plenty of issues, so I bring my body over the limit, I think. So I am in peace with myself and enjoying this new chapter of my life.
Busying himself. I'm sure Wimbledon misses him, even if he does not miss tennis. You can listen to that episode now, wherever you get your podcasts. You can also catch it on Bloomberg TV later today at 10 p.m. UK time. Staying with sport, FIFA has cleared America's star striker Folarin Balogun to play in tonight's World Cup match against Belgium. Bloomberg understands it follows a phone call between President Trump and FIFA boss Gianni Infantino. Balogun was given a red card in the match against Bosnia-Herzegovina. The card came with an automatic one-game ban, which as now has been removed. Belgium is reviewing possible options to appeal. This will run and run. This will continue. Up next, Bloomberg Brief. Have a good day, everybody. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
what happened was you were up.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech leading stock futures higher. The AI trade set for a test once again this week with SK Hynix's U.S. listing later. World leaders head to Turkey for a NATO summit as Russia carries out a massive air attack on Ukraine. And oil drops as flows through the Strait of Hormuz return after some weekend U-turns and OPEC's supply signal. Well, let's get a check on the markets around the world now. After this long weekend in the United States, what's been happening, Winnie Su, in Hong Kong?
Good morning, Vonnie. We are seeing Japanese yen extending its weakness past that 162 level against the dollar as investors tend more bearish on the currency, with Goldman Sachs even slashing its one-year forecast to 165 against the dollar versus earlier 155, citing the fiscal concerns, the expectation for the Bank of Japan to raise rates gradually, and also the Treasury yields to stay higher for longer. Now, those fiscal concerns also weighing on the bonds, with the 10-year yield hitting its highest level since 1996. Now you flip the word and take a look at the equity space. We have the MSCI Asia fluctuating, while the Kospi here down 0.5%. A bit of a wait-and-see mood ahead of the preliminary earnings from Samsung Electronics due tomorrow, as investors will be assessing the durability of the AI rally. But the good news here is that the won finally started its first day of its 24-hour trading.
Right. Good luck to everybody trading the won today, I guess. Winnie, thank you. Winnie Su there in Hong Kong. Now to London for a look at the European session so far with Justina Lee. Justina.
Good morning, Vonnie. Now we see here stocks Europe 600 pairing some of the gains earlier today after a few strong weeks. Now we're seeing a little bit more strength in UK stocks, both in the international FTSE 100 and the more domestic FTSE 250, led by EasyJet. And when it comes to German two-year bond yields, they're falling a little bit, with oil still drifting lower, which should be a good backdrop for European stocks as we head into the earnings season. But we flip the board here. One thing that's really surprised me here is that we've talked a lot about the political instability in the UK. But actually, if we look at the euro-pound cross rate, the pound has actually been strengthening, the euro depreciating against the pound here. And that, I think, kind of reflects the fact that, Andy Burnham hasn't really said that much to degrade UK government finances. And of course, with a lot of that inbound M&A into the UK, such as the EasyJet bid, that's also boosting the pound as well. So that's been a bit of a surprise here, Bonnie.
Well, you have to wonder if anybody's going to be in the office today, Justina, after what just happened a couple of hours ago to England, right? Justina Lee there in London. Here in the United States, we're shaping up for a pretty positive start to the week after the Friday jobs report came out on Thursday, and then we ended up having a flat session on the S&P 500, but a very down session for the Nasdaq 100. It was down 1.6% on Thursday, with the stocks down almost 5.5% again for a huge jolt. The AI story will take another turn this week with the SK Hynix IPO at the end of the week, and of course a lot in between then, including Samsung earnings. So for now, we look to be pointed higher across the board, particularly in the tech complex. If we take a look at yields, we'll be hearing from Fed Governor Waller a little bit later on. We see that we have yields down across the board by about 2 basis points, but still pretty elevated, with the 2-year past 4.11 and the 30-year just coming back off that 5% mark. Of course, Brent crude playing into the story too. As you can see, lower once again today. It can't go too much lower. We're already at levels that we were at before the war started. All right, let's get to some individual movers now this Monday morning, and across to London once again, and Chloe Melly.
Good morning, Bonnie. So we are back from this holiday weekend, and tech is very much in the green. We are seeing the likes of Nvidia up slightly, but then Intel and Sandisk actually up very strongly this morning. This is going to be a very key sector to watch throughout this week as we await for those Samsung and SK Hynix earnings. That's going to really tell us a lot about the durability of this AI rally and the sustainability of AI spending as well. So definitely want to watch as well throughout the week. Moving on to London, where EasyJet shares are up this morning after finally accepting this takeover offer from Castle Lake. So they have accepted the 5th takeover proposal from that US investment firm. This is a takeover offer of more than £5 billion. And so we are seeing that drive the shares ahead of more than 10% this morning. And finally, Italy. In Italy, we've got Leonardo up because Italy is set to raise defense spending by 17 billion euros. This is an expected move as it moves towards that 5% spending target from NATO, but this is, regardless, very good news for Leonardo, and so we're up about 4% for that defense company.
All right, a lot of defense news this week. Chloe, thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we'll take a look at market breadth and what's happening there with Annika Treyon of ING. U.S. futures then pointing to a rebound after the long weekend, with tech leading the way. That's as SK Hynix is set to list on the U.S. stock exchanges later this week. The chip giant's estimated ADR size has been reduced from 29 billion to, well, 28 billion, according to a regulatory filing. Let's get more with Bloomberg Tech Europe host Tom McKenzie. Essentially, this is a portion of the company, Tom, a percentage. How do we get to that figure?
Yeah, so this is an ADR. It would be one of the biggest foreign listed secondary listings in the US on Friday. That is expected, as you say, between 28 and 29 billion US dollars. Some of that money, it seems, there's a hope, at least in South Korea, will be repatriated. That ties into the currency story that you were touching on earlier in the show. And so that is one of the key catalysts, is SK Hynix looking to raise that capital in the US markets this week. We're also going to get those Samsung earnings, as Chloe was saying as well, on Tuesday. When it comes to the SK Hynix story, there's an opportunity here, arguably, to try to close the valuation gap with one of its biggest rivals, which is Micron, which has historically been valued and continues to be valued at a higher premium to SK Hynix, even though SK Hynix is really the leader in that sector when it comes to particularly high bandwidth memory. It's also looking to tap into the retail base of investors in the US as well. So we'll see how that is received at the end of the week. The other big catalyst then in this major week for the test of the chip trade is the Samsung earnings, and you're expected to see potentially profits of around $55 billion. That is the forecast. That would be 18 times what we saw in the same quarter last year. So both Samsung and SK Hynix in the spotlight, when we're seeing, as you say, in the Nasdaq futures are pointing higher, but that's part of the catch-up, isn't it, after the drop of about 1.6% on the Nasdaq 100 on Thursday. So part of this is a catch-up trade, but also looking ahead to what could be the catalysts around Samsung and whether or not they can confirm that demand picture particularly for the memory space and AI as a driver.
Yeah, and you have to wonder what the rationale would be for a new memory trade, right? But I guess the market may just find one. How concerned should we be about this NVIDIA story that its next-gen AI server rack systems are going to be delayed by more than a year because of manufacturing difficulties?
Well, it hit a lot of the stock, hit a lot of the suppliers, the Asian suppliers to NVIDIA in the Asian session, but the futures picture doesn't look like it's holding NVIDIA back too much. It's underperforming on the futures picture versus some of its counterparts in the US, but nonetheless in positive territory. But it is a concern. This is a report from Semi-Analysis, a research firm, suggesting that one of its newest rack systems has been delayed by at least 12 months. And so it suggests that maybe as they look to push out the Rubin, the latest chipset, using this rack system to get to their end customers, that maybe that is going to be a portion of concern. It's not about a demand story, it's about whether or not they can really deliver on some very ambitious targets in terms of getting this infrastructure into the hands of their customers. And again, according to this report, it could be delayed by as much as a little over 1 year. And it certainly had a hit in terms of the suppliers that supply into and feed into NVIDIA in the Asian session.
Yeah, we'll monitor those stocks and see do they bounce back in future sessions. Tom, thank you. That is Bloomberg Tech Europe and Opening Trade host Tom McKenzie. Crude lower this morning then as traffic picks back up in the Strait of Hormuz after some unexplained U-turns by tankers over the weekend. This as OPEC Plus agrees to add another 180,000 barrels of oil per day to their daily quota. Bloomberg Horizons anchor Abir Abu Omar joins me now from Dubai. First on these U-turns, Abir, what happened? Was there a threat to safety?
Good morning, Vonnie. We don't know, actually. The reason behind those U-turns is not really identified as of last week. But what we know is that Iran had laid out a specific route for ships that are starting to make their way through the Strait of Hormuz to go through. And any ship that doesn't stick to those routes is prone to those attacks. We saw an attack happening last week that was reported to a ship that did not stick to the borders that Iran had laid out. And so we're keeping an eye on those ships and tankers that are making their way through. And if you remember, Iran is quite adamant in its concessions in this MOU that was signed about 3 weeks ago, that it wants ships to stick to those routes that it laid out, that it wants ships to agree that once the 60-day negotiation period between it and the United States is over, that those ships will have to come to those concessions of paying tolls. And so Iran is being quite vehement about what exactly the routes those ships are taking. We're seeing movement carry on the Strait of Hormuz. That's worthy of, that's something to note here. Vonnie, now the average of those ships, we're seeing 20, 30 ships passing every single day with or without the lights on, as we've been saying. Now that's a far cry from the levels that we used to see pre-war, but it's something to note. It's something to point out. But again, it's just the movement as it carries on and as those oil tankers start to make their way to their buyers. Just something they have to tread with caution is how they pass through the Strait of Hormuz and sticking to those borders that Iran had laid out. So perhaps a completely different paradigm to how things will be going forward after this MOU is signed and after the permanent deal comes through in about a couple of months or so.
Abir, what is happening in the Red Sea? A little concerning that we're seeing a pickup in attacks, or reported attacks at least. Is this the Yemeni Houthis?
Yeah, so this is an attack that was reported late last night. It was about 60 kilometers southwest of the Hodeidah port that's in Yemen. And Vonnie, you mentioned the Houthis, and the Houthis did threaten during the war that they have issued a ban on all Israeli flagged ships. So while we don't know the exact specifics of this attack that has happened, it poses yet another challenge to ships that are trying to make their ways through routes other than the Strait of Hormuz. The Red Sea has become pretty popular for the Saudis, who have diverted traffic away from the Strait of Hormuz throughout the conflict because they've been doubling down on their investments in the Red Sea, and that's really helped them and helped their exports through the wartime. And that is not something that other countries are not doing in the region. The UAE, for example, a neighboring country, a big oil exporter that's exited OPEC last month, has been doubling down on its northern ports. And so we're starting to ask ourselves these questions about just just how much of a challenge or how problematic it will be to start diverting tankers and ships through these other shipment routes, because the Strait of Hormuz has had its fair share of problems over the past 3-4 months, Vani. And so if these problems start to occur in other shipping routes, then we start to ask ourselves about the prospects of an oil supply glut, or those barrels, those much needed barrels, making their way through to the rest of the world.
Abir, thank you so much. Bloomberg's Abir Abu Omar in Dubai. President Trump headed to Turkey for that NATO summit kicking off on Wednesday. He'll be there tomorrow. The president expecting to meet his Ukrainian counterpart, Volodymyr Zelensky. Bloomberg's Piotr Slomowski is in Ankara. Piotr, we know vaguely what President Trump would like to say to other NATO members, what kinds of messages he'd like to get across, but what would be considered a success for NATO itself, for the member countries?
Yeah, so for the Europeans, obviously they're waiting for Trump to come here, and they're fully prepared for the message that will basically say you need to spend more on defense, and Europeans are ready for that. NATO Secretary General Mark Rutte has been trying to prepare for that summit. You know, he was in the White House just last month, presenting these big charts, talking about Trump trillions, sort of suggesting that obviously thanks to Donald Trump, Europeans have really ramped up the defense spending. But obviously we also saw that it's very clear from the pronouncement that we're getting from the US administration that they're definitely pulling out troops from Europe. There's a review going on. Part of it, as Pete Hegseth presented it to Europeans, was displeasure that the U.S. administration had with Europeans for not participating or helping with the war in Iran. So they're probably going to hear that message as well. But they're coming into this meeting also showing to Trump that they're really ramping up, and they are going to come up with deals. So tomorrow there is an industry forum, the first time that's ever happened in the summit, where there's going to be, where Europeans are going to sign a number of big deals on defense, just to show Trump, you know, we pledged, or we committed to 5% of spending 5% on defense in the coming years, and we are delivering. Whether that sinks in, whether Trump is actually going to be receptive is a matter we're going to find out quite soon as he arrives tomorrow.
Now, this all happens as Russia continues to strike Kyiv, in fact, killing 11 just on the eve of the NATO summit itself, Piotr.
Yes, indeed. So we continue to see strikes on both sides, as a matter of fact. So Ukrainians have been very successful in hitting deep into Russian territory, disrupting oil supplies, for example, destroying a lot of refineries. So it seems like Ukraine has an upper hand in that sense. On the other hand, however, we're also seeing, as you mentioned, another strike, a second one in less than a week, where Russia attacks Kiev, and the death toll has risen to 11 people. And this basically shows Ukraine needs Patriot missiles, and only U.S. can provide them, and other allies as well. So that's the problem. That's something that Ukraine wants to get out of this summit as well.
All right, Piotr, thank you so much for giving us an opener there. That's Piotr Slomowski in Ankara. Now to other top stories trending on the terminal this morning. A former Japanese top foreign exchange official says the yen is undervalued by up to 20%. Tatsuo Yamasaki, who served as vice finance minister for international affairs, told Bloomberg the yen should be valued at around 130 per dollar. Yamasaki downplayed concerns that current economic and fiscal policies point to a worsening fiscal position. Thales is buying Exail Technologies, beating rival Safran in the race to acquire the French maritime robotics company. Thales will pay €134 a share, valuing Exail at 3.9 billion euros, including debt. The deal expands Thales' submarine drone business as demand for demining systems rises after the Strait of Hormuz closures. FIFA allowing US star Folarin Balogun to play in the team's knockout match against Belgium tonight. This follows a personal appeal by President Donald Trump, sparking uproar from competing teams. Balogun got a red card for a foul against a Bosnia-Herzegovina defender. FIFA stated that Balogun will instead be placed on probation for a year, but will be able to play during that time. Coming up, EasyJet shares pop after Castle Lake's near $7 billion offer. Details next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of EasyJet getting a boost this morning. The British budget carrier trading at its highest since 2022 after agreeing to Castle Lake's fifth bid to take over the airliner. The offer would give the airline an equity value of $6.9 billion. Bloomberg aviation reporter Danny Lee has the details. So what was it about this fifth offer, Danny, that struck the right chord?
Well, Bonnie, good morning. It really does take two to tango, and this fifth offer, after several weeks of trying, was high enough for EasyJet's management team to give, at least in principle, Castle Lake the green light to do its due diligence and extend this put-up or shot-up offer up until August 3rd. So there is now time for Castle Lake to go through EasyJet's books and now have a better assessment of what it could potentially be buying into. Though analysts and investors had been looking at something more like 700 pence a share, it's still a significant advance in fact that the fact that Castle Lake will be able to now proceed accordingly with its approach for EasyJet. Clearly, it's been quite attractive given the kind of valuations for airlines being hit by higher oil prices and the Iran war. But yeah, this is the fact that EasyJet had previously knocked back bids, calling Castle Lake's bid previously highly opportunistic.
Well, aren't all bids. Danny, what will be the challenge here? I mean, there's more than 15% of the company. The biggest shareholder is the family of the founder, Stelios Hadjiionou.
Yeah, I think the key question remains whether certain key investors and shareholders of EasyJet will be won over by this indicative 690 pence share offer from Castle Lake. The fact that the founder, Stelios, and his family own roughly 15% of the company. He's said nothing so far of Castle Lake's overtures, whether they'll be holding out for something much higher or higher still with regards to Castle Lake's approach. Still, Castle Lake could fall foul of potentially competition regulators in Europe and the UK, and also the structure of the deal. The fact it's a US entity, it does need partners from Europe and the UK, potentially airlines who can help come aboard to solidify its bid from the continent. So it does remain to be seen who does get on board with Castle Lake, and the fact that the competition regulators will be watching very closely as the fate of EasyJet as a standalone entity there are many questions of whether it can survive or whether it may be broken up ultimately, as the sum of it is much more valuable as its whole.
Yeah, absolutely. A lot of assets, a fleet of 356 Airbus A320s, for example. Danny, thank you so much. Bloomberg aviation reporter Danny Lee. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg. Bloomberg Brief. I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the Wall Street Journal reporting on power dynamics at play as countries restock oil coffers. The Journal saying the amount of oil storage around the world playing a central role in U.S.-Iran power dynamics. Next up, the Washington Post on a massive marine heat wave across the Pacific Ocean, covering an area more than 8 times the size of the contiguous United States. The Post says it could have profound ripple effects for weather events around the globe. And finally, the FT reporting large investors committing billions of dollars to private credit following an exodus of smaller retail clients. This is Bloomberg.
say that there's maybe a little bit of in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day and the week. Tech leading stock futures higher. The AI trade set for a test once again with SK Hynix's U.S. listing later in the week. World leaders head to Turkey for a NATO summit as Russia carries out a massive air attack on Ukraine. And oil drops as flows through the Strait of Hormuz return after some weekend U-turns. Also, OPEC Plus's supply signal. Let's take a look at those futures then, because we are pointed higher after the S&P ended Thursday flat post the jobs report, and the Nasdaq 100 had a big sell-off with the SOX index down 5.5%. And wouldn't you know it, Mike Wilson out today saying hyperscalers are the new memory. And I think that's been pretty obvious in the last few sessions of trading. We also have Russell 2000 futures pointed higher. That continues to be a story as breadth widens. Let's take a look at yields. We're waiting for Fed speak this week, starting with Governor Waller. Down about 2 basis points across the curve. Nevertheless, we're backing off at that 5% mark on the 30-year yield. We also have Brent crude lower today once again, even though we had some U-turns at the weekend and a little bit of activity in the Red Sea concerningly as well. Nevertheless, oil down and potential for a glut. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. Tech is in the green this morning, and this is going to be a really, really key sector to watch going forward. I mean, at least this week, because we've got those Samsung earnings coming out that are really going to set the tone for the next leg, for the next part of this AI rally, because, of course, there's been such a wild ride in that sector over the last few weeks. But in the meantime, as we wait for those earnings, we've got some positivity in that sector. Moving on to EasyJet, which is up very strongly in London this morning after agreeing to the fifth takeover proposal from the U.S. investment firm Castlelake. This is a takeover offer of more than £5 billion, and this comes after weeks of EasyJet playing quite hard to get. And finally, Leonardo is also up in Italy this morning after Italy is set to raise defense spending by 17 billion euros. This was an expected move given that it needs to meet that NATO target of defense spending. But this is, regardless, very good news for Leonardo, and we are seeing that driving the shares higher this morning, up about 4% today in Italy.
All right, some nice movers there, Chloe. Thank you so much, Chloe Melly in London. Joining us now is Annika Trione, Global Head of Private Banking, Wealth Management and Investments for ING. Annika, great to have you. I love the way you format your note because you talk about supply being the new trade. And in other words, you know, if you look at the oil market, if you look at the memory chip market, if you look at data centers, every day it seems to be a story now of too much supply or too little supply, and that's what's moving this market. Where should we train our eyes next?
Yeah, look, indeed. I mean, we've experienced our fourth supply shock in 5 years. And this is coming from a very different world of globalization, ample demand, China fueling demand, etc. So we're very much in a supply-orientated market. But I think we need to keep our eyes disciplined on earnings, on company earnings, which has actually been what has fueled year-to-date market performance.
All right, well, we're not getting another earnings quarter, except for some trickling out between now and next quarter's earnings. In the meantime, should we expect the memory trade to continue to sell off and the hyperscaler trade to continue to gain steam?
Yeah, look, I mean, as discussed, so supply is definitely the rhetoric. And I think companies are increasingly struggling. How do they get hold of the supply that they need to continue the innovation and continue the growth? So that will very much be the continued theme we expect, yes.
So what would you be buying then for your clients, or what areas of the market, even if you don't want to talk individual companies, Annika?
Yeah, I mean, in general, let me take a step back, because we've mentioned 4 supply shocks in 5 years and the general unpredictability, volatility we've seen in markets. Also reflecting on what we see in our client base, what we see that increasingly becoming normalized. So in these supply shocks, a COVID set markets -30, a Ukraine war set markets -20, tariffs -15, the latest Iran 10. And what you see is that investors are increasingly focusing on what is fueling share prices, which is actually earnings, as said, and continued flows there. So we see much more discipline, much more resilience, and actually from a European standpoint, we see more nationalism, where investors are actually seeking more and more to expose to Europe, I guess as a diversification, versus an increasing overweight of market drift in the US.
Would you recommend that investors do that? I mean, you're expanding into a vast amount more markets, and I'm curious, where do you see value in the coming months, earnings or no earnings?
Yeah, so what we see, I mean, if you look at our exposure, so we have 80 billion of client invested assets, over 5 million investors across 9 markets, European markets. And what are we seeing? We're seeing that, number one, clients are actually, Europeans are starting more into markets, capital markets, and start investing more, because Europe has had a massive underinvestment versus Americans. So that's number one. Number two, what are they investing in? We see a lot more interest in ETFs in general. If you look at our flows, of our flows, for example, in brokerage ETFs, 6 months ago, that was only 50%. So that's something we see from clients' behavior. If you look at our chief investment office strategy, what do we believe? We neutral weighting to equities. We are neutral to US, Europe. We believe, I mean, talking about the earnings, we believe that this earnings growth is continuing with strength, which justifies where we are in terms of market valuations, etc. So we encourage our clients to just lean in and continue to compound their wealth.
Lean into equities then, Annika, in Europe or around the world?
Yes, broader and broader.
So just buy equities willy-nilly across the board?
No, absolutely not willy-nilly. So what do we see? So if you look within equities, what are we looking at? We see we've got a neutral rating on US equities, on European equities. We're actually over. That's why, because we see more earnings growth expected there, especially also relative to valuations. Within the equity space in general, we continue to be constructive on AI, on tech, but not indiscriminately. So we are looking at company-specific situations. We look at companies, we look at equities as companies generating cash flows, and that's how we continue to take a discriminated view on stock selection at the same time as broader constructive on equities.
Just briefly then, Annika, for diversification beyond equities, what are your clients looking for? What are they asking you about? What are you recommending?
Yes, within fixed income, we're also actually a neutral exposure to fixed income, and there we are underweight sovereigns, we're overweight investment grade. What we see in terms of credit quality, we still think there's opportunities for yield pickup over there. So we remain equally constructive in the fixed income environment.
Okay, amazing, Annika. Thank you so much. Very positive kickoff to this week's trading, Annika Trione of ING. Now to other top stories trending on the terminal this morning. EasyJet shares jumping after Castleake's latest bid. The budget airline agreed in principle to the US investment firm's takeover offer worth more than £5 billion. The deal would take private an airline that went public in November 2000. US beef exports to China could improve in the second half, even as China's decision to renew import licenses for US meat plants has yet to improve exports. Chinese quotas to other major suppliers are set to dwindle as Australia now faces hefty tariffs and Brazil is close to using up its allowance. FIFA allows US star Folarin Balogun to play in the team's knockout match against Belgium later today. This follows a personal appeal by President Donald Trump, sparking uproar from competing teams. Balogun got a red card for a foul against a Bosnia and Herzegovina defender. FIFA says that Balogun will instead be placed on probation, although he'll be able to play for a year. Coming up, President Trump set to meet with President Zelensky at the upcoming NATO summit as Russia carries out massive airstrikes on Ukraine. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Cohen in New York. President Trump will be headed to Ankara, Turkey for a NATO summit scheduled to begin Tuesday. For more, Bloomberg's Kasia Klimashinska joins us now in Washington. Kasia, the president has been pretty vocal about lashing out against NATO members for not helping with the Strait of Hormuz, for not upping their defense budgets and so on. What will be his main message this time round?
Indeed, President Trump is heading to Ankara on Tuesday for the NATO summit that will happen on Wednesday. From his Truth Social posts, we know that he's clearly not in a good mood. He's very critical of his NATO allies. As you said, he thinks that NATO is not doing enough to support, to help the U.S. He cites the example of the war in Iran, where some of those allies didn't allow the U.S. to use its military bases early during the attack on Iran. And then Trump says that those allies didn't help reopen the Strait of Hormuz. But he will face a difficult situation in Ukraine when Russia launched a significant attack just overnight, killing 11 people in the capital of Ukraine. We know that Trump will meet with his Ukrainian counterpart, Volodymyr Zelensky, on Wednesday.
Yeah, we'll be watching to see what headlines come out throughout the week. Now, domestically, the New York Times reporting the administration is rolling back dozens of gun regulations. What does it mean for the various states? Kasia, will guns be, more easily buyable, more easily usable?
This is a very significant move that the New York Times is reporting. The Trump administration rolling back more than 36 different regulations that will allow basically more guns to circulate here in the U.S. A lot of those measures have been imposed relatively recently during the Biden era, where Biden was trying to react to several mass shootings here in the nation. So what will happen now is that basically this safety, this crime that Trump has been saying that he's trying to reduce could in fact increase as more guns will go, for example, to hands of people that have some mental health issues. But it's not surprising. Trump has been campaigning as a champion of gun rights. He has been also very favorable to this industry during his first term.
All right, Kasia, what else should we be looking out for from D.C. this week? Obviously, it's post-4th of July. The House went on a long recess and so on.
President Trump will be talking about his Trump accounts today in the morning, so we might hear more about what he's focused on domestically here. He has been praising the gains in the stock market, addressing the increase in wealth that he himself has enjoyed last year, but praising the stock markets, praising several companies. We know that he is looking at tech companies, for example, in encouraging them to make donations into the Trump accounts that he's promoting for young Americans. Perhaps the midterms are very much on his mind, the affordability. He has been talking a lot about the decrease in gasoline prices because we have oil flowing again through the Strait of Hormuz, for example.
Yeah, I noticed a bunch of companies last week saying they were going to match employees' donations or donate into those Trump accounts. Kasia, thank you so much. Bloomberg Government's Kasia Klimashinska. Stock futures higher than this Monday in a rebound after the long weekend. Tech leads the way as investors await SK Hynix's U.S. listing later this week. The chip giant coming to market with maybe around $28–29 billion in terms of an ADR filing. Let's get more with Bloomberg's Matt Bloxham. So, Matt, what is the rationale for yet another memory trade? It feels like we might have hit peak, but maybe not?
Yeah, so the $28–29 billion in the context of SK Hynix $1 trillion plus market cap's pretty small, but I think the important thing here is that it provides a more direct, more liquid way for U.S. investors to trade the Taiwanese listed company. So far they've not had that direct access. So there are some companies and fund managers in the U.S. that haven't been able to trade it at all. In other companies, there's just quite a bit of arbitrage and friction there in the current ways you can buy it. So I think it opens broader access to the U.S. investor base for SK Hynix. Obviously, even though there's been a bit of a pullback recently, the memory chip companies are on a bit of a tear this year. And I think this hopefully will help to kind of narrow the valuation discount that SK Hynix has been trading at relative to its US peer, Micron. So, yeah, I think that's the kind of main motivation behind this trade.
Now, NVIDIA's next-gen AI server rack system is going to be experiencing delays. Obviously, some suppliers, some clients in Asia sold off massively on this news. How concerned should the US investor be?
Yeah, I think it's definitely something that will attract some scrutiny from the current shareholders. So this Kyber rack system is designed to house the kind of the Vera Rubin chips, the kind of most advanced AI accelerator chips. So I think this is an important part of the NVIDIA development cycle. They're kind of anticipated to be kind of upgrading technology on a kind of yearly cycle. So this particular kind of cage and frame and rack system would really allow the next generation performance boost for NVIDIA-based chips. So I think one of the question marks people are going to have here is, does this create, even if it's a small gap in the market, does it create a gap in the market for the likes of AMD and Google, who also have their own AI acceleration chip development plans? Does it give them an opportunity to kind of close some of the gap that NVIDIA has? But clearly NVIDIA is going to be working incredibly hard to kind of find solutions to this, although this current proposal has kind of hit some technical issues. I'm sure they're working incredibly hard to kind of figure out a solution to those problems, or an alternative way of delivering this capability to their customers in a way that works.
Yeah, you'd have to imagine that all hands are on that deck right now. Meanwhile, its server assembly partner, Honhai, had a great session. It reported a 40% jump in quarterly sales, said there was going to be massive growing AI demand. How can the two be true, Matt, that server assembly is a problem for NVIDIA but not for its partner?
Yeah, it's a good question. Also, a lot of people will know Honhai more as Foxconn, which is the lead assembler for Apple products. But right now the real momentum for them is in assembling AI products. NVIDIA is a really big customer of theirs. And I think whereas this kind of news about a delay to the kind of Kyber rack system for NVIDIA is about the kind of 12-month plus kind of pipeline, obviously what they're benefiting from right now is the kind of the runaway demand for the existing technology that NVIDIA is selling. So I think that's the kind of how to kind of square that circle, if you like. So obviously, potentially, if these NVIDIA issues with Kyber do persist, that may have some knock-on effects to Foxconn eventually. But as we talked about, probably there are solutions on the way. NVIDIA isn't Foxconn's only customer. They're very diversified, and I'm sure there's plenty of other ways that they can kind of balance that out over time.
All right, Matt, thank you so much. A font of information this Monday morning. Matt Bloxham there of Bloomberg Intelligence. Staying with stocks now, Bloomberg Intelligence also out with a list of 10 companies to watch in the third quarter, ranging from hyperscalers to chocolatiers and toy makers, sometimes for good reasons, sometimes for maybe not so good reasons. Bloomberg Intelligence Global Chief Content Officer Tim Craighead is with us for more. Let's begin with, say, Microsoft, Tim. How should we view Microsoft given the competing narratives in the market for that company?
Yeah, it's really interesting, Vonnie, and I will give a little bit of broader context. These 10 companies are part of our broader list of focus ideas. And there are about 160 of these, and as you've noted, some are positive, some are cautious. They're high conviction, fundamentally oriented views, and that's what focus ideas are all about. These 10 have catalysts ahead in the third quarter that make them particularly topical and timely right now. Microsoft, as you've said, there's different views. The market seems to be saying they're a software company that's going to be disrupted by AI, but if you take a step back, they have one of the biggest cloud platforms that the LLMs are using, and they've got a new Microsoft 360 Office suite that's coming out in the second half. We think revenue is set to surprise.
Fascinating. Yeah, there's some hedge fund managers out there that would agree with you, I imagine. Tim, talk to us a little bit about LLMs. They haven't made the cut here. I guess some of them aren't public, so there wouldn't be anything, quarterly-wise to say about them. But what AI kinds of trades have made the cut this year?
Yeah, it's interesting because, we're always looking for sort of the second or third derivative, if you will, of the ongoing AI idea. And that takes us to two other names beyond Microsoft. One is a UK company called Halma. It's health and safety equipment, falls in the industrial category, but they have a business that produces something called photonics. That's used by hyperscalers in their data centers to replace copper. It's a critical component, and we think that will be driving Halma's revenues higher than expected. On the other side of the world, Telecom Malaysia is also very much an AI play. Singapore has been the data center hub for much of Asia. They're running out of space, frankly, to build data centers. A lot of that build is now happening in Malaysia, and Telecom Malaysia is the digital infrastructure provider. So again, it's a sort of second derivative play, but one that makes a lot of sense.
I have to ask you about weather, because we keep hearing that there's an El Nino on the way. There's going to be very, very difficult weather due to a vast quantity of externalities and not just an El Nino pattern, right? And that is not good for cocoa providers, possibly not for chocolate companies too. Where are your focus ideas focused on there?
Yeah, Barry Callebaut is a European company. They sell cocoa to chocolatiers, chocolate makers. And there's a couple of dynamics going on there. One, El Nino, if it is as bad as is now being feared, could dampen supply, raise costs for Barry Callebaut. They also, in general, chocolate makers are using less cocoa in their formulations following all the spikes that we've had in chocolate prices recently. And we think that there's also a negative volume story relative to expectations. So they're potentially stuck in the middle on both sides.
Yeah, that really terrified me when I realized that people like Nestle and so on were changing the amount of cocoa in their chocolate, and probably we weren't even noticing. Tim, thank you so much. They're fascinating reads, all these high confidence focus ideas for Q3. Do have a look on your Bloomberg terminal, and that's Tim Craighead of Bloomberg Intelligence. You can also read more on this on Business Week. Coming up, we have some economic data on deck. We'll get you set up for your trading day. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead this week. First up, we get PMI data, 9:45 and 10 a.m. Eastern. Then NATO leaders gather in Ankara, Turkey, Tuesday and Wednesday. And SpaceX enters the NASDAQ 100 on Tuesday. SK Hynix lists as a U.S. stock on Friday. Here's your macro picture as we head into the week. S&P futures pointed higher. Digesting the jobs data, no doubt still. We have the Bloomberg Dollar Index rebounding up about 0.2%, and we're down about 2 basis points across the board on the yield curve. That's it for Bloomberg Brief.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The market has definitely run out of patience.
So there's going to be greater scrutiny.
In the near term, the demand is still there. You're seeing adoption rates increase.
The micro is the macro. AI in the markets, it is the dominant feature.
This is kind of where the rubber hits the road.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, equities pushing higher. Wall Street returning from a long weekend, adding to last week's advance as the softer than expected jobs report is removing some urgency to hike. Just days before, SK Hynix is tapping U.S. equity markets for $28 billion. That's a big highlight of the week ahead in what could be the biggest ever first-time share sale by a foreign company. That listing on the NASDAQ expected on Friday. Before that, we'll be getting a major test for the chips trade. Quarterly earnings from Samsung dropping tomorrow with high expectations and very little room for error. That's coming up later this week. Here's what's coming up this hour. Alex Altman of Barclays as tech drives equity markets higher. Tobin Marcus of Wolfe Research as President Trump heads to the NATO summit in Turkey. And Sarah Kunst of Clio Capital with SK Hynix closing in on its US listing. We begin this hour with stocks grinding higher as tech regains momentum. Alex Altman of Barclays writing, cast aside your fundamental view for the time being because this market is back deep in technical territory. Alex joins us now for more. Alex, good morning.
Good morning.
Just breathe some life into that quote, if you can, buddy. What do you mean by that?
So, look, obviously when people talk about equity markets, they talk about the fundamentals, they talk about earnings, and yes, that's all been pretty good, and also the economic backdrop has been robust. We've really been focused on the technical aspect for several weeks now, and really at the center of that is what's happened within the levered ETF community. We've talked about that in the past, but the plain, simple aspect of levered ETFs is that you've got a huge amount of sort of short gamma within the market, and what I mean by that is that when stocks have been going up, particularly in the tech space, and in the semi space, it's driving more buying in that, from a technical aspect. And if that goes into reverse, we could see that spiral downwards as well.
How concentrated are some of these concerns in one particular region, in South Korea?
Loaded question there, John. So yeah, it's very much within South Korea. And we are particularly concerned about that because the concentration AUM growth within that region has been prolific. So we've effectively seen that go from around about 12 billion AUM in February of this year. And that's now grown to about 50 billion. But also, if you look at the underlying share turnover of SK Hynix and Samsung as a percentage of that's driven by the levered ETF, we're talking about potentially 70, 80, 90% on a daily basis has been driven by that technical flow. So again, you've effectively moved from just a pure speculation and investment into, dare I say, a bit of gambling.
And we've got to acknowledge this, that we're talking about a week ahead in America, here stateside. We're both Brits and we've lived here for quite a while. We don't typically start a week ahead by talking about two South Korean names, Samsung and SK Hynix. Quarterly earnings from Samsung and an ADR listing from SK Hynix. How unusual is that, to just look to two South Korean names to set the tone for the US equity market?
I would say from a South Korean into the US equity market, I personally would describe it as something I've never seen in my career. Maybe we saw that in Japan back in the 80s during the go-go years then, but I certainly don't remember it. The closest I can ever remember was when Nokia was really dominating that debate with their sort of 11 a.m. in London time releases, which they obviously moved specifically so they could capture the US market. So we haven't seen anything like this in a very long time, dare I say, ever.
Futures this morning, positive by 0.5% on the S&P, some outperformance on the Nasdaq. Alex is going to be sticking with us through the hour. Max Kettner of HSBC, constructive and with this to say, we remain undeterred in our pro-risk bullish stance despite recent skepticism towards the AI narrative. Max joins us now for more. Max, forever bullish. I've got to start by asking, is there anything that you're seeing on the supply side of both debt and equity, particularly given the share sale later this week from SK Hynix, that would offer a headwind to your constructive view?
No, not yet. I think particularly from a technical, from a sentiment and positioning perspective, all of our stuff is pretty much still in neutral territory. Our stuff on long-only positionings or long-only investors, they're a bit more overweight equities, however underweight in high-yield credit. So I think the overall beta actually, in terms of overall risk assets, still quite low. Nothing really that is, or would compare it to 2021, where really it's been exuberance in terms of positioning, particularly among the long-only community. So we're very far away from that. All of the other stuff that we track, the discretionary and systematic shorter-term positioning indicators, they're all around neutral. There's no real buy, no real sell signal. So nothing really to worry about that. Now, on the supply side of things, we talk obviously a lot about IPOs. We talk about now about Hynix, of course, as well. But when we look also at the debt side of things, right, there's been lots and lots of worries about debt issuance from the hyperscalers, from the AI names. However, when you look within tech, when you look within investment-grade credit, within investment-grade credit in the US, tech is only about 10% of investment-grade credit. You look year-to-date at the issuance, it feels like all of the issuance has come from tech and from hyperscalers. In reality, that's been less than 20% of issuance. In reality, net supply overall looks much less worrisome because financials, insurers and banks have actually brought down net issuance. So overall, I think, particularly also from a debt perspective, the narrative is very, very different from when you look at the numbers. The numbers, particularly on the debt supply side of things, don't really look that worrisome at all.
Max, you mentioned some of the companies doing all the spending, and clearly there's been some big beneficiaries of that, the semis. Last week was interesting. And there is a question this morning as to whether it's the start of a sustainable rotation back towards the big spenders and away from the beneficiaries, with Meta at the epicenter of that. Meta up last week on our report here at Bloomberg that they'd be looking to sell out excess capacity and maybe start a sequence of events that might lead to some discipline for the hyperscalers, that would lead to some underperformance for the semis. Max, what do you make of the start of a potential rotation back to the big spenders and away from the beneficiaries?
Yeah, I think that makes sense. It's probably not just, or not a full-on rotation where you'd basically use the AI names or the memory names as a funder to buy the hyperscalers, but the hyperscalers going into a full-on bear market in May and June, going down 20%, that really is too much. I think now in the reporting season, what if, for example, we actually in the next few weeks, we find out that hyperscalers, yes, they are still really investing all this money. They're still undeterred in their CapEx plans, but at the same time, they are still making a lot of money. They're still really making a lot of profits. Plus, perhaps we're already starting to see more evidence on monetizing those AI CapEx as well. That, of course, would be a very, very welcome surprise. What I would also say is, given that drawdown in the hyperscalers, the expectations now are much lower. We're starting from a much lower base, right? You look at quarter-over-quarter earnings growth within the entire S&P. You strip out, for example, materials and energy. Actually, consensus estimates for net income are minus 3% quarter over quarter. The year-over-year rate is probably a bit misleading because we had this great earnings season in Q1 with this almost 20% average surprise factor on the earnings side. But when you look at the sequential, you look at the quarter over quarter net income, you strip out materials and energy, you strip out these oil price effects that we've undoubtedly had in Q2, that actually the expectations aren't exuberant at all. So I do worry that people once again are too neutral, a little bit too much on the sidelines, too worried about things going wrong. And actually, we are getting a bit of a summer melt up into July and August.
Max, we obviously had an at-the-money offering from one large hyperscaler, and there's concerns that the rest will follow just because the equity risk premium is now negative, so it makes sense then for them to tap the equity channel. How do you feel about that?
Yeah, overall, I'm not particularly worried, to be honest, because this whole equity versus debt, I mean, let's be honest, when you look at equity offerings overall, yes, the dollar amounts sound very, very high. We know that the free float, obviously, is a very different number than the total market cap. That's number one. Number two is, when you look at the dollar amounts even of free float or the IPO that's coming to market, the IPOs that are coming to market this year, plus the equity offerings, in terms of market cap, you're probably more on par with 2020, not with 2021, and you're probably even a bit lower than in 2020. And let's remember, in 2020 and 2021, when you compare this to now, when people say, oh my God, we're in an earnings bubble and it's all just AI and it's tech and it's exuberance. Let's remember what we did in 2020 and 2021. We threw money behind SPACs. We literally threw money behind companies where people said, well, I don't really know what I'm going to invest in. I don't know when I'm going to do it. But you know what? Just give me some money and I'll figure it out. And really, we call this a bubble where we do see these crazy, crazy margins. These crazy margins. Look at Micron 2 weeks ago, and we compare that really and call this more of a bubble, or even a bubble, than what we had in 2020 and with 2021. I think that was really way more exuberant, paired also with much more exuberant positioning, both on the systematic and the discretionary side. So overall, yeah, I can't really get myself too worried about that.
So Max, not for me to say if it's a bubble or not. That's your job, you're in that seat. I'm not a technologist either, but I do look at market signal, and the market's sending a pretty obvious signal, at least from my perspective, to one single name. If you go back a month to the start of June, when we had that FT article that reported that Meta was considering a capital raise, equity, that stock sold off. A month later, we have a Bloomberg story, and they're considering selling excess capacity. That stock rallied. Doesn't the C-suite have to sit up and take notice of those kind of signals coming from financial markets?
Yeah, and therefore it probably makes sense to go a bit broader in your particular in your US equity exposure, and not just by the memory and the semi names, right? We are still going to face that shortage probably well into the next year and a half. But is that really the only game in town anymore? No, it's not. That really was the story in April and in May. When you looked at what happened since the end of March, that was when the semi-names, the tech and AI names really within the S&P went up almost 50%, and the rest of the market went actually down 10% and only recovered half of its drawdown from the Middle East conflict. We've just now, in the last 2 weeks, went above that watermark. So they're now flat. The rest of that S&P, outside of those outside of those AI infrastructure complex, they're just above 100 now. They're just back to where they were at the end of February. And that's the stuff that I think you want to lean into, play a bit more the broadening, and actually play that it's not just semis, it's not just that AI infrastructure universe that's doing well. It's actually the median company. Look at median earnings, for example, the last two earnings season, not only in the US, look at Europe, you look at Japan, you look at EM. It's everywhere where in the last two reporting seasons, really, median earnings growth has gone up and median earnings surprises have gone up. So Max, it is more of a broad-based fundamental story.
The good news as well, just to jump in for the broader story, is that the rate story has stabilized too. Data was a bit softer than expected on Thursday. Crude's lower this morning, back to 68 on WTI. Brent crude back to 71. Max, do you believe we have removed some of the urgency to do something at the Federal Reserve?
Oh yeah, absolutely. I think that whole story around Kevin Walsh being the big hawk, and us now having, us as markets now having to finally price some data and not only rely on the Fed to give us forward guidance. To be quite frank, I mean, I sat there in the press conference and I thought, what the heck have we done so far in the last 15 years? Really? Did we only just wake up like 1 hour every 3 months, look at the dots, and then go back to sleep? Really? I mean, this is a slightly bizarre take from the market, I think, to read so much into what Kevin Walsh was saying and how hawkish he was. Remember, the first press conference, he said, the 2% target, the 2% inflation target, is not up for debate for now. How is that so hawkish? So I think that whole, that whole hawkish narrative was too much narrative, not enough backed by the data. And let's remember, when you look at activity surprises, just look at US against Eurozone activity surprises, you really had the third biggest divergence, the third biggest outperformance of US surprises in the last 10 years. So I do wonder now, going into the second half, how much further can that go? That US exceptionalism, that's really making its way into consensus. That was very different 3-4 months ago. If you said, look, no, the US, I know there is geopolitics going on, but the US domestically is doing so fantastically well. That was out of consensus. That was raising eyebrows. Now, if you say US exceptionalism, I mean, your meeting with clients is done after 10 seconds because everyone agrees.
Yeah.
So I do wonder really, rates, perhaps both front end and long end coming down, that should help also multiples to recover.
Max Kentner of HSBC. Max, appreciate it, buddy. Thank you, as always. The rate story stabilising around 4.1% at the front end of the curve on twos. Crude lower again this morning on Brent and WTI. Alex, jobs just a little softer than expected on Thursday. Difficult to make too much of a big deal of that, really, to be honest with you, because still north of 100 count a 3-month average. Unemployment around 4.2%. It's difficult to worry about the US economic backdrop based on data like that.
Yeah, I agree. I don't really think there's an enormous amount from, again, the fundamental picture of the equity market, I think right now is in relatively rudimentary health. And I actually agree with Max. I don't think we've necessarily seen anything particularly dramatic from the new Fed chair, other than effectively reiterating one side of the mandate of the Fed rather than the other, because I think, quite frankly, the other side he's not enormously worried about.
Futures this morning up 0.5%. Yields at the front end of the curve down 3. Twos at 4.1%. Alex is going to stick with us through the hour. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. SK Hynix gearing up for what could be the biggest ever first-time share sale by a foreign company. The South Korean memory giant expected to list on the Nasdaq this Friday, raising about $28 billion. Hynix's core valuation is likely to depend on memory demand, AI spending, and Korean macro conditions. Oil continues to flow through the Strait of Hormuz as OPEC Plus signals higher supplies. Members of the group backed another modest rise in quotas for next month, with 7 nations agreeing to add 188,000 barrels a day. Saudi Arabia, the UAE, and other producers are set to release official selling prices this week. FIFA reversing that red card against US star Folarin Balogun, allowing him to play in tonight's World Cup match against Belgium. The move comes following a personal appeal by President Donald Trump. The president posting on Truth Social, thanking FIFA for, quote, reversing a great injustice. Belgium is set to appeal the decision. That is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. Tells you a little something about how focused people are in this market this morning. The most read story on the Bloomberg terminal this morning is this one right here. UEFA, the European governing body, weighing in just moments ago saying FIFA's reversal of the Balogun red card crossed the line. The regulations cannot be made subject to exceptions. Alex, what do you make of this one?
I think it's been the 4th of July weekend and people are slow to get back into financial markets, John.
That's what it feels like. People were up late last night too, watching the England game as well. My opinion is as follows. I didn't like the red card to begin with, so let's focus on the substance. I don't like when they reduce the replay to several frames and go through ultra slow motion. Hate it. So please, it's been corrected. The optics of it stink. And that's going to be the problem for FIFA from here. Whether this is just a one-off exception or whether they look at the other red cards, if they're coming, and do the same thing. We'll no doubt have more to say on this through the hour on this programme. Up next on the programme, a major test for NATO.
We're very disappointed with NATO because NATO has done absolutely nothing. They don't want to help us defend the strait, and they're the ones that need it. I'm very disappointed in NATO. We pay trillions of dollars for NATO, and they weren't there for us.
Tobin Marcus of Wolf Research joins us next, live from New York City this morning. Good morning.
when news breaks.
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. Equity futures adding some weight to the rally this morning, higher by 0.5% on the S&P, on the Nasdaq up by 1.1%. Last week, the biggest weekly gain on the S&P 500 in about a month, advancing almost across the board. In the bond market, softer than expected jobs data on Thursday. The payrolls report just a bit weaker at the headline. Unemployment back to 4.2% though, catches your eye. The 2-year yields dropping on Thursday, again this morning at the front end of the curve. We're down by 3 basis points, 4.1%. In addition to that move, the data in America just a bit softer than expected. More data later, of course. PMIs and ISMs, but also the move in crude, helping this move in bonds as well. WTI and Brent crude down by 0.75% this morning. Brent at 71, WTI around 68. And the surveillance this morning, a major test for NATO.
We're very disappointed with NATO because NATO has done absolutely nothing. We don't need them, but they should have been there. They don't want to help us defend the strait, and they're the ones that need it. We'll come to their rescue, but they will never come to ours. I'm very disappointed in NATO. We pay trillions of dollars for NATO, and they weren't there for us.
So here's the latest this morning. President Trump gearing up for the NATO summit tomorrow in Turkey as the administration pushes the alliance to boost their defense spending once again. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler.
Hey, John, good morning. Well, as President Trump renews his threats against the alliance, we just had the NATO Secretary General Mark Rutte here in Washington late last month in a bid to try to smooth ties ahead of the summit this week. He pointed out what has been a relatively sizable increase among defense spending for European governments, though our analysts at Bloomberg Economics say not all countries are likely to meet that 3.5% of GDP goal, let alone the broader 5% overall goal that this White House has been pushing. That is going to increase the pressure over the gathering this week, though some other countries may try to court the White House's favor in some other ways, as the German chancellor is reportedly seeking a joint weapons production agreement with U.S. defense companies. Now, the rifts between the alliance has only really been heightened amid the conflict with Iran, though we do know that our allies are hoping that now this more perhaps durable ceasefire is in place, we could see some renewed focus when it comes to Ukraine. The White House has confirmed that President Trump will hold a bilateral meeting with his Ukrainian counterpart Zelensky later this week after he just held a phone call with Russian President Vladimir Putin on Saturday. Now, John, a senior U.S. official who briefed us reporters ahead of the president's travel this week, says that the White House's position is that it doesn't feel that either side is really making progress when it comes to the conflict, and that President Trump will push the Ukrainian president on what Ukraine can do in order to end the war.
Atana, notable, the world seems more obsessed with the red card being withdrawn, and maybe not the focus on this at the moment. Tyler Kendall down in Washington. Tyler, thank you. Tobin Marcus of Wolf Research writing the following: we remain skeptical that there is any realistic path to a big structural increase in defense funding. Tobin joins us now for more. Tobin, welcome. What's achievable over the next few days?
Thanks for having me. I'm not expecting a lot of big outcomes out of this summit. It's been positioned as kind of focused on implementation of commitments previously made. I think from the European side, they're going to be trying to manage tensions, prevent anything from going further south after the outbreak of frustration on the U.S. side about the war in Iran. But, I think the hope will be that as that war is winding down, really what we saw over the course of the past few months, and you had it in those clips, is sort of the president lashing out at his frustration about how the war is going, rather than really expecting that there was something the Europeans could do on their own to reopen the Strait of Hormuz. So now that that's taken care of, perhaps that point of tension is off the table.
Do you think one war, though, informs another? Tobin, do you think there is real fallout from how things have played out in the Middle East in the last few months that shaped the approach of the US to the war in Ukraine?
I think that, to your point, that the sort of American viewing audience seems more focused on the World Cup than they do on the war in Ukraine. I think that, frankly, is going to play into the extent to which President Trump feels compelled to resolve this. He obviously came into office with a very optimistic view of how quickly he could bring the war in Ukraine to a close by putting pressure on both sides. That hasn't materialized. And I think that in the absence of really specific focus from U.S. voters, it's the kind of thing that he could take or leave. I think he would like to wrap it up. But if he thinks that both sides are, that have intractable war aims and aren't willing to hang it up, and also that no one's making progress on the battlefield, I don't know that that has to be at the top of his priority.
Tobin, it begs the question, though. He pursued a war in the Middle East that was deeply unpopular in this country anyway, and carried on with that. How important is the public opinion to the president in his last term?
Yeah, I certainly don't think it restrains him materially on most of his agenda. There's all kinds of things he's done that are not what voters sent him there to do. I think even before the war in Iran, voters had a sense of misplaced priorities. Not that they, hated the tariff campaign so much, but it certainly was not reducing prices, which is what he had been elected to do. And then certainly nobody asked for the war in Iran, and we saw that reflected in President Trump's approval ratings. So where he thinks something is important and where he thinks it's tractable, he's perfectly capable of focusing on areas that voters are not themselves focused on. But if he doesn't think it's tractable, I just don't think that he has all that much appetite to bang his head against the wall of the Russia-Ukraine conflict if he's not able to get the two sides to do anything differently, as he has not been so far.
Tobin, how does that set up Republicans going into the midterms just several months away?
Yeah, I think the outlook looks not great for Republicans. I think the overall national environment certainly looks like it's going to be quite blue. I think that in the House, the sort of left-leaning national environment is going to be more than enough to overcome the net Republican gains in redistricting, which they will end up ahead, somewhere in the neighborhood of 8 seats. In the Senate, there are a lot of close races, but I do still think that leans towards Republicans. Democrats need to, do some challenging, win some tough races in Maine and Michigan before they even get to these kind of reach seats they need to win in states like Alaska or Ohio. So, they really need everything to go right. Republicans only need 1 or 2 things to break their way in a couple of red-leaning states.
November still feels like a long, long way away. Tobin is going to catch up, as always. Tobin Marcus of Wolf Research. Anne-Marie on the ground over the next couple of days in Turkey at the NATO summit. So look out for interviews from her over the next few days right here on Bloomberg TV. Coming up next on the programme, we'll catch up with Sarah Kunst of Clio Capital as SK Hynix prepares for its US listing. Plus, Yahira has your morning movers. Memory stocks gaining ahead of 2 new tests for the tech trade through this week. The listing from SK Hynix later this week, and earnings from Samsung, quarterly numbers from Samsung coming up tomorrow. From New York City, you're watching Bloomberg TV.
wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Returning from the long weekend with equities positive by about 0.5% on the S&P, at 1 percentage point on the Nasdaq. This from John Stolfus of Oppenheimer this morning. From our position on the radar screen, our year-end price target for the S&P of 8100, which we initiated back in December, that's a flex, looks reachable from here. The Nasdaq up 1%. Futures on the S&P up by 0.5. In the bond market, helping this move, yields starting to behave at the front end of the curve, down another 3 basis points on twos of 4.1%. Talked about the softer data on Thursday, softer than expected. Not soft overall, but just a bit weaker at the headline on the jobs report on Thursday, unlocking a move lower at the front end of the yield curve. Yields down. Thursday down again this morning. This Monday morning we're down 3. Moving crude helps that on both WTI and Brent. Over in Japan, Japanese yields on a 10-year, the highest since 96. Dollar-yen up another 0.6%, 162. Goldman was catching up with the team in Europe a little bit earlier this morning over in London. Goldman looking for 165, which, let's face it, is about 5 minutes away based on some of the price action we've seen. 162 this morning. The prospect of hitting 165. Alex Altman with me out of Barclays this morning. Alex, what kind of a problem is brewing over in Japan right now? High yields, highest since 96. It can't buy you some yen strength.
No, it can't, and that is why you're getting the central bankers be getting more aggressive on their rhetoric. I mean, remember we saw the New York Fed check at the beginning of the year, and then we saw the direct intervention after that, and then effectively now you've got the market speculating we're going to get even more. And I think that the problem is right now is that unless you're going to actually indicate a more aggressive monetary policy stance, then effectively macro traders see this as another funding trade, despite the fact that the terms of trade with Japan have actually improved.
Dollar yen this morning, 162 and higher by 0.6%. We'll come back to that a little bit later. As we count down to the open, about 3 hours away from the cash open, let's get to your morning move as Yahira has more. Hey, Yahira.
Hi, John. We are seeing the memory trade rebounding this morning with names like Micron and SanDisk up after selling off in the last session on Thursday as optimism builds around 2 major events this week that you've already mentioned. We get Samsung earnings tomorrow, plus SK Hynix plans to list on the NASDAQ on Friday. And this is coming at a pivotal time as investors look for fresh confirmation that demand for AI memory chips remains strong, especially after our reporting last week that Meta is looking to sell computing power, and that raising some questions about the demand picture. Speaking of Meta, we are seeing those shares outperforming the Mag 7, up just 1.7% this morning. And while there's no company-specific news, we did get a call from Mike Wilson over at Morgan Stanley, who will be joining the program later, on the hyperscalers, saying that he prefers them over semiconductor stocks as a better way to play the AI trade because of their strong underlying businesses. He also expects the hyperscalers to strike a more measured tone when it comes to their AI spending plans, as investors increasingly want proof that those investments are paying off, so that may help the rotation take place. And we end on Alibaba, those shares also rising in the pre-market, up 1.5% after a judge granted the company temporary relief when it comes to its blacklist by the Pentagon. For now, Alibaba can continue to work with Washington lobbyists as the court considers its challenge. Remember, the Pentagon added Alibaba to its blacklist last month, citing alleged ties to the Chinese military, something that the company strongly denies. John?
Hey, Yahara, thank you. More from Yahara in the next hour. Yahara mentoring Morgan Stanley's Mike Wilson. Mike's going to join us in about 30 minutes' time, so look out for that. On our radar this morning, NVIDIA's next-generation AI server reportedly facing delays of more than a year due to manufacturing issues. The report sending Asian tech stocks lower, with investors already on edge over disruptions to the AI trade. Elsewhere, SK Hynix gearing up for what could be the biggest ever first-time share sale by a foreign company. The South Korean memory giant expected to list on the Nasdaq this Friday, raising about $28 billion. And FIFA overturning the suspension of the US top scorer Florian Balogun. The Wall Street Journal reporting President Trump weighed a legal challenge to FIFA's use of slow motion replay to assign him a red card. It's FIFA's first such reversal in more than 6 decades. If you're looking for an energetic handoff from the team in London to New York later on this morning, Alex Altman, I imagine you're not going to get it because most of London was up late last night watching the game.
And not just that game, obviously, there would have been on tenterhooks looking at the Norway-Brazil game as well to see who they were going to be playing in the next round of
Is it coming home?
I don't think I can say that on live television.
Okay. I don't want to either. There's going to be some tough games ahead, that's for sure. Stocks are positive then, up 0.5%. We've talked a lot about the memory trade. Another big test coming later this week with Wall Street looking to Korea, with Samsung results on deck and SK Hynix preparing for a US listing this Friday. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, welcome. Alex and I were talking about this 30 minutes ago. It's really peculiar to sit here and to look to South Korea to set the tone for the US equity market. But Mandeep, I guess that's what we're doing for the week ahead.
Yeah, and that's where the earnings growth is. So look, when it comes to SK Hynix, this is a company that continues to show, triple-digit earnings growth, partly because the trends are in their favor. And they've been very disciplined with their CapEx. So I know everyone is looking for the end of memory cycle, but the way these companies, the three companies on the memory side have gone about the supply expansion, they've been very disciplined. And that's where if, the next version of NVIDIA chips is going to have 3 times more HBM needs, then clearly with the supply expansion that we have seen so far, you will continue to see steady price increases. And I think that's what you will find out in SK Hynix results, the price increases that we have seen, so far.
Mandeep, for anyone waking up this morning and looking at the reduction in the deal size from 29 to 28, what's behind that? How much of a big deal should we make of that?
Not much. I think, again, there will be some nervousness around buying, a memory company and getting that allocation in terms of if you're playing this for a secular trend, is memory the right place, a company like SK Hynix? But to my mind, everyone seems to be underestimating how much memory we would need. And we have already seen Apple raising prices. So, when you look at the trends, they may last longer in terms of their durability. But look, this is a cyclical industry, and that's where there will be some nervousness around any new IPO.
Mandeep, no doubt we'll catch up tomorrow as well. Earnings from Samsung just around the corner. A US listing from Hynix later on this week. Mandeep Singh there of Bloomberg Intelligence. Sarah Kunst of Clio Capital writing the following. Will there likely be appetite for SK Hynix to list in the US? Certainly. Will the price be reasonable and reflect the business fundamentals and looming AI bubble risk? I highly doubt it. Sarah joins us now for more. Sarah, let's build on that last line. Why do you believe that's the case?
I think that right now people feel like any exposure they can get to the AI trade still is going to work. And the thing that I really don't like about it is that we're actually seeing retail investors in Korea rush in to names like SK Hynix at sometimes insane up to 150x leverage, while we see sort of institutional investors mainly flow out. And that is generally not a sign of a company that is super well priced and likely to continue to make a lot of more money for investors.
Sarah, on that exact point, obviously we've talked a lot about levered ETFs and how there's a concentration within the Korean market. Is there a risk that you actually see money getting pulled out of those levered ETFs and get allocated back into the ADR listing when it comes this week?
I certainly think so. I mean, it makes a lot more sense to just own the asset versus owning an esoteric ETF that flows through a sort of illegal Binance account in South Korea, right? Which is what we're seeing a lot right there. And so I think this IPO will do well. I don't know if the IPO doing well is the best signal of the health of the market, sort of conversely.
And then if you actually sort of think about the relative valuation between, say, SK Hynix and some of the local peers, a lot of the ADR, reason that people wanted to get into the ADR was specifically for that valuation differential. Is it still as wide today as after the rally that we've seen?
It's shrinking, but I think that what most investors are looking at is the gap between where the U.S. companies that are in similar lines of business trade and where these names do. And that gap is definitely still there. The real question you have to ask is the U.S. stock market right with our ever-increasing multiples? And is the rest of the sort of global stock markets wrong with their much lower multiples? And if you think that, hey, maybe the U.S. stock market is widely overvalued, especially some of these hyperscaler names, then closing that gap doesn't necessarily make you money long term.
Sarah, just build on that again. You said looming AI bubble risk in the quote that I shared. Then you said ever-increasing multiples. Where are you seeing that?
I mean, I think SpaceX, Palantir, right, Tesla, you look at those triple-digit kind of PE ratios, if they even have them, right, if they're even profitable, that is not sort of a sane, solid, great place to put a bunch of money and hope that all goes well indefinitely. I do think there are names that are relatively right-size valued, maybe, the Alphabets, the Metas, but the funny thing is those are actually names that people are increasingly nervous about, skeptical about, even souring on, and that's why you're getting these reasonable valuations, because people are almost fully negative on them.
Do you think we're about to see a strategic pivot from the likes of Meta?
I think that Meta is learning faster this time. Zuck is learning faster. So if you remember back to the legless metaverse, the stock just plunged and plunged, and that man did not care. He was going to make the metaverse happen until it finally didn't. I think this time, you know, we have reporting this weekend that there have been leaks of documents where he basically says, yeah, guys, the layoffs were a mess. The AI sort of pivot in general has really been tough. We have not done a good job. We know that other senior figures like Boz inside of the company are saying that. So it does seem like this time they are much quicker to say sort of, we've messed up. Let's try to fix this. I think the cloud computing thing is a good sign overall, that he's not sort of saying, I am going to put all of your money into a bonfire and burn it at the altar of AI CapEx no matter what. He is willing to say, if this doesn't work super well, here are some, you know, ways to let a little steam out and to get some cash back in. I like that. I want to see him be ambitious while also paying at least a little bit of attention to shareholders.
The stock seems to like it too, based on the initial reaction to that news from just last week. Sarah, do you think we're learning something just about Meta or the broader AI trade?
I think the broader AI trade, the question here, right? We all know the obvious questions. How much actual sort of demand is there going to be? How much money are people going to pay, you know, the open AIs of the world for access to these AI models? Those are the big questions. I think that in the second half of this year, there's going to be a sort of smaller, more persistent question, which is if we right-size this trade, which I think we're on track to do, I think we're going to see some of these valuations get smaller. I think we're going to see some of these IPOs get smaller. How do we do that without sort of punishing everybody and wiping out some of these big names like the Alphabets, like the Metas, even like the SK Hynixes that have really solid core businesses that existed long before AI, will exist long after this current moment. And how do we not sort of confuse those two?
Sarah Kunz, Clio Capital. Sarah, appreciate it. Thank you. Big changes potentially. Changes in the language we're using to talk about this trade. We've gone from talking about scarcity, supply constraints, bottlenecks, those kind of things, and now we're talking about excess and selling excess capacity at Meta. What did you learn from that reporting last week? Something about that stock, that particular name, or something more broader?
I learned something more broader, and I think what I think is that the market needs to think about, do you want to be short human ingenuity? We have a series of problems as a society when approaching AI. And right now, Wall Street is looking at it as a linear extrapolation to solve those problems. We just need more compute, we need more memory, we need more power. But actually, if you think about the efficiency gains that we'll probably get along the way, over the next several years as we improve chips and so on and so forth, then are we going to end up with excess capacity down the line? And actually these businesses that are growing data centers the size of Manhattan are going to start selling it back to other parts. So I don't think there's an issue with demand. I just think it's more of a case of if you have a linear extrapolation of what the current trend looks like, you're shorting human ingenuity to solve these problems.
Do you think we're closer to that moment than maybe some people believe?
I think that it requires very small changes in narrative to have a disproportionate change in price right now as a function of all of that technical market setup that we've talked about.
This is the price of the story this morning. The Nasdaq up by about 1% this morning, and the S&P up by 0.5. With an update on stories worldwide, with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Russia launching a barrage of missiles and drones at Kyiv overnight, killing at least 20 people and exposing a growing gap in Ukraine's air defenses. With the strikes coming ahead of the NATO summit, where Volodymyr Zelensky is expected to press Washington for more weapons. Shares of EasyJet soaring in UK trading. The budget airline agreeing to a takeover bid of about $7 billion from US firm Castle Lake. The two sides have gone back and forth over the possible deal in the past month. The agreement still faces scrutiny from shareholders and from regulators. One of President Trump's signature initiatives took effect over the weekend. Parents can now start contributing to newly launched Trump accounts, which provide a $1,000 government-funded investment for eligible children born between 2025 and 2028. And that is your Bloomberg Brief. John.
Very cool. Vonnie, thank you. Thank you for the update. Up next on the program, the OK economy.
You've got an economy that's growing at some pretty significant numbers, and the employment picture is just okay. That's part of why I don't really understand, significant raises in interest rates relative to this.
Kelsey Barrow of JP Morgan Asset Management joins us next, live from New York City. You're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Equities this morning positive by 0.4% on the S&P, on the Nasdaq up by 1%, returning from the long weekend stateside, adding some weight to a rally in this equity market. Big week of gains last week, the biggest going back to May. If you switch on the board and get to the bond market, 2s, 10s and 30s, let's just isolate the front end of the curve and talk about 2s. Down again this morning, yields lower by 3 basis points, 4.1%. 2 very different ways to look at the same labour market report. This from Bank of America. No major fireworks. The data was soft on balance, but not as dovish as the market reaction suggests. We maintain our 3-hike call. That's Bank of America. Here's Citi. Soft job growth in June. Downward revisions to prior months will relieve hawkish concerns. Any case for hikes is disappearing. They're looking for rate cuts to start in October. That's the divide on Wall Street right now. Bank of America on the one side, looking for hikes. Citi on the other, looking for cuts. Under surveillance this morning, it's an okay labour market.
Listen, I think that the hiring in the country is just okay. It's stable, it's okay, but you've got an economy that's growing at some pretty significant numbers, and the employment picture is just okay. That's part of why I don't really understand, significant raises in interest rates relative to this.
So here's the latest this morning. Investors are waiting fresh data for insight into the true health of the economy following a noisy jobs report. Kelsey Barrow of JP Morgan Asset Management writing, for the Fed, a July hike is probably off the table, but more data will be needed to persuade the hawks. Kelsey joins us now for more. Kelsey, good morning. Good to see you.
Good morning.
Is the labour market just okay?
I think that's a fair assessment. So essentially, the payrolls report, I don't want to put too much weight on it as it relates to the path for the Fed this year. I think that the jobs report had implications for the probability of July, but if you look at the market pricing for the end of the year, it hasn't really changed. The market is still pricing a rate hike. And the reason is because I think a lot of the decision around hike or hold is ultimately going to come down to the inflation data rather than the labor market data. Now, our view is that you will be able to see enough sequential improvement in inflation to keep the Fed on hold. But again, it's kind of like a jump ball right now, as you described. There's people on one side that are expecting hikes by the end of the year, and then people on the other side that are still expecting cuts. And when I think about it, this may really be what Chair Warsh was looking for all along, which is have a view on the data and let that data inform where the Fed should be.
I hear from you base case hold for this year. Is that fair?
Yep.
How does that inform your approach to fixed income this morning?
So, when I look at this market, I see a market where all-in yields are attractive. We're continuing to see a lot of flows into fixed income. And this is a market where you want to have carry in your portfolio, and that is going to benefit you. So we talk a lot in fixed income about fixed income protecting you in terms of a recession, in terms of the downside risk. We're not really thinking about that environment right now. What we're thinking about is an environment where yields are range bound, and what you're collecting is actually the carry, and that carry can actually be very powerful. And what we want to continue to underwrite as we go through the year is the credit side of the story. So do the credit fundamentals continue to suggest that we can be comfortable investing in investment grade and in high yield? And so far, the fundamentals have really been quite strong, even with concerns about increase in issuance. When I look at the range for the IG spread for the index, it's been in a 5 basis point range for nearly 60 days. So despite the fact that we are having record issuance, and that issuance is coming from a new sector of the market, particularly AI and the data build out, things are being well absorbed.
On that point, so with all that IG issuance, especially from the hyperscalers and at the long end as well, is that going to crowd out the long end? And does that basically keep 10-year government and the long end of treasuries just under a little bit more pressure than they would have done?
That's an interesting point, and I would say in terms of things that can keep some upward pressure on long end of the U.S. yields, it's not just the credit supply in the U.S., but it's actually Japan this morning reaching new record highs in terms of yields there. But I would say what we're seeing is the price discovery is a little bit more tricky on the long end of the curve, particularly for hyperscalers. And if there was an area where I think that there is still kind of room to fully understand where pricing should be, it would be where should those 10s, 30s credit curves spreads really be for some of the hyperscaler names. But when I think about it more broadly, what we're seeing is that these names are generally being well absorbed into the market. And, when we look at the fundamentals, demand for compute is expected to exceed supply for at least the next 2 years. So there's a very long runway for them.
Let's go back to the Fed and data dependency for a moment. So if we're moving away from a world of forward guidance, what does that mean for volatility around around economic releases, around the FOMC dates, and just the impact that can have both on different parts of fixed income, whether it's government or credit?
So I think volatility may be higher, but I don't want to put too much emphasis on that because I actually think we've been moving away from forward guidance for quite some time now. So this is really more an evolution than a revolution. And we've been kind of peeling back the layers of that onion as the Fed has gotten further away from the zero lower bound. And so essentially we were already operating in a generally data dependent framework, one where the Fed couldn't give a lot of guidance because we're around neutral and the next move from here is a little bit more uncertain. And so, yeah, I mean, is the data important? Absolutely. I think about CPI coming up July 14th. That's going to be really important for the market. But, this is the way that the Fed has been trending in terms of their, strategic goals for a while. And interestingly, it's not just the Fed. We're actually starting to see other central banks kind of all have very similar messages. So last week in Sintra, I thought it was interesting the phrase that Lagarde used, which is we're moving from forward guidance to framework guidance, which I thought was kind of clever. I think the challenge is, particularly for Chair Warsh, is we don't really know what that framework is yet.
I think the ECB is looking increasingly confused after making what looks like a policy error in the last month, aren't they?
Yeah, I mean, the data is looking softer there. We're already starting to see some downside surprises to inflation, both in Europe, also in emerging markets. And that's why we do see value across a number of the different government bond markets, is because some of these central banks have hiked rates, or they've talked very hawkishly, even as we've really taken some of the inflation pressure off because of lower oil. The central banks are still staying fairly conservative. The markets are keeping some of that term premium in, but ultimately, we may not need to deliver all those rate hikes that are priced. So whether it be the ECB or some of the emerging markets that we follow, like Mexico or India, there's some value in those curves that we're looking at right now.
Cassie, good to see you. As always, Cassie Barrow of JP Morgan. Special thanks to Alex Altman, who was up all last night looking at the score and trying to get some sleep at the same time. Alex Altman of Barclays. Alex, thank you, buddy. Coming up next, we'll catch up with Mike Wilson of Morgan Stanley, Henrietta Trays of Veda Partners, Noah Weisberger of BCA Research, Neil Dutta of Renmac. The second hour of Bloomberg Surveillance is just around the corner.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We've had a very resilient economy. We're sitting in a labor market that's largely in balance.
It's not that wages aren't robust. They're just not robust enough.
A hike is not out of the table. Our call is for the Fed to keep policy on hold for the remainder of the year.
It's wiser for the Fed to wait.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures adding some weight to the rally on the S&P 500, up by 0.5, adding to a weekly gain, the biggest weekly gain on the S&P 500 going back about a month. On the NASDAQ 100 this morning, tech back front and center, up by 1.15% on the NASDAQ 100 this morning. The Russell slightly underperforming, up by 0.1% so far on Monday. Into the bond market we go. 2s, 10s and 30s. Crude is lower. Jobs data softer than expected, unlocking this move at the front end of the yield curve. Yields down on Thursday into the long weekend, down again this morning. We're down 3 basis points at 4.11%. 10s, sub 450, down by 2 basis points at 446. Going into this week ahead, it's packed with data. Later on this morning, we get a PMI at 9:45 Eastern Time and ISM around 10 a.m. Through the week, the focus shifts to South Korea of all places, but that's the market we're in right now. Quarterly earnings from Samsung tomorrow. Look out for that on Friday. A listing from SK Hynix looking to raise $28 billion. One of the biggest equity capital raises we have ever seen, coming from a name that was hardly talked about a few years ago. That's the week ahead for you. This is the next hour or so. Coming up, we'll catch up with Mike Wilson of Morgan Stanley, expecting the market to continue broadening in the second half. We'll catch up with Noah Weisberger of BCA Research, raising his year-end price target on the S&P to 8,100. And Neil Dutta of Renmac, breaking down what he calls an uneven economy following what he calls a disappointing jobs report. We begin this hour with stocks adding to gains to kick off the first full week of the first quarter, the third quarter. Mike Wilson of Morgan Stanley writing, falling energy prices, peaking tariff inflation, and contained services keep the Fed on hold rather than hiking this year. Lower real rates should support equities and further fuel the broadening trade. I'm pleased to say that Mike joins us around the table for the next hour. He joins us for more. Mike, good morning. Good to see you.
Good morning.
Let's just start with the stability we're seeing in the rates market and how important that is to set the stage for what you're anticipating in the next few months.
Yeah, I mean, I think you were saying it earlier. I was listening to the show. I mean, there's somebody expecting a hike, there's someone expecting a cut, and we're on hold. And this is, I think, what we got to get used to is that with the new chair probably not giving as much guidance, is going to allow the market to kind of figure it out on its own and have these different views. We're in that adjustment period now. And I think that's one of the reasons why the market's been a little choppy or even correcting in the last month or so, is we're getting used to this new regime, which is going to be higher volatility and potentially the bond market. But over time, I think what's going to end up happening is the market's going to settle down. It's actually more estimates, a wider dispersion of estimates, actually leads to lower volatility in the pricing over time, but we're in that adjustment period. So we think rates are lower ultimately, particularly at the back end. And oh, by the way, we've talked about this on the show many times. New Treasury Secretary, new Fed chair, this kind of new Fed Treasury accord to really anchor the back end. That's what they're focused on. You got to get the back end down, or at least anchored, because you have so much debt that you have to basically finance.
Do you think in the meantime we're confusing a reduction in guidance with an increase in hawkishness? Yes. Just in the meantime?
Yeah, I think that's right. And the market's pricing that now. So that's the good news, is that we've already had that adjustment. And that adjustment started 4 months ago, right? This is why precious metals have traded really poorly. The day that Warsh was announced as a nominee, the gold market peaked. And that was a sign the dollar has been stronger. So once again, the market has really gotten ahead of this.
So rates have reset. We've come down from around 4.2% to 4.1. There's a belief this morning, at least, we've removed the urgency to hike as soon as July. So we can put that story to bed. Crude's decline, massive reset in crude from triple digits down to the 60s on WTIs. Does that open the door within the equity market? And let's talk about the stock market exclusively. Does that open the door to the broadening trade again?
Yeah, that's our call, basically, is that was happening at the beginning of the year. Then we had Venezuela and then Iran. By the way, the market priced Iran before the invasion even happened, or the attacks happened, because once again, it was pretty well signaled. And so that's when the broadening trade stopped. The broadening trade literally stopped the day that the attacks happened, and we had the big spike in oil, and then the pricing of the Fed to hike rates. Since, I say mid-May, which is when we reiterated the broadening call, we had a different view than most. We thought oil prices would come down. And that has allowed now Fed pricing to sort of stabilize, and that has allowed the broadening trade to reignite.
Small caps have performed nicely, just had a massive quarter, up by more than 20% on the Russell. We've seen the broadening trade speak to the performance we've seen in the equal weight on the S&P 500 as well. Let's talk about the Mag 7, which increasingly was called the Lag 7. You've got a note out this morning talking about maybe the money going back into the hyperscalers. Just walk us through how you're thinking about what's happened in tech and that divergence between the big spending companies and the beneficiaries of all that spending, and the divergence that's what really widened in the last few months.
Yeah, I mean, there's a symbiotic relationship between the spenders and the beneficiaries, and typically they trade sort of in lockstep. And a couple things we've been writing about for the last several months. Number one, CapEx to sales, that particular factor has been straight up since the Big Beautiful Bill was passed, right? That basically the government's incenting businesses to spend money today rather than later. And so that CapEx to sales factor has been driving a lot of stocks higher. That looks like it's peaking now. And by the way, the hyperscaler stocks started to trade poorly about a month and a half ago and into this idea. But that's not sustainable. You can't have the spender stocks trading poorly and the beneficiary stocks continuing to go straight up. And now what we saw last week, Meta announced that perhaps they're going to sell some excess capacity, maybe turn into a provider of capacity. That is just a reason for these things to take a break. Also, peak rate of change on revision breadth, right? The memory stocks, the revisions have been spectacular, but they can only go so high. So all of that's kind of happening at the same time, and I expect the hyperscalers now to stabilize. That's what's going on in the last couple of weeks, and the semiconductor stocks are going to correct. That's a good development. That doesn't mean the CapEx cycle is over, but that ebbing and flowing between the two is a natural kind of governing factor, because you can't have this divergence continue. It's unstable.
Your words, take a break. That's interesting. Some people have called it a narrative shift for the overall trade, and maybe a shift in spending too. Why is it one and not the other?
Well, we don't know for sure, but we've had 3 of these already, John. So since ChatGPT was announced in November of 22, we've had 3 of these sort of mini cycles within the broader structural CapEx cycle, which is that the market starts to question, the return on capital isn't good enough to support this kind of CapEx. What happens then? The stocks trade poorly, and then the CEOs of those companies come out and say, well, maybe we won't spend as aggressively, and then it ebbs the other way. And so that's the story. That's the dance back and forth. Now, there is going to be a period, there is going to be a time, we don't know when it's going to happen yet, where the CapEx cycle will exhaust itself, and we will have, we've talked about this, that there is going to be malinvestment here. we don't think that that spending cycle is over because they just started raising the capital in the credit market. So they're going to spend the capital, okay? So, but we can have these mini cycles in the structural bull market of CapEx.
I think, as you know, though, forget the spending that's not yet happened. It's the intentions that matter, and a deceleration in CapEx intentions from here. How do you think this market's going to internalize the prospect of that in the coming months?
Well, it's doing it right now. So we talk about it as a peak rate of change or, you know, trough rate of change, second derivative growth, and that's exactly what's going on. There's two things we're focused on. Earnings revision breadth for the semiconductor stocks themselves are like 75%. That's about as high as it goes. We've documented that. So that's going to roll over. That doesn't mean it goes negative, but the deceleration on that can cause those stocks to correct. And then, of course, the hyperscalers will benefit if the market perceives these companies as being somewhat CapEx disciplined, that they're not going to do willy-nilly spending in a way where free cash flow, you know, goes to zero or negative. And by the way, free cash flow expectations for some of those companies are going towards zero. That's why they've underperformed. So it's this dance, like I said, back and forth. And now in the last week and a half, some of the hyperscaler stocks have started to trade better. That's a good sign that we're going to have this little correction. This could last, you know, 4, 6, 8 weeks, something like that. And then we'll probably have the next upcycle for the semi.
And these newer names that were in bear markets, I'm talking about Meta and Microsoft. Meta had a better week last week. Chips, you keep using this word correct. When I hear that, I'm just thinking, what do you mean by that? How much is the downside? How big is the downside for some of these chip names?
Well, these are high beta stocks. I mean, they can correct 30, 40% in a bull market. No, by the way, just look at the 200-day moving average. That's probably a really good gauge. These stocks are so extended relative to those moving averages. That's how you got to think about it. Those moving averages exist for a reason, right? They always return to the moving averages. Does it happen in a violent way or does it happen kind of gradually over time? We'll have to wait and see. But yeah, 30% correction in these stocks is, I mean, well within possibility. In fact, some of them already have corrected 30%.
You can have a 30% correction in chips. Just bear with me here. And you can still see the index move up and to the right on the S&P 500, even with the massive weighting they have.
But we didn't say that.
That's what I'm asking.
No, but I mean, that's part of our call too, is that we think this rotation is happening in a down tape.
Okay.
Unlike the correction we saw in the precious metal stocks in January, because they're such a small part of the index. Energy stocks had a big correction after having a great run in January and February. Now the market traded off a little bit because of the war itself. But so I agree with what you're saying, or your premise or your question, which is, since these stocks are such a big part of the index, it's going to be really hard for the index to make any upward progress until this rotation has sort of happened.
This is a summer story for you?
Oh yeah, I mean, we're not bearish on the year end. We're still 8,000 plus for year end, and we've had that call for quite a while based on the earnings story. So that earnings story is very much intact. In fact, the fact that we're rotating now to some of these other areas almost confirms the thesis we've had all year, which is this is not just a tech story. That's a great story, but the broadening story is the story that I think people have really underestimated. The rolling recession from a year ago, this operating leverage story, which I think is still very underappreciated.
Do you think the banks can start working now too?
Well, they have been. I mean, the money center banks and the capital markets banks related have been
Your
phenomenal.
stock, absolutely. Goldman stocks, fantastic. I'm talking about the others.
The regionals. And so they've started to perform, and that's been an area we've been highlighting. Now, the yield curve's flattening still, or is having trouble kind of re-steepening. So I think that group could pause a bit. We took that off of our list of favorites for the broadening trade this week. But ultimately, between now and year end, we do think the banks are going to do quite well, because this is a strategy of the Treasury and the Fed, is they want more lending going through the traditional lending sector. So while the yield curve is flattening, loan growth is accelerating, and that's feeding this whole broadening out story of the economy, right? This is a strategy of the administration. They want a privately driven, organic economic expansion, and that's what we're getting. Notwithstanding that maybe the labor market isn't as robust as some people were hoping, but that's also then feeding the earnings story, right? Because you're seeing revenue growth without a crazy need to hire a bunch of people, and that's the operating leverage story 101.
We'll talk about that cost discipline through the hour. Mike Wilson of Morgan Stanley is going to be sticking with us. Equity futures near session highs up by about 0.4% this morning on the S&P. With an update on stories worldwide, with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. A cargo vessel in the Red Sea reported that it came under attack from armed assailants southwest of Yemen. The AP reporting a skiff approached the bulk carrier and opened fire Sunday. The ship returned fire, and according to the British military, no one was hurt. SK Hynix gearing up for what could be the biggest ever first-time share sale by a foreign company. The South Korean memory giant expected to list on the Nasdaq this Friday, raising about $28 billion. Hynix's core valuation is likely to depend on memory demand, AI spending, and Korean macro conditions. In sports, Brazil is headed home from the World Cup in their earliest exit since 1990. Norwegian superstar Erling Haaland scored both his team's goals to send them to the quarterfinals for the first time in Norway's history. They'll be facing England, who defeated Mexico on home turf, overcoming a red card to win with 2 goals from Jude Bellingham and another strike from Harry Kane. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, a push for NATO spending.
We're very disappointed with NATO because NATO has done absolutely nothing. They don't want to help us defend the strait, and they're the ones that need it. I'm very disappointed in NATO. We pay trillions of dollars for NATO, and they weren't there for us.
Up next, we'll catch up with Henrietta Trace of Vader Partners, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Returning from the long weekend with stocks positive here, up by 0.4% on the S&P, on the Nasdaq 100 up by 1 full percentage point. Bit of underperformance on the Russell. We had some outperformance more recently, up by not even 0.1% this morning. That's the equity market picture. Turn to the bond market board. Some data later. We get a PMI at 9:45 Eastern. ISM services 15 minutes after that, so look out for that in a few hours' time. On a 2-year this morning, ahead of that, we're down about 3 basis points. The 2-year 4.1%. Unlocking this move in crude. WTI and Brent down again, declining by, let's call it 0.1%. Brent crude is 72, WTI around 68. What a reset we've seen in the energy market. And at Savannah's this morning, let's talk about policy and the week ahead, a push for NATO spending.
We're very disappointed with NATO because NATO has done absolutely nothing. We don't need them, but they should have been there. They don't want to help us defend the strait, and they're the ones that need it. We'll come to their rescue, but they will never come to ours. I'm very disappointed in NATO. We pay trillions of dollars for NATO, and they weren't there for us.
So here's the latest this morning. President Donald Trump heading to the NATO summit tomorrow. The president preparing for a busy schedule in Ankara while renewing calls for allies to increase defense spending. With the latest, Tyler Kendall is in Washington. Hey, Tyler.
Hey, John. Well, as President Trump renews his threats against the NATO alliance, we had the NATO Secretary General Mark Rutte here in Washington just the other week in a bid to smooth ties ahead of the summit. He pointed to what has been an increase in defense spending among European countries, as our analysts at Bloomberg Economics find that the top 5 European economies are on track to spend about 2.5% of GDP on military spending this year. For context, that's up about half a percentage point from when President Trump took office, though not all countries are on track to meet that 5% total goal that the White House is hoping these allies will hit by 2035. The U.S. ambassador to NATO, Matthew Whitaker, just last week touched on this point, previewing the trip to reporters last week in Turkey. And he seemed to say that the U.S. feels that the countries that spend more should get more benefits from the U.S., though he declined to say what that would actually entail. We do know that the U.S. right now is planning to withdraw nearly 5,000 troops from European countries and says that it will slash the assets that it would be willing to deploy in a time of crisis. John, we'll have to see what ultimately comes from this summit. We are expecting perhaps some defense deals to materialize, as well as the German chancellor will reportedly pitch the U.S. on a joint weapons production agreement that could see investment in U.S. defense companies.
Tyler, do you want a quick word on the diplomatic spat with the Belgians as well? Thank goodness this is not taking place in Brussels and it's taking place over in Turkey over the next few days. What's the reaction in Washington been to that?
Well, I think as U.S. soccer fans, the reaction has, of course, been in favor of that red card being reversed, though it is certainly raising some questions from a journalistic perspective, as well as from some lawmakers here on the ground about the president's very close ties with the FIFA president. Now, we should say, John, this isn't the first time that we've seen such a reversal take place. You'll recall at the beginning of the tournament, we saw that potential suspension of Ronaldo reversed during one of those qualifier games. And ultimately, the U.S. player will still face at least some sort of repercussion for this. I believe he'll be on probation for 1 year, though he is still allowed to be on probation. Of course, we should remember that President Trump was awarded the FIFA World Cup Peace Prize earlier this year.
Got no idea what that Peace Prize even means. Tyler, thank you. Tyler Kendall down in Washington, D.C. Most read stories on the Bloomberg terminal this morning. In at number 7, Mike Wilson, Morgan Stanley, looking for a rotation from chips to hyperscalers. So there you go, Mike. Elsewhere on the list, it's not number 1, tech, NVIDIA, EasyJet. Number 1 is FIFA allowing Balogun to play after Trump called and he sparked uproar with the Belgians. That tells you where the head of the market is at this morning going into the week ahead. Henry Trays of Vader Partners looking forward to the NATO summit, saying it's a prime opportunity to direct attention away from the war and the energy fertilizer price spike it has created. So investors should be prepared for a flurry of announcements. Henrietta joins us now for more. Henrietta, welcome. What kind of announcements are you looking for?
Well, as you mentioned with Tyler, I think the idea of a joint defense effort with Germany is exactly what the doctor ordered. You know, the president is really looking to deflect away from what is happening in the Strait. And there are so many issues, not least of which is the toll that still hasn't been agreed to and which NATO nations have a real problem with. So I expect them to talk about pretty much anything other than that throughout the next 2 days. The other piece would obviously be Russia and Ukraine and a discussion there as the United States Congress provides substantial funding to not just Ukraine in their various appropriations bills, but also to the neighboring regions, Latvia, Lithuania, and the Baltic region as a whole. And as you were mentioning before, trying to ensure that we keep troops in the region as well, in Poland and elsewhere across NATO nations.
Henrietta, the toll, let's talk about it. I get that the Europeans and others aren't happy about it, but right now it feels like that's the price of admission to get energy moving again. Is there anything they can do about it?
Yeah, that's exactly it. The result of this war is that Iran now has control of the Strait. You see it with the U-turns of tankers happening throughout the weekend and on a daily basis as people deal with the general uncertainty of where these 80 mines are in the region. So Iran has the ability here and is using different countries as an example of how to set up a toll. Call it a climate assessment, call it an environmental fee, whatever you want to call it. You're normalizing relations with the IRGC. And this is in many of the NATO nations' opinions. I've heard from Canada, for example, directly, and France directly, simply untenable. They don't want to work with a state sponsor of terrorism. And I would also point out that Treasury Secretary Bessent has created waivers for all these sanctions, but those are only going to hold as long as the administration decides that they will. They've already reversed that several times since the start of the war, and they don't have a lot of comfort from banks or insurers or NATO nations about what the policy is going to be in the future. So this is going to take a while to unfurl, probably much longer than the August 20th deadline.
Henrietta, hi, it's Mike Wilson. I had a question with respect to just how the world may get around the strait itself, in the sense that what this war has highlighted is how crazy it is that we have this choke point to begin with. And how fast do you think the world itself will start to migrate towards perhaps drilling for resources elsewhere, or building alternative ways to get the oil out of the region through pipelines, et cetera? How fast can that happen? And will this be talked about over the weekend?
Yeah, perfect point, Mike. I mean, the way to think about this is that it was so obvious that going to war with Iran would result in some sort of closure of the strait. No administration has done it before. Very transparent, very understood. This was a potential choke point. We have many of them around the world, whether it's in the Red Sea, the Black Sea, the Southeast Asian areas. There are problems like this all around the world. So you're going to see now a scramble to try to create alternatives to whatever choke point there might be in the entire world. And what I think, for investor purposes, what this means, and particularly for the Federal Reserve Chairman as they consider inflation, is permanently higher insurance risk, permanently higher costs of doing this shipping, higher tanker rates. And those are all things that we're seeing across the board. So whatever level this settles at is almost guaranteed to be higher than it was before the president made the decision on February 28th to start the bombing.
And what about Taiwan? Is that something that people are still talking about in the mainstream? It seems like that's kind of taken a back seat.
Yeah, absolutely. Great point. So Taiwan has taken a back seat publicly, but in D.C., it's still paramount. You have a pretty substantial bipartisan focus group, not a standing committee, but a select committee on China relations that focuses directly on Taiwan. And I would say that as you look at BIS and what they're doing with export control restrictions, they're very focused on Taiwan. Members of Congress are very focused on Taiwan. So it may not be front and center for this administration, and there's a lot of questioning of how the president's allegiances towards Taiwan differ from prior administrations. But I would say Republicans and Democrats are unified in wanting to continue to provide protections to Taiwan, whatever that takes.
Henrietta, always great to catch up with you. Henrietta Trays there of Ada Partners on the geopolitics ahead of that NATO summit later on this week. This market, Mike, has been conditioned just to ignore all of this. This market burnt by anyone, of course, anyone who was short the market at the end of March for the next month or so got burnt really hard. Why should it pay any attention to any of this over the next week?
Well, what I would say is that the market tends to get in front of this stuff. So what I'm trying to figure out is what is it digesting in the next 6 months? And this is one of the reasons why I'm not that bullish in the short term. I think we have discounted low oil prices at this point. I mean,
you think it's down? It's in the market.
Yeah, well, it means oil prices are $70 again. So it's going to be hard to really get oil prices below that level, without, significant new source of oil, or maybe demand being destroyed further, which is probably not a good thing for growth. So I think this is another part of the story, is that the market got ahead of this in April and May. It said oil prices, the rate of change on oil prices have peaked. Okay, the conflict that continues to go on between Ukraine and Russia. I mean, to me, it's sort of back and forth, and it's uncertain. But the market, just like tariffs a year ago, the rate of change, the worst part of it is now behind, and markets are always forward thinking. So I'm trying to figure out what's going to happen in 6 months, not what's happening next week.
Brent crude this morning, 72. WTI around 68. Coming up next, Noah Weisberger of BCA Research raising his year-end price target for the S&P to 8,100. Plus, Yahira has some morning movers. Memory stocks getting a boost ahead of SK Hynix US listing later on this week. Live from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stocks doing better this morning, up by 0.4 on the S&P 500. On the Nasdaq 100, up by 1.1%. We talked about that outperformance on the Russell. Underperformance this morning, up by 0.14% on the Russell of small caps. Just a little bit higher. Into the bond market we go, 2s, 10s and 30s. I mentioned this a few times. The data later on this morning, 9:45, a US PMI. Services ISM dropping at 10 a.m. Eastern time, so look out for that as well. Going into a week sprinkled with Fed speak. You'll hear from New York Fed President John Williams a little bit later in the week, so look out for that as well. FOMC minutes dropping in a few days' time too. On a 10-year, we're down by 2 basis points, 4.46. Want to finish on crude, talk lots about it. WTI and Brent reset. What a reset we've seen from triple digits down to the low 70s on Brent, wiping out the wartime rally on WTI, back to the high 60s, 68.60 this morning, and down about 1/10%. That's the cross-asset price action. Let's get you some single names and morning movers. Yahara has more. Hey, Yahara.
Hi, John. After a rough sell-off, we are seeing the semi and memory names rebounding this morning as optimism builds over 2 key events this week that will test this trade. We get Samsung earnings tomorrow and SK Hynix planning to list on the NASDAQ on Friday, and investors are looking for fresh confirmation that demand remains strong for AI memory chips, especially after that our reporting last week on Meta looking to sell computing power, and that raising fresh questions about the demand picture. Speaking of Meta, we are seeing those shares rising and outperforming the Mag 7, up just under 1.5%. And while there's no specific company news, we did get a fresh call from the man sitting with you there, Mr. Mike Wilson over at Morgan Stanley. He says the next rotation is from the semiconductor names to the hyperscalers, arguing they've already gone through their period of underperformance, and he prefers it as a better way to play the AI trade due to their strong core business. And we end over in London with shares of the UK budget carrier EasyJet. Shares are soaring nearly 10% in the pre-market after it agreed in principle on a $7.3 billion takeover from the U.S. private investment firm Castlelake. But even with this rally, the stock still remains below the offer price, signaling some skepticism by investors around the deal. John?
Yahara, thank you. Thank you very much. EasyJet doing okay. On our radar this morning, President Donald Trump expected to arrive in Turkey Tuesday ahead of a NATO summit, following a series of critical remarks about the alliance.
We're very disappointed with NATO because NATO has done absolutely nothing. We'll come to their rescue, but they will never come to ours. We pay trillions of dollars for NATO, and they weren't there for us.
The U.S. ambassador to NATO sharing, quote, President Trump expects all allies to step up immediately. And elsewhere, South Korea's SK Hynix preparing for an American debut and blockbuster $28 billion U.S. stock listing. The offering would be among the top 3 first-time share sales by a foreign company. Trading expected to begin Friday on the NASDAQ. And finally, said it a few times, the most read story on the Bloomberg this morning, FIFA overturning the suspension of U.S. top scorer Florian Balogun clearing him to play in tonight's World Cup match against Belgium, following a personal appeal by President Donald Trump. FIFA pulling back the red card in favour of a one-year probation. And that right there, three of the stories on our radar this morning. Let's get back to the equity market. Stocks lifting high with investors eyeing another big week for the AI trade. Noah Weisberger of BCA Research recently raising his year-end price target from 7,700 to 8,100, writing earnings strength remains the core driver of our constructive outlook. The story is no longer confined to a small group of hyperscalers. Noah joins us now for more. Noah, good morning, good to see you.
Good to see you.
Put some numbers on it. Why the move to 8,100?
I think two things got us there. One was Q1 was better than we had expected, so part of it was a little bit of a mark-to-market. I mean, I try to stay away from superlatives, but what we learned from Q1 was really just excellent in terms of the demand side for the AI CapEx spend, that there was real demand behind it. And then the second was the economy shifted from a patch of slowing to a patch of what we think of as reacceleration, and some of the risk barometers have eased. So I think that all put us, half and half, I would say. And I would also say we're leaning heavily on earnings and not on more multiple expansion to get us to 8,100.
One risk factor. It's in your note. You say AI-related investment generating excess capacity, and you say at present you see little evidence of that. Are we starting to see some evidence from Meta, from SpaceX, that there is capacity to sell?
Yes, there may be capacity to sell because the prices are so strong, as opposed to demand waning. I think any signs of demand, and this is going to sound like being optimistic, contorting myself to be optimistic, but I don't think that's the case, is that I think what we're facing is almost like a kinked supply curve where demand is being met by higher prices. And so there may be some pullback in demand, but not because demand, underlying latent demand strength is weakening, but just because it can't be had at that price. So I think as you see token prices get a little bit weaker, I think that's a bit of a pullback, but not because we don't see a longer term demand path, but the equilibrium until we get more capacity to meet that demand, I think is what's going on here.
I'm curious where you raised your numbers, because you said you raised your numbers. What sectors surprised you most on the upside, and where do you think that can continue in the second half?
So not surprisingly, it was tech, materials, and industrials. And I think it was the speed at which that CapEx flowed through to the market, and that's where we're leaning on heavily still. I mean, I know June was a pretty big rotation, but that's not where the fundamentals are. We had a really neat piece of analysis that looked at sector returns have been highly correlated to EPS growth expectations for much of the last year, 6 months, 3 months, and in June that really just collapsed. So we think the earnings growth stays where it was. That's where we leaned in a little bit more, and that's what surprised us in Q1.
And where are you on small caps right now?
Uncomfortable. I don't like the beta. I mean, it's a beta trade right now. The reasons the things that we like in the large cap universe would make us not like what's driving small cap. So small cap has weaker earnings growth. They have less strong balance sheets. All the things that we kind of think are nice features, maybe not of some of the hyperscalers, but of the tech sector more broadly, we don't think are there in small caps.
Why do you think it's been working then?
Risk on. Right, I think, and I say that. Well, let me caveat that a little bit. I think June was a little bit of a rotation and a little bit of a growth relief. Maybe not pure risk on, but a cyclical upgrade, and we saw that in the data. If I didn't know about AI, and I was just looking strictly at my kind of macro numbers, we got a bit of an upside surprise there and a bit of a relief on the oil price. So to see beta and cyclicals move doesn't just have to be the AI trade.
To Noah's point, I mean, the Russell 2000 has outperformed the S&P 600, right, which is a quality index relative. So it's been a bit of a risk on, and there are a lot of these names that there's a big tail that are beneficiaries of that CapEx. I actually think the S&P 6 may start to do better now than the Russell 2.
Another trade of Mike's that we talked about a little bit earlier on this morning, the AI beneficiaries, the spending beneficiaries, the chip stocks that have really benefited from all this spending coming from the hyperscalers and the likes of Meta as well. Mike's thinking about that reversing through the summer. Do you share that too?
So we're broadly in tech. We put on a little bit of risk prior to Q1 in software because we thought multiples were just too soft given what the earnings growth was. But I would lean, we're going to stay diversified in the sector, but if I had to lean, I would lean back into the hyperscalers. I like the notion that they own all the margins, they own the full stack. I think of them as the integrateds of the 70s and 80s maybe, where they don't have to worry exactly where you are in that cycle. And semis have just had a remarkable run. So you don't need to dislike them to want to balance a little bit away.
How do you feel about software specifically? I mean, their business models are being challenged. There's also overcapacity from all the companies that were started during the cloud revolution. Like, where are we in that corrective activity?
So again, prior to Q1, I thought we had overdone it. What we learned in Q1, I thought was on the majority favorable. As we looked at Salesforce, Intuit, Oracle, maybe not because of they're not spending like a software company. They're spending like a hyperscaler. But what we've seen from the company commentary is that they are able to monetize on the revenue side AI with some of their products. And to me, that's a winning formula. You know, picking the winners harder. The subsector or the industry overall, I favor, right? I mean, I think I like things that are inexpensive with earnings growth that's still maybe not accelerating the way it was. Maybe, you know, acceleration is moderating, but we haven't even seen peak earnings yet.
And how are you thinking about the Fed now? I mean, obviously we have a new chair, maybe a little less communication, maybe a little higher bond volatility. How important is it that this transition goes smoothly for your case to play out this year?
I would say hugely important, and I was much more nervous 10 days ago, let's say. I think the way we've thought about this market, the tilting point here ends up being, you know, I'm not worried about valuations on a multiple basis, like, okay, so you're paying a high multiple, you know, open the aperture and look a little further out. But I think when you're paying a high multiple and dividend yields are low, it's duration risk. So there's a lot of duration in the equity market. Small wobbles in the bond market will make you nervous. And I think the worst case scenario would have been if Warsh had even had dovish body language, make people question how rock steady that independence was, and that's bond volatility, that's uncertainty about the reaction function. That would be a toxic stew. I think we got the opposite.
You think that helps?
Yeah. So I actually think his hawkishness might have been painful on the day or two, and I think long-term as an equity investor, anything that anchors long-term inflation expectations, I think gives you comfort in the long term. Well, June's been about, I think, rebalancing and some tactical issues. But the thing you like least is a yield curve steepening on a dovish Fed in the near term and inflation expectations at the back end. I think that would be toxic.
Things have stabilized. What's your base case now for the Fed for the year ahead? Unchanged, on hold?
I'm going to go unchanged because that's you know, leaves me latitude both sides. If I had to pick, I think we could get a little bit more, I don't know, easing, but hikes coming out. And I think mostly because of the headline inflation risk, I think starts to fade. And I think the Fed, and maybe the economics profession more generally, have been like chastised a bit by the transitory inflation call of 2 years ago.
Right.
But this is, with oil, I mean, you said it before, with oil at $65, let's watch what headline does and how that affects Fed futures.
Noah, it's good to see you. Noah Weisberger there of BCA Research. Mike Wilson of Morgan Stanley is going to be sticking with us. Neil Dutta of Renmac is going to drop by in just a moment. He'll have his own thoughts on the outlook for interest rates under Fed Chair Kevin Warsh. Equity futures this morning, stable, positive, up by about 32 on the S&P. We're positive on the S&P 500 by 0.4%. In the bond market this morning, twos yields lower by 3 basis points. Your 2-year around 4.1%. With an update on stories worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. NVIDIA's next-generation AI server reportedly facing delays of more than a year. A report finding setbacks in the construction of printed circuit boards for the platform. The report sending shares of several Asian tech stocks lower. NVIDIA has not yet responded to requests for comment. U.S. beef exports to China are picking up as its competitors are running out of quota. Brazil, Argentina and Australia have either run out or are near using up their total allowance to sell to China, as the country puts caps on foreign beef producers to protect local farmers. In sports, Naomi Osaka stunned top-ranked Aryna Sabalenka in straight sets. Meanwhile, American Coco Gauff advances to her first Wimbledon quarterfinals. On the men's side, Novak Djokovic is moving on with his record-breaking 106th Wimbledon win. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie in the next hour. Up next on the programme, coming into balance.
You're probably just in a pretty good balance. The economy's in a decent spot. The labor market is fine. There's no real concern, certainly no urgency for the Fed to be hiking, and that buys them time.
Neil Dutta of Renmac joins us next, live from New York City. You're watching Bloomberg TV.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Looking at the week ahead, some data later this morning, PMIs, ISM later this morning at 10 a.m. Eastern Time, a read on the service sector in America. Look out for that later this morning. Later in the week, FOMC minutes coming up on Wednesday. How much of a family fight was there over that statement? Very short statement, not much to disagree on, given the length of it. Looking ahead to all of that, plus this, South Korea, just at the epicenter of markets worldwide at the moment. Quarterly earnings from Samsung in focus tomorrow. Then later in the week, a $28 billion capital raise from SK Hynix, an ADR listing here in the United States taking place on Friday. Look out for that. Equity futures into that, positive by 0.4% on the S&P 500, on the Nasdaq up by 1 full percentage point. In the bond market, yields lower by 3 basis points on a 2-year at 4.1%. Under surveillance this morning, coming into balance.
You're probably just in a pretty good balance. The economy's in a decent spot. And the inflationary pressures don't seem to be generated from the labor market. It seems to be generated elsewhere, in which case that should roll off. We expect about 100 basis points coming off core PCE by the end of 2027. The labor market is fine. There's no real concern, certainly no urgency for the Fed to be hiking, and that buys them time.
So here's the latest this morning. Wall Street looking for the next gauge for the Federal Reserve. PMI and ISM data due out later this morning ahead of minutes on Wednesday. Bloomberg's Ender Curran joins us now for more. And there is a take at the moment, and good morning to you, buddy, that after the payrolls report of Thursday, we've just removed some of the urgency around the rate hike debate. Is that your take too?
I think that seems to be the vibe around the market, John, no doubt about it. I mean, the jobs numbers did take steam out of that story, softer than the market expected, but no disaster either, remaining above that kind of 50,000 area that some economists say is the break-even pace. So, you know, I've seen economists say it was kind of a Goldilocks, or as good a number as the Fed could have hoped for. We probably won't get too much new information on the Fed debate in terms of the data this week, John. As you mentioned, we've got the ISM services numbers coming up, expected to be a touch of softening there on the back of high inventories and weaker order books, bringing down overall orders. Regional surveys have already pointed to that. And then we get some trade data tomorrow expected to show weaker exports, strong imports because of the AI capital boom. But as you say, the bigger focus on the Fed story, I think, is going to be the Fed minutes on Wednesday.
Looking forward to it, a few days away. And good to catch up with you, sir. Thank you, buddy. And Karen there, down in Washington, D.C. Here's a take from Neil Dutta of Renmark, writing, June's employment report is a reminder that the economy remains uneven, inflation remains too high, and so the threat of hikes is not receding. Neil joins us now for more. Neil, good morning.
Good morning, John.
It's good to see you in person, buddy. I'm not going to bury the lead. You are not impressed with Kevin Walsh, Fed chair. Why?
Well, I mean, I think he's kind of blurring the lines between the Fed having a reaction function and forward guidance. You know, getting rid of forward guidance is fine. No one needs to be spoon-fed every single meeting in advance. That's not what this is about. But just to say, you know, kind of swear on the monetary policy Bible stack and say, you know, I believe in price stability, I mean, that's fine. But the question is how you actually achieve that. And and in my opinion, he hasn't really done much to tell us how that will be achieved. So it's really about how they respond to data and how that kind of drives their decision-making process, and we don't really know much about that, which, you know, if the market has one view of it, and the Fed obviously has the whip hand, they know more about their own reaction function in the market, it could mean that the closer you get to these meetings, we won't know their reaction function until it's revealed, in which case it creates some volatility in the financial markets. I think it's fine so long as things are stable, as guests have been saying, but you know, that may not always be the case. So he's going to have to tell us eventually, and I would say sooner rather than later.
In the meantime, is the ambiguity strategic? Do you think it is beneficial?
I think for him it is, right? I mean, in the sense that I think by failing to, I mean, he's been very vocal about not wanting to submit dots, give a forecast, anything like that. But I think because the Hawks really are ascendant on the committee, the last jobs number didn't matter one way or the other. It's really about the inflation data. That's going to break the tie, so to speak. But by not submitting a dot, he absolves himself of having to take responsibility for the Hawks on the committee, you know? And so it's kind of interesting. I mean, it's, you know, you do see some guidance from people like President Trump, NEC Director Hassett talking about, well, you know, in his heart of hearts, he's actually dovish, but he has these like sort of people he has to deal with. And so, you know, I think it kind of, it absolves him from having to kind of take responsibility if he's able to say, look, I didn't submit something.
At the end of the day, though, don't we need higher inflation to kind of grow out of the debt problem? And so he's talking about rewriting the data sets that they're going to use to sort of justify maybe inflation is really only 2.5, but reality is every American knows it's much higher than that. We've been going through this song and dance for 10 years. So what's that framework look like? And what is the real target inflation rate, you think, to actually grow out of the debt problem?
I don't know, Mike. We'll have a task force for that. I mean, to borrow from our chairman. No, I don't. Look, I don't think you can inflate your way out of this. I mean, you have to grow your way out of it. I mean, I remember back after the financial crisis, people were making the same argument. We had to, you know, and what ended up happening? We essentially grew our way out of it, right? We had sort of stable growth, stable inflation, and over time, you know, things kind of evened out in the bond market. So, yeah, I mean, I don't think he's leaning into the inflation piece of it to the extent he's been leaning into anything in terms of dealing with it. It's the productivity boom, the AI sort of golden age thesis. That's been the linchpin for, you know, for Warsh, I think.
Right, so not letting it, don't kill the boom, as President Trump likes to say, and so having this obscurity around what I'm actually looking at gives him the freedom to maybe not be so reactive to the data sets.
Well, sure, but at the same time, by not laying out a strategy, that's the only thing that people are, I mean, the vacuum is ultimately going to be filled by something, and so I mean, then you in an odd way, by trying to get people off the data, you actually push them towards the data because they don't actually know what strategy you have.
What do you think he is in his heart of hearts?
I think he's, I mean, I've thought he's hawkish, and I think it's almost like a revealed preference. By not saying anything, you allow the hawks on the committee to become ascendant. And so
and that's what he wants, it's by design.
And you haven't done, and you wouldn't have done that if you didn't at some level kind of agree with them. You know, the idea that you can, you know, the sort of productivity golden age, if you were thinking about that honestly, the fact that inflation is above target, to pull a Greenspan would basically mean to allow productivity to remain whatever it is, to bring inflation down to target. So you wouldn't be advocating for cuts, which is what he's doing. But you know, generally speaking, I think if you didn't lay out a strategy, you allowed the hawks to fill the void, you wouldn't have done that had you not believed or kind of agreed with them at some level, right?
Base case for you. We've got Bank of America on the one side looking for 3 hikes. Citi on the other looking for something closer to 2 cuts this year. That's how wide things are right now on Wall Street. That's quite a spread. Where do you fall?
Well, I think if there was going to be a Fed that was dysfunctional enough to deliver a one and done, it would be this one under Kevin Warsh. So that's sort of, I mean, to me, it's sort of, why wouldn't you think the hawks kind of come back for more? And from his seat, I actually think it makes sense because you can show that you gave a hike, you stood up to the president, you're establishing yourself, your credibility with the market, and now we kind of can get past this and say, look, we got the hike. I mean, almost like the ECB. You kind of take some of the tail out of the inflation risk, and you maintain your optionality. So there's a way for them to perhaps go once without having the market price in a lot more.
And what about balance sheet? Because that's been the real sort of angle on Warsh, is he's a balance sheet hawk, and maybe he's less hawkish on rates, which is, who knows. But do you think it requires market volatility to get them to increase the RMP, for example, or to start doing more liquidity injections?
So I think that this is one of these things where people say things to get the job, to create distinctions between themselves and the people that were there before. And the balance sheet is a good example of that. It's kind of like, hitting Yellen over the head with how she's dealing with bill management and then coming in and then doing literally the same thing. All of these things are going to be met by committee. I think that's something that people say to rationalize it, right? Like, oh, he's not really hawkish. He's just hawkish on the balance sheet so he can be dovish on rates. Like, it doesn't work that way because the balance sheet's not really a tool of monetary policy. The only tool is rates. So I don't think it's, to me, it's not a big factor.
Being hawkish on rates, though, we had this conversation earlier in the hour. Has it allowed the longer end of the yield curve to stabilize? And is that something that both the Treasury and this Fed would look at and say, that's beneficial? That's the kind of approach we need right now.
Yeah, I mean, I think, that the first meeting was the most hawkish meeting that you've had in the press conference era. We had like a 13, 15 basis point rise in 2-year yields. So, talking helped take some of the risk out of the back end. Yes, I would agree with that.
Do you think he fooled the president?
Do you think
he fooled the president in the interview process?
What do you mean? Oh, fooled him. Oh, fooled him. Yeah, I think if there's a risk, it's that the president was duped. Yeah.
How's that going to play out if he was duped?
I mean, I think there seems to be I don't know. I mean, your colleague Joe Weisenthal said, I think, maybe Warsh hikes and Trump is oddly chill about it. And I don't know, it sounds like he's giving him a lot of grace at the moment.
Depends how close we are to the midterms if that happens, right?
That's why I say get it out of the way sooner.
Yeah. Neil, it's good to see you. Thank you, buddy. Neil Dutta of Rand Max. Special thanks to Mike Wilson of Morgan Stanley. Mike, thank you, buddy. Appreciate it. Thank you. Equity futures this morning positive by 0.4% on the S&P 500. We talked about that reset, the front end of the yield curve. Yields down on Thursday off the back of a softer than expected jobs report. Down again this morning with crude stabilizing once again. We're down by 3 basis points on twos to about 4.1%. Up next on the program, we'll catch up with Greg Bowdle of BNP Paribas, Tom O'Malley of Barclays, Veronica Clark of Citi Research. Citi still looking for cuts this year. We'll also speak to Earl Davis of BMO. The third hour of Bloomberg Surveillance is just around the corner.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk. You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The market has definitely run out of patience.
So there's going to be greater scrutiny.
In the near term, the demand is still there. You're seeing adoption rates increase.
The micro is the macro. AI in the markets, it is the dominant feature.
This is kind of where the rubber hits the road.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. 90 minutes away from the cash open. The opening bout just around the corner with equity futures and your scores shaping up as follows. Positive by 0.4% on the S&P. On the Nasdaq up by 1.1%. The Russell of small caps just about unchanged this morning. Into the bond market, 2-year yields reset to 4.1% from 4.20. Yields declining on Thursday following a softer than expected jobs report. Down again this morning by another 3 basis points to 4.1%. Heading into a lot of data a little bit later, looking ahead to an PMI at 9:45 Eastern Time. ISM services at 10 a.m. Fed minutes later in the week on Wednesday. And I keep going back to this, the focus on South Korea through the week. Earnings from Samsung, quarterly numbers dropping tomorrow. Look out for that. Look out for this. SK Hynix tapping the U.S. equity market for $28 billion with the biggest, one of the biggest equity capital raises we've ever seen for a first-time issuer from a foreign company. Coming up this hour, Sarah Hunt of Alpine Saxon Woods with stocks back near record highs. We'll catch up with Tom O'Malley of Barclays on how memory bottlenecks are reshaping the AI race, and Veronica Clark of Citi on why they still believe this Fed will be cutting rates not once but twice later this year. We begin this hour with stocks gaining as traders pile back into the tech trade. Sarah Hunt of Alpine Saxon Woods writing, we have recently been de-risking our technology exposure as well as looking for opportunities with strong momentum and valuations that seem more in line with what can be seen as opposed to merely defined ahead. Sarah joins us now for more. Sarah, good morning. Good to see you.
Good morning.
You're going to be with us through the next hour, so we've got time to breathe some life into the way you're thinking about this market. De-risking equities on the tech side, where and why?
So the de-risking is really, it's interesting because you've had a couple of guests this morning talk about it. It's a little bit more about a rotation, right? So de-risking, funnily enough, means you could go back to some of the quote-unquote lag 7, and you could take some of the memory and maybe some of the semiconductor exposure off the table, just because you've had such a huge run. I mean, it almost seems, everyone's been looking at that and going, when does it end? When does it end? When does it end? I don't know if what Meta started last week is when it ends. I don't know if it ends as much as it changes a little bit, and all of a sudden the frenzy for it becomes a little less. But you can see where there are places where there's been a walking away from it because they were spending.
That's what I wanted from you, the catalyst. What's the catalyst besides up and to the right and vertical really aggressively? Was it Meta? Is it something else?
So I think it's a combination of catalysts. I think Meta is definitely part of it, but then there's questions about whether or not are they doing this because the prices are so good it seems like they should do this, or is it this kind of compute or that kind of compute? But I think if you just look at the trajectory of spend and the massive change that we saw for 2026, are you going to see the same thing in 2027? I mean, it's always been a chasing of, is it time to step away from this? Are we over-earning in some of these places? Is the pricing too high? And I just think that on the margin, you get a few things like that. You get people talking about how many tokens you can use, how much spend you can use. Is that spend worthwhile? So all of those things together, sort of, the AI narrative shifts a lot, and it just is shifting, I think, back again to some of the folks that are in the catbird seat as opposed to the builders.
And Mike Wilson of Morgan Stanley with us in the last hour. It's his trade as well this morning, leaning away from the chip players, leaning into the hyperscalers. He called it potentially a trade for the summer. Do you call it anything more than that?
Again, I think that this narrative goes back and forth so much, it's hard to put anything in a permanent box as opposed to the shifting sentiment. And also from a valuation standpoint, I can look at some of those valuations and feel a little bit better about them than I can on some of the other directions. It's going to be very important what happens this week on the earnings front. I think that the combination of SK Hynix coming to the U.S. and Samsung, all those things are going to matter. And if there's any major change in any of that, I think that it's going to be magnified because of the other things that we're just talking about.
What does it tell you about this moment that we're allowing two South Korean names to set the tone for trading in America this week? What does that tell you about where we are?
I just think it speaks to how international some of that technology trade is. I mean, these are big memory players, right? This is a big deal in what's going on. They're huge companies. They're huge companies, but they're also, this is the current bottleneck. So it's not just that they are, it's an international trade. It's an international trade with a lot of places where all of a sudden it's capacitors that are a bottleneck. Here's the bottleneck. So right now you're talking to two of the players and you want to see what they have to say about what's going on there.
That listing taking place later this week. Those are numbers from Samsung dropping tomorrow. Greg Battle of BNP Paribas with this to say, the epicenter of the recent de-risking has been the Mag 7. This presents an opportunity to carefully add risk. Greg joins us now for more. Greg, I've heard this from Mike Wilson of Morgan Stanley. I just heard it from Sarah. Are you saying the same thing to lean into the hyperscalers here, Greg? Some of the Mag 7 names that have really lagged this market.
Yeah, it certainly feels like it. We think we're moving from an environment that's been dominated by the flows to one that's going to be dominated by earnings. So we turned a little bit more cautious on the market and some of the tech names just over a month or so ago ahead of the SpaceX IPO, where we thought there was a lot of supply, a lot of flow coming to the market. We think we've worked our way through a lot of that, and it sets us up quite well for the upcoming earnings season.
Greg, it's funny you say we've worked our way through a lot of that before we've even got all the rest. We've got the listing from SK Hynix later this week. We've got IPOs still on the horizon. I don't know if we're done with the equity capital raises from some of the big companies, the likes of which we've seen from Alphabet, say. Why do you think the market has fully absorbed that story?
Oh, no, I think that's a very good point, John. And we have to differentiate between the secular story. In the secular story, we're getting to a late stage in the cycle where there is more supply coming to the market. And I'm just talking more tactically. Over the last month, there's been a lot of supply. There's some more supply that comes this week, which, as you said, kind of culminates with Friday and this raise from SK Hynix. But then we look forward over the next 6 weeks or so, and then that environment and that narrative changes just tactically for a little bit.
So what do you think about the overall bigger picture? If we zoom out a little bit and stop talking about some of the places where there's been bottlenecks and just look at what the changing landscape underneath and the usage and everything else, who are you seeing as the best beneficiaries besides the hyperscalers? But going forward into the next 6 months, do you see something changing there in terms of who the beneficiary of this trade is?
Yeah, I think we're going to continue to see these mini cycles of rotation, and the hyperscalers is where we're focused in the short term because we've seen that rotation, that kind of elastic band between some of these semi-names has become very stretched relative to where the hyperscalers are. So that's where I think the next trade is. But we're going to continue to see these kind of mini pockets of rotation where there's a secular bull trend within larger tech, but we have these kind of mini rotations and the leadership jumps from one to the other. Mag 7 is, we think, the next one up for the coming weeks.
And then what happens to the next iteration of where this is supposed to be very helpful? So if I think about the hyperscalers next right now, when I think about some of the discussions about how much token usage people can do and this and that, where do we see a pocket of efficiency coming, or do we see a place where we want to be looking for those efficiencies to start to feel about a broader spread out of how AI is supposed to be helpful?
Yeah, I think these are kind of existential questions in terms of where does the cycle go, how do things evolve in terms of token usage, the AI narrative, and a bigger picture. I don't think we have the answers to those questions. So that's why I think we need to look at earnings season as the upcoming catalyst, focus on that, see where we find ourselves in 6 weeks, and pivot. I think if the market's taught us anything this year, it's that you can't pay at just one big secular trend when you have a series of mini cycles. What worked in January certainly didn't work in March, and what worked in March really didn't work in April, and we think the narrative is evolving for the coming 6 weeks.
So, Greg, the surprise coming into this year was just that overwhelming positive earnings shock that really took many a strategist on Wall Street by surprise. Now you've had a reset. The bar has reset higher following that positive shock. How high is the bar into this earnings season, Greg?
I think it's really high, John, and that's where the risks just incrementally through the cycle do become larger, because at the moment the bar is very high, but the narrative has been that corporates have managed to meet and beat a high bar. We've had this kind of beat and raise environment. At some point in the cycle, that does become more challenging, and I think as the cycle matures, and we do think we're in a late cycle environment, you do start to get fatter tails and larger pockets of risk. I think whilst the earnings growth is strong double digits, corporates beat and raise, the market continues to move higher, but any misses we think could be punished badly. So we still think we're in an environment of dispersion. Those who beat can do well, those who miss can do bad.
Greg, where are the pockets of the equity market right now into earnings season that you are more comfortable with?
It would be the Max 7 would be, I think, the obvious place to be, just looking at the price action. We think they've suffered disproportionately when you look at just the index weighting. If people were trying to raise money for both the issuance this week and the supply that we've seen for the last month, that's the obvious place to raise it from. So I think within tech, Max 7 is the obvious place to go. I think some of the banks potentially look interesting as well. There's obviously been a lot of talk about what's going on in terms of inflation, in terms of rates. I think the balance sheet is something the Fed will look at, and that potentially raises the idea of banks maybe being an interesting hiding point if you want to play broadening out away from tech.
Greg, thank you. Appreciate it. Greg Bowder there of BNP Paribas on the financials into next week. Next Tuesday, unusual one. We'll get numbers from Goldman, JP Morgan, Bank of America, and Citi, all reporting on the same morning. Sarah, your thoughts on the financials? What kind of opening is there now for this trade?
Well, I think that just adding the IPO movement that we've seen in the last month or so and what we think is coming has to be helpful to an area where that's been off the table in terms of earnings for some time. And I think that, you know, there's been a lot of rotation, which is generally good for banks. I think that it may be a reasonably good place. And I also think some settling down of interest rates probably helps a little bit too, just in terms of the volatility.
Things have stabilized in the past few days off the back of that softer data and that massive reset in energy prices. Some breaking news just moments ago on Broadcom and Apple expanding their pact through 2031, developing silicon products for Apple. This is Broadcom. The stock in the pre-market higher this morning in the pre-market on Broadcom by a few percentage points. We're up by, let's call it 4%. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump will travel to Turkey for the NATO summit. The president is expected to press allies to increase defense spending to 5% of their respective GDPs. Trump is set to meet with Ukrainian President Volodymyr Zelensky Wednesday to discuss the ongoing war with Russia. NVIDIA's next-generation AI server reportedly facing delays of more than a year. A report finding setbacks in the construction of the printed circuit boards for the platform. The report sending shares of several Asian tech stocks lower. NVIDIA has not yet responded to requests for comment. FIFA cleared US star Folarin Balogun to play in tonight's World Cup match against Belgium following a personal appeal by President Donald Trump. Balogun received a red card for a foul against Bosnia and Herzegovina, which normally leads to an ejection and a one-match suspension. FIFA removed the automatic ban, putting Balogun on probation for a year. And that is your Bloomberg Brief. John.
Vonnie, thank you. I've said it a few times already this morning. If you're just tuning in, here's my take. For whatever it's worth, it was never a red card. I'm pleased it's gone. I'm pleased the guy gets to play. The optics around it, super messy, though. Every time you get a red card in the knock-up stages, now you're going to get countries pursuing FIFA to overturn it. They're going to have to figure this out, but I'm happy he gets to play. That's the latest on FIFA this morning, which it turns out, and I've repeated this through the morning as well, is the most read story on the Bloomberg this morning, which is unreal. Up next on the program, the Morning Calls Plus, we'll catch up with Tom O'Malley of Barclays as the memory supply crunch creates opportunities. That conversation is up next, live from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
When people talk about equity markets, they talk about the fundamentals, they talk about earnings, and yes, that's all been pretty good, and also the economic backdrop has been robust. When stocks have been going up, particularly in the tech space and in the semi space, it's driving more buying in that, from a technical aspect, and if that goes into reverse, we could see that spiral downwards as well.
That was Alex Altman of Barclays joining the program a little bit earlier on this morning on the tech trade, some of the leverage building up in South Korea. We'll talk more about that in just a moment. Equity futures this morning going into the cash open 1 hour and 15 minutes away, positive by 0.5% on the S&P, on the Nasdaq 100 up by 1.26, on a Russell some small relative underperformance there, with positive by just about 0.2%. Into the bond market, that reset in yields and rates really stabilized that rate debate over at the Federal Reserve following that softer than expected print on jobs on Thursday. The 2-year down another 3 basis points this morning, 4.1%, 10s at 445. Not harming that story, the crude story, energy, speaking of resets, from triple digits to the 60s on WTI, 68 this morning, Brent crude is 72 and down a few tenths of 1% on the session. Let's get you some morning calls. That's the price action. First up, Bank of America lifting its price target on IBM to 330, seeing additional long-term upside from quantum computing. Your second call from Raymond James downgrading Delta Airlines to outperform, saying its recent rally has reduced its near-term valuation upside. And your third and final call comes from Cantor, raising its price target on Eli Lilly to 1350, saying the biopharma sector is a rotation beneficiary from AI names. That name is down this morning, incidentally, by about 0.6%. Elsewhere, tech stocks gaining this morning as investors await the massive ADR listing from South Korea's SK Hynix.
People feel like any exposure they can get to the AI trade still is going to work. We're actually seeing retail investors in Korea rush in to names like SK Hynix, while we see sort of institutional investors mainly flow out. And that is generally not a sign of a company that is super well priced and likely to continue to make a lot of more money for investors.
The memory giant looking to raise $28 billion ahead of his expected US trading debut this Friday. Tom O'Malley of Barclays writing, memory remains one of the most compelling opportunities that is not yet fully reflected in the stocks. Tom joins us now for more. Tom, good morning.
Thanks for having me.
I have to say, you've been tracking the programme this morning. That line there seems slightly contrarian, given what we've heard so far this morning. So give me the bull case right now for these names, even after they've had a massive run-up through the year.
Memory stocks look very different than they did historically, and that's largely because of the contracts that they're signing with their big customers. You traditionally saw very cyclical stocks, one-year deals, quarterly price renegotiations, but now you're moving towards 3-year, 5-year deals where you have visibility and security on both gross margins and the trajectory of these companies.
Does that help them build out capacity in this moment, in this cycle, without the boom-bust that we've seen previously?
The difference is that we came out of a post-pandemic world where we didn't have enough capacity, and you ran into this AI ecosystem just accelerating at an unprecedented pace. And so the catch-up is what we're doing right now. We're trying to build more and more capacity, and the supply-demand imbalance that we're seeing is something that's not going to get solved until the beginning of 2028.
Do we see any of the behaviors that we've seen in other bottlenecks, such as over-ordering and or concerns about getting enough capacity, so making a willingness to go out further? Because in other historic sort of commodity-like places, you get longer-term contracts, but the minute the market changes, those contracts also get changed. So is there any concern that you have about that at all?
These stocks are still cyclical, but the idea here is that there's longevity and there's visibility, and that's what's different. Where in traditional cyclical markets, you'd see the boom-bust cycle happen in a very short period of time. 6 months from now, you could be in a very different world than you are in today. But if you look at where memory is today, you have much longer line of sight. And that's what's changed here, and that's what's different and what people are willing to pay for.
Is that also a consequence of the fact that this is not so much about consumer electronics, which memory very often was, and is much more about the larger picture that's going on in an area where there just isn't, you don't have to worry quite as much about the capacity expansion as you did when it was a consumer-linked product?
I think it's a great point. I think if you look historically, where was the biggest percentage of bits going for these memory producers? It was to PCs and it was to smartphones. And those are inherently cyclical industries. If you look at where those bits are going now, it's to the data center. And data center is a differentiator when it comes to memory. Memory matters for how performance in data centers essentially works. So when you look at 3-5 years from now, you're going to see hyperscalers iterating with their accelerator products, and that's largely a function of the memory that's associated with them. So very different world that we're living in versus previous.
So that's the bull case. That's why these names are up by more than 200%. Now let's get to why people are talking about something else. Meta. Meta all of a sudden has excess capacity that it wants to sell. And people are looking at that move and saying, you know what, maybe things are starting to change. We go from constraints to excess. That's a change in language. Why is it not a shift in the narrative for you?
I think it's a competitor problem and not specifically an industry problem. If you look at Google, Google went to XAI and recently secured capacity from them as well. So you would argue that Google is in a position similar to Meta in terms of competing for the AI ecosystem, competing for dominance there, but they're kind of taking the opposite approach. We need more compute now. We can't get enough. So I think we should be differentiating perhaps between efforts from these large hyperscalers, and guys who want more compute perhaps are having a little more success than guys who are looking to perhaps get others.
Can we look to Signal as well? Meta rallied off the back of that story. From our reporting last week, some people look at that and say, you know what, there's this moment here that you need to pay attention to. They're being given the green light to be more disciplined about spending by the stock market. Why wouldn't others follow? How do you respond to that?
I think that we're still in the early innings of a long investment cycle. And I think if you hear the chip companies, if you listen to the way that they're talking about 2-3 years and the conversations that they're having with hyperscalers, this investment cycle isn't slowing. I would expect strong forecasts from the hyperscalers on CapEx. Obviously, it's something to be wary of when you see a slowdown in spending and perhaps stocks rallying off of that. I don't think that that's the beat of the drum here. I think that you're going to continue to see more investment going forward.
One of the questions that I had when I saw that announcement was, to your point, is this a specific Meta issue versus an issue of capacity overall? And I know that Meta certainly has had its history of making decisions to go one way with CapEx and then reversing those. Is this because they don't want to develop their own large language model? What do you attribute this to specifically for them?
From a chip-specific perspective, they had been behind in terms of developing their own custom silicon. So in the semi world, we started with general-purpose silicon with NVIDIA, and now we're moving more towards custom silicon with each one of these hyperscalers. And I think that you've seen Meta struggle to get a chip that's working in volume, and I think that's part of the reason why their spending plans may look a little bit different. If you look at Google, and then if you look at Amazon with the TPU, you've effectively seen, and Trainium, you've seen their ability to have success there far outweigh what you've seen with others. And so maybe Meta is a little bit more disciplined on spending because either A, they need to rely on someone else, or B, it's just taking longer for them to get the silicon that they needed to get up and running.
It's a really interesting point because I think that that's the differentiation that we don't see very much when you look at different, both reports and when headlines come out and algorithms go chasing the headlines. There is a sort of lack of understanding, especially for those of us who are more generalized, exactly what that means, because all compute is not apparently the same. So I think trying to get that understanding is very helpful from an investor standpoint.
There's just some nuance here where everyone is going to try to have their own piece of silicon eventually, and they're all at different parts of their journey to develop that silicon. Guys further along that are getting better ROI are going to double down, and I think this is my point on Google. And guys who are a bit behind may have different decisions on spend. I think in the end, you're going to see success stories and failures, and I think we're watching that play out right now.
What I hear from you is the runway is longer than people think, the runway for investment. Do you see capital markets providing the capital that these companies need for that runway to be elongated?
I think that's one of the three big risks that I think about in semiconductors. One is capacity from a wafer perspective. Two is memories, which is why I'm talking about why those stocks are still interesting. And three is just capital allocation and where are we going to get these additional dollars from. You do need to see more return from the labs in order to get these semi names continuing to work. You are reaching a point where these hyperscalers are spending more and more dollars. You've seen them access the equity markets and the debt markets. I think this is also something to pay attention to when you start progressing past 50% of your free cash flow to 100% of your free cash flow, then you blink an eye. But again, I do think you're starting to see that, and I think that's favorable for these chip names.
Things are changing quickly, Tom. It's good to catch up. Thank you, sir.
Thank you very much.
Tom O'Malley of Barclays on the bull case for this particular part of the equity market on a morning when so many people are talking about a shift, a rotation away from the beneficiaries of CapEx, the chip players, to some of the big spenders, the hyperscalers, so far this morning. Where do you stand on things, Sarah? How long is that runway from your perspective? Capital markets are long for the ride here still.
Well, so one of the questions I also have is that just thinking about that shift from consumer to data center, how big of an order of magnitude is that? Because if consumer took up 5 chips and a data center takes up 20, it's not just a question of cyclicality, it's also a question of size. And then you have to resize. And then I could see that timing and that pricing continue to work. I think the concerns that people have is when you're over-earning in a commodity business, that people worry that that over-earning is going to slow down. So I think that that is what all of us are trying to get our hands around.
The tech trade doing okay this morning. NASDAQ futures up by more than 1%. Equity futures on the S&P 500 into the opening about an hour and 5 minutes away, positive by a few tenths of 1%. Coming up next on the program, we'll catch up with Veronica Clark of Citi, still expecting rate cuts from the Federal Reserve this year, not 1 but 2. Plus Yahara has your morning movers. Broadcom announcing it will develop and supply a range of custom silicon products for Apple, expanding their partnership. Broadcom up in a pre-market by 4% so far this morning. From New York City, you're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Stocks positive this morning by 0.4 on the S&P. On the NASDAQ, some outperformance on the tech side of things. We're up by more than 1 full percentage point on the NASDAQ 100, 1 hour away from the opening bout. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. News out just moments ago that Broadcom is expanding its relationship with Apple, and that is sending shares up 4.5% in the pre-market. Broadcom will develop custom silicon for future Apple products, with that agreement now running through 2031. It's an extension of a long-standing relationship between the two companies, and it gives Broadcom years of visibility with one of its key partners. Sticking with the chip names and memory stocks, they are rebounding after a rough sell-off last week as optimism builds ahead of 2 key events that will test this trade. We get Samsung earnings tomorrow and SK Hynix's U.S. listing on Friday. And I will also note that the chip stocks are putting up a pretty good fight against Mike Wilson's call. He has a note out this morning saying that he prefers hyperscalers over the semiconductor stocks as a rotation takes shape. And we end on SpaceX shares. They are also positive, up now 2.8% in the pre-market, ahead of officially joining the NASDAQ 100 tomorrow. But the action starts today as funds that track the index will start buying SpaceX after the close today, and will likely fund those purchases by trimming other NASDAQ 100 holdings, so setting us up for an interesting day of trading tomorrow. John?
Yahara, thank you. Difficult to keep up this morning. We've got another supply pact from Micron, this time with Ford. Micron and Ford signing a long-term memory supply pact. Micron say the pact to strengthen supply of memory and storage solutions for Ford. We'll get some more details on those headlines and bring you an update in a few minutes' time. Let's talk about the week ahead. Investors are waiting fresh economic data later this morning. The PMI due at 9:45, the ISM at 10 a.m. Eastern Time. Mike McKay has a preview of that and the Fed minutes later in the week. Mike, good morning.
Good morning, John. Largely, those two data points are going to be what makes the week going to be a little boring for most people on Wall Street in terms of the economy. I think Anne-Marie and Lisa taking off this week and leaving you alone, they picked a good week. It's not going to be too busy. We do get ISM today, and the services industry is kind of one of the scenes of inflation lately, so there'll be some interest in the prices paid numbers there. Tuesday, May trade. Wednesday is those Fed minutes, and there's going to be a lot of questions about whether Kevin Warsh is going to shorten the minutes, change the format, or anything like that. So that's something to look forward to. Then Thursday claims, Williams and Logan are speaking. And Friday, there's nothing on the calendar. So if the USA wins tonight, that's their next game, and we can all talk about soccer all day long on Friday. There is some question also about whether Kevin Warsh has talked Fed officials into speaking less. We only have 3 Fed speakers this week. I took a look at the last 5 years of Fed speak in the week after July 4th, and there has been a trend toward fewer speakers. So it may not be Kevin Warsh, it may just be the time of the year. We do get next week the Humphrey Hawkins testimony from Kevin Warsh, so that'll be a lot more Fed speak that people have to pay attention to.
So, Mike, what we've heard from Kevin Warsh, and I'm with you, it probably tells you more about beach season than anything else. But what we heard from Kevin Warsh more recently is ultimately, don't speak unless you've got something to say. Next week's difficult because you kind of have to speak. Got to do your semi-annual testimony. So what can we expect next week?
I think it'll be very similar to what we saw in terms of his Fed press conference. He's going to be able to tell members of Congress there's a task force for that and talk about where the economy is. The latest data, he'll get CPI the morning of his testimony. But beyond that, no forward guidance is going to be his effort out there. We'll see what other topics members of Congress have on their minds, perhaps some regulatory issues, that sort of thing.
You got anything to say about the red card, Mike? Just to throw it out there?
You know,
mentioned it.
I was going to say that the president was wrong to get involved, et cetera, and then I saw that there is precedent with Ronaldo. And if they can do that for Ronaldo, they can do it for Balogun as well.
Why not, Mike?
Why
not? Mike, thank you, buddy. Appreciate the update. Veronica Clark of Citi with this to say on the Federal Reserve, writing a persistently low hiring environment will result in more obviously softer labour market data later in the year. We continue to think rate cuts are much more likely than hikes and pencil in cuts again starting in October. Veronica joins us now for more. Veronica, good morning.
Good morning.
Okay, you're feeling better after the labour market report of Thursday.
Yeah.
On the rate cut call, what was in it that gives you the encouragement that the next move is a cut, not a hike?
Yeah, I think, this is a very strange labour market. It's been that way for a while, this low hiring, low firing environment. So you really do have to look across many different data, many different months to, draw signals. And in that sense, yeah, the stronger payrolls data that we had the previous 3 months looked a bit like the outlier, and that looks much less the case now. Obviously, we had the softer June data, revisions lower. We did have a drop in the unemployment rate, but that's actually, I think, the most interesting part of that data. It came with this really large decline in labor force participation. It seems like maybe some statistical quirk. If you get that rebounding, then all of a sudden the unemployment rate later in the summer, I think, will look more like 4.6, 4.7. And that's not a very comfortable labor market.
Right now, 4.2. So I've got to ask the question, do you no longer think that's a good gauge of labour market balance?
No, I think it still is. I think the issue is that in this really low hiring environment, you tend to get the weaker data at the time of year you're supposed to hire a lot of people, and when you get a lot of new labour market entrants, and that's the summer, really July, August, September, that's what we've seen the last couple years. So, we know that we've had this big slowing in immigration, labor supply is a lot less, we see that in the participation rate, but for the unemployment rate to then be stable at around 4.3, 4.2 does tell you that demand got worse along with supply, and it makes me worried for the summer when you're supposed to hire a lot of people.
And historically speaking, I think that some bad numbers in August were one of the reasons that we got the rate cuts that we got in September year, because people got worried, because that's the kind of weird data when also a lot of people are out of town, when people start to get concerned about bigger issues.
Yeah, it's always that July employment report that we get the first week of August, so we'll see what we get in a month, but yeah, it's that July employment report that has come out the couple days after the July FOMC meeting that then gets them worried about the labor market, and they start to cut in September. That's been the pattern the last few years. So.
If we look at the fact that oil prices have come down, and that was one of the issues that people were worried about, I know it's not the only component to inflation, obviously, but does that also, the combination of those two things, I definitely agree with the let's do nothing for a little while. I see where you're going with cuts. What are you looking for in that August, September timeframe that you would say would push you one way or the other?
Yeah, I mean, I think do need to see the obviously softer labor market data for them to get to cuts. But you can price out hikes even just with some of the inflation data. And I think we will see that over the summer. The elements of inflation that we have seen the effect of higher energy prices in things like airfares, those tend to come down later in the summer. I think they can come down even more. I think we will have a period of some pretty strange inflation data over the summer where we've had this dynamic for most of this year where core CPI is running much weaker than core PCE. I think that could be really pronounced over the summer with those components like airfares. And then interestingly, end of September, we're going to get revisions to core PCE inflation that make it seem like we'll be something 20, 30 basis points lower than where we are now. And that maybe is an important development before that October meeting.
So let's get to October. And I know it's difficult to forecast with any real degree of accuracy, but you've got the first cut in October.
Yeah.
You've got unemployment where, and you've got inflation where.
Yeah, unemployment something around 4.7%. I think we could see that in the September number that comes out early October before that October meeting. Core CPI, I think, will be below 2.5%, something like 2.4. Core PCE still has the issue, right? There's still some of this measurement dynamic.
Do you think that's necessary? It needs to be below 2.5 for them to consider cutting?
I don't know. I mean, it's not CPI, of course, that they target, but it would more just be that if CPI is obviously softer, some of these alternative PCE measures, the trimmed mean, the Cleveland Fed median, they're also trending lower. They're really only 20 to 40 basis points above their 2019 levels. All of those things together would make core PCE just really look like the outlier and make you question, especially with some of these big revisions late September, what's the right way to measure inflation?
Let's run with your 4.7. Sarah, if we got 4.7% unemployment, this might sound callous, but to the equity market, does it matter? How relevant is the labor market data to an equity market obsessed over the AI trade?
I think the equity market would think, oh, great, now maybe we're going to get some cuts, and that's going to be good for me, as opposed to I'm worried about what that means for spending, and I'm worried about what that means for the labor. I think you go back into that bad news.
Would you see it as a consequence of developments around technology?
I think that's still what people are trying to parse, because I think that we're still not exactly sure how much this is going to be a labor effective situation. We saw a big move towards getting rid of a bunch of software people and then a big move towards getting them all back. So I don't know that there is a consistent narrative that you can talk about with employment and AI right this minute, but I do think that to the extent that it makes it easier for the Fed and that inflation coming down and reasons to cut rates, I think the market gets much more excited about that than they get worried about labor.
What do you think the relationship will be later this year between developments in technology and developments in the labor market?
Yeah, I mean, it's a question obviously we get all the time, and it's really hard to pick out if there is any kind of AI effect yet. There has been some larger layoffs in the information sector. Maybe it's one reason that hiring broadly is pretty low. But yeah, if you do get into later in the year, it is that tech AI related part of the economy where you do see any of the inflationary pressure. And for the Fed, yeah, you're going to have this trade-off then of, do we care about that kind of inflation, or do we care about the labor market? Higher rates is supposed to cool inflation via weighing on demand, and what kind of demand are you trying to control?
Veronica, good to see you. Veronica Clark of Citi, still looking for 2 cuts later this year?
Yep.
Starting in October, and looking for unemployment to climb from 4.2 to 4.7. We could have, and I stress could because we don't know what we're going to get, but later this year, in the next several years, you could get this really strange development where profits are taking off because they're able to cut staff and cut labor, and you can have this situation where the labor market data just becomes almost irrelevant for what's happening on Wall Street and what happens with stocks. How sustainable that is, how far you can push that, I don't know, but that's what people have been looking for quite some time.
I think in the short term, people are always going to look at what does this mean for the stock market, and unless you start to get a number that's really like scary-er, like 5, and we're climbing to 6, then all of a sudden it's a very different story. But in the 4s, I just don't see that becoming as much of a problem as it is a potential pathway to higher.
Futures this morning, positive and higher by 0.4% on the S&P. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Micron and Ford both rising in pre-market trading after announcing a long-term strategic customer agreement. The deal coming in an effort to help strengthen the supply of memory and storage solutions supporting Ford's next-generation vehicle production. Broadcom shares are rising in the pre-market. The chipmaker announcing it will expand its partnership with Apple through 2031. Broadcom will also supply and develop a range of custom chips to be used in multiple generations of Apple products. In sports, Brazil is heading home from the World Cup in their earliest exit since 1990. Norwegian superstar Erling Haaland scored both his team's goals to send them to the quarterfinals for the first time in Norway's history. They'll be facing England, who defeated Mexico on home turf, overcoming a red card to win with 2 goals from Jude Bellingham and another strike from Harry Kane. And that is your Bloomberg brief. John.
Vonnie, thank you. That was a technical clinic from Haaland just yesterday afternoon. Up next on the programme, setting you up for the day and the week ahead. Plus, we'll catch up with Earl Davis of BMO, expecting more fuel for the Hawks. A different view on interest rates coming up next. From New York City, you're watching Bloomberg TV.
scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
I expect the hyperscalers now to stabilize, and the semiconductor stocks are going to correct. That's a good development. That doesn't mean the CapEx cycle is over, but that ebbing and flowing between the two is a natural kind of governing factor, because you can't have this divergence continue. It's unstable. 30% correction in these stocks is, I mean, well within possibility.
That was Mike Wilson of Morgan Stanley. So think about what we've seen over the last year or so. Let's just take a snapshot of 2026 so far. CapEx intentions of a handful of companies have skyrocketed. These companies spending a lot of money. Some of those companies, those stocks, have really underperformed, the likes of Microsoft, the likes of Meta. Where's the money going? They're the stocks people have been interested in. The semis, the memory stocks, the likes of SK Hynix, the likes of Samsung, Micron. Those names have really, really taken off. Are we about to see a rotation back towards the spenders away from the CapEx beneficiaries? Is that what we're about to see? Ultimately, that's what Morgan Stanley's Mike Wilson is getting at. The catalyst for that maybe was Meta, selling excess capacity that might draw some questions about the sustainability of the increase that we're seeing in CapEx intentions. It's been a major debate for the program through much of this morning. Sarah Hunt's weighed in on that debate a little bit earlier on this morning. Tom O'Malley took the different side of things, right? He told us there was more runway here. Where do you side on things after the debate we've had so far this morning?
Well, it's interesting because even when we talk about de-risking, we're not talking about taking all of that exposure off the table. It's really more about the size of that exposure, because it's hard to see that there is going to be a complete reversal. And it's interesting to me. I mean, as I was thinking about it during the break, I was also thinking, you know, when semiconductors started to be involved in every single thing, every electronic thing, they're in your car, they're in this, they're in that, the extrapolation of memory to that wasn't something that we were all thinking about, to the extent that now we are thinking about it, because it became a bottleneck. So then this really just becomes, is this such an expansion of how much memory you're going to need globally that, to his point, it's not the end of the cycle so much as, yes, it's going to be cyclical. Then it's a question, okay, so where are we? And where's pricing? And what does that mean? And I think that all of those things are difficult to divine, but in the end, I think that there's a larger expansion of need than maybe those of us who think about this in the historic sense, because memory was tied to much more personal stuff, has to think about the expansion into the everything, which we're seeing with all electronics.
Which is why some of those names have really taken off so far this year. A few tests for some of those names later on this week. Let's get to the day and the week ahead is shaping up as follows. Later this morning, we get to deal with some data first. PMI and ISM services later on this morning. Tomorrow, the president attending the NATO Summit. Look out for coverage from Anne-Marie. Plus, the first test really for the chip sector, Samsung earnings. Look out for that in the next 24 hours. And SpaceX, notable one, joining the NASDAQ 100. On Wednesday, we'll look at some Fed minutes together. On Thursday, another round of jobless claims. And on Friday, SK Hynix ADRs begin trading after raising close to $30 billion. They're tapping US equity markets later this week. Traders elsewhere pushing back rate hike bets after a weaker-than-expected payrolls print just last week. Earl Davis of BMO writing supply-side inflation impacts of the war that have yet to flow through will add to increasing hawkishness at the Federal Reserve. Earl joins us now for more. Earl, welcome, buddy. Good to catch up. Just build on that if you can. What kind of numbers are you anticipating through the summer?
Yeah, it's not through the summer. We think we'll be all right. So with the supply side, there's a couple of things here. One is gas prices haven't gone down that much, only down about 20% since its peak, despite what WTI has done. But the supply side that we're talking about is, as people have mentioned previously, there's fertilizer. So you won't see that cost come through till the end of the year in food prices and the like. We also have chips, right? The helium and in regards to chips. Those price increases come with the issuance of the new phones, new computers for 2027. So we believe it's a sustained high core inflation, elevated core inflation, with pressure for inflation to go higher. So because of that, in addition to a number of other structural things, we believe 2027, we will set new U.S. highs on U.S. 10-year treasuries. So where this year we were in the range of 480 to 390, 2025 range, we think we'll be above 5% in 2027 for those reasons, inflation plus the competition for capital.
Oh, do you see the whole curve shifting higher off the back of that?
Yes, we do. And the reason why we do, it's the increased Fed credibility. With Fed Chairman Warsh coming in, it's not necessary. I don't believe he will raise rates this year, but they won't talk dovish. So not talking dovish in and of itself brings us to higher rates. So I think he'll let the market do the work for the Fed, which means your 2-year bonds stay above 4% and possibly go higher. But we will see the U.S. 10-year treasuries. I believe there's a very strong possibility of 5% plus rates sustainable in 2027.
There was another dimension, another leg, pillar to the trade, that you mentioned, competition for capital. Just flesh that out for us a little bit more.
I think it's the most important leg, and people don't talk about this. People don't look under the hood of what drives rates. So let's look at 10-year yields. The basic thing is supply and demand. So your supply of treasuries versus your demand for treasuries. Let's assume supply stays stable. Your demand for treasuries is going to be significantly less for 3 reasons. One is the competition for capital. So when SpaceX comes in and issues $80 billion in equities plus an additional $25 billion in bonds, that's $105 billion that it will not be invested in treasuries. We expect OpenAI and Anthropic to come out. That is additional money that won't go to treasuries. There's Meta, who will issue more bonds, probably in your 20 to 30 billion range, and the possibility of Microsoft. We're talking hundreds of billions of dollars that could have potentially gone into treasuries are going into capital or growth-producing areas. Let's add to that. With the Strait opening back up, you get these global international countries restocking their commodities. Again, how do they buy that? They use their savings. Their savings is treasuries. Again, less demand for treasuries. This geopolitical, the Venezuela, what's going on there, you see India, all the weather events, again, to rebuild buildings, that's treasuries. If you get peace in Ukraine, to rebuild Ukraine, you sell your savings, you go into the rebuild, treasuries. So there's a lot of structural tailwinds for higher levels, but these are slow-moving events, which we think will all culminate in 2027. So right now, we're actually small long treasuries because we believe we'll be fairly well contained for 2026. But any move below 435 U.S. treasuries, and as we get closer to the end of the year, we will start being aggressive sellers at those levels.
I just want to live in the end of the year just a little bit more with you, Will. Let's say we get that repricing because of the competition for capital. So you've got yields on the risk-free component of the overall all-in yield pushing to, say, 5. Where have you got credit spreads? All-in yields will be higher, I've got that, but where are credit spreads in that world, that competition for capital?
So, great question. I'll start with ultimately, they're at these levels or maybe even slightly tighter because growth will still be good. The reason why I said ultimately, it will be volatile in between. The adjustment to higher treasuries will bring wider credit spreads. We will use that as a buying opportunity. Right now, we are overweight credit. Our strategy is to move to more liquid credit because of this volatility that we expect. So we want to be long, but we want to be long liquid product so that we have dry sand to go from investment grade to high yield when those spreads widen. Why do we think ultimately credit spreads will basically be where we are right now? Growth is still good, and growth is underpinned by deregulation. No one talks about the deregulation going on in the US. That is taking off so much friction off your small and medium-sized businesses, and these are the ones who produce jobs. So when I see headlines of AI and jobs and job losses, to me it's nothing. It's move on, carry on, because the large companies aren't your engine of job growth. And your small and medium-sized businesses will continue to underpin growth in the US. So we think it'll be a very interesting environment. There will be volatility in the adjustment to higher yields, but ultimately we believe it'll be very attractive. Perfect time to be an active manager like us. This is environments we thrive in, and we have been thriving, and we expect to continue to do so.
Strong pitch. Oh, good to see you. Clinic on fixed income, sir. Thank you. Earl Davis of BMO. We like someone with an opinion. Sarah, that's an opinion. 5% yields on 10s, competition for capital. How would the equity market respond to that?
It's a very interesting question, and I wonder a little bit about whether or not, if they do see any weakness or major weakness in that 10-year demand, if they start to change and shift down the curve a little bit and change the issuance and see if that, so that they don't have that, because that above 5% does seem to be one of those lines in the sand that make people nervous. When we start talking about 2027 going above 5%, I'm thinking that equities are not probably going to like that very much.
We're not far away right now, around 450 this morning, 446, yields down about 2 basis points. Sarah, it's good to see you. Lots to think about for the year ahead. Sarah Hunt there of Alpine Saxton & Woods. The week just getting started. Coming up tomorrow, Julian Emmanuel of Evercore, Todd Mortensen of Baird. We'll catch up with Stuart Kaiser of Citi, Michelle Mayer of MasterCard. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
look at the more successful economies in the region.
Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Happy Monday. After a long weekend, we start to rally after the best week since early May. 30 minutes ago into the start of cash trading, I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
Coming up, it is a pivotal week for the AI trade as SpaceX joins the NASDAQ 100, Samsung reports earnings, and SK Hynix makes its U.S. debut.
The market's getting its first look inside Kevin Warsh's Fed when the June FOMC minutes drop Wednesday.
Plus, a Wall Street first and the White House, President Trump will be ringing the opening bells, both of them bells plural, in celebration of the Trump accounts.
Got a few stocks to watch, and wouldn't you know, Danny, memory chip makers are among them. So we'll start with SanDisk, leading the rebound here, up 5.6% after that major sell-off. Lost nearly a quarter of its value last Wednesday and Thursday. It was a strange week, of course, for some of those memory chip makers in particular, but it looks like we're off to a good start this week as well, with several deals, and of course, the SK Hynix IPO on Friday in the works for this week as well. So you have Micron up 3.7%, and good old NVIDIA, it still hasn't come back to the $200 mark, but it is at least pointed fractionally higher this morning, Danny.
Yeah, I think we're going to get SK Hynix tomorrow even, so that might add to this market. And one of the deals you mentioned, Bonnie, Broadcom, they've expanded their partnership with Apple. We'll be designing custom chips through 2031. Broadcom shares up 4.2%. We know the chip crunch, it is a grab for this supply. Let's dig more into it. Joining us now is Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Mandeep, a lot happening in the world of chips. The Broadcom being the latest, SK Hynix comes to market to get funding. It is all part of the same ecosystem of just we're in a supply crunch right now.
It is, and look, Micron earnings showed us that all these consumers of memory are looking to lock in the prices through supply chain agreements, and you know, Micron talked about 4 hyperscalers actually forming almost $100 billion in backlog for Micron through 2030. So from that perspective, these companies not only have the pricing power, they have earnings visibility now. And the real thing here is the supply expansion. And so far, these companies, especially on the memory side, have been quite disciplined with their CapEx. Unlike the hyperscalers that are growing their CapEx very rapidly, you haven't seen that kind of CapEx increases from the memory side. And all of that supply is going to come online 2 years from now. And even that may not be enough if NVIDIA continues to add more memory to the next version of their architecture. So those are the dynamics that are at play here, and that's supportive of what memory companies are printing in terms of earnings growth.
Mandeep, this SK Hynix IPO, it's not your typical IPO, right? It's a company that's been, around for decades. It's coming to the U.S. Can it find $28, $29 billion more, investor interest? And beyond that, can it push the price higher after that?
I mean, just going by how well SpaceX has done, I think memory dynamics are probably even better in terms of, the earnings growth story that these companies can show, at least for the foreseeable future. And look, the cyclicality will always be there when it comes to memory, but SK Hynix is the leader when it comes to HBM. And from that perspective, they may actually grow earnings that, supports almost half of their market cap over the next 2 to 3 years, given by we are seeing triple-digit earnings growth for a lot of these companies.
All right. Mandeep, thank you so much. Mandeep Singh of Bloomberg Intelligence there. Another potentially market-moving event this week is the Fed minutes coming out Wednesday. It'll give investors a better idea of how the committee is viewing inflation as oil prices continue to drop. Bloomberg's international economics and policy correspondent Michael McKee joins us now. Michael, Kevin Warsh keeps teasing us about family fights. How much detail are we going to get about these fights, if any?
Well, that's kind of the bottom line question here. It's a good thing you have the tech news this week, because not much on the eco front except for ISM coming up at 10 o'clock, and then we get the Fed minutes on Wednesday. Wednesday. Let's look at what's in the minutes, first of all, to set the stage here. First, you get any kind of write-up about any kind of special briefing that was given on any particular topic. Then the staff market analysis, the staff economic analysis, and then the committee discussion, which usually follows the pattern of growth, jobs, and what they think about inflation. Then you get the statement and the vote. Now, will we get the same kind of minutes on Wednesday? That's the question under Kevin, please don't talk too much, Warsh. Will the minutes be trimmed? There's a chance of that. They have been slightly edited in recent years to make them a little bit easier to read. How strong was the rate hike push? That's going to be the key question there. How many people? We know 9 people are leaning that direction, but how much argument was there in favor of the idea of raising rates soon? And is there any forward guidance at all? In the minutes, usually you get some people saying, well, they think if this happens, then that might happen. Maybe all that is scrubbed. We just don't know yet. And I thought I would add one thing for all the viewers out there, clip and save. You know, copy this down from your television set. These are the Fed minutes counting words that we use all the time in order. They run from all to one or another. And so we have to figure out how many people are represented by each one of those. And that's the main task of trying to figure out the minutes up to this point.
Yeah, but is there going to be a committee on these words and, you know, they're all going to be changed and we're going to decide that the Fed minutes don't exist anymore because whatever the committee says?
Certainly could be a task force on that.
A task force, thank you.
Communication, right?
True. And I just wonder, though, how Trump and the administration are setting this up. Trump was speaking on Thursday basically saying it's a hostile Fed. And if they're basically giving Kevin Warsh the room, that if this is a Fed that leans more hawkish, that it's not his fault. He's just trying to herd cats, in the words of that.
Well, he is trying to herd cats, and he's brand new at the job of being chair, and there are 18 other members of the Open Market Committee, 17 at the moment, because we're missing the Atlanta Fed president. But trying to get everybody together on one viewpoint is difficult. And now when you've got the Fed right on the edge of, is it too accommodative, is it too tight, it's going to be hard for him to get anywhere. There's no case right now at this moment for a rate cut. So the president is going to be disappointed by definition.
Perhaps, but you know what I always think? He is the president's guy, right? So almost no matter what he does, the president will likely back him. No matter what he says about
Powell
interest
was
rates.
the president's guy, too, though.
But he wasn't, because he was in office by the time he came back in again already, and so he was able to be a villain in the president's eyes. I don't know. I just think, you know, Kevin is Donald's guy.
Well, we think that the president will give him some runway room, but this is Donald Trump, so nobody has any idea.
Mike, thank you so much. That's Bloomberg's Michael McKee. Speaking of the president, let's turn to NATO. Russia has launched a massive overnight assault on Ukraine as President Trump prepares to meet with Ukrainian President Vladimir Zelensky on the sidelines of Wednesday's NATO summit in Turkey. Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, what are we expecting?
Well, Danny, at this point, we know that our allies are hoping that they can renew this focus on Ukraine during this NATO summit. As you mentioned, the White House does confirm that there will be this bilateral meeting taking place on the sidelines of the G20 between President Trump and Ukrainian President Zelensky. Sorry, I have a noise coming from the computer.
Tyler, I was going to say, we can't hear it. Continue on. I think it's low enough that we can't hear your computer noise. So what are we expecting?
But basically, we know that allies are hoping that the U.S. will perhaps commit some further military investments when it comes to Ukraine. Zelensky himself is saying that he's going to be asking for some additional Patriot missile batteries, as we are seeing some of these recent attacks really expose some of those gaps when it comes to Ukraine's air defense systems. The thing is, at the moment, we have seen so much focus when it comes to the conflict in Iran. There does seem to be this push to get it back recentered on what really has been stalled negotiations when it comes to Ukraine. The issue becomes, though, the conflict in Iran has really exposed these rifts within the NATO alliance. And we have President Trump just days ago renewing his threats when it comes to NATO. Even his U.S. ambassador to NATO, Matthew Whitaker, has said that if allies do not boost their defense spending, then the U.S. could take away some of the benefits of the alliance. The U.S. has already said that it is reconsidering deploying about 5,000 troops in the region. region, and we'll look at what to do when it comes to deploying assets in times of crisis. Now, Danny and Vonnie, we did see the NATO Secretary General Mark Rutte here in Washington just the other week. He was really touting what has been some significant spending increases when it comes to European countries. Our own analysts at Bloomberg Economics say that the top 5 European economies are now at about 2.5% of GDP when it comes to military spending, but that's still below this White House's goal of 5% by 2035.
Tyler, before all that happens, there's going to be the official launch of the Trump accounts, and in the last few weeks we've seen companies talk about, adding to them, and even individuals. Gwynne Shotwell of SpaceX, for example, this morning going to give a share away to a certain cohort of kids in the United States along with her husband. What do we know about this ceremony, and what exactly is official now?
Well, President Trump is now set to ring the bell this morning, as you guys mentioned at the top of the program, alongside officials from the NASDAQ and the New York Stock Exchange. It's going to be a custom-made bell. I'm excited to see what that's going to look like. But you're right, it does mark what is the launch of these Trump accounts that started on July 4th, keeping in mind that these are those tax advantage accounts. And if you have a child that's born between January 1st of 2025 and December 31st of 2028, so essentially President Trump's second term, then you'll see the seed money put in from the government of $1,000. This is something that the Trump administration is really hoping will help bolster their economic agenda and their plans as we head into the midterm elections. I pulled the most recent stats, Vonnie, from the Treasury Department, which says that so far 6 million Trump accounts have been opened, and that includes 1.4 million that are eligible for that federal seed money.
So we'll see what President Trump says shortly before the open, and then, as we've been mentioning, Tyler, a historic opening bell from the Oval Office. Bloomberg's Tyler Kendall in Washington. Let's get a check on markets to start your week. After the best week for stocks since early May, you have seen the hyperscalers outperform as the chip stocks took a breather, but today everything is rallying. There does seem to be some reports that we have yet to confirm floating around there that Intel has also hiked the prices of their chips. So that's helping us rally more than 1%. 10-year yields come in by 2 basis points. We're at 446, and Brent crude below $72 a barrel, with Saudi Arabia cutting the price of their oil output to Asia by the most in 26 years. Vonnie.
Well, Danny, let's get a look at some other movers on our radar now. Advanced materials firm Solstice is buying chemical producer Element Solutions in a $14 billion deal.
Elsewhere, TeraWulf says that Anthropic signed a 20-year lease with its Kentucky data center worth some $19 billion. TeraWulf up 16%.
And a little check on SpaceX. There are some more details on what I was just talking about. President Gwynne Shotwell says a share will be donated to certain children in this Trump Accounts initiative being announced later this hour, and that is on her personal behalf, her and her husband.
Coming up on the show, Alibaba shares get a lift as a federal judge also lifts a lobbying ban tied to a Pentagon blacklist. We'll have the details for you next. This is Open Interest.
How the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
to the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Now to high interest to look at what's making headlines around the world. FIFA clearing U.S. striker Folarin Balogun to play against Belgium after President Trump appealed directly to the FIFA president. Belgium called the decision astonishing and is considering an appeal. European soccer leaders also criticized the move, saying it hurts the integrity of the World Cup. Brookfield-backed data center operator C-Square is targeting up to $1.35 billion in its U.S. IPO. The company, which operates more than 60 data centers across North America and the UK, plans to use the proceeds to pay down debt. Brookfield will keep voting control after the offering, as investor demand for AI infrastructure remains strong. A federal judge temporarily blocked the Pentagon from enforcing a new lobbying ban against Alibaba, giving the Chinese tech giant a reprieve, while the court weighs its constitutional challenge. The law prompted every registered Alibaba lobbyist to drop the company after it was added to the Pentagon's blacklist of alleged Chinese military-linked firms.
Let's discuss more, Bonnie, with Bloomberg senior tech editor Mike Shepard. Shep, great to see you this morning. And look, we can go through the details of this story, but I wonder just kind of at a large scale, if this somewhat shows the limits of this Trump administration's ability to try to enforce their will on Chinese tech companies.
Well, it's a great question. It really underlies the dispute at hand here, because what Alibaba is claiming is that, look, two things. One, they say we are not a Chinese military company, and they would like that question addressed in court. But two, they also see this new law that took effect barring the Defense Department from working with companies that hire lobbyists serving both their business and sanctioned Chinese entities as a violation of their free speech rights. The law that just took effect last week essentially forces lobbyists to make a choice. You either work for the Chinese firms that are now on this Pentagon blacklist, or you work for one of the tens of thousands of contractors serving the Pentagon. Now, that is a pretty forward-leaning step by the U.S. government in its effort to try to rein in China wherever it can, including in its dealings with the U.S. government and the Pentagon. Now, depending on what the judge ultimately rules here, we have to remember the courts have often given some deference on national security questions to the government. This really could have far-reaching implications because, Danny, there are so many other big Chinese companies on this list. Most recently, the added Baidu, BYD. We also see some top chip makers, including CXMT and YMTC on there, as well as Tencent. So this will have some ripple effects beyond just this courtroom.
Mike, what are they currently lobbying for, and what other companies are they competing against for these aims?
But, Vani, all the companies that you can think of under the sun are looking for one break or another from the government. And in part, what they would like to be able to do simply is to be able to lobby the Pentagon so that they can get their names taken off the list. There are a lot of different ways that they can make these appeals to be removed from the so-called 1260H list. That's that refers to the section of law that established this list that the Pentagon is supposed to put together and publish every year of companies it believes serve the People's Liberation Army. They can fight that in court, or they can just try to take their appeals through a different manner, just by knocking on doors at the Pentagon, going to members of Congress, going to other parts of the administration. But unless they have a registered lobbying firm here working on their behalf, that becomes much harder. And in this case, it would, in essence, start to really brush up against this new law that took effect last week.
All right, Mike, thank you so much. Bloomberg's Mike Shepard in Washington, D.C. Coming up, RBC's Lori Calvasina on her firm's new S&P 500 price target of, get this, $81.50. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The memory stocks, the revisions have been spectacular, but they can only go so high. So all of that's kind of happening at the same time, and I expect the hyperscalers now to stabilize. That's what's going on in the last couple of weeks, and the semiconductor stocks are going to correct. That's a good development. That doesn't mean the CapEx cycle is over, but that ebbing and flowing between the two is a natural kind of governing factor because you can't have this divergence continue. It's unstable.
Morgan Stanley's Mike Wilson on surveillance with a call of rotating from chips to hyperscalers. Joining us now is RBC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina. Lori, I want to get to that in a moment, but first we got to start with your price target upgrade from you and the team. Where are we at now, and what was driving the upgrade?
So we did this last week. We put it out on Monday, and we went to 81.50, and this is a 12-month target. And I bring that up because most strategists have the December 31st number. We stopped doing that, and we really want our price target to be sort of a long-term compass, right, where we sort of keep our eye, you know, irrespective of the noise and pullbacks here and there, where do we expect to be 12 months down the road? And so we have 5 models that we look at. 81.50 is roughly the median and the average of the 5 models. And at the low end, our GDP test is at 77.77, which is an easy number to remember, but hard to say. And then the most bullish model is over 8,300. And 2 of the models are actually right in that 81, you know, kind of 60-ish type area, which we've rounded to 81.50. That's our sentiment model and our valuation and earnings model. And I do think our valuation and earnings model, like all the things that we can get excited about and all the things that we can get worried about, that valuation and earnings model probably gives us the best ability to kind of bake all those together.
In your base case, not even your most optimistic case, what brings us there? How much of it is AI-related, semiconductors, memory chips?
Yeah, you know, I do sort of share, you know, some of Mike's concerns, you know, about the correction in the semiconductors. We actually went to London and Zurich back in mid-May, and I got an earful from the London crowd in particular about how they had all been in the AI stocks and the semis companies, and what else should we be talking about? So if you read between the lines, right, it could tell you they were thinking about taking profits. And I will say, continuing, since that trip, even as late as last week, people have been wanting to look elsewhere for opportunities. Can we just run down the sectors? What other, industries look interesting? And I'll say, I'm not really sensing a ton of doubts longer term on the AI story. It just does feel to me like it's a trade that's gotten ahead of itself. When we look at semiconductor valuations, Russell 3000, looking at like a 30-year history, we're not at tech bubble highs, but we're at post-tech bubble highs, right? And so this market has not really displayed a tolerance for letting things stay too frothy for too long. So I think that's what's going on there right now. If you think more about like the Mag 7 trade, we watch the top 10 market cap names in the S&P on a rolling basis. Earlier, in the second quarter, we had seen that basket of stocks get up to 31 times on forward earnings. And when it's crossed 30, the most, recent couple of times, we've seen a bit of a stumble there. And that's now down in the 20s. It's not at past lows yet. But we think that both of those, kind of pockets had just shown some valuation froth that's in the process of being taken out.
Well, what happens when you get some of these more technical elements coming in terms of supply? So this week, tomorrow, we're going to get SpaceX added to the NASDAQ 100. And then Vonnie mentioned this. We're going to get SK Hynix doing a dual listing in the U.S. to close the week. What difference does that make, having demand at the start of the week from ETFs and then supply to cap the week with SK Hynix?
I'll leave sort of the supply discussion to other folks who are a little bit stronger on that than I am, but I would
Laura,
say...
you're brilliant on everything, but continue.
But I would say, the question of market froth, I think, is one that comes up. And when you kind of, zoom out and you look at things like the AAII survey, for example, it's fairly subdued. It's been chopping around kind of at average, one standard deviation below average. That doesn't feel like a frothy market to me that's on the cusp of a major correction. If you look at CFTC data for institutional futures positioning in equities, it's a one standard deviation event, not a two standard deviation event. We've been hovering around that one standard deviation event for quite some time. So you haven't really seen euphoric, positioning there. You do see it if you look at Conference Board, the consumer survey, the question on retail investor optimism, or just consumer optimism on the stock market over the next 6 to 12 months. That's been pretty elevated. So that's maybe one place you can see a little bit of froth.
Nobody called you up last week and said, oh my gosh, is this the beginning of the end, when Korea was down 8% and the US was following it and it happened 2 days in a row and everyone was freaking out?
Well, it's, I only cover the US, right? So I'm not going to get those questions anyway. But I would say on the broader, sort of tech space, well, number one, it was very quiet last week.
True.
And I think it's going to be...
Yeah, but there's sometimes a bleed over effect. Lori, we have to jump to the break, but we're going to continue this conversation after the opening bell. Lori is going to stick with us. And markets are rallying, and we are awaiting words from the president, who is currently in the Oval Office with the NASDAQ CEO, Adena Friedman, and the NASDAQ President, Nelson Griggs. We'll have that opening bell after this commercial break.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough.
So great to see you. So great to see you.
Great show this weekend. Thank you. I was down here. I hope you really enjoyed it. Thank you.
Yes, sir.
That was great to see you. Tina from NASDAQ.
Thank you very much.
Okay, I'll get over at the bell. I want to stand next to these soon-to-be very rich people.
Good, so we'll get going, and good morning. I'm grateful to be with you on this historic occasion. The American dream belongs to every child, and today we are equipping the next generation with the right to claim their rightful share of it. Through Trump accounts, our president is creating an ownership economy where all citizens become shareholders. 38% of American families do not have any exposure to our great equity markets, but with Trump accounts, over time, we can get that number to 0. Already, 6 million American children have signed up, 86% of them with families earning less than $200,000. U.S. Treasury, 1.4 million of those accounts will receive $1,000 from the U.S. Treasury to seed the accounts. When the markets open in just a few minutes,
Right now.
oh, Trump accounts will benefit. So ring the bell, Mr. President. So I will just finish by saying, on the eve on the heels of our 250th anniversary, that this will be one of the president's most enduring legacies, and the great bounty of this will go for generations to come. It is my privilege to invite President Trump to speak after we had two firsts today. First time we've ever had the New York Stock Exchange and NASDAQ. They do a joint opening, and first time we've ever had the opening bell run in the Oval Office. So, Mr. President.
Well, this is very exciting, an amazing achievement. People, we don't know this, Michael, but people have been trying to do this for 30 years, and they were so generous. He put up, and she put up, I think she more than him, maybe. Both very much involved, but Michael and Susan put up $6,250,000,000, and I'm sure if I make a phone call, they'll do it again. The job they've done is incredible in life, so we want to thank you very much. Amazing, really amazing. And our friend from Micron, by the way, called me on Friday, and he said Micron's putting in $250 million, and he's done a phenomenal job. And $250 million, and many other companies and people are putting up tremendous amounts of money. And it's something I'm very proud of. Some people think it's going to go down as one of the most important things we've done during the administration. So after a truly historic weekend celebrating the 250th anniversary of America, today we're thrilled to officially launch the Trump accounts. And we had some beautiful people and speeches and tremendous crowds. We had the biggest crowd anyone's ever seen that unfortunately lightning caused it to leave. And everybody said, well, we'll do it another time. When I heard that, I said, no, we won't. Everybody had left. I said, we're not doing it another time. We're doing it on the 4th of July. And we actually started the speech on the 4th of July. We had to wait a little while, like a couple of hours, let the lightning pass. And everyone had left. And we came back, and they had 150,000 people came back from, they took their car, they're going back home to Texas. They turned their car around and came back. You wouldn't believe it, 150. I think the 150 was more impressive than the 425 or whatever it was. It was pretty amazing. And Mount Rushmore likewise was so incredible. So People love our country. Our country is doing incredibly well. Strongest military in the world has been displayed with Venezuela, who we're getting along with fantastically now. We've taken hundreds of billions of dollars of oil and given them hundreds of billions. They have more money than they've ever made. And we're doing very well. We paid for the war many times over. And then Iran, we're doing actually equally as well. We're just not getting the kind of coverage that we should. But we have eviscerated them military. And the bottom line is our country is strong. We have the greatest military anywhere in the world. I was with President Xi 3 weeks ago, and I said that, and there was no argument. Nobody's arguing. We built it during my first term, and we're using it now for very good reasons, because in this case, Iran can never have a nuclear weapon. We can never let that happen. On Saturday, July 4th, our administration deposited one-time seed contributions of $1,000 each into the Trump accounts of over 500,000 American children. It's a lot. And millions more will be getting additional contributions from generous donors like, as I mentioned, Michael and Susan Dell. They are truly incredible people. Go out and buy a Dell computer. He's not doing it for that. But I'll bet his business, Brad, has gotten even bigger. I have a son that loves their laptop. I have to tell you, no, I want a Dell. We're going to get him that money back one way or the other. And then I'll ask for another $6,250,000. We'll start the whole process all over again. No, he makes an incredible product, and right from the beginning. And Brad Gerstner has been pushing this, so he's a very successful man. Not quite as famous as the Dell family, right, of Michael, but you are. He's an amazingly successful guy, and he's put up a tremendous amount of money. And again, I want to thank Micron and all of the companies that have already called me, and they're putting up a lot of money. This is nothing. This is not me, and putting the name on it was not my idea. That was a whole group of people that passed legislation, because this is all made possible only by the passage of the great big beautiful bill. And I knew that this was happening, but I didn't know. All of a sudden, I see my name on it in the bill, but I'm very proud to have my name. They think it would sell. They said, it'll sell better if your name's on. I said, look, leave it on, but I did not. I just want to, I did not ask for it. Michael, is that a correct statement? Did I ever go to you and say, Michael, don't put up the money unless they use my name? No. But I have done that in other cases. I will tell. In certain other cases, I've done that, right, Scott? But not in this case. This is a very special kind of a thing that took place. It's, in a way, it's a miracle. Nobody thought it was possible. Think of it. Children that are born without money, without any money. Great parents, they can have, everything can be great, but they have no money. They can become very wealthy children at 18, and they can flip it over, or their people can flip it over into other vehicles at a certain age so that they don't take it out. I would recommend they probably don't take it out, but they can have a lot of money, especially if the market continues. Can you imagine if you did this during Trump a year ago, a year and a half ago, where the market's gone up at levels? As an example, everybody said when I got elected, there's no way that during the 4-year period we'll ever hit 50,000 on the Dow. And we hit 50,000 on the Dow, I would say, in the first year, records. We had records. What NASDAQ has done, what the New York Stock Exchange, all the stock exchanges, 7,000 on the S&P was impossible during the first year, but they really thought it was impossible in 4 years, and we hit it before the first year. So if the children had invested the money a year and a half ago, we should have acted faster, actually. It's too bad. But it's going to go up. We have a hot country. It's going to go up. I think the market's going to go through the roof. When all those factories open, they're being built all over the country at record numbers. We have never built in the history of our country what we're building now. We have $19.2 trillion, and much of that money is going toward building factories, plants, AI, automobile. We've never built as many automobile plants. They're all over, and they're coming from all over the world. You know why? Because they don't want to pay tariffs. If they build their cars here, they pay no tariffs. So Japan, instead of making them in Japan or South Korea, instead of making them in Germany with Volkswagen and Mercedes and BMW, they're all building plants here now. They're coming out of Canada. They're coming out of Mexico. Mexico took a lot of our business, so did Canada. They're all coming back. I don't know what the countries are going to do, but they're all coming back. So today, with the ringing of the opening bell for the stock market, those accounts will now begin to grow right along with our booming economy. And I really believe we're going to have the biggest boom of all right now. You haven't seen anything yet. Between individual contributions and the seed funds, $800 million in new capital will be invested in the stock market for America's children this week. And I also think that we're going to be putting numbers in the budget, which will be really spectacular, because it's really not costing us anything. We're giving this money to children so they can have a good life. Very early on, they can have a good life. And we're going to be doing also something we're working on later on, and it'll be also, I think, very popular. And I guess the best definition is they have a plan in Australia, which people really like. It's really worked out very well, incredibly well, and very respected. And we're going to be talking about that with Congress and see if we can implement it. And that would be more for grown-ups as opposed to children, but it's something that's going to be great, I think, if we can get it done, and we're going to try very hard. But again, I want to thank Michael and Susan, Brad, and his son Lincoln, as well as Secretary of the Treasury, Scott Bessent, who has really been an incredible. If you're casting a movie, you put him as the Secretary of the Treasury because he's central casting. Do we agree? Wouldn't you say? More importantly, he's done a great job. SBA Administrator Kelly Loeffler, who's been phenomenal. Chairman of the SEC, Paul Atkins. Paul, thank you. What a job you do. You know, there's always been a problem there, and with you, everything goes smoothly. Although I have to say, Jay did a very good job also, right? During my first term. But Paul's been incredible. Everybody wanted Paul, and he's exceeded expectations, I will say, and everybody knows it. Thank you, Paul. Great job you're doing. Director of the National Economic Council, Kevin Hassett. I didn't want to lose Kevin. I said, Kevin, you're at a huge disadvantage because selfishly, for a certain other position, and we have we had the two Kevins, and they're both great. And a friend of mine, Ted Cruz, we fought each other for a while, and he's a very tough competitor, and we became friends. We were actually great friends before the campaign, and everybody said, will this ever end? In fact, he was doing a rally. He said, could we do a joint rally? That's like you people doing a joint bell ringing. It's like crazy, right? But he said, remember we did the joint rally outside in Washington. We had a big crowd. And the media was saying, will it ever end? I said, it will, but not yet. But it ended. But then it came together better than ever before. He's done a wonderful job as a senator, highly respected. In fact, somebody said, would you ever appoint him to the United States Supreme Court? Because he's a brilliant lawyer.
You are currently listening to President Trump at the Oval Office for a historic ringing of the opening bells. The NASDAQ and the New York Stock Exchange coming together at the White House to celebrate the launch of Trump accounts, where they say they've deposited $1,000 in 500,000 accounts for children. The president praising both Micron and Dell. Dell rallying off the back of that. You can see Michael and Susan Dell there behind him. Shares up 3.8%. At the same time, we also learned in the middle of that Microsoft laying off about 2.8% of staff concentrated in its Xbox department. Those shares declining 2%. Overall, it is a market rally we have on our hands since the best week since early May last week, and the NASDAQ outperforms up 1.1%. Semiconductors bounce back after falling, and Brent crude remains around $72 a barrel. Let's bring back in RBC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina. And Lori, you know, Trump likes to speak in a very bullish way, talking about the hottest economy ever. But a lot of sell-side analysts have agreed and had this huge wave of earnings upgrades. I wonder how sustainable and achievable you think the bar is right now.
So, you know, it depends on your time horizon, I think. If you go through and you sort of look at like the quarterly stats, the 2Q numbers are starting out right at a place of deceleration versus the monster 1Q. I think the street knows that, right? And we have been seeing earnings expectations kind of tick up for a lot of sectors that weren't moving much during the war. We've been seeing some tick up recently. So there's a little bit of optimism going into this reporting season. The bar maybe feels a little bit high in the short term, but I would say longer term, you know, we've spent a lot of time sort of parsing through the consensus estimates. And at the end of the day, you know, I do believe that the company level analysts are the best ones to sort of give you, you know, the specific read on individual companies, and you add them up. So we use the bottom up consensus as a starting point. Even with that, I am haircutting it by 5%, you know, in my earnings model, just to be on the safe side. If you go back and you look historically, a typical year where you see earnings downgrades, you kind of pull them in by about 8%. So we're not pulling them in quite that much. But I think that's a reasonable, sort of place to start. I do think what's unusual about this year is that we're not coming out of a major crisis and we're continuing to sort of pull numbers up and up and up. Is that necessarily indicative that we're in an earnings bubble? I've started to see that phrase thrown around, and I know it catches a lot of headlines and kind of feeds in some of the angst of the moment. I'm not sure that we're there yet.
But also the market isn't a monolith, right? Laurie,
Right.
I mean, is the
Yeah.
fear of missing out on any further AI upside, which, you gotta think has to be capped at this point, still greater than the fear of missing out on any financials upside or industrials upside or, Russell 2000 upside?
I think if you look at things like financials, some of the non, sort of sectors that aren't right in the center of the AI story, right, kind of the ultimate end users, I think they're very much in the early days of seeing benefits from AI. But if you think about, since 2015, 2016, I know in my old earnings model, I had a heck of a time forecasting S&P 500 operating margins because they just kept going up and up and up to the right. And a big reason for that wasn't just the tech sector's presence. It was all this software and all this innovation that was helping all of the other companies. We do have a story like that coming to the rest of the market. Now, I will grant you, a year and a half ago, we're hearing like, hey, I got a chatbot. And, now we're starting to hear better stories about innovation and, specific impacts on things like distribution centers. We're still a bit a ways from companies coming out and saying, we boosted our earnings by 5% because of AI, or we saw a 10% increase in, revenues because of, this AI tool that we developed. I think we will get there one day. It's still very early, and I do think that messiness is feeding some of the angst we've got right now.
Is it too early to price that in? Because it feels like that, at least, is part of the bullish thesis for hyperscalers. Because at the moment, what's kind of supporting this ecosystem is the huge amount of CapEx that they're doing. And that's the money in the system right now. It's not coming from enterprises who are willing to spend the money in order to reach the profitability or the efficiency that you're talking about.
Well, let me give you an example. So when people start to kind of, I don't want to say freak out, but when they express some angst over the CapEx cycle, I take them to this chart in my deck. And it goes through the first quarter, and it basically shows year-over-year growth rates and quarterly CapEx rates for the S&P 500. And it's a scary little chart. It's sitting there at peak, but it's also been kind of edging, along this peak level of growth for a little bit of time. We parse that out into the top 10 market cap names and the rest of the market. Those top 10 market cap names are close to the peak. They're not right at it, but you can look at that chart, and if you squint, you can not sleep well at night looking at that. But the thing that calms people down is I take them to the right-hand side of the page. We have the S&P 500X, the top 10 market cap names. That growth rate is headed in the right direction. It is finally inching up. Guess what? It is also led by ISM new orders over about 4 quarters, and that is ticking up as well. So that leading indicator is telling us that the rest of the market is headed in the right direction and likely to continue on that trajectory. We see the same, kind of early stages of CapEx recovery if we look at Russell 2000 or Russell Midcap. So when you really dig into the data, you can sort of see the case, right, for how we can extend this cycle by other companies participating more. It's just very, very early, but I do think this is part of what happens in technology revolutions, is that you essentially have some messiness. You throw spaghetti at the wall, you try to see what works. It takes a while to figure out what the use cases are, and that's where we are.
All right, Laurie, thank you so much. Laurie is going to bring us all the way through all of the use cases when we get them eventually. RBC's Laurie Calvasina. Breaking a few moments ago, Microsoft announcing 6,400 layoffs, half of which will stem from its Xbox unit. Bloomberg's Jason Schreier covers the gaming industry. So Jason, how much are these layoffs due to Microsoft's ailing fate in the stock market recently, and how much are they just due to the fact that Xbox hasn't had a hit in forever, and what on earth are those staff doing?
Yeah, so the Xbox organization specifically has been struggling for a couple of years now. They replaced their CEO in February, who has vowed to do what she calls a reset, and this is the first step of that. This is, I think, maybe tangentially, but not really related to the broader cuts at Microsoft, which are about efficiency and AI. These are specific problems that Xbox has.
And on those problems, by the way, I was just looking at the CEO of Xbox, the memo he wrote to staff, which you all covered, saying we must reset Xbox. I don't know if a pun is the best way to announce that you're laying off more than 3,000 employees. But putting that aside, how much of this, Jason, also has to do with what we've been learning about how expensive components are with Xbox itself having to rise prices? How much is that weighing on the company?
Yeah, it's definitely significant. Asha Sharma, the new CEO, she actually wrote in a memo a few weeks ago that Bloomberg reviewed that they're projecting that by 2027, the price of memory and of storage is going to be 5 times what it was in 2024 as a result of this chip crunch that is globally caused by these AI data centers and everybody needing the chips for that. So that is definitely significant. I mean, that is a 5x increase. That is a huge, and so we've seen Xbox raise prices of their consoles in order to account for that, but they're still taking a big loss on every console. So that is definitely significant. I would say the biggest factor here is that Xbox grew way too much without seeing financial growth, grew too much in employees without seeing the financial growth that they were hoping would correspond with that.
Jason, does this at all relate to the larger parent company? I realize it's kind of about half and half. But when looking at this, should we be concerned, for example, and I know you mostly concentrate on Xbox, so, that taken with a grain of salt, but the overall spending of this company, because it has been one of the big hyperscalers, the spending, do Xbox woes translate into greater Microsoft woes and their willingness to continue to throw money at AI?
I don't think the two are related. Microsoft has a layoff every fiscal year. I think the part of this that is not Xbox is their kind of typical quote-unquote efficiency, AI job cuts that they seem to do every early July. No, I think Xbox as an organization has its own struggles. You may recall that a few years ago they bought Activision Blizzard for $69 billion, an enormous amount of money that they've been spending to try to drive growth, and they just haven't seen that growth, which is one of the reasons we're seeing this new leadership regime take over and come in and do what they're calling this reset. So no, I don't think you can really extrapolate much about the broader Microsoft organization from this. And in fact, Xbox is saying that they are going to reinvest this money that they're cutting, these jobs that they're cutting. They're going to reinvest in content, in making bigger franchises like Fallout and others, Halo, Call of Duty, etc. So no, the answer is no. I don't think you can take much away as far as the Microsoft's broader goals. This is an Xbox-specific issue.
Yeah, and it's not like they haven't had the opportunity. I mean, we had the FIFA World Cup this year again, Jason. You would have thought they would be able to, make use of that somehow. Jason, thank you so much. Bloomberg's Jason Schreier. Coming up, Lockheed Martin is making a big bet on undersea warfare. That's next. This is Bloomberg Open Interest.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Lockheed Martin is buying Ultra Maritime for $3.5 billion, just under that amount, expanding its capabilities in undersea warfare as global military spending continues to rise. Let's bring in Bloomberg's chief aviation correspondent, Sid Phillip. Sid, I remember speaking to Advent to start the year, basically saying we're going to be spending $1 billion in defense tech bets. They own Cobham, which is selling this asset to Lockheed Martin. I just wonder how much deal activity has really whipped up in this sector, considering, I mean, Iran, Ukraine is still going on, but just the defensive posture of so many countries.
Yeah, so the defense sector has seen tons of deals. I mean, especially Cobham, which was originally sold to Advent back in 2020 and for $4 billion, and they sort of assembled this giant defense company that they're now sort of selling parts of as they develop and mature technologies. And so the deal's seen a lot of, I mean, there's lots of interest in deals at the moment. There's lots of interest in scaling up technology. I mean, we've seen that with the Exion deal. We've seen that with this deal in particular. So there is a lot of, especially defense technology, and especially in the naval space. So there is definitely a lot of interest.
Yeah, I mean, you have to wonder how much did the Strait of Hormuz cause this deal to get done? Because it wasn't quite clear whether the U.S. knew there were mines down there, whether they knew they were activated or could be activated, or how to deactivate them.
Absolutely. I mean, we're obviously not sure what that played in, but there is a sort of growing sense that there needs to be more investment, especially in marine and naval technology, and that's where a lot of these deals come in.
So another deal that we've been tracking for some time now, I know you and the team have been Castle Lake, the American PE firm, trying to buy EasyJet. It feels like it's been really contentious. Has EasyJet finally agreed to some sort of price coming from Castle Lake?
Absolutely. So this weekend we saw that EasyJet recommended that they accept a deal from Castle Lake, and that would basically value the company at about £6.9 a share. And that's about 6% higher than their previous offer. Their previous attempts to acquire EasyJet were rebuffed by the EasyJet board, saying that it undervalued the company. And for EasyJet, it sort of raises the question of where it goes from here, because you've got an airline that's got valuable slots in places like London and Paris and in Switzerland, as well as a fleet of about 300 planes, on order with options for another 300. So they've got a lot of really exciting assets for the aviation industry.
Does the family being a 15% shareholder cause a wrinkle?
We're not quite sure whether Stelios supports this deal or not. He hasn't really said anything publicly, but that would be a key contention in terms of whether this goes through. I mean, Castle Lake did propose allowing existing shareholders to remain invested even as they take the company private through this attempt.
Sid, thank you so much for joining us on those two stories. That's Bloomberg's chief aviation correspondent, Sid Phillip. Coming up in hour 2 of Open Interest, Nancy Tengler shares her top stocks to watch. Plus, we talk about William Blair's acquisition of Inner Circle Sports. A great summer for sports. We'll have more of that coming up. This is Open Interest.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
ABC News. I'm Brian Clark. President Trump simultaneously rang the opening bells for the New York Stock Exchange and the NASDAQ. He did it from the Oval Office to celebrate the new tax-advantaged investment accounts for children.
Parents, loved ones, churches, and generous companies and individuals will be able to contribute funds to these accounts to grow throughout the child's life.
Later today, the president travels to Turkey for a two-day NATO summit where defense spending among NATO members is just one of many tensions that could be at play. ABC's Britt Clennett has more from the foreign desk.
Diplomats among NATO nations, they say that leaders, they are weighing fresh pledges of these, advanced air defense systems and a multi-year support framework. But, some allies have been slow to follow through and deliver on those earlier promises. So there's real uncertainty about how far they'll go this time.
That also includes support for Ukraine, still targeted by Russian attacks. 18 people were killed overnight. President Trump is scheduled to meet with Ukrainian President Volodymyr Zelensky. Today in Provo, Utah, Tyler Robinson will appear in front of a judge for evidence and testimony. He is suspected of killing Charlie Kirk last year. ABC's Alex Stone has details.
10 months after Tyler Robinson allegedly shot and killed Charlie Kirk during a speech at Utah Valley University, only a few miles north of the courthouse here, today Robinson is set to have his preliminary hearing. It'll be like a mini trial, and it's expected to last all week as prosecutors try to prove to a judge they have enough evidence to take the case to trial. For the first time, evidence and testimony will be presented against Robinson, and for the first time, Charlie Kirk's parents and his wife Erica will attend court. Alex Stone, ABC News, Provo, Utah.
The U.S. takes on Belgium in Seattle at 5 Eastern in a round of 16 game at the World Cup. You're listening to ABC News. The funeral procession for Iran's supreme leader continues today as many in the crowd call for revenge against the U.S. and Israel. ABC's James Longman has details from the foreign desk.
Much of the country has closed down and hundreds of thousands of Iranians have poured into the streets to mourn Ayatollah Ali Khamenei, who was killed back in February by the U.S. and Israeli airstrikes. Some in the crowds have held signs calling for President Trump and Prime Minister Netanyahu to be killed in revenge. A banner with the president's face on it has been stretched along a bridge for the crowd to throw stones at.
The Trump administration over the weekend continued efforts to change or alter exhibits at several prominent museums, says ABC's Sophie Flay.
The report, released by the White House Domestic Policy Council, claims the Smithsonian cannot be trusted to tell America's story honestly. The report singles out the National Museum of American History, saying it would benefit most Americans if the Smithsonian's flagship history museum had a label at every entrance that reads, "Warning, the exhibits in this museum were prepared by people who don't want you to love your country."
Critics say the administration is trying to whitewash history. Someone stealing sewer drain covers from residents of the Burmah Heights neighborhood of San Francisco. Victims are learning they're responsible for the $20 replacement cost. Ruth Hidalgo lives there and says she wants to know why the covers are the target.
For somebody to continually do it and then hit every house on the whole hill, what's going on?
Police are looking into the theft. I'm Brian Clark. Of all the...
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
All right. It is Paul Sweeney with Scarlett Fu. This is the Bloomberg Intelligence program from New York City. Right now, we're going to be in Washington, D.C. President Trump in the Oval Office taking some Q&A.
He wants to end it, and Ukraine wants to end it, and we're in talks, and we'll see if we can get it ended. It's a terrible thing. I ended 8 wars, and this was, in my opinion, going to be an easier one because I know both heads. I didn't know most of the heads. I did India, I did Pakistan, I did others. That could have been a real bad one. Nuclear, that was going to be nuclear. Could have been, as the Prime Minister of Pakistan, could have been 40 million people would have been killed, maybe 50 million. They had shot down 11 planes. It was raging for 4 days, and I got it stopped. And I did that, but this is one that I think we're getting much closer than people realize, and President Putin wants it to end. I will tell you that very strongly. A good call. And President Zelensky actually wants it to end now. And we're going to be going to NATO, and we're going to be talking about it. And I think we're going to get it. I think we're going to get it ended. It's been a terrible situation. Think of this: 25,000 people 2 months ago. 25,000 people were killed. 1 month, soldiers. Last month set the record. 36,000 people were killed in 1 month. Young soldiers, they go off to war and they're dead before the first weekends. It's drone technology. Michael, who would have thought that drones would have become such a factor? And they're killing machines. It's amazing. It's amazing. You hide behind a tree and it goes and gets you. And I've seen scenes that I don't want to see. I don't want you to see them on that battlefield. You know, you hear about the Civil War, you hear about all of these different terrible wars, but this is really horrible. So I had a very good call, and I think we're getting close to getting it done.
Mr. President, on the economy, there's been a refocus, it seems, in June to talk about your economic policies. When do you think that message will change the perception of Americans related to the economy?
Well, I think people know. Look, oil is now at a level that it was, I think it's even lower on a barrel basis than it was before we started. We've gotten concessions. Now, they have to hold those concessions, but there'll be no nuclear weapon. We're going to be getting the, as I call it, dust, the enriched material, nuclear dust, I call it. Seems to have taken off, but it's enriched material. We're getting it. We're getting it. I went in for one reason, very strongly, that Iran cannot have a nuclear weapon. I'm not looking for regime change, although this is regime change. The first regime is gone. The second regime is gone. And I think the third regime is more reasonable, but we'll find out. But we've destroyed their, as you know, completely destroyed 150. They had 159 ships. Every single ship is at the bottom of the sea. We've completely destroyed. They don't have one airplane. They don't have radar. You know, one of the reasons we kept the oil down, because a lot of people said, Kevin, and a lot of people were saying that oil could go to $300, $350 a barrel, but one of the reasons that prediction wasn't right is we were taking out on average of 10, but sometimes less, sometimes more. 3 weeks ago, we had a night, 22 ships came out of the Strait, and the famous Strait of Hormuz, nobody ever heard of, but that is some big money machine, I'll tell you what. When you look at the numbers, Michael, that makes everything look small. No, wait. And we took out so much oil that people didn't know, and it only took a month and a half. They finally found out they had no radar because their radar was destroyed. So we took them out late at night with no lights, with no nothing. And our great Navy, which did the greatest blockade anyone's ever seen, not one ship got through in 2 months. And we then freed up the blockade because we're close to maybe making a deal. I don't know. We'll make either. Look, we're going to win one way or the other. We're either going to make a deal or we're going to finish the job, okay? And it won't be tough to finish the job. I'd rather make a deal because I don't want to affect 91 million people. We can knock down their bridges in 1 hour. We can knock out their energy supply, all of those big plants that they built, big, beautiful, modern plants. They had a lot of money. They don't have any money now. We haven't given them any money. But we can knock out their electricity and power generating plants in, I would say, a small part of an afternoon. Every plant will be gone. And they know that. They know that. Please. Daniel, go ahead, please. Go ahead, please.
Thank you so much.
No, right behind you? You know why? He's a friendly voice. Go ahead.
I wanted to thank you first and foremost for the Trump accounts.
You see? That's what I call a reporter. He's actually a great reporter.
So he'll directly benefit from the accounts.
Good. Thank you.
Fast forward 18 years from now, and a lot of these kids are 18, and they look at the Trump accounts and they see hundreds of thousands of dollars from them. What lesson do you hope they'll walk away from and think about you regarding this program, and do you think this will go down as one of, if not the signature policy achievements of your
I hope so. I think it will. I really believe it's going to be one. I think we've done a lot of great things, but I think this will be one of the top. It's going to teach children to be entrepreneurial as opposed to the threat of communism that you're seeing a lot. This is not social democrats, by the way. That's a beautiful, we're social democrats, they say. They're not social, they're communists. They want to destroy our country. We're not going to let that happen. But this helps, even from the parent standpoint. You know, they see their child getting richer and richer as the market goes up. If it goes down, they don't lose anything. They make money, they have money. But if it goes up, they could become actually rich. And the parents are going to be watching, and we're all going to be watching, and we're part of a very big and very beautiful game. It's going to bring them into the mainstream. It's going to bring them into recognizing, like Michael Dell. I said, how the hell did you start this thing? What he built is incredible. Now his product is great. But as he said, he made them, I guess, laptops. He made a better laptop on his bed in a dorm than they sold in the store. So he started selling them, I guess, probably during college. I don't know where the hell you started selling them, but you sold a lot of them. And it just cascaded. And then his greatest deal was he met Susan, and she probably guided him beautifully. That was probably his most important thing. And they have great children, great everything. But, you know, it's a beautiful story. Think of it. They gave $6.25 billion. And there's a rumor he's giving more. I don't know if it's true. I'm not holding him. I mean, it's hard to say, hey, how about doubling up, right? But think of that. And started with no money. He had a great brain, which is, you know, that's better than money, I think. But, you know, it's like an amazing story. And that can happen with other people. Maybe not to that extent. Maybe there could be a few to that extent, but not to that extent. But that can happen with some of the people here, some children living in poverty. it can happen. And now they have a real chance. It's a big thing. It's a big thing. Yeah, please.
I wanted to ask you, can you describe your phone call with Johnny Infantino about the red card? And Belgium is appealing the decision. What's your reaction?
You're asking me about the whole soccer thing? So, yeah, I did. I spoke to Johnny, who's highly respected, who's produced the most successful World Cup in history by, they say, 4 times. This isn't just a success. I actually said, Johnny, we've got all these games. Each one is turning out to be a Super Bowl. And we have all these games. You know, when you think of it, every game is like a Super Bowl. Yes, I watched last night. What a game that was with Mexico and England. I mean, 2 countries, I don't know the players, although I think Kane is a great player. See, I played golf with him, and I like him a lot. He's a good golfer. But he's really great. But I watched, and no reason for me to watch, and you couldn't take your eyes off the game. Because I said, Johnny, you know, you have all these games, because they added games, in a country where really we don't, it's not our main sport, to put it mildly. And this has been 4 times more successful. He told me last night, the numbers are 4 times greater. They think 50 or 60 million people are going to be watching the game tonight. I mean, you know, this is getting to be Super Bowl numbers. But you have a game tonight, and they think they're projecting a minimum of 50 million people watching a game. We call it soccer. It's called football, I guess, but we can't really call it football because it gets there's a little confusion. So yeah, you call it soccer. We're the only ones that do that, but we have football, and football's great. But I've never seen anything like it. So I saw the play, and I'm a person that loves sports and was a good athlete, and I understand sports really well, really well. And that wasn't a foul. That wasn't even an infraction. That was 2 guys running full speed that happened to crash into each other. You can't take your foot and properly place it on somebody else's foot when you're going, no, these were 2 great athletes that got tangled up, and this referee, who is a little bit suspect, if you check his past, I don't want to say that because I don't like to create controversy, but very suspect. If you'd like, I'll provide you with the past. He made a call that nobody could believe. You know, even people on the other side, they say, oh, we got lucky. Wow, and it's very interesting. They say they don't show them in slow motion. And I never realized that. I never heard of that before. That they're not allowed to review in slow motion because it's so different. Because you'll take 1 little quarter of a second and you'll see that a hand is touching a neck, or you see something. Whereas when you see it in fast motion, it will look like 2 guys collided, which is really what happened. They got sort of entangled. He didn't do anything wrong, and he's our best player or one of our best players, a very vital player. And he gave him a red card. I didn't know what that meant. I didn't think it meant much. Then I started hearing that means he can't play in the next game, at least in the next game. I said, boy, that's a big, you know, if it happened to another player, it would have been unfair. But when they take your best player, or just about, they have some great players, and they say you can't play, that's very unfair. That's, you know, it's one thing to penalize somebody for the game, but how do you penalize them for a game that hasn't been played yet? It's very unfair. You can't do that. So, yes, I asked for a review by FIFA. I spoke to a man who's highly respected, and by the way, whose level of respect has gone up tenfold. And he was good before this started, but you know, he really pushed it in this country. I'm the one that got them to do it. It was not Biden. Biden was asleep. I got him to do it. In fact, it was very sad because I got him to do it, and if the progression was normal, I would have been retired now. The Democrats are saying, man, we should have just let him have his way. We would have had him gone. But no, I tried, but it didn't work. But wait. So I got him. I was so proud of it. And then I realized that, you know, I wouldn't be president during that because I would have been out of office by that time. I felt badly. The beautiful thing about what I did is I ran. I never thought of it. And then all of a sudden I realized, you know, I just got the Olympics, and I totally got that myself. And I just got FIFA. I got that myself. We gave a little piece to Canada, gave a little piece to Mexico. I got that myself. And a lot of people helped, like that man right there, Kevin. A lot of people, you know that. We worked hard on that, and we got it. But what we didn't know is how successful it was going to be. I didn't know. I said, Johnny, is anyone going to show up? Because, we're not really, I think soccer's doing much better, but I couldn't imagine. If you would have said to any very smart of these, like people like this, that the numbers they're doing now would be happening, they've never seen anything like it. Think of it. Take the most successful Olympics or the most successful FIFA, and you look at what's happened. You look at the numbers for this in the United States, just compared to FIFA, and it's numerous times more. It's not like 10% more, 2% more, 5% more, which is more expected. It's like 4 times more successful than anything they've ever done. In fact, I said to Johnny, let's do it again next time. And he said, that would be hard. I said, no, you do it again, but at the same time, you give it to somebody else for the next one. I don't know. It's a little crazy idea. But all I did, I asked for a review because I didn't think it was a foul. And, again, I'm good at this stuff. I didn't think it was a foul. I thought it was 2 great athletes that crashed into each other and got entangled. That was not a guy punching somebody in the face or anything that, would be different. And I think it's a terrible, if they wouldn't allow, a top player, maybe the best, maybe among the best players on the team to play, I think it would have had a big stain. And I related just that feel. I didn't tell him what to do. I can't tell him what to do. But, and I don't believe he made the decision. I think it was a committee that made the decision. And they made the right decision because, number one, it wasn't a foul. And you want to see a game with your best players. You don't want to say, how would you feel if I took, we take Messi out? Look, he ran into somebody. Or we took Ronaldo, you bumped into somebody, we're going to take you out of a game. He's great. Or Harry Kane, we're going to take you out of the game, Harry, because you happen to hit somebody a little bit harder than you can't do that. If you would have taken him out, I think it would have really stained this incredible champion. We got to have our best players, and Belgium's got a great team, by the way. We got to have our best players, and they have to have their best. And if we win or we lose, it's fair. Otherwise, let's say we lost him and we lose the game. It would be a terrible thing. So I think they made a really brilliant decision. I think the referee's call was horrible. And nobody talks about that. They talk about the red card like it's fine. Nobody talks. The referee's decision to red card. I didn't know what the hell a red card was. When I found out, I said, you got to be kidding. This guy just hands up. Okay, your best player is not going to play next week or in the next game. I said, wow, that's a lot of power. That's terrible. But then I looked at his past, and it wasn't so great. Okay.
Mr. President, are you going to talk to the Belgian Prime Minister before the game?
I didn't think of it, but I would. He's a good man. I will tell you this. The people in Belgium, if they win the game, they can be very proud. If they would win the game with a player missing, it would have been a different feeling. You can't do that. And I'm very glad all I did was ask for a review. I didn't say, you have to do this. This man is a smart, tough man, Gianni Infantino. He's a smart, tough man. And his stock has gone through the roof because the job he's done has been great. And I feel we have to have all the best players on the field. You can't take the best players. Yeah, please.
On the Trump accounts, thank you. Liam Cosgrove with Zero Hedge. What is your plan to facilitate broad adoption of these? And you mentioned, the communist issue, particularly that crowd, to get them to participate in this. Yeah. Since I see Anthony Populiano's here, and he's probably going to ask, is Bitcoin in any way going to be related to this in the future? Are there plans to put Bitcoin into Trump accounts?
Well, I've become a big crypto guy only for one reason. If we don't have it, China's going to have it, and they would like to have it. But now they're not even trying that hard because we've taken over crypto. But I'm a fan. I wasn't initially. I didn't know much about it. But for some of my first term, I wasn't much involved, but I'd watch. And I watched it grow, and it's a huge industry. And I got involved in a little bit for politics, because I realized there are a lot of people love crypto. And even me as a businessman, I'd see a lot of money starting to come in with Bitcoin and, you know, the different forms. And I said, this thing's got a lot of life. And then I hear China was going to make a heavy move on it, just like they do for AI. By the way, we're leading China substantially in AI, by substantial. And one of the reasons is when they build these big plants, I allow them to build their electric generating units, whether they use nuclear or oil and gas, whatever they want to use, they can use, except wind. We don't allow wind. Wind is terrible. It just doesn't work. It's too expensive, no good, bad for the environment. But, and they're building their own plants with some of the greatest electric producing plants that you've ever seen. I mean, they're teaching the companies that produce electricity, they're teaching them how to do a plant. So that was my decision, that was my idea, because we have an old grid, it's tired, it's old, it would take years to fix it. And now we're actually taking the excess energy that they make. You know, we need more than double the energy. If you take all of the electric that we have now, you need more than double it to power that industry, which is so shocking. When I first heard that, I said, no, you mean like a little, I couldn't believe that, Jeff. I heard more than double. So all the electric we make for everything to power that one industry. Now, with that being said, it's a massive industry, and it's going to be for good. I mean, look, we're going to have guardrails, and we have guardrails. You know, you saw that a couple of weeks ago. We were able to stop something that we didn't like, and by the way, the company was very good. They were very good, you know that. But it can be used for tremendous good, and mostly good and some bad, and the bad we have to stop. But it's a massive industry, and I think things are going to happen. You know what you're seeing here with the kids? I think something could happen in that regard, too, with a contribution to the people of our country. I'll give you a little inside information. Am I allowed to do that? Well, we have, Paul, am I allowed to do that? That's a little inside information. You understand? Scott, you know what I'm talking about. No, I think you're going to see a contribution made by those because they're making tremendous amounts of money. They're also creating tremendous, the things that are happening in the world of medicine because of AI is not even believed. I'm friends with many doctors because of, you know, what I'm doing as president, and I've become very friendly with a lot of them. They're great. They're great as long as they tell me I'm healthy, okay? When they tell me I'm healthy, so far so good. Where's a piece of wood? But a couple of them got together last week and they said, we can't believe the progress that's been made in diseases. Things that they didn't think would happen for 10 years happen in a matter of minutes, a matter of seconds. So this is for good. But we're leading China by a lot. We're leading everybody. Crypto's the same thing. If we didn't do it, China would do it. It's a massive industry. And frankly, when I went very pro-crypto, as you know, Biden was totally against it, but he has no idea what crypto is. He had no idea. He didn't know, but they were very violently against it. They were putting people in jail. What they were doing to the crypto was horrible. It's amazing it survived that onslaught. It was a weaponization of government. So when I went very much for it, and I must have gotten, I think I got 100% of the vote, but what happened is, I think it was 100 million people. It's a big industry, and that means some pretty good things. But what happened is Biden then, after he was getting killed, he was down so much, all of a sudden they became pro-crypto. And their head of the SEC was horrible, unlike Paul, who's really good. No, I mean, he's the best man for the job. Everybody wanted him. But he was horrible. What he was doing to the crypto, they were putting people in jail. Oh, you know that better than anybody. Good people, great, prestigious people. They were putting them in jail. And I said, you got to be kidding. And they were trying to destroy the industry. Okay, ready? So now I'm killing Biden and winning by so much, and all of a sudden he becomes totally pro-crypto. They dropped all investigations of everybody. They allowed people to come out of jail, And every time I see a crypto guy where they dropped an investigation, I said, you're lucky I'm president, because they, I don't know if you know, the Biden administration became totally pro-crypto that last couple of months because they were getting killed. Because crypto has a tremendous audience. So yeah, I'm very much for crypto because it's not a question of a personal thing. Because I let my kids do whatever the hell they do, they can do. I don't talk to them, ever talk to them about it. I'm allowed to, I think. I'm allowed to, but I don't bother. Because this office is a much higher calling. So I make, as president, the president of the United States get essentially $2.5 million for 4 years, right? Wait a minute. It's spread out over a period of 4 years. It's about $2.5 million. I waived my salary. Now, I figured, because we've had other wealthy presidents. We've had Kennedy, and we've had FDR was very wealthy. Teddy Roosevelt was wealthy. And one of the wealthiest, believe it or not, was George Washington, who wasn't in the White House, but there are pictures of him surveying this ground. He's the one that sort of picked the location. I think he made a good choice. He picked a good location. But George Washington had 2 desks in his pre-White House. One was, and they were right next to each other. One was for business, and one was for the presidency. He had 2 desks in the same room. And so you're allowed to, but I choose not to. I don't talk to my kids about, this stuff. But I will say this, to me, cryptos are very powerful. A lot of people are using it, Bitcoin. They're using it at levels that I don't think anybody understands really how powerful. And if we didn't do it, China would do it in a minute. And if we let our guard down on AI, if I didn't come up with the idea for electric plants, producing plants, they become a utility. Basically, these guys producing, you might as well put them down. Paul, I think you should mark them down as utilities because, frankly, in many ways, I'm more impressed by their electric plants. And they're building them on top of the buildings, alongside of the buildings, standalones right next door. But you have to see some of the electric producing, the generating plants that they're making, nobody's ever seen because they're brilliant people. And it's a fantastic thing. But if I didn't come up with that idea, maybe somebody else would have. I doubt it because it's too simple. I mean, it's such a simple idea. Do you know that your friends, Michael, when I came up with that and I told Mark Zuckerberg, I told Bezos, I told all of the people, AI, Sam, Elon, I told them all, I said, no, I'm going to let you build your own plant and I'm going to get you fast approvals. They thought I was kidding. They said, and they would submit plans without an electric plant. And I'd get calls from Lee Zeldin, who's a star, environmental, fast approvals, good approvals, but fast. And I'd call up and he'd say, sir, these plants are not taking advantage. And I call them and say, why aren't you producing? They said, we thought you were, every one of them, they thought I was kidding because they can't believe it. Number one, they can't believe that they're approved in a period of a matter of weeks because if this was somebody else, it would be 20 years before. They're all under construction. We do rapid approvals. And some are nuclear plants because nuclear is now really hot and safe. I was not a huge proponent until 2 or 3 years ago, and then I saw what my uncle was a big nuclear guy at MIT. He knew nuclear better than anybody, I think. Anybody in the world, probably. He was the smartest guy. He was at MIT, the head, for 41 years. And he said to me one day, he said, nuclear is going to be the most important thing, but it's also got to be watched. It's got to be watched very carefully because it can build the world, but it can also destroy the world. He said that. I said, Uncle John, that was a long time ago. But he was exactly right. He called it exactly right. But what they've done with nuclear in terms of generating energy is absolutely, a submarine can run at full speed for 30 years without having to refuel. The only thing it has to do is come up every 90 days for food. They can't solve the food problem. But think of it, a submarine, without having to gas up, can run for 30 years at full speed without stopping. I mean, who would believe a thing like that? But fortunately, we have the best technology and we have the best submarines. It's something we lead the world in by 15 years. Any other questions?
Go ahead. Thank you so much, Mr. President.
What?
I said thank you so much, Mr. President. Jennifer Schonberger of the Alpha Finance. On the Trump accounts, SpaceX president has
said that she's going to donate shares to the Trump accounts. Have you spoken at all with Elon Musk about further share donations, as well as other corporate leaders about share donations specifically?
Look, I'm like a cheerleader for geniuses. I love geniuses. I love high IQ people. He's a high IQ person. I love high IQ people. And I speak to Elon, I speak to Mark, I speak to Jeff, I speak to everybody. By the way, in the first term, less so. In fact, at my first inauguration, none of them were standing behind me. They were just the opposite. And now at this last inauguration, every one of them was standing behind me. It was sort of amazing. No, I speak to all of them. And I encourage them. I want them to be tremendously successful. Now, there's a thing called TikTok. Have you heard of it? I was watching a show this morning, Maria Bartiromo. She's fantastic. And on her show, they were talking about the dangers of TikTok. And it's Chinese, a whole thing with spying and what they're doing with it. Well, except it was announced about 2 days ago, the new numbers just came out. You know who the #1 person in TikTok is by far? Trump, me. I just got, I'm #1. Like Taylor Swift was #11. I'm #1 in TikTok by far. And the numbers just came out, and I said, well, I'm hearing about how they influence. They're talking about their tremendous danger because they influence, but if they influence so badly, I mean, I'm saying all things like, I love our country, we got to stop communism, we got to this and that, we're doing a lot of things, but I'm by far #1. It was sent to me by, the list comes out, #1, #2. I was #1 by a lot. So I guess maybe, I don't know, maybe they're bad, maybe they're not. I know one thing, great American people, tremendous business people and companies bought it. I called President Xi, and everyone said he was a hard no. He was a hard no, but I said, it's a good thing for TikTok, but it's good for us too. American companies, great ones, own our TikTok, and it's very influential. But I'm #1 by a lot. So, I hear this thing was on today, Gordon Chang. I like Gordon Chang, but he's always so negative. Nobody's been tougher in China than me, but Gordon Chang, and he's a nice guy. It's like the world is falling down. It's not true. It's not true. We have to be careful because China's a great competitor. But, he was talking about, we must stop TikTok. I'm #1 on TikTok. I think it helped me win the election in a landslide, if you want to know the truth. Yeah, please.
Do you work on the White House? Are you building a helipad? Are you building a helipad?
That's a helipad, yeah. So for 50 years, we've been landing helicopters on grass. The grass is wet, soggy. The helicopters sometimes miss their little mark. They send people out, Marines. I watch them do it. They march out so beautiful, great guys. They have a piece of metal that he put down. And except for the fact that these pilots are so good, they almost hit the mark all the time. But sometimes they miss. They're half the size of this desk. Think of it, you're landing a big chopper. But, years ago, and they just got produced, but during my administration, they ordered brand new helicopters, the big ones, the ones for President. It's called Marine One. And our other Marine ones are about 40 years old. They're old, like Air Force One. It's time to make a change. And other presidents wouldn't do that because they think it's not good to make a change to luxury, but you got to do it. Other countries have them. So Sikorsky we ordered a number of Sikorskys as the helicopters back and forth. Well, they're about 2.5 times more powerful than the old ones. And when you land on the grass, it's not that the grass gets discolored, it gets ripped out. And it was all over. They landed it once, and nobody planned for this. This was a little bit of a planning mistake. So they landed the helicopter, and half of the grass was sitting in front of the Oval Office front door. The rest of it was scattered all over the... I mean, literally, it didn't singe it. It also singed it, by the way. But it literally lifted, because of the power. It's tremendous. And everybody said, well, we'll keep using the old helicopters when we have to land at the White House. And for everything else, we use the new helicopters. They said, that's a pretty expensive deal. You wouldn't do that for your company. You'd figure out an answer. So I said, because I have helicopters, and 3 of them. And I said, because they've been great for my business. I think they're incredible. So Sikorsky 76, right? And I always was lucky. I always got helipads. Other people don't. Very hard to get. The hardest thing to get is a helipad. Okay, there's no harder zoning thing to get is a helipad. And I had like 7 of them at different places, so I could go around by helicopter. And I said to the people, have you ever thought, these are generals, Air Force generals that are brilliant, and you know, you get used to a certain thing. They'd bring out the medal, but this was, now the medal didn't work because the power of these helicopters is so great it ripped up the grass, right? So I said, has anybody ever thought of a helipad? Because I build them and they go quickly and it solves all of the problems. So he's laughing. It's true, right? It's crazy. So it was funny. I said, has anyone ever thought of a helipad? I had like 6 generals in front of me. And they're going like, wow, that's a good idea. You know, it's like the paperclip. It was such a simple invention. Probably he says that about a laptop. To him, it's a simple thing. To other people, wow. But the paperclip. 200 years ago, a gentleman came up with the idea for a paperclip. And he made a lot of money, became very rich. Not as rich as Michael Dell, but rich. In those money. And what happened is everybody was jealous. They said, why didn't we think of this? Same thing with a helipad. So now we're building a helipad, beautiful helipad. And it's got the seal of the White House on it, in granite, in carved granite. It's really a beautiful thing. And I'll tell you, Sikorsky is paying for it. You know why? Because they didn't tell us how powerful these helicopters were, and they felt a little bit guilty. They sold us, I like power, by the way. I think it's great for a helicopter. But they probably, I don't know, they felt a little guilty. And they are paying for the cost of it. It's about $5 or $6 million. They're paying the full cost. And when I heard they were paying the cost, I went out and said, let's do a beauty. Let's not just do a piece of concrete and paint it white, which is why I just put beautiful concrete, nice, and we paint it white. This one is a beauty. It's got the seal of the White House. It's beautiful, the eagle. And it's carved out of granite. It's done by some of the most talented people you'll ever meet. And you're landing on granite, which is the strongest stone that we can. Like the outside walk is black granite. That's 35,000 pounds per square inch. It's got a 1 million plus lifetime. It's the strongest stone there is. And that's being used out there, and it's gonna be, I think, really beautiful. And you can see the size. It's gonna be beautiful. And it can be used for other things when helicopters aren't landing. You can have other things out there like events. You could have news conferences literally on it because it's the right size. So by doing this, we solve the problem, and we'll be able to finally retire 45-year-old helicopters. Okay, how about 1 or 2 more, and we'll get out. Go ahead, please.
About the FIFA decision, millions of American soccer fans are obviously very happy. But what do you say to the critics who say this starts a precedent which other powerful leaders?
Well, I don't know. I mean, I can only say this. I had nothing to do with the decision. What I did have to do is, I said, I think that should be reviewed because I watched the play. And he didn't do anything wrong. You know, got to look at, by the way, if he did, I'd feel differently probably. If he punched him in the face, if he did something wrong. I thought your young, wonderful basketball player, Caitlin, I thought that she was treated rather rough, if you want to know the truth. That was a much different kind of an event. That was a pretty bad event. But in this case, he didn't do anything wrong. 2 people ran into each other. And by the way, if you look at that game, there were 10 instances where it was much rougher than that. So I think it starts with the fact that it shouldn't have been a foul. And then you have to look at the person that raised the card, and that's up to you people. You look at it. But I didn't think it was very good because it was not good. And I think that Johnny is brilliant at what he does. And I think they made, I don't think it was his decision. It's a big committee. And after reviewing it, I think they said, look, this game would have a big mark on it. If we lost, if we won, no matter what happened, you have to let them use their best players. And the game tonight's going to be amazing, and we're going to have a full team, and Belgium's going to have a full team. And you know what? If they beat us, then they can be really proud. The other way, if they beat us, we'll say I say it was rigged, just like the election was rigged in 2020, but I won't get into that. Ladies and gentlemen, thank you very much. The Trump accounts are great. Thank you.
President Trump from the Oval Office, giving a wide-ranging interview and questions from the press corps. So we were glad.
Some tied to the Trump account, some not.
Some tied to the Trump account, some not. We've got World Cup football in there several times. So we'll see how that plays out. Right now, let's get a little reset of this market. We can do that with John Tucker in a Bloomberg Business Flash.
All right, let's start with the major averages. S&P 500 is 37 points higher right now at 75.19, about 0.5%. Dow Jones Industrial Average down 142 points, and the Nasdaq Composite Index is up 268 points. That's a rise of 1% right now. Rebound in chip makers lifting stocks as the dip buyers kind of jump in this morning. As you look at the Philadelphia Stock Exchange Semiconductor Index, that is up 4.5% right now. Best performer in the S&P 500 belongs to Western Digital. That's close to 10% higher. These gains come as the broader AI hardware trade reignites, prompting a rebound across the data storage and memory sectors. This follows a sharp sell-off that we saw late last week. And we did have headlines earlier about Microsoft cutting up to 6,400 jobs. Half of those job cuts in the Xbox gaming overhaul. Microsoft shares right now, they are down 1.5%. As we look to oil, Brent has turned around, now higher, up about 0.6%, $72.55 a barrel. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and streaming live on Bloomberg.com as well. U.S. allies will arrive at the NATO summit in Ankara on July 7 and 8 with one overriding goal: avoid a blow-up with President Donald Trump over defense spending and the Iran conflict. The person who wrote that story joins us right now, Antonio Barroso, Senior European Geoeconomics Analyst for Bloomberg Economics, based in Geneva. So, Antonio, what do you expect coming out of this summit in Turkey this week?
Well, I expect that U.S. NATO allies will try to make a very strong effort to avoid, as you mentioned, a blow-up, especially over defense spending. Trump has repeatedly said that he wants countries to deliver on their spending commitments. That is 3.5% of GDP for core defense spending, and then an overall target of 5%. But also, in terms of convincing Trump that they are there to potentially help the United States to keep the Strait of Hormuz open once a durable peace settlement is in place. So essentially, the goal will be to avoid such a blow-up and also try to get some common language on key priorities such as Ukraine and rearming the European continent.
So avoiding a blow-up makes sense, but that might be difficult given that the president wanted Europe to support his war in Iran and has a long memory and will surely bring that up. I think implicit in all of this is there's a or else kind of, secondary effect to all of this. What is the or else part of it here, Antonio? Could the president unilaterally pull the U.S. out of NATO?
No, it's actually, as a matter of fact, it's an international treaty, so it will be tough for him to do so unilaterally. But he can do other things to undermine NATO. And to a certain extent, some people could claim that he has already. He has withdrawn key military assets from the European region. He has withdrew troops. He has ordered a review of the U.S. defense posture in the region. So that's one of the main concerns of European leaders that are in NATO, that essentially the U.S. can pull troops and assets too quickly, not leaving enough time for European countries to actually fill that gap, to develop the capabilities that they need to actually take care of its own security. As a matter of fact, that's what the U.S. wants, for Europe to take care more of its own security, but also to deter Russia and Vladimir Putin.
So where are the European countries in terms of meeting the commitment to, 3.5% of GDP, maybe even a 5% aspirational goal for defense spending? Are they making inroads there?
Look, I've been saying for a long time that the problem with this kind of spending targets is that they are a distraction, because spending target doesn't tell you anything about the ability of a country to defend itself. It really depends on how countries actually spend the money, the capabilities, how can they defend themselves together, and essentially about the strategy that those countries have to actually come together and to deter other countries from attacking them. So, I mean, in terms of the progress, some countries are making a lot of progress. Germany, as a lot of people know, has gone to great lengths to actually spend a lot of money in the last year or so, even to the point of withdrawing a key limitation in its constitution to be able to borrow more to actually pay for that spending. Poland is already at a very high levels, but then you have other countries that have made a huge effort, like Spain, for example, which was around 1.2% of GDP, has gone up to 2%. But, you know, our impression is that countries are not going to hit those targets because they are unrealistic. Also because many of these countries have fiscal constraints, very high debt levels, very high public spending. So the issue is what Trump does next. Like in the terms of the effort, it has been there, but will be enough for Trump? That's a big question.
Very quickly here, Antonio, we've seen European defense companies surge on expectations that they would benefit from whatever the European governments do tend to do. What do you look for in terms of consolidation? Because it feels like the industry across the continent is very fragmented.
It is very fragmented, and it's a consequence of the fact that spending is also fragmented. Like the way this could be unified and to reduce fragmentation would be for several countries coming together, or even the European Union, which has different programs in place, to actually force consolidation. But the problem is that defense spending is not a European Union competence, it's a member state competence. And even though you have some pan-European initiatives in place that probably will be quite successful, the problem is that national governments continue to determine spending, and they have an incentive to actually privilege their own industry. So the risk of fragmentation coming forward remains quite high, unfortunately.
Antonio, thank you so much for joining us. Really appreciate it. Antonio Barroso, Senior European Geoeconomics Analyst. How about that? Bloomberg Economics. He's based over there in Geneva. Again, the NATO summit gets underway, I guess, tomorrow and Wednesday from Turkey. I guess President Trump will be flying over this evening. It's probably the plan, right?
Yep.
So then a couple days of meetings there. Looking at the markets here, kind of mixed. The S&P's up a little bit, and the Dow's down a little bit, and the Nasdaq's up. So there you go. So you've got up and down across the screen. Market looking for a little bit of direction. But the Nasdaq is certainly leading the way, up 290 points. That's 1.1% here, so keep an eye on that. 10-year Treasury yields 4.48%, steady. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Novartis agreed to buy British biotech Myrix Bio for as much as $1.5 billion, adding an experimental cancer drug designed to deliver more potent treatments directly to tumors while limiting damage to healthy cells. Let's break it down, plus all the healthcare news. We can do that with Sam Fazeli. He's the Director of Research, and he's a pharmaceutical analyst for Bloomberg Intelligence. He's based in London. Sam, talk to us about Novartis. Kind of what are their strengths? Where do they need to get better? And what are they doing with this particular deal?
So, Paul, first, happy post-4th of July to you guys all for your independence from the British all those years, 250 years ago, and to the audience, obviously. So here we have Novartis buying a cancer drug company. Novartis is already quite active in cancer. In fact, one of the areas that they are quite active in is getting radioactive material to your tumor rather than you going to get radiation from an external beam or a machine. This is things that are kind of trying to target the tumor, particularly prostate cancer in this case, that they've got a marker on prostate cancer cells, get radioactivity in there. But one of the other things that has been evolving very rapidly recently is getting chemotherapy directly to the tumor rather than injecting it all over the body. The hope being that you can reduce the side effect profile and increase the efficacy. That's what this new deal is. And this is something relatively new for them. They had deals like this before. When you look back in 2013 and 2016, they had done some of these antibody drug conjugate type deals, but obviously that's over 10 years ago for the later deal. So nothing seemed to have come out of that. So this is their back into that space. And I think it's quite an interesting, clever deal. Big upfront number, though. That's quite interesting. $1.1 billion cash upfront.
So I'm glad you bring up that point, that idea of big upfront payments. Is that the new norm now in these kinds of deals?
So I don't know how competitive this deal was. I'm hoping to talk to some of the founders who I know because they're in our backyard, right? To try and understand, what was it that attracted Novartis so strongly to this? I mean, this is a British biotech company, so that means automatically that they're not necessarily able to go and raise hundreds of millions from the local market. They are in preclinical stage or very close to, at least what the publicly available information we have is preclinical. And so this is a rich number for such an early company, and there's very little chance that they would have been able to go public. So why Novartis paid so much upfront rather than do what usually happens, i.e. pay a smaller amount and leave the rest of it for a milestone in a year, 2-3 years time, is going to be interesting to find out. They do have some very clever chemistry in here, and this is not just an ordinary, for want of a better phrase, not that any of these drugs are ordinary, antibody drug conjugate. They have new drugs that they're trying to get into the tumors. So that's interesting.
What's the call out there on Novartis stock these days, Sam? What do people have to kind of believe here to jump on this one?
Yeah, so the shares have been doing reasonably well. The company's got a decent pipeline. One of their big drugs is Cosentyx, which is not for oncology. It's for psoriasis and that type of disease, arthritis type diseases or autoimmune diseases, let's put it that way. And that's a big drug. And some people are worried about it going off patent, like every pharma company. That's the rule of the game with them. We think in our group that Cosentyx has got a longer life than people think. So, they have an active oncology business where there's some, again, same sort of story, but with those radiochemicals, if you remember, I just highlighted, and a whole bunch of other drugs that are coming on. And here, I think they're going into this. This is going to be a long way off in terms of paying back. It's clinical early phase, right? So it's going to be 5, 10 years, 8 years. So it's not aimed at today's problems. It's a bit like the type of Lilly deals we were talking about last week, which are some early deals that are being designed to make sure the company has got assets to keep thriving going forward. And this can pay off in many different ways. Remember, these chemicals can be attached to any antibody to attack different types of tumors. So it's a platform.
It's a platform, and everyone's trying to build one. Let me get your thoughts, Sam, overall on M&A in the space. You mentioned the Lilly deals, and we know that Lilly is operating from a position of strength, being able to go out and build up its pipeline in a way that perhaps other drug makers aren't able to. Who else is operating from that kind of position of strength in addition to Eli Lilly?
Yeah, so Merck has got a pretty good cash flow position. AstraZeneca's got strong cash flow. GSK did a deal, one of the deals we spoke about recently. So most of the pharma companies are in a pretty decent shape. AbbVie, they've got great growth, and you can see analysts are upgrading the stock on a almost a daily basis. So most companies do. Pfizer is the one that has done its M&A to a degree, and now we're waiting for that to bear fruit. The latest one, they have done other deals. They have been doing licensing and partnership deals. So most pharma companies are in a position of strength from a cash flow perspective to be able to do these types of deals, and their balance sheets are relatively light across the sector as a whole. And so there's access to credit there too if they wanted to.
Sam, thanks. As always, appreciate it. Sam Fazeli, he's the Director of Research, and he's a pharmaceutical analyst for Bloomberg Intelligence based in London. Appreciate getting a few minutes of his time here. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network. Coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with the S&P up 44 points, the Dow minus 50 points, but the NASDAQ up 290 points, 1.1%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Brokers Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. There's a lot going on today, starting with the fact that you have the markets in rally mode. The S&P 500 up 2/3%. The NASDAQ doing even better. We're going to check in with Tim Craighead. He is our Global Chief Content Officer on 10 companies to watch right now. They cover the gamut, chips, chocolate, and Barbie. We'll get to that shortly. Kim Forrest, founder and CIO of Boca Capital Partners, will join us and give us her outlook for the markets, especially with SK Hynix getting ready to list in the U.S. through an American depository receipt. We're also going to check in with Shana Sissel. She is founder and CEO at Banrion Capital Management to give us her look on what she sees going on in this equity market as we really get July underway at this second half of the year. First, though, let's go over to Charlie Pellet for a check on our Bloomberg Business Flash.
Hi, thank you very much. Indeed, happy Monday. First full trading week of the new month. We have got the Dow lower, the S&P, NASDAQ 100 index, all advancing. Semiconductors ripping higher. That is the story. That is the theme this Monday. The Dow, though, slumping. Right now, we got the industrials down 26, drop there of under 0.1%. S&P keeping it all in context, higher by 47 now to 75.40. That is a gain of 0.6. NASDAQ, meanwhile, is surging 302 points, up by 1.2%. This Bloomberg Business Flash is brought to you by Everpure. Welcome to the new era in data management. Right now, the NASDAQ 100 index is up 1.6%. The SOX, though, the big story, surging 4.2%. That, of course, the Philadelphia Stock Exchange's semiconductor index. We've got the VIX just below 16, and a 10-year right now at 4.48%. Gold down 0.9%, 41.38 the ounce. West Texas Intermediate crude up 0.1%, 68.77 a barrel. Brent crude 72.18, up by 0.1%. Again, WTI 68.78 a barrel. So the tech-led bounce halting that rout in semiconductor firms. Traders betting that the industry's investment boom will continue to support solid earnings. As for the broader market backdrop, Christina Hooper is chief market strategist at Man Group.
Right now, I think an area to be cautious on is the hyperscalers. This is not, of course, 1999, 2000, but we are seeing an enormous amount of investment being made, and we may not see the ROI there.
Christina Hooper of Amen Group. As we watch the rally in tech names, one notable exception on this Monday is Microsoft. That stock down now by 1.4%. Microsoft's Xbox plans to eliminate 3,200 jobs, roughly 20% of its staff. Again, recapping, stocks higher, S&P up 0.6%. The SOX surging now by 4.4%. Scarlett and Paul, that's a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie was just reporting, we got red and green on the screen. Let's take a look at some of the stocks on the move today, and we can do that with Denitza Sakova. She's cross-asset reporter for Bloomberg News. Denitza, what are you looking at today?
Everyone's talking about Microsoft. We'll be talking about job cuts at Xbox. They plan to eliminate about 20% of the jobs. This is more than 3,000 jobs. The ticker, of course, is MSFT, and the stock is down more than 1%. Of course, those cuts are not just about Xbox. We've seen it more widely in the company. The company is spending huge amount of money on data centers to power AI, and it has come with a lot of job cuts. Xbox will divest 4 of its video game development studios and is beginning the process to part ways with its 5th. At Xbox, 1,600 jobs will be eliminated today, and there'll be more in the next year. The reduction also come at 3,200 layoffs at Microsoft outside of Xbox. This is mostly sales. But we've seen in the tech industry, we've seen Meta, we see all those big Magnificent Seven, not all, but quite a few, being under a lot of pressure of layoffs, and Microsoft is down 20% year to date. So definitely one of the big losers in the Magnificent Seven.
All right, we'll continue to keep an eye on that one. Next up on your list?
JetBlue, interestingly enough, we had a pretty negative commentary from Raymond James, but the stock is up more than 2%. The ticker is JBLU. What we got from Raymond James is they downgraded the company to underperform from market perform. They say they see limited upside following a crazy rally. The stock is up more than 30%, and here we go. It continues again. We've seen different reactions among analysts. Goldman Sachs actually had a pretty positive price upgrade right before the July 4th holiday. So clearly Raymond James downgrade is not rattling Boost too much. What they're saying is JetBlue probably will not run out of cash in 2026, assuming the economy doesn't worse. They say the company may have limited upside because the company has been going on a crazy rally. They also downgraded Delta Airlines. So maybe they're just a little bit more negative on the airline sector, but nevertheless, JetBlue is brushing off the bad news pretty well.
Lastly, we have Strategy.
Yeah, Strategy has been on a pretty rough ride this year, as the stock is down about 75% in the past year. We've been waiting for the company to start selling Bitcoin, and the company did indeed sell more than 200 million worth of Bitcoin last week. This is the first major step in the financing overhaul they did. Obviously, they kept buying, and they had that premium over the Bitcoin price for a very long time. That thing has faded. Of course, the ticker is MSTR. The stock is down about 75% in the past year. The transaction is the company's largest Bitcoin sale since it began building the holding. And it's kind of shaken the confidence in the whole industry, because this was a company that was supposed to hold Bitcoin forever, and it's not holding it.
They need to pivot right now.
They need to pivot.
Okay, Denitza, thank you so much. Denitza Sakova is our Bloomberg News cross-asset reporter, and for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. All right, oil prices have settled down and are not doing much of anything this morning, but WTI, Paul, is back at $68 a barrel.
Yeah, and I saw a headline earlier. Aramco makes biggest cut to main oil price since at least 2000. I have no idea what that means. Hopefully our next guest can help us.
All right, let's check in with our next guest. Mike McGlone is Senior Commodity Strategist for Bloomberg Intelligence. He joins us now from Miami. It seems like a lot of the headlines this morning are coming out of the Middle East. You've got Saudi Arabia cutting the price of its main crude for Asian customers. Arab light oil falling by $11 to a $1.50 discount over the regional benchmark. That is a bigger than expected decline. What's the story behind all of this, Mike?
Hi, Scarlett. It's the trend. Most professionals and strategists who got way too bullish above 100 are all now cutting all their estimates, and they're just following price. It's unfortunate, but you know my key theme is what is the leader of the world's largest energy producer, net exporter need for midterms, lower energy prices? He's going to get them. It's all going that way, but it's not just energy now. It's all the metals. A lot of the metals have pumped and dumped. Copper's kind of hanging and rolling over. Aluminum's rolling over. Gold, silver, platinum, and palladium, they all pumped and they dumped. Iron ore has. And the key theme is what stops this trend from continuing into the rest of the year. Now, summer's pretty quiet usually, but I'm really worried that it's going to be more like a 2008 scenario when crude oil made its all-time high, 147, and ended the year near 40. So I still expect crude oil to go lower. And the key question is, what makes it stay above 80? I don't know what it might take, but I know if it gets anywhere near there, I'm sure traders are looking to sell.
So I'm hearing that there's maybe a glut of oil on the market here. Some of the ships, initial wave of ships made it out of the Gulf. What do you know about the supply that's out there?
Well, Paul, we're going right back to the glut we had before. What's happening in and out of this strait to me is less important because I think people need to realize it was only, they first said 20% of global supply, and then they realized it was only 10% that was shut off. And now we have situations like Iranian oil won't go to China. It's just they can drill at will and sell at will. Now that happened before. UAE can now sell at will. Iraq is selling at will. US is drilling at will and selling at will. You see the trend there? It's going to probably push it to a normal cycle, which is close to $40 a barrel. And the key question I ask myself is what trips this up? But key theme I think to remember, Paul, is the #1 trend in crude oil for the last 10 years has been that increasing supply versus demand from US and Canada is running around 7 million barrels a day before this event. And now, if we keep prices higher, it's going to head towards 10 million barrels by 2028. The only thing to offset that is lower prices.
Mike, I got to ask you about OPEC and what role it plays going forward. Over the weekend, OPEC Plus members decided to back another modest increase in quotas for next month. Do they move the market at all? Or are they just, making headlines for the sake of making headlines, looking like they're doing something?
I've been enjoying this trend, having lived through 1979 when I was a gas jockey. We had to price gallons of gas in half gallons because we couldn't go above $1 in the old analog pumps. Because it's a paradigm shift, Scarlett. OPEC is becoming increasingly redundant. Before they were 35 to almost 40% of global supply. Now they're docking around their 25 or lower. The price maker status, particularly in the back of this war, has shifted to the Western Hemisphere, U.S. and middle, all the way from Canada, Argentina, and they're just becoming less important. And now it's a stage where they're somewhat breaking up, and it's becoming a drill-at-will world.
And here in the U.S., I mean, it's just there's no cartel per se. It's just what Exxon wants to do, what all the other companies want to do. Does every company have different kind of ways they think about, I'll produce here, I'm not going to produce here? How does that work?
Well, I think, Paul, the key thing for me is price dictates everything. It's that invisible hand from Adam Smith. I loved writing about it, but when we got above that, we were basically double the price of the U.S. cost of production in the world's largest incremental producer just a few months ago. I just look at that as game on, sell forward, bring on more supply. Now, you're talking about the majors. The one thing I've learned on the Bloomberg Intelligence, there's 100 independent oil companies are saying, thank you very much, we'll do that. So it's a classic supply-demand, but it's not just, it's crude oil. It's happening in the grains, and now we're seeing happening in metals, even like aluminum. Aluminum was up 28% in the year. Now it's hovering to potentially drop on the year. So it's all commodities, and crude oil is just the biggest one of them all.
Well, crude oil is the one we've been focused on, laser focused on since the start of the year. Mike, thank you so much. Mike McClone is Senior Commodity Strategist for Bloomberg Intelligence, joining us from Miami. We want to go now to our colleague in London, who, along with his colleagues, have put together a list of 10 companies to watch for in the third quarter of 2026. There are companies that dabble in chips, chocolate, and Barbie. So let's check in with Tim Craighead. He is our Global Chief Content Officer on the 10 companies that you want to watch for right now. Good morning, Tim. What's the first one you would want to highlight?
Well, if you don't mind, I'll give you just a little bit of context on this, just to put it into some perspective. I think you set it up quite well, but I would just simply add that these 10 are part of a broader group of what we call focus ideas, which are high conviction, fundamental views that our analysts have across sectors across the globe. There's about 160 of them. And the reason why we got to these 10 is that they all have timely catalysts coming up in the third quarter that we think can change the market perception company by company. And look, the biggest one, it's in AI, it's very much, it seems like out of favor, is Microsoft. This is a stock that has been under pressure since last autumn, even while other hyperscalers like Amazon and Google have been trading better, and the semiconductor companies clearly that are all AI driven have been on fire. And bottom line, it seems like the perception is that Microsoft is going to be disrupted, to use the buzzword. But in our perspective, they've got one of the biggest, if not the biggest, LLM cloud platforms that are being used. And they've got a new Microsoft 365 suite that comes out in the second half. We think both of those can continue to drive revenue that's going to positively surprise.
Barbie, Mattel, what's the story there, Tim?
Yeah, well, the interesting thing with this is not all of these focus ideas, not all of these 10 companies are constructive, positive calls. There's also ones where we're cautious or concerned, and that's the case with Mattel. There was a nice big surge in doll demand, Barbie demand, in and around the Barbie movie a couple of years ago, going back to your stomping grounds, Paul, in media. And what we've seen since then is a progressive shift more towards building sets and trading cards in terms of what's cool in the world of toys. Dolls are not. And we think that there's continued disappointment from the standpoint of doll sales, specifically Barbie, as we look through the second half of the year.
I did see Toy Story, and I feel like, maybe that gives a little bit of a jump start to some
You saw
toys.
Toy Story 5?
Toy Story 5.
And what'd you think?
I liked it.
Oh, good.
Yeah, it was good. I liked, the face-off against tech and screens and all of that, but I digress. Tim, I wanted to
we will hear more about that in their earnings release. So
okay, so that is something we can update as we get closer to that. I want to get to a European company as well, because you have Solar Edge as a company to watch for in Europe. And I think about what's going on with the heat wave there and how energy security continues to be an issue for the continent.
Yeah, it is all about energy security. And it's been lit up, obviously, yet again in the wake of the crisis or the conflict in the Middle East. It started to begin with Russia, Ukraine, and Europe is in the hot seat, no pun intended. And the ramp up that we're seeing in terms of solar equipment related orders, we think will continue to surprise. It's been recovering for a couple of quarters, and we think that there is more to come and not fully yet appreciated. But it is all about its European business, even though I think it's actually based in Illinois. But the European opportunity is what's driving revenue surprise.
Hong Kong Land. What is this company, and why should we be paying attention?
Yeah, so if either of you or any of the listeners have been to Hong Kong, one of the iconic buildings right on the central Hong Kong business district waterfront has these famous circular windows. That's these guys building, along with many others. And the whole thing that's going on with Hong Kong in terms of office is it's coming back to life. It was under a significant amount of pressure post-pandemic and the national security law being implemented. People were leaving, businesses were leaving, but they are now coming back. There's a surge in the Hong Kong Stock Exchange. IPOs are alive. The financial markets are alive. Professionals are coming back. And rents are rising, and net asset value for Hong Kong land specifically, we think is on the upswing.
All right, my first job in Hong Kong was at a building owned and run by Hong Kong Land. Yeah, one of the biggest property developers in the city. Tim, thank you so much. Tim Craighead is our Global Chief Content Officer here at Bloomberg Intelligence, joining us from London on the 10 companies you need to watch for right now as we begin the third quarter of 2026. Equities are in the green, the S&P 500 up 0.5%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ both advancing. The SOX now surging by 3.3%. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Dow Industrials now lower by 0.1%, but a rebound in giant chip makers is lifting stocks overall. Dip buyers are emerging. We've got the S&P up 42 now, 75.27 where we stand there, up 0.6%. But tech where the action is right now. NASDAQ up 1.1%, the NASDAQ 100 index up 1.4%, and the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 3.5%. All of this with the VIX just above 16, a 10-year at 4.48%. We've got the 2-year 4.12%. Spot gold 41.42 the ounce, down 0.8%. And West Texas Intermediate crude now flat on the day, while Brent crude is moving lower, little changed at 72.09 a barrel. Lockheed Martin has agreed to buy naval defense business Ultramarine, which focuses on submarine detection systems, for about $3.5 billion. Shares of Lockheed Martin today, right now, they are down by 1.6%. Recapping, S&P 500 index higher by 0.6%. I'm Charlie Pellet. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. We are looking at the NASDAQ making a recovery after 2 days of losses. The NASDAQ 100 up 1.4%, not necessarily recouping the declines that we saw at the end of last week, but at least it's a different tone from what we saw. Let's bring in Kim Forrest right now. Kim is founder and CIO of Boca Capital Partners, joining us from Pittsburgh, Pennsylvania. And Kim, when it comes to stocks, when it comes to the NASDAQ, it's all about the announcements from hyperscalers and everyone tied to or adjacent to AI. All these announcements about data centers, about new factory production output of chip makers, it sounds positive and it sounds like it's something that investors want to not cash in on, but bet on. But are they all going to come to fruition?
That is the excellent question. And that is what every single investor should be asking themselves all the time. Because, you know, when companies make announcements, aren't they pretty much always in favor of the company and like telling you the very best part of what they are? That's good. That's what we expect. But you have to look at this with a discerning eye. I, for one, have never believed that all of the announced new builds, and I don't care who's doing it, are going to come to fruition. And that's because I believe in technology deeply. And the thing that technology does is it generally shrinks things, uses less electricity, and ultimately uses less floor space. And we may not need all the compute that we're estimating based off of the recent past, which is looking at large language models like OpenAI and to some extent Anthropic, about what they've needed so far. I believe that technology can do things better, faster, cheaper, and stronger in the long run. So maybe we won't need all of these data centers. And I think that is what is the real question, is when do you believe these data centers need to be built? And do you believe at every last announcement? That's the question.
So you're not believing in every announcement, it seems like. Here, where do you think there might be some, I don't know, fluff or, you know, that might be masking underlying demand?
Well, that's the problem. We're looking so far out in the future, we don't really know what demand is. We're going off of today's numbers about, you know, how long it takes, how many compute cycles it takes to, you know, rebuild one of these models. And my assertion is that will get better over time. So right now, whenever they're putting shovels in the ground, they're assuming things are staying like they are today. And I think that's a bad assumption.
If you were to compare what we're seeing right now with this tech boom and the enthusiasm, the unbridled enthusiasm for all things AI, if you were to compare it to the dot-com crash, what do you see? What do you not see happening?
So I think there will be disappointment. There always is. And actually, NVIDIA is kind of the poster child of disappointment. And that's the irony alert, right? That was the thing that started this whole craze, kind of where people are seeing, you know, the demand for that company's products. You know, over time, it tends to flatten out. But I think you really have to look at what happened in those early years of the dot-com boom and understand it wasn't just one craze happening, it was 3 happening at the same time, and they all ended. So there was dot-com, there was also Y2K. I feel like a million years old bringing this up, but you know, it was a real focus for companies for years to try to make these systems that were designed to work, you know, only if the date had a 19 in front of it, not a 20 for the year. So there's that. And then finally, we had a telecom craze going on. And that was kind of underneath the covers. Some people did, were great investors in that, but it didn't really get the press that the dot-com did. But all of those things kind of died between like April of 2020 or of April of 2000, and we'll say, the end of 2001. And that just made for a horrible tech time. So .com gets the blame, but there's a lot more going on there. So what about AI? We don't have a lot of those things, the same kind of macro forces that will suddenly come to an end. So I don't know that we can look back to that time and say that is what might happen.
Kim, thanks so much for joining us. Always appreciate chatting with you. Kim Forrest, founder and chief investment officer at Boca Capital Partners, based there in Pittsburgh. One of the pieces of news coming across the tape here this morning, particularly on the tech side, is Microsoft's Xbox unit plans to cut 3,200 jobs and divest studios in another overhaul here. Brody Ford, Bloomberg technology reporter, joins us here. Brody, what's going on at Microsoft here today?
Pretty much across the industry of technology, you see companies trying to rethink where they're spending money. A lot of this is fueled because they're spending so much on AI and building out data centers and infrastructures that they're taking a closer look across all divisions. So today, Xbox is the one that we see really kind of getting that hammer. They laid out a plan to cut about 20% of staff over the next year. And broader at Microsoft, it's a plan to cut about 6,400 people. Again, just kind of trimming both in Xbox and sales, trying to reorient for what they say will help, them grow in this next era.
Brody, what is the rationale for Microsoft keeping Xbox? The CEO of the Xbox division wrote in a note to staff this morning, and this is based on your reporting, that Xbox is operating at margins 3 to 10 times lower than comparable businesses. I mean, financially, it's not keeping up. So why does Microsoft want to keep it?
It's a good question. Microsoft really has traditionally struggled with consumer businesses. Every time they've kind of tried to spin up, say, like a smartphone or things of this nature over history, it hasn't always gone super well. Xbox, they've been traditionally committed to because it was this unique blend of hardware and software, and they found a niche in it. And yeah, today is them trying to reorient that business into something that they can keep and grow for the long term. So you see them spinning off a lot of studios, talking about how owning content makers maybe isn't the business they want to be in, but owning the platform is something they're still interested in doing.
How much is Xbox, do we know of their total revenue? Like, how material is it for the financials of this company?
It's a decent chunk of revenue, right? I mean, the issue is the profit. A lot of people buy video games, a lot of people buy consoles, but Microsoft has really struggled to make it super profitable. I think a lot of people forget about the Activision acquisition a couple years ago. I mean, I think that was something like $69 billion. It was one of the biggest tech acquisitions of all time. And yet, a couple years later, we find that the margins haven't kept up. The growth isn't quite what they hoped it would be. Of course, we have the component crunch, right? A lot of things like chips and memory have increased in price, which kind of accelerate all of these issues. So it is a material business for Microsoft. It's not something they're ready to throw away, but it's something that they feel they need to really kind of take a closer look at.
I know you don't cover Sony per se, but how do Xbox's fortunes compare with, say, the Sony PlayStation?
A lot of console makers are struggling right now because of that memory crunch, because AI has essentially messed with the supply chains for a lot of different components that go into computers and infrastructures. And so if you're a console maker that's already running at pretty slim margins, then all of a sudden your memory chips double in price, that's going to make everything tough. And more broadly, content makers are needing to compete against, a wider variety of content that's able to be created with AI. I mean, as it relates to AAA games, they're not, being created with AI, but there's just so many more places for eyeballs to be focused on these days that if you're selling content, it's a more competitive market.
Microsoft stock's down 20% year to date. It's rare that you see that kind of performance out of Microsoft. What's the feeling within the offices there in Redmond, Washington? I mean, do they talk about their stock? Do they ignore their stock? How do they kind of just talk about it, think about it?
When you ask an executive, they say, oh, I don't care about the stock price. I focus on executing. You ask an employee and they say, what the heck is going on with our stock price? Right? And that's consistent companies. The big thing for Microsoft, and you can see this with other hyperscalers, you can see it with Oracle very well, is that on one hand, Wall Street is worried about all this spending. Is it going to pay off all the data centers? And on the other end, there are traditional software businesses that have really created the cash cow that is Microsoft. Does that last in the age of AI? So they kind of have these two concurrent fears, which are leading to, yeah, some weakness for a stock that has been just a pretty consistent safe harbor and so much choppiness over the market of recent years.
Brody, I know you cover Microsoft. That company is going to be reporting its quarterly results at the end of this month. Will this Xbox closure, do you think, result in some surprising financials on earnings day?
What I would expect to hear them talk about is ongoing focus on margins, which, you know, is corporate speak for we're planning to fire 20% of people at Xbox. You know, I think we'll hear them talk about how, look, we're spending a ton of money on our data centers, on our chips. Our CapEx is in the past hundreds of billions of dollars a year. But we're doing what we can to trim costs everywhere, and we're going to make sure that we're really getting an ROI out of every dollar. I think that will be the high-level message. And if you poke underneath it, you see phenomenon like the cost cuts today.
All right, Brody, thank you so much. We appreciate that. Brody Ford, he's a tech reporter for Bloomberg News, based in our San Francisco offices there at Pier 3, which is an awesome office.
Beautiful office.
Yeah, it's fantastic. Right out to the bay. Very cool. Some great views of the various bridges and all that kind of stuff. So good place. Right smack in the middle of that Silicon Valley stuff there.
You know, I was thinking when you were talking about gaming and how competitive it is, so many people are shifting to outside of consoles, right? Like Steam gaming, they just play it on their laptops.
Yes.
No one needs the consoles that they used to spend hundreds of dollars on.
Yep, exactly. I don't know, two of my boys, they're in constant contact because they game with a big group of people, so they're always talking to each other, which is good.
You encourage that.
One's in LA and one's in Tokyo, so it's good for them to be able to chat.
It's a new social network.
Exactly. We're going to have more coming up. This is Bloomberg. Good morning.
news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ, they are both advancing. Let us begin, though, with the SOX, the Philadelphia Stock Exchange Semiconductor Index. That is the story today. Chips rallying. Right now, we have got the SOX up by 3.8%. A tech-led bounce halting a rout in semiconductor firms. Traders betting that the industry's investment boom will continue to support solid earnings. The Dow, however, lower, little change. Did initially pop at the open, but right now down 26, a drop there of under 0.1%. S&P up 50 now, up 0.7%. NASDAQ up 1.3%. The NASDAQ 100 index up by 1.6%. All of this with our Mag 7 index, the Bloomberg Mag 7 index up by 1.4%. And again, the SOX bears repeating up by 3.9%. 10-year at 4.48%, with the 2-year 4.13%. Gold now down 0.6%, while West Texas Intermediate crude bouncing around 68.83 a barrel on WTI, up 0.2. Brent, the global benchmark, at 72.22, up by 0.1%. So we are seeing tech shares rally today. Kim Forrest is Chief Investment Officer at Boca Capital Partners. And right here on Bloomberg Intelligence this morning, she told us there's a central question hanging over the AI trade.
I believe that technology can do things better, faster, cheaper, and stronger in the long run. So maybe we won't need all of these data centers. And I think that is what is the real question, is when do you believe these data centers need to be built? And do you believe at every last announcement? That's the question.
Kim Forrest of Boca Capital Partners, interviewed right here on Bloomberg Intelligence. Michael Saylor's strategy, formerly known as MicroStrategy, sold 216 million of Bitcoin last week, marking the first major step in the financing overhaul that the company unveiled in recent days. Today, we're seeing MicroStrategy shares, strategy, I should say, down by 0.3%. Bitcoin right now down 0.1 at 62,599 a token. Again, recapping, S&P 500 index up 0.7%. We'll wrap up where we began with the SOX pushing higher by 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Scarlett and Paul, that's a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, with our Bloomberg Business Flash. Stocks recovering, at least if you look at the tech-heavy NASDAQ from 2 days of losses. The NASDAQ composite is up 1.3%. And of course, we do know that starting tonight, and tomorrow, in effect, SpaceX will be a part of the NASDAQ 100. So fund managers who haven't already gotten a piece of SpaceX will have to follow suit if they track the NASDAQ 100 and buy shares of that company.
Oh, very good. I mean, the stock trading around $160 a share today.
All right, so let's bring in right now our next guest. She is Shana Sissel, founder and CEO of Banrion Capital Management, joining us now from Chicago, Illinois. SpaceX is going to be a catalyst this week. We also have the listing, the imminent listing of SK Hynix, a memory chip maker based in South Korea, $28 billion U.S. listing of its American depository receipts, which represents about 17.8 million common shares that are listed in South Korea. Shana, what do you think of this attempt by SK Hynix to capitalize on the boom in memory chips and the boom in semiconductors overall? Is this good timing, or is this kind of marking the top of the memory chip market?
No, I think it's good timing. I think from the memory chip perspective, there's clearly a need. There's clearly room in the market for new players to come in, and investors are looking for opportunities to get in with something new that missed out on other opportunities. I don't know that it's marking a top. I think I'm more concerned about a top as it relates to AI as we see more IPOs come out. I know we have Anthropic pending, potentially going public at some point this year. And I think we'll start to feel more like a top, and AI related and memory chip very much falls into this category. As we see more and more IPOs come to market, and the frothiness that comes with smaller players taking advantage of the marketplace. SpaceX is a big one, Anthropic is a big one. This is another big one. But I think the top happens when you start to see smaller players try to take advantage of the capital markets that maybe don't have the market opportunity that something like this does.
Shana, believe it or not, next week, I guess we start another earnings season here in size. We'll get JP Morgan and some of the other banks here. I mean, what does the market need to see, do you think, from this upcoming batch of earnings here? Because the first quarter earnings were so strong, just extraordinary.
I think we need to continue to see the strength. We've had very strong economic growth here in the U.S. The earnings have been very good. Inflation is trending higher, and in a way, another strong earnings episode of the earnings for the second quarter could result in potentially the market being a little tentative, because that could mean a Fed rate hike in the later half of the year. And so it'll be interesting to see, but we definitely need to see strong earnings again. But the silver lining, if you will, is if it's not quite as strong as the first quarter, you will have the likelihood of a Fed hike more in the balance than it would be if it's another very strong earnings outlook and inflation seems high. So I think investors are really paying attention to that, with the lack of forward guidance by the Fed under the new chairman. Is going to be looking at how strong is the economy and how is that going to lead to the likelihood of a Fed hike instead of the cuts that we've been talking about all year.
We have a FOMC minutes due out later this week on Wednesday, and it's kind of marking the halfway point between the last Fed meeting and the next Fed meeting. Given that Kevin Warsh has made really clear that he does not want to be as communicative as past Fed chairs, do you expect to learn anything from the release of the Fed minutes?
I don't, actually. He has gone out of his way to make sure that at least he isn't showing his cards. He's not participating in the dot plots. He's not really giving us a lot of he stands on these things. And I believe that the Fed minutes will be a different tone than under the previous chairman. So I just think that the market is now going to be forced to make decisions based on actual data that comes out, which is kind of what the Fed wants, right? Like the Fed would rather have the market participant reaction as a data point as opposed to them following what the Fed's doing and therefore not being an effective data point for the Fed to kind of decide what's going on in the economy. So I actually think these minutes are going to have a very different tone than they have previously.
Shana, in your world of alternative investments, where do you see some value these days, or the best value?
Yeah, so in alternatives, I always talk about the diversifying alternatives, and I continue to say that because I think volatility is going to rise under this new regime at the Fed. And that means that you're going to want to look for ways to allocate portfolio positions to things that are going to help mitigate volatility. And those things are what I call diversifying alternatives. And for the layman out there, what that means is hedge funds, market neutral, long short equity, hedged equity, managed futures, the things that typically you don't want to own if you think the market's going to go straight up and be relatively not volatile. But if you think volatility is going to rise and we're going to have a little more uncertainty in the market, you're going to want to position yourself with things that can dampen volatility. And those are the types of things where I think people should be looking and have been largely ignored over the last, say, 10 plus years because they haven't performed well. It's really hard to perform if you're hedged and the market's going straight up. So these are things that I think people should be paying attention to, and they're available in ETFs and interval funds. You know, I talk about them all the time. There's CBLS, there's BTAL, there's managed future funds like CTA. These are all ETFs that you can put in your portfolio. Just a small position can make a big difference if you think that volatility is going to rise and you're afraid that risk assets might reflect that uncertainty and potentially have a sell-off. And these are the things that will protect you. But if you position it correctly, you can really help your portfolio without hindering any absolute returns you could get if you're wrong.
Gotcha. All right, Shana, thank you so much. Shana Sissel is founder and CEO of Banrione Capital Management, joining us from Chicago. All those ideas sound great. It's just that when the market's going up, Paul, they don't give the returns that people want, and so people regret it immediately. And by the time they need it, it's too late because, you know, the downfall has already happened.
Yep, absolutely. We'll keep an eye on this market. S&P's up 53, the Dow down 15, NASDAQ up 350 points, 1.35%.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well, and also on Bloomberg.com. Believe it or not, kind of flying under the radar screen here, we're kind of getting a quasi-IPO coming soon. SK Hynix, the Korean company, they make all the memory chip stocks up like a gajillion percent. They're going to list 17.79 million shares ADRs in the U.S., and I think that's, if my math is correct, that's like a $28 billion offering. I mean, we're kind of getting numb to these huge numbers with Google doing their secondary earlier this year and all the big IPOs we've seen with SpaceX. But let's put it in context here. We can do that with Bailey Lipschultz, senior equities reporter for Bloomberg News. Bailey, talk to us about what SK Hynix is doing here.
Yeah, so this is a company, to your point, nominally at $28 billion would be the third largest IPO ever on any exchange. So behind SpaceX, behind Saudi Aramco, which is pretty mind-boggling, to be completely honest. The thing to keep in mind is, so this is an ADR IPO. So basically, they're selling shares for the first time here in the U.S. They will maintain a home listing on the other side of the world in South Korea. Each ADR represents 1/10 of one common share. Why does that all matter? A, as you mentioned, a $28 billion offering is very large. B, this is a company worth more than $1 trillion. And C, this opens up everyone on Wall Street, everyone in the U.S. to now actually trade SK Hynix on New York hours, on U.S. hours, and be able to cater to not only retail investors, but institutional investors. We already saw Bailey Gifford, Coatue, and Situational Awareness Partners indicating they want to buy as much as $7 billion of this deal. So big numbers, but it's also a right time for the company.
Timing. I've heard people talk about maybe this feels a little top of the market kind of thing. Are you hearing that out in the marketplace?
Yeah. When we talk to people, the main question is, can we structurally say this time is different? And why does that matter for semiconductors? Semiconductors are the most cyclical business on Wall Street. So this is an industry that booms and busts as kind of the PC and smartphone eras evolve and as sales kind of mature from there. The big question is, will we continue to see demand for building out data centers? Will we continue to see that here on Earth and potentially as SpaceX wants to do in space? And the big question from there goes, these are companies that want to spend hundreds of billions of dollars to build out manufacturing capacity. Right now, there's a bottleneck to get compute and get access to these chips. Well, what happens if it's not that easy? And that's the big risk.
So just from a U.S. listing perspective, is this going to go in various indices? Is SK Hynix in the various indexes around the world?
It's in some. When you just kind of look using the WGT function, which will pull up which indexes the company is in. Obviously, again, it's one of the bigger companies in the world. So it's in obviously a big driver behind the Kospi, the Korean exchange. It's also in a number of those emerging market indexes. The big thing to keep an eye on and the big thing that does matter is it's not eligible for fast-track NASDAQ 100 inclusion, but in the long run, it will likely be included in the NASDAQ 100 and everything that brings. Obviously, we talked about that with SpaceX. That is a fundamental shift for a company, again, that has been very difficult to trade for U.S. investors. And then the question from there goes, okay, do we get to see double and triple levered ETFs and kind of what happens with that entire explosion from there?
So will this open up new buyers, I guess, potential new owners for this stock?
Yeah, when we've spoke with a number of institutional investors, whether they couldn't trade companies that are listed in an emerging market, whether they just don't want the headache of worrying about foreign exchange and hedging some of those risks, those have been top of mind. We do know a few investors that we spoke to for our story that went out Sunday morning. There also are investors who just aren't comfortable with an ADR. They want to own companies that are domiciled here. They want to own companies that their primary listing is in the U.S. as opposed to this. It'll be interesting to see what kind of premium it trades at. This is kind of ripping off the playbook that we saw with Taiwan Semi. But again, that was a company that raised a few $100 million, not closer to $30 billion.
What's the timing of this deal?
It'll price and it'll trade on Friday. We expect pricing to happen sometime Thursday morning here so that it would open up, kind of making sure that people are able to trade accordingly in South Korea there Friday morning. It's a truncated process. It's a quicker process. But even talking to the bankers on the deal, if you want to invest in SK Hynix, you probably know who the company is, and you're not selling a new entire pitch. The one thing that we've been pointing out is their main roadshow at 1:30 p.m. New York time will be the only real interaction with management on a webcast for potential institutional
So they're just doing
investors.
a webcast. For
Kind of a
the whole-
webcast, very quick process. Again, it's tied to it. I'm overcomplicated.
Just another great day to be a IPO banker, right?
Yeah, they're making, I think it was 50 bips on this deal. So we had a few bankers who said, this isn't easy, but when you compare to being at the beck and call of Elon Musk, night and day between the SpaceX IPO.
Exactly. And then how about Anthropic? Is that still thinking maybe late fall, something like that?
We've heard nothing to change expectations around that September-October timeframe. Obviously, potential delay of OpenAI into next year becomes a question of, if you're Anthropic, do you need to race and get out in September, or do you want to have a better kind of a visibility into your business, maybe in that October-November timeframe?
Interesting. All right, that'll be an exciting one to watch as well. But again, you got to pay attention. This is $28 billion new issuance here in the U.S. So you got to make note of that. That's just amazing. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. I got the S&P up 52 points. The Dow's pretty much unchanged. The Nasdaq's up 350 points. That's about 1.4%. So there you go here. The VIX sitting below 16, 15.9. 10-year Treasury yields 4.48%. Very steady right there. We'll have more coming up. This is Bloomberg.
From ABC News, I'm Chuck Sievertson. The Belgian Soccer Federation is demanding an explanation from FIFA about a decision to let a U.S. forward play tonight at the World Cup despite getting a red card in his previous game. Let's talk about how President Trump phoned the head of soccer's governing body about it. ABC News national correspondent Stephen Portnoy.
President Trump said he'd never even heard of a red card.
They say you can't play. That's very unfair.
Trump says he called the head of FIFA, Gianni Infantino, and asked him to review the decision to disqualify American striker Folarin Balogun.
All I did was ask for a review. I didn't say you have to do this.
He shrugs off the protests from Belgium, saying if the Belgians beat the Americans at full strength, they can be really proud.
The other way, if they beat us, we'll say I say it was rigged.
Stephen Portnoy, ABC News, Washington.
The man accused of killing conservative influencer Charlie Kirk in Utah last September is set to appear in front of a judge this week for evidence and testimony against him. ABC's Alex Stone is at the courthouse in Provo, Utah.
There will be testimony. There will be evidence. It could go for a week. It may not go that long. That prosecutors show they have enough evidence to take this to trial, but it is a low bar. They only have to show probable cause, not proof beyond a reasonable doubt. So they have to show the judge that they've got enough to show that it could have been Tyler Robinson, and then the judge will decide if they do, in fact, head to trial.
Tonight, the president will fly the new Air Force One overseas for the first time, heading to a two-day NATO summit in Turkey. For the first time, President Trump rang the opening bell for the New York Stock Exchange and NASDAQ from the Oval Office in the White House. It celebrated the launch of Trump Accounts, a new tax-advantaged savings account for children in the U.S. Only babies born between 2025 and 28 eligible for a $1,000 government contribution. Total deaths in Ukraine from overnight Russian air attacks are now at least 21, many in Kyiv, the capital. You're listening to ABC News.
Tens of thousands of Iranians taking to the streets today for a final goodbye to their former leader.
Much of the country has closed down and hundreds of thousands of Iranians have poured into the streets to mourn Ayatollah Ali Khamenei, who was killed back in February by the US and Israeli airstrikes that started the war. The coffin of his 14-month-old granddaughter and other family members killed in that attack are also part of the procession. The burial itself will take place Thursday.
ABC's James Longman. The Trump administration continues its efforts to change or alter exhibits at several of the country's museums, including new criticism aimed at one of the world's largest. ABC's Sophie Flay.
In a scathing new report, the Trump administration accuses the leaders of the Smithsonian of being radical activists. President Trump has targeted museums and historic sites he says paints too negative a picture of America's past.
We want the museums to talk about the history of our country in a fair manner, not in a woke manner or in a racist manner.
Last Friday, an appeals court cleared the way for the administration to replace the slavery exhibit in Philadelphia, where George Washington enslaved 9 people. Critics say the administration is whitewashing U.S. history.
Smithsonian says it remains committed to nonpartisan scholarship. The World Cup has helped increase national pride in competing teams, but it's also increased gambling. Prediction market Kalshi saw more than $31 billion in volume in June compared with $18 billion in May. Chuck Sievertson, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The president gasses up the jet for another summit. Welcome to the Monday edition, as Trump follows up the 250th celebration here in Washington with a trip to Europe to meet with our NATO allies. And it's anyone's guess how that will go, as we will discuss with Bloomberg's Tyler Kendall first up today. And we'll take stock of the markets on this day the new Trump accounts go live with Bloomberg's Eric Weiner. And we'll talk about the next leg in oil prices with Mike McGlone at Bloomberg Intelligence. But let's start with the markets right now. First trading day of the week after a long weekend. The president rang the opening bell from the Oval Office. Charlie Pellet, how's it going so far?
Right now we're looking at a mixed market, Joe, with the Dow lower, the S&P, NASDAQ both advancing. Got to begin with the big story, and that is the rebound for chip names today. Let me begin with the SOX, the Philadelphia Stock Exchange Semiconductor Index, because it is surging now by 3.8%. This is NASDAQ rallies 357 points, up 1.4%. The NASDAQ 100 Index up 1.7% against the backdrop of the S&P 500 Index higher by 53, up 0.7%. However, we're looking at a Dow that remains in the red, down now by 48 points, a drop there of 0.1%. But bottom line here, a rally in tech names, lifting stocks amid speculation that the AI trade does have more room to run. The 10-year currently yielding 4.48%, with a 2-year 4.13%. Gold is down 0.8%, 41.43 the ounce, while West Texas Intermediate crude oil flat on the day, 68.69 a barrel on WTI. 2 super tankers hauling Saudi crude are heading to the U.S. for the first time since February. It is a step in normalizing global energy flows after the reopening of the Strait of Hormuz. But there do remain ongoing questions about potential tolls to get tankers sailing through the world's most important energy choke point. Henrietta Trey's is Director of Economic Policy Research at Veda Partners, and she was a guest this morning on Surveillance.
So Iran has the ability here and is using different countries as an example of how to set up a toll. Call it a climate assessment, call it an environmental fee, whatever you want to call it. You're normalizing relations with the IRGC. And this is in many of the NATO nations' opinions. I've heard from Canada, for example, directly, and France directly, simply untenable. They don't want to work with a state sponsor of terrorism.
Henrietta Trey's of Veda Partners interviewed on Surveillance. You can hear more of the conversation on the Surveillance podcast, and you can download it wherever you get your podcast. West Texas Intermediate crude again flat on the day, 68.69 a barrel. Oil majors are trading lower. ExxonMobil down 0.5%. Chevron down 1%. ConocoPhillips also down by 1%. And our Mike McGlone will have a whole lot more on the energy markets for you coming up in just a moment. Recapping, the stocks absolutely ripping higher now by 3.8%, S&P up 0.7. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. He'll be back with more in about 15 minutes on the Monday trade as all the Trump account money flows into Wall Street. Will that actually make a difference in the market? We'll talk to Eric Weiner about that a little bit later on this hour as the rotation, I guess, rotates back to the Mag 7. Interesting market today. We'll hear more about it with oil prices in our view as well, as Charlie mentioned. Mike McGlone, who has been more right than just about anybody else since this war with Iran started. Are we still at war with Iran? Nobody talked about it all weekend. They stopped down for the funeral of the Ayatollah. We stopped down for America 250. And the president's going to Europe this evening for the next big NATO summit. I'm sure they'll be talking about Iran, but also Ukraine and a lot of other issues, including defense spending, that we'll get into a bit later on in the program with Ivo Dalder will join us, the former U.S. ambassador to NATO. As Washington empties out, this is the big hangover after the big party. I saw a couple of tourists scurrying toward the Smithsonian this morning as I drove in through the battlefield left over from America 250. It was pretty cool, I've got to tell you, and I'm really glad to know everybody's a big fan of air shows. After all these years, welcome. The water's warm. We do these all the time, by the way. We had Pax River, you go to Andrews. The great thing about this air show is you didn't have to wait in lines. Well, I mean, I guess if maybe you were on the mall, you did. But they were all over town. This was a downtown air show, and apparently the biggest one ever. Thunderbirds, Blue Angels, we saw the F-22 lapping the Washington Monument. It was pretty cool. The rafters were shaking, and that went late into the night. Of course, you saw the whole saga, what happened Saturday night with the storm. Everybody had to evacuate. Then they screened them back in. The president made the speech, the B-1 with the afterburners. Yeah, we're still reeling here in Washington, D.C. on what was apparently, God, the superlatives are endless. We got the Guinness record, right, for the fireworks. How many were there? Like 800,000 shells or something crazy. 810,904 fireworks was the record to beat, and we did. As city officials issued a code red air quality alert. Did you hear about this? We had the worst air in the world. We set a lot of records. Briefly experiencing, according to the reporting of the Washington Post, the worst air quality of any major city in the world, according to a company that ranks pollution globally. They actually do this for a living here at IQ Air. The code red went out, warning that the air was unhealthy for seniors, kids, people with medical conditions, and the general public may experience health issues. And we loved every minute of it. Go ahead, show them the jets. Do we have the jets? Well, we can do that later. They're probably still flying home. There were so many airplanes in the air, we couldn't see the sun at one point. The Capitol spectacle was 10 times bigger than Macy's 4th of July fireworks show in New York, which is typically the biggest of them all. So now we're back to reality here, I guess. Like I mentioned, the president's going to the NATO summit, but the town is still emptied out. Congress is gone. House and Senate are on recess, and soon the president will be gone as well. So it's going to be just me and you by the time he's airborne later on today. Tyler's here too. We may as well bring her in. She's got what? There's kind of no reason to be at the White House the rest of the week, right? You're either on the new Air Force One or you're sitting here with me.
Yeah, I think the conversation's really going to now turn from domestic policy, like we saw today, back to foreign policy, because there are so many different threads that President Trump is going to be contending this week when it comes to NATO. We could go through some of them, but it's not just Iran. Of course, now these allies want to renew focus when it comes to Ukraine.
Well, we are going to go through all of these. It was a hell of a night in Ukraine, by the way. But the president was in front of cameras. He's, by the way, talking right now. Is it right, James? He's still going in the Rose Garden Club, to be exact. I don't know what they're serving for lunch out there, but the president, well, he's got a house full of, big deal. He's got Gerstner in there. He's got Michael Dell and his wife, the head of the NASDAQ, because they actually rang the opening bell in the Oval Office this morning. We were told it was another first. I don't think that was connected to the stock exchange, though, right? He just had a bell that he rang around the time the market opened. And the whole point of that was to promote the new Trump accounts. You get your $1,000, right? If you have a child that's born within the certain parameter, and that's going to be their nest egg. That's their 401k before they even know the alphabet. Here's the president. Listen.
Between individual contributions and the seed funds, $800 million in new capital will be invested in the stock market for America's children this week. And I also think that we're going to be putting numbers in the budget, which will be really spectacular, because it's really not costing us anything.
He is flanked by the billionaires who are helping to fund this whole program. And Tyler, Senator Ted Cruz was there as well. This is pretty close to bipartisan, right?
Yeah,
Democrats aren't blowing holes in this program.
This is actually considered to be a very strong economic policy that's widely popular among the American people. And I bring that up because it was really interesting to see how President Trump framed this. He said that this could be one of the most consequential achievements of his presidency. You heard Scott Bessent use the word legacy.
Yeah.
It's very clear that the administration is trying to highlight this specific policy as we head into the midterms. And we know Republicans are dealing with headwinds when it comes to the economy and voters souring sentiment when it comes to how President Trump has been handling it. And I think it is this renewed focus on the domestic, on a key provision of the One Big Beautiful Bill, trying to recenter the conversation on that after what has been weeks of Americans saying in polling that they're unhappy with the rising costs of living and higher gas prices at the pump, even as we start to see numbers fall now that it appears that we have perhaps a more durable ceasefire in place.
Really interesting when we consider the launch of the Trump accounts. They were already launched, right? This is the first day they're actually able to trade these accounts. They hit on the 4th of July. You wonder if this is going to be the way maybe to get to the president. You know, usually I shouldn't say usually, in many cases they were giving money to the ballroom, or you'd make a donation to the inaugural fund. Now you make a couple $1 million contribution to the Trump accounts. Everybody gets to feel good about it. You might be in the president's good graces.
It was very clear that the White House wanted to tout the partnership between the government and the private sector. How many times did we hear him highlight Michael Dell standing right behind him, highlighted Micron as well, of course, which is a totally critical other thread that we follow with the administration when it comes to memory storage and the AI trade. That specific investment, I believe, donation is $250 million for children in Idaho.
They keep asking him about Elon as well. Yeah.
And we did hear from the SpaceX president earlier today, too. I believe $2 million for children in lower income zip codes near Texas, where the SpaceX president currently lives. I believe the statistic is more than 50 top companies have so far pledged support of this program, whether that is with matching funds or seed money separately from what could be the $1,000 seed that you get if your child is born during the second Trump administration, essentially, if you look at the dates. But definitely the administration touting this.
Let's turn to NATO. What are the takeaways? What does he need to get done here other than shame nations who might not be paying 5%, which we're not either, right? That this is the new goal for spending based on GDP.
But that is still going to be the main backdrop. I mean, you heard from the NATO Secretary General speaking to reporters earlier today, saying that he has called, in fact, I believe the word was demand, our allies to put forward what he called, quote, clear, concise, and credible plans on how to reach defense spending targets. To your point, this is considered to be a very lofty target. Our own analysts at Bloomberg Economics have crunched the numbers. The top 5 economies in Europe are getting closer. They've made a sizable increase. The average between those countries right now is at 2.5% of GDP for military spending. That's up about half a percentage point from when President Trump took office, but it is still below that 5% goal that we know the administration is pushing and would like to see done by 2035. That's going to be in the backdrop looming over this, but Joe, we can say that perhaps other countries will try some other ways to court favor. It's our understanding, reportedly, that the German chancellor is going to put forward some sort of joint weapons production pact with the U.S. that could help bolster U.S. defense companies, something in line with the president's priorities. But that's at the forefront. The backdrop that they would like to bring into the forefront is support for Ukraine. The president will meet with his Ukrainian counterpart. After just speaking with the Russian president over the weekend, he told reporters earlier during that event that he thinks that Vladimir Putin is feeling the pressure.
Fascinating. He's getting on the jet tonight. First stop's like 7 a.m. tomorrow, right? It's going to be Eastern time. He's not going to sleep at all and is going to walk right into this thing, I'm guessing. Belgium, by the way, paying 2%. They're at 2% right now. Maybe they get a red card on that before the summit is over. I mean, that's going to be a pretty awkward meeting with the Belgians, I feel like.
He said he'd speak with him beforehand.
It's all FIFA all the time around here. Tyler, thank you. She'll be back in our second hour with much more. Our Washington correspondent, as we turn back to the markets and the price of oil next. Mike McGlone is coming in on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing. The NASDAQ 100 index, the standout, up 1.6%. All of this as the SOX, the Philadelphia Stock Exchange Semiconductor Index, rips higher by 3.7%. A rally in tech giants lifting stocks amid speculation that the AI trade does have more room to run. The S&P up 53, now up 0.7%. The Dow down 41, drop there of just under 0.1%. The NASDAQ Composite Index up 1.4%. The NASDAQ 100 Index up 1.6%. The Bloomberg Mag 7 Index higher by 1.7%, with the VIX now below 16, a 10-year at 4.48%, and a 2-year 4.12%. Gold down $33 the ounce. Spot gold at $41.42. It is down 0.8%. West Texas Intermediate crude oil right now at $68.44 a barrel, lower by 0.3%. Barrel of Brent, $71.94. Brent crude down by 0.2%. Another big tech company cutting jobs. Microsoft's Xbox plans to eliminate 3,200 positions, roughly 20% of its staff over the next year, all part of a massive reorganization to spur growth in the struggling gaming division. Microsoft shares, they are lower by 1.6%. Again, recapping, S&P up 53, up 0.7%, but the stocks are now by 3.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, thank you, Charlie. Hope you had a great 4th of July. I hope that is the case for you as well as we get back to business here on a Monday. Thanks for joining Balance of Power, the Monday edition. We're live in Washington where we're picking up the pieces. You know, it's somebody's job to not only pick up all the trash on the National Mall, but like all the debris from the fireworks. Turned out to be a record setter, 850,000 shells. They were coming off of barges up and down the river. And man, it wasn't just the smoke that prevented most people from even being able to see the finale. If you were actually on the mall, couldn't see through the smoke. But there's debris everywhere. They have to go clean all this stuff up. I was talking about the air show a little bit earlier. You know, they did the rehearsal on Friday. That was the pro tip. Go to the rehearsal day. And just one of the coolest things we've ever seen in downtown Washington, D.C., the F-35. Did you catch this, James? When he decided to go vertical, and by that I mean hover, like vertical takeoff landing, he just stopped, dead stop in the air over the tidal basin, right over the water in the basin, before heading off into the heavens. People saw things they never thought they would imagine. So many people said to me, I never realized how loud fighter jets were. They now know. And like I said, meet us at the next air show. We do this stuff all the time. It's just not as fun as when it's in downtown D.C. This market is something. The president, by the way, is speaking at the Rose Garden Club right now. I don't think they've served food yet. Can we see that from the Rose Garden? Yeah, they've got their iced teas out, it looks like. Thanks for covering me. I've got the sniffles in here. I think maybe it's from the fireworks smoke or something. But yeah, look at the pool note that's coming from the reporters who are in the Rose Garden. Dare I call it a club right now. 25 tables, drinking glasses, metal bread baskets, yellow roses. Each table is under a white and yellow striped umbrella that has 4 lunch guests. Waiters are wearing black jackets and bow ties. God, they must be hot. And they did start, as anyone would at lunch, with God Bless the USA from Lee Greenwood. Everyone stood and applauded. The president, as you can see, if you're with us on YouTube, just one more reason to dial up, search Bloomberg Business News Live, is at the podium in the Rose Garden, and that massive gold bell is the one that he used to ring the opening. That was the opening bell today. Where did they get that? Like a firehouse? I thought maybe that was the Liberty Bell at first. Gilded. And he took it outside with him. They brought it out for the Rose Garden. I guess it's going to go to the ballroom, he said, someday when it's done. So the whole point of that, by the way, was not just to get all the financial news networks to look at the Oval at 9:30 this morning, but it was to promote the first full day of trading for the Trump accounts. They're off and running. And it's an opportunity for us to take stock of this market and maybe consider the implications of these accounts with our buddy Eric Weiner. Bloomberg News senior editor for equities joins us now live on Bloomberg. Eric, I'm curious your thoughts on this just in concept. If putting this much money, we're talking about hundreds of millions of dollars, into the market, does that have an effect, a stabilizing effect of its own? Can we all make money on this?
Well, a stabilizing effect, I don't know, but it does have an effect. It has an effect, you know, when a large flood of money comes in, it creates buying, and usually that means buying at the big index level, so the S&P 500 and, you know, the broader indexes. So it's the big stocks that tend to go up. But these things are, you know, it's kind of fleeting. You know, demand is what demand is, and more people coming in creates a short-term demand. But over the long term, it's going to be, you know, how the stocks develop. I think the bigger point is opening up savings and getting people access to the market earlier and incentivizing that. is probably a really good idea based on, the way that we save for retirement and everything. And, that's kind of forward thinking.
Interesting. So let's get into this market that a lot of 1-year-olds are apparently getting into without their own knowledge. The whole story has been rotation, Eric, every time we talk about it, except now it's like reverse rotation, or it's rotation within a sector. Mike Wilson from Morgan Stanley, everybody stops down when he talks, says, yeah, we're rotating back into the Mag 7 this morning. I thought we were rotating into value and industrials and everything else. So I guess the idea is that we're turning away from chips. Are we splitting hairs at this point? Eric, I'm just wondering how an investor is supposed to react to this.
It's a tough day to draw conclusions, first of all, because, if you just look at the volume, it's really low. We're coming out of a holiday week, so trading last week was kind of strange. But to the point that Wilson's making, the Mag 7 did really well last week. It had its best week since, I believe, April, and it's up again today. Really, the rotation, though, is still to chips. But even within chips now, it's really about memory chips. It's about the chips that are being used in data centers for AI.
It's Micron.
So you're seeing Micron coming along. You're seeing SK Hynix, which is going to be listing coming up. Demand for these names is outstripping anything that the Mag 7 is doing, and it's really kind of driving. You're starting to see Broadcom pop up on the list in terms of its influence in the S&P 500. It's really changing the complexion of indexes, because you have to take into account this is where people are going. They are going toward where the money that for AI is being spent. And right now, memory is your bet.
Micron is clawing back today a little bit after a brutal end of last week. It's just back above $1,000, up about 3%. Talk to us about SpaceX. Joins the NASDAQ 100 after the closing bell. That's going to mean a lot of forced buying from funds that track the NASDAQ 100. Eric, is that automatically a gain for SpaceX, or has that already been baked in if we already know about it?
Okay. That's a fantastic question, Joe, because we're going to find that out. Now, initially, you would have said yes. Now, the idea is when you get onto the NASDAQ 100, you join a bunch of ETFs like the QQQs, say, that are enormous and have to buy your stock at a certain level to keep up with the index. So yes, that creates a tremendous amount of buying. And if you looked at the way that trading went in SpaceX initially, you would say they aren't just pricing that in, they're pricing in the S&P 500, they're pricing in growth forever. But things have changed. The stock has come back down. It's trading more. It still has a lot of enthusiasm behind it. Everything that Elon Musk touches does, but it's not trading with like that kind of euphoria. And we're starting to see a bit of a rotation moving back between the arbitrage of SpaceX versus Tesla, based on the idea of maybe they'll merge at some point and which one has value. So there's a lot going on within there. But yeah, when it joins an index like the NASDAQ 100, that's usually a way that traders will pick up some cheap cash.
Fascinating. Yeah, the SK listing at the end of the week is something we might want to get you back on to talk about. It'll be really important for this market. Eric Weiner, thank you, sir. Interesting moment, as Eric said, in this market today, and we probably won't have it figured out by 4 o'clock, but we're definitely in the midst of some changing mood music, and that has already been the case in the oil markets. I'll tell you, this is really fascinating. The news with Saudi Arabia today, the lack of a real long-term deal with Iran, not doing much for oil prices. We're still at $68 a barrel, barely budging. It's down 0.5% right now, WTI. Brent's at just shy of 72. This has not been the story that we were told it would be. And I'll tell you what, no one has been right more than Mike McGlone. If you listen to Mike McGlone in the outset of the Iran war, After we bumped into $120 a barrel oil, what did he tell us? It would hit 40 before it hit $120 again. And there have been a lot of oil analysts and other so-called experts saying the exact opposite. Now that we're $18 away, well, not quite, $28 away from 40, we bring Mike McGlone back in. He's the senior commodity strategist at Bloomberg Intelligence. And I bring it back, Mike, to take a victory lap if you want here, or maybe you can tell us what you see in the days ahead. How come you saw this when no one else did?
Well, Joe, it's always good to be remembered for the few that I get it right, because I get a lot wrong. And to me, it's the macro that I wrote about a lot in 2022. It just broke out Adam Smith's the rules of the high price cure, and elasticity in commodities is expanding and increasing more than ever. And what this just did is we're seeing it made OPEC more redundant, which was already the pre-existing trend, and it accelerated pre-existing trends of the Western Hemisphere becoming the price maker. And the bottom line to me also is what you're seeing with Saudi Arabia today is, what does the leader of the world's largest energy producer and net exporter, Mr. Trump, need for midterms? It's all going that way. And so to me, I think it's still a matter of time crude oil gets to 40, but the key catalyst for that now might be what usually happens, the stock market going down. Well, that's never going to happen. That's good. We'll have that going. But the key thing that's happened is gasoline price is now down about $3.80. Now, it's going to be sticky for a while because of summer driving season, but by the time we get to midterms, it'd probably go back to closer it was before the war, which is $2.80.
Yeah, $3.79, according to AAA nationally. Pretty remarkable, Mike. We always appreciate spending time with you and hope you had a great fourth. With us live from Miami, Mike McGlone, Bloomberg Intelligence Senior Commodities Strategist. I'm Joe Matthew in Washington. Thank you for being with us. I'm going to do something with my sniffles here, and I'll be back with our great panel that we've put together for today. Kaylee Lyons will join us in just about a half hour, and we'll be off and running with much more on the fastest show in politics. Look at that air show, everybody. Dial us up on YouTube. We'll be showing you some of the sights and sounds from the weekend here in Washington and in New York. Only here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ 100 index. Right now they are higher. We're seeing a rally in several tech powerhouses. That is lifting stocks amid speculation that the AI trade that has powered the bull market does have more room to run. The advance halting a two-day rout in chip makers. The SOX is surging now by 3.5%. That is the Philadelphia Stock Exchange's semiconductor index. So again, the S&P up 51, gain of 0.7%. Dow Industrials down 19, little change there. NASDAQ up 1.3%. The NASDAQ 100 index up 1.6%. 10-year at 4.48% with a 2-year currently yielding 4.12%. Gold is down $27 the ounce to $41.49, down 0.7%. West Texas Intermediate crude 68.31 a barrel. WTI down 0.5%, and Bitcoin up 1.5%, 63,640 now on Bitcoin. Morgan Stanley chief U.S. equity strategist Mike Wilson sees the S&P 500 index climbing to 8,000 by year-end. Putting that in context, right now it's 75.34. On Bloomberg's surveillance this morning, he also talked about the outlook for the Fed under Chair Kevin Warsh.
With the new chair probably not giving as much guidance, he's going to allow the market to kind of figure it out on its own and have these different views. We're in that adjustment period now. And I think that's one of the reasons why the market's been a little choppy or even correcting in the last month or so, is we're getting used to this new regime, which is going to be higher volatility and potentially the bond market. But over time, I think what's going to end up happening is the market's going to settle down.
Mike Wilson, chief U.S. equity strategist at Morgan Stanley. Lockheed Martin has agreed to buy naval defense business Ultra Maritime, which focuses on submarine detection systems, for $3.45 billion. And Honeywell International spinoff Solstice Advanced Materials will acquire Element Solutions in a cash and stock deal valued at about $14.5 billion. And a developing story that we are keeping an eye on right now, an island-wide blackout has hit Cuba in the latest blow to the fuel-starved island. Recapping, S&P up 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you. He'll be back coming up at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to Balance of Power. Indeed, an island-wide blackout hitting Cuba today, reported by Cuba's Electric Union. And we just heard as well from the Ministry of Energy. This is a translated tweet, and it's pretty straightforward. There has been a total disconnection of the electrical system. It says the recovery protocols have already begun to be activated. Unclear what that means, but we know that fuel has been running out since the start of our incursion in Venezuela. And of course, the president has been saber rattling, and Marco Rubio has as well, the Secretary of State, suggesting that there could be further action following our blockade when it comes to Cuba. We'll keep you posted on all of this. Public transportation largely halted, writes the Associated Press. Officials have canceled tens of thousands of surgeries. They are back in the dark in Cuba. Coming off the big 250 weekend here, and it started on Friday with the wonderful rehearsal of our record-breaking air show here in Washington, D.C., and the president got on the new Air Force One, and he went to Mount Rushmore. There were some folks, including myself, wondering to what extent the president might involve himself in the actual mountain. Would there be a projection or maybe a proposal to carve his face in the mountainside, knowing that he has suggested that many times himself? But no, it was only a picture of the airplane flying over, the new Air Force One that the White House kicked out there, and of course the speech itself, which rhymed quite a bit with the speech that he delivered very late at night on Saturday from the National Mall. Not just Happy Birthday, America, but the Red Scare language about communists, as he put it. In this case, Democratic Socialists who've been winning some primaries around the country here. Look no further than New York, most recently Colorado, maybe what's about to happen in Michigan. The president speaking about communism as the actual foil in this election for the Republican Party. Listen.
There is now a resurgence of the communist menace in our land, including from newcomers to our country who embrace ideas totally opposed to our way of life and our great success. These are not mere political disagreements like differences over taxes or regulations. Communism is a mortal threat to American liberty. Our warriors did not fight communism on battlefields across the world only to have that menace rear its ugly head right back here in America. We're not going to let it happen.
Not going to let it happen. As we play this now to the panel, with what apparently will be the narrative, at least a big chunk of the narrative for this midterm campaign cycle. Republican strategist Lester Munson is with us, principal of the international practice at BGR Group, and Democratic strategist Jamie Jackson is with us, former senior counsel to House Majority Leader Steny Hoyer, the founder of Vantage Global Media. Lester, Jamie, great to see you both, and welcome. I'll start with you, Lester, as the Republican, and your thoughts on the effectiveness of this dialogue that the president's been having about communism. Does this bring people out to vote in November?
Well, I think so. Yeah, it does, Joe. For one thing, now we're talking about whether the Democrats are communists or democratic socialists, or what that means. Do they want to seize the means of production or not? That's a good question for Trump and the Republicans, for voters to be asking, even if the answer is, well, they're not actually communists, they're just some kind of weird version of socialism, then that's good for Republicans. I think that'll get out the vote. Of course, it is, in the grand Trump tradition, a little bit of an overstatement, to be fair to the Democrats, but it's his way of surfacing the issue and getting people to talk about it. And here it is, working.
Is it working, Jamie, for Democrats who are trying to project themselves as a more moderate alternative to some of the self-described socialist Democrats? Or does this unify the Democratic Party as the lines are drawn by the President of the United States?
I think this unifies the party, and I also think voters are going to be able to see through this divisive rhetoric. This is nothing more than a Hail Mary attempt by the president to divert from the failed policies of the first half of his administration. This was really a wasted opportunity for the president to unify the country at the 250-year anniversary of this great nation. And I really think that his dangerous rhetoric about communism was a real waste of time. It's one thing to not agree with progressive policies, but to equate Medicare for all and other progressive policies with communism, I think is very dangerous and divisive.
The president said the Communist Party is made up of illegal immigrants, criminals, and everybody that doesn't want to work, which I understand the image that he's trying to create here. But of course, there is no Communist Party really that we're talking about here, right, Lester? I mean, illegal immigrants, criminals, and everybody that doesn't want to work. Is he basically saying that's what the Democrat Party is?
Well, it sure seems like it. Yeah, I think we're at kind of peak negative rhetoric now. And Jamie's not wrong. It would be nice to see people rise above partisanship, particularly on the 4th of July, celebrating our 250th anniversary. We should all be grateful, in my view, to be Americans. We live in a wonderful place with a lot of freedoms, and celebrating that seems like something that should be nonpartisan. However, the president, and leading Democrats all took this as an opportunity to advance their political talking points over the weekend. I think most Americans tuned out the whole thing and focused on the fireworks and the hot dogs and whatever else they might have been doing with their families. And we'll see this kind of surge up again probably after Labor Day when the campaign gets going in full. Democrats do have a problem here with, I think, some very out of touch nominees in a lot of places. Republicans will try to nationalize that and go to middle America and say the Democrats want to take us in this extreme direction. Democrats will push back and say, no, our focus is still on you, mainstream America. So that'll be where the real battle is, I suspect, come September.
Well, it's been an interesting battle just in Michigan itself. And Jamie, we had a pretty important development that a lot of people woke up to this morning in State Senator Mallory McMorrow's decision to drop out of the Democratic Senate primary. This is someone, and she's been on this program before, who was identified several years ago by Democrats as a star as one of the future celebrities in the party. And at one point, it was foregone that she was going to win this thing and run against whomever would be the Republican, which we now know will be Mike Rogers. But then, of course, we had an establishment candidate in Haley Stevens jump into the race, and we had a progressive Democrat in Abdul El Sayed. All three of them have been on this program and have talked about their values here. And this was going to be one of the most expensive, and still may be, knockdown, drag-out Democratic primaries in the country. Jamie, what does it tell us about the current state of Democratic politics when there was no middle lane for a Mallory McMorrow in Michigan?
I think McMurrow at sitting this race won't move the needle too much. Again, as you mentioned, here you have another proxy matchup between the Democratic establishment and the more progressive wing. Stevens has gotten the endorsements from Schumer, former Speaker Pelosi, and other leaders in the party. And El Sayed has received endorsements from Bernie Sanders, Alexandria Ocasio-Cortez, and other more progressive leaders. We've seen this matchup in Colorado, New York, and other states. So I think this is an ongoing kind of tension that we're seeing. But ultimately, I think voters really just want somebody who's going to fight for their priorities. This is another must-win state, Michigan, and I think Democrats have another real chance to hold on to the state.
It's interesting, McMorrow did not even give a reason for suspending her campaign. In fact, almost made it sound like she was launching one. Quote, "I'm not going anywhere. I hope you'll join me," unquote. What's that, Jamie? What do you think she does next?
I'm sorry, she had been trailing in the polls. I don't think she really broke out a single digit recently. And there's this important primary that's coming up tomorrow, and I'm assuming she made a calculated decision to just step aside.
What do you make of this, Lester? Does this fulfill the exact point that the president was making?
Well, perhaps. I mean, it kind of gives a little more energy to it. I think her dropping out helps El Sayed quite a bit. That's what my Michigan sources are telling me. El Sayed will have a tougher time in the general in all likelihood. So this is probably good news for Mike Rogers and good news for Republicans who are looking to keep a hold of at least the Senate in November. I mean, the Democrats have like there's I think the real story here is there's a real debate going on inside the Democratic Party about the future direction, about which way they're going to go. There is a very vocal and effective minority that wants to go to the far left. The leadership of the party wants to kind of keep to the moderate left, and they're losing that battle in race after race in these primaries. We're seeing something play out before us that we probably last saw during the Tea Party movement back in 2009 and 2010. So this is, I think, it's a very significant development for American politics.
This is really interesting. I'm not sure where we're going to go from here in the general, Jamie, but I'd love your thought on who is a more effective candidate to beat a Republican like Mike Rogers. Is it the establishment-backed Haley Stevens with the experience, the money, the backing of Chuck Schumer? Or is it the progressive Abdul El Sayed with the endorsements and the energy that you mentioned?
Well, first, let me say, I think it's a bit overblown to suggest that this is some type of Democratic civil war. Back in 2018, a young woman by the name of Alexandria Ocasio-Cortez defeated a 10-term incumbent who was the current Democratic caucus chair. And while there was some concerns originally about assimilation into the party, with the establishment of other progressive members of the caucus. Ultimately, she worked very closely with Pelosi and my former boss, Leader Hoyer, to pass some bipartisan legislation here. The Democratic Party is much more heterogeneous and can typically absorb a lot of various factions, unlike Republicans who saw the Tea Party wave come in and then the institutionalization of the Freedom Caucus, which led to the ouster of Speaker Kevin McCarthy and has caused a lot of trouble for Mike Johnson. So I think the Democrats have a better ability to kind of absorb some of these diverse perspectives in the party.
Just about 30 seconds left, Lester. Who would you rather run against as a Republican?
El Sayed, for sure. I think he's said some things that are pretty provocative, that are going to be hard to defend in a general election. I think Mike Rogers' campaign is actually pretty happy right now.
Fascinating. Lester Munson and Jamie Jackson will be back in our second hour. Kaylee Lyons is on the way into the studio as well, and we'll welcome our global television audience to the program. Stay with us. We'll get an update from Tyler Kendall in a conversation with Ivo Dalder as the president prepares to head to the NATO summit in Europe tonight. We'll spend some time with the former U.S. ambassador to NATO, talk about the agenda and what the deliverables should be. Whether the president gets that done, we'll find out in the next several days. Live from Washington, I'm Joe Matthew. This is Bloomberg Radio.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
The Trump accounts are live. Welcome to the Monday edition as the new investment vehicle for children launches into the markets with $800 million in new capital being invested into the markets today. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for joining us. Kaylee, it's a big day for the president.
Yeah.
He actually rang The opening bell, sort of, from the Oval Office this morning, and will end his day on the new Air Force One on the way to the NATO summit.
Yeah, the bell was rung in the Oval Office, a bell that apparently he wants to keep there, but it was a big deal. The heads of both the New York Stock Exchange and the NASDAQ were there in the room for this occasion. But you're right, that's how the president started his day. He will end it aboard the new Air Force One on its first international trip as he heads to Turkey and the NATO summit, where it is expected that defense spending among the NATO allies is going to be top of the agenda. So, too, will the war between Russia and Ukraine after the president this weekend spoke to leaders of both of those countries.
You wonder how this is all going to play out, because you know he's watching that World Cup game on the jet tonight, right?
Well,
he's going to be up all night, rolling into NATO meetings tomorrow. These could be actually very compelling sessions, though, Kaylee, with the prospect of a meeting with President Zelensky as well. It's been a horrible time in Ukraine with another massive bombardment from Russia last night. And, of course, the president who spoke to not only Zelensky but Vladimir Putin over the weekend.
Yeah, so we'll see if anything material is able to come from that meeting. But to your point on what the president may be viewing on the plane ride over, it may not be just briefs he is reading on the issues. He may be glued to the screen when the U.S. plays Belgium in tonight's match, which, of course, is going to be potentially very different in nature now that the U.S. is going to have its lead scorer back. As the president admitted today, he made a call to the head of FIFA and asked for a review of that red card play in the last match.
He called Johnny, red card reversal. Everyone's on the field tonight. He said it would have been a stain on the game if this had not been turned around.
Yeah, so there's a lot of opinions about this one, and we'll get into that a little later on this hour and get the take of our political panel as well. But we have to begin, as always, with a check on the markets, and to do so, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, and here's what's going on. We do have the Dow Jones Industrial Average. We'll call that little changed on the day. Was positive briefly just a couple of minutes ago, but right now it is holding in the red, down 8 points, drop there of under 0.1%. The S&P 500 index is gaining 0.7%, up 51 right now. Dow Industrials up 3 points right now. Dow back in the green. NASDAQ is up 321 points, up 1.2%, with the NASDAQ 100 index up 1.4%. We are seeing a rally in several tech powerhouses. The SOX, the Philadelphia Stock Exchange Semiconductor Index, surging now by 3.1%. The 10-year at 4.48%, with the 2-year 4.12%. Spot gold down $23 the ounce, drop there of 0.6%. Oil, West Texas Intermediate crude now down 0.5%, has been bouncing around today. WTI 68.34 a barrel. 2 super tankers hauling Saudi crude are now heading to the U.S. for the first time since February, a step in normalizing global energy flows after the reopening of the Strait of Hormuz. Right now, we do have the oil majors trading lower. ExxonMobil is down 0.3%. Chevron shares down 0.8%. ConocoPhillips lower by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, checking on the markets as we kick off the post-holiday trading week. Thank you so much. Obviously, is a positive one for equity markets today, and that means that any money already housed in now millions of Trump accounts across the country after the initial $1,000 in seed money provided by the Treasury for children that have been born since 2025. That money could be posing a little bit of a return today, though we'll see how long it goes. Of course, the U.S. Treasury argues that if that $1,000 in seed money stays in these accounts and the maximum annual contribution of $5,000 is contributed every year, these accounts, by the time a child turns 18, could grow to $271,000. That is the investment the administration says it is making in America's children, as we heard from the president as he rang the opening bell this morning in the Oval Office.
Between individual contributions and the seed funds, $800 million in new capital will be invested in the stock market for America's children this week. And I also think that we're going to be putting numbers in the budget which will be really spectacular, because it's really not costing us anything.
He did, in fact, ring the bell as it sat right on the Resolute desk. It wasn't an actual, I thought maybe, Kaylee, they'd have like a Diet Coke style button where he would press the button and it would start the trading, but he actually took a gong and, took it to the gong, something like that. He says he's going to take the bell with him, maybe into the ballroom. Either way, they're off and running, and this isn't the only thing the president is dealing with today. As we mentioned earlier, he'll be wheels up to Ankara later on this evening in the new Air Force One for this week's NATO summit. Helping us put this all together is Bloomberg Washington correspondent Tyler Kendall. Can we start with the accounts? This seems to be pretty good politics for a president, whether you're hearing from the left or the right. It's one of the most bipartisan issues he's ever gotten his hands around.
Widely bipartisan, Joe and Kaylee, and comes at a really critical time for this White House, as we know that the administration is contending with what has been headwinds around how Americans feel about the economy with the backdrop of the conflict in Iran. Now, as you both went through, this really also highlights the administration's policy pushes when it comes to working with the private sector. How many times did we hear President Trump highlight Michael Dell standing behind him? Also, that we got recently in the last week, this commitment from Micron, $250 million that will benefit children in Idaho. It is interesting to see how all of these companies have their own provisions for how the money will be used, but more than 50 of them so far, according to our tally, have pledged support, whether that's with employer matches or additional seed funding. And it was interesting to hear both the Treasury Secretary, but also President Trump use the word legacy. It is very clear that this is something under the One Big Beautiful Bill that we know the administration wants to tout. But in that clip there that you heard from the president, he seemed to indicate that maybe we'd ask Congress for additional funding to keep it going, which, of course, opens up some questions on exactly what's on the legislative agenda going forward.
Yeah, maybe that would work itself into Reconciliation 3.0, or be for a future presidential administration to try to extend, as obviously this only runs through 2028 in terms of the federal seed money. That is. Domestic politics aside, while this may be a win for the president, his focus is going to shift to foreign policy pretty quickly, like by tonight as he boards the plane for the NATO summit. Tyler, knowing he spent time over the weekend speaking with the presidents of both Ukraine and Russia, does that suggest that he's going to want to see or have that top his priority list at this summit?
So we had actually heard from the president back at the G7 summit, where he openly told reporters that if they're able to get the Iran situation under control, I believe was his wording, then perhaps there can be some renewed focus when it comes to Ukraine. We know certainly our European allies would like to start to draw more attention there, considering the talks at this point have all but stalled between Russia, Ukraine, and the U.S. Perhaps we could see a push to help jumpstart those talks. We also know that the Ukrainian president, in his now confirmed bilateral meeting with President Trump, is going to have some pretty specific asks when it comes to additional security assistance, including the potential for another Patriot missile battery, something that has been a relatively contentious issue here in Washington. As Joe mentioned at the top of the program, we saw this bombardment from Russia, which really exposed Ukraine's gaps in their air defense systems overnight.
Well, there's a lot more to talk about there, of course, on both of these fronts, Tyler, whether it's the accounts, whether it's NATO. The president coming off of this holiday weekend, is he going to be watching the game tonight on the plane? Because this is going to be a point of controversy that actually follows him. Belgium, incidentally, is paying 2%, not 5%. In its defense spending to NATO, and the president will surely be ready to call them out.
Yeah, I mean, everything is diplomacy at this point. Perhaps this is soccer diplomacy. We'll have to see where it goes. No doubt defense spending will be at the forefront of the conversation. It's going to highlight, really, and underscore everything that we're going to talk about in the next few days. You had the NATO Secretary General, Mark Rutte, just earlier today saying that he is demanding, that was the word, our allies to put forward some more concise plans when it comes to how they will boost defense spending. As you both know, 5% by 2035. That is the goal from this White House. Our analysts at Bloomberg Economics say the top 5 European economies are at 2.5%, but they caution a lot of countries are not on track to meet that higher, more lofty goal.
All right, Bloomberg's Washington correspondent Tyler Kendall, thank you so much. Of course, Joe and I spoke with the Secretary General just a few weeks ago after his Oval Office meeting with President Trump, and he told us that it's really about the defense industrial base. You can only invest the money and spend it so quickly because there's so much that needs to happen in terms of the ability to actually ramp up that portion of it. That said, it hasn't stopped the Secretary General and the President from demanding more of the members of NATO. The President, of course, repeatedly for months has been talking about other countries need to spend more, and that he was disappointed with them for not stepping up to help the United States in the Strait of Hormuz, specifically in the aftermath of the operations being launched in Iran. This is what the president said over the course of March and April about the alliance.
We're very disappointed with NATO because NATO has done absolutely nothing. They don't want to help us defend the strait, and they're the ones that need it. I'm very disappointed in NATO. We pay trillions of dollars for NATO, and they weren't there for us.
He feels that they weren't there for the United States. So how does that color his travels and the summit ahead this week? For more, we turn now to the former U.S. ambassador to NATO during the Obama administration. Ambassador Ivo Dodler is back with us on Bloomberg TV and radio. Ambassador, it's good to have you. As we consider what will come of this summit in Ankara, knowing that the president himself has suggested he's really only attending as a favor to Turkish President Erdogan, who he has a good relationship with, where would you set the bar? What is a good outcome for the alliance here, knowing how fragile the alliance with the United States seems to be in particular?
Well, to be frank, I think the bar is pretty low. Basically, that the meeting happens and that nothing extraordinary comes out of it. Much like the meeting a year ago when NATO agreed to this 5% target by 2035. There will be some review about how NATO countries are doing when it comes to spending. By the way, the United States doesn't spend 5% of GDP on defense. It's important to point that out. There are NATO countries who are spending more as a percentage of GDP on defense than the United States. That said, I think what everybody is hoping for is that it will be a quiet meeting, much like the G7 a few weeks ago. Perhaps some good news on the question of support for Ukraine, but no real fireworks. That is now where the bar is set. We're now no longer looking towards NATO or these summit meetings to fundamentally change the direction of the alliance. The best thing that can be hoped for is that the alliance lives another day.
Well, you are right. I think we're paying about 3.6%, if my figures are correct, Ambassador. What do you make of the post? There were several of them that the president made on Truth Social about NATO ahead of the summit. This one from late yesterday, he writes, ridiculous for the USA to continue along this one-sided path when the relationship is not reciprocal. They were not there for us. 3 exclamation points. Doesn't that say everything? How do you have a meeting after that? Why even go?
Well, I mean, as he said, he's going because President Erdogan, his good friend, asked him to. This is the same president who, of course, is putting his opposition in jail and putting them on trial for trumped-up reasons. I mean, clearly, the president doesn't really understand how NATO works. This isn't about whether the European countries should be helping the United States when it comes to Iran and war in which they were neither consulted nor were asked to participate until after the fact and after it took place. And it ignores all the other ways in which the European countries are bolstering American security. First and foremost, the war could not have happened with regard to Iran without the support of basing structures that exist in Europe, most of which were available for the war against Iran, for refueling of airplanes, and in many cases for launching bombers, strategic bombers, as they did from the UK. So the idea that NATO and Europeans didn't participate, quote, weren't there for us, just ignores a fundamental geographic reality. More importantly, our allies, of course, have been there for us. NATO has invoked in its entire 77-year history Article 5, the collective defense commitment, one time, which is when the United States was attacked by al-Qaeda terrorists on September 11, 2001. At that point, NATO not only invoked Article 5, it participated in military operations, including in Afghanistan, at great sacrifice in blood and treasure. More than 1,000 European allied countries' lives were lost in this war, which was not a war that the United States, that they wanted to fight or was even important for their national interest. It was what they did because of allies. And unfortunately, the president has fundamentally decided that what NATO is about is who pays how much, and secondly, whether they will do what the United States want them to do. As he said, all he cares for is loyalty. That's not the basis of an alliance. It's a shared interest in the security of the North Atlantic area. When it was threatened on September 11, the Europeans were there, and the hope that the Europeans now have is when it is threatened, as it is today, by Russia, the United States will be there.
Well, let's talk more about that, Ambassador. As Joe and I mentioned, we know that the president did speak with both Vladimir Putin and Volodymyr Zelensky over the weekend. There will be a bilateral meeting with Zelensky at the summit this week. When the president has repeatedly suggested that he does think both sides want to see a negotiated end to this war, is the time actually ripe for that? What would be different about the circumstances both Ukraine and Russia now find themselves in compared to when we've had head fakes on this previously?
Yeah, so the time is getting riper, so to say, because Russia is on its back foot. Its offensives on the ground in Ukraine have stalled. In fact, are starting to be reversed slowly, but nevertheless reversed. The cost that the Russian soldiers on the front line are undergoing is extraordinary. About 35,000, just remember, 35,000 dead or seriously wounded each and every month. And the replacement of new recruits is smaller than that. 97% of those people are killed or wounded by drones, no longer by direct fire from Ukrainian forces. And of course, Ukraine is now targeting Russian energy infrastructure, leading to fundamental problems at the pump. For the first time, Russia, which is a petroleum-producing country, is thinking about importing petroleum from India. And Ukraine has launched a major effort against Crimea, the area, the part that was the peninsula that was taken away from Ukraine by Russia back in 2014. So in some sense, yes, Ukraine is on the march. The Russians are feeling it in terms of lives. They're feeling it in terms of treasure. They're feeling it in terms of public opinion. This is a good time to move forward. Yeah. But it requires Vladimir Putin to understand that the best he can get is what he has now. And he has insisted he wants more. And that has been the problem all along.
Ambassador, I know we didn't bring you on to talk about this, but the Royal Belgian Football Association is using words like astonished. They're investigating all potential options to protect the fundamental principles of fair play in our sport, after apparently the president got the red card reversed here on Folarin Balogun. If this is true and he picked up the phone and managed to accomplish this, what's your reaction? Is this the new way that this is done?
Well, I mean, Donald Trump's not known as a man who plays by the rules, and we're now seeing that being translated into the World Cup, which is, after all, the biggest sporting event in the world. There's nothing like it. It unites people around the world to look at the game of all games, and that game is now seen as being rigged because the President of the United States personally intervened on behalf of the U.S. national team. It's shameful. I see that UEFA, the European Football Association, has also pointed out that this is crossing a red line that shouldn't have been crossed. So, but that's the world we now live in. The President of the United States.
He did confirm earlier that he made the phone call. Ivo Dalder, thank you for the time, Ambassador. It's great to see you. Alongside Kaylee Lyons, I'm Joe Matthew. We'll assemble our panel next on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Dow Industrials back in the green. The big story, though, the surge today in the stocks. The Philadelphia Stock Exchange Semiconductor Index up now by 3%. Techs are rallying. In fact, we've got gains in several tech powerhouses. That is lifting the rest of the market, with the S&P now higher by 53 points to 75.36, up 0.7%. The Dow up 48. Dow Industrials up 0.1%, while NASDAQ is up 306 for the NASDAQ Composite Index, a gain now of 1.2%. The stocks up by 3%, the VIX below 16, and the 10-year currently yielding 4.47%. The 2-year, 4.12%. Gold is down $24 the ounce, down 0.6%. West Texas Intermediate crude, 68.28 a barrel. WTI now lower by 0.6%. Bitcoin at 63,798. Bitcoin now up by 1.8%. Job cuts at Microsoft's Xbox. It's planning to eliminate 3,200 jobs, roughly 20% of its staff over the next year, all part of a massive reorganization to spur growth in the struggling gaming division. Microsoft shares lower today now by 1.3%. Recapping, stocks higher. S&P up 54, up 0.7. The stocks now higher by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Markets back open for trading after the long holiday weekend. Of course, here in Washington, we're still recovering from the 4th of July festivities, the semi-quincentennial, and all of the poor air quality that came in the aftermath of those celebrations. But the celebrations maybe will continue depending on the outcome of tonight's match between the U.S. and Belgium. Yes, I would imagine a lot of people will be staying up late for this one, just like they had to stay up late to watch the fireworks on Saturday night. And of course, the game may be influenced by the fact that the star forward for the U.S. men's national team, Valerian Balogun, is going to be playing. He was supposed to be suspended for this game, remember, because of the red card in the last match, and many people, fans of the U.S. national team, thought that the ref made a bad call. I understand this. I think refs make bad calls all the time. I yell frequently at my TV. The problem is I'm but a humble journalist. I have no power to influence the situation. Apparently, someone did have power to influence the situation, though, and that would be President Trump, who said today, confirmed that he did indeed call the head of FIFA, Gianni Infantino, and ask them to review that red card play.
So I saw the play, and I'm a person that loves sports and was a good athlete, and I understand sports really well. And that wasn't a foul. That wasn't even an infraction. That was two guys running full speed that happened to crash into each other. He didn't do anything wrong, and he's our best player or one of our best players, a very vital player, and he gave him a red card. But how do you penalize him for a game that hasn't been played yet? It's very unfair. You can't do that. So, yes, I asked for a review by FIFA. I spoke to a man who's highly respected, and by the way, whose level of respect has gone up tenfold. And he was good before this started, but, you know, he really pushed it in this country. I'm the one that got them to do it. It was not Biden. Biden was asleep. I got him to do it.
I got him to do it.
So any questions that existed this morning about whether the president was directly involved in this were put to rest immediately by the president himself and Senator Ted Cruz, who was there and made clear this is partly why the president had the FIFA trophy actually in the Oval Office for so long. Remarkable reporting today by the likes of the Wall Street Journal and Axios, the TikTok of the events that happened behind the scenes to unglue all of this. Howard Lutnick, the Commerce Secretary who led the delegation to the Bosnia game, was on the flight home when it all began. He read FIFA's rules, began mapping out how the U.S. might contest the call. Enter Andrew Giuliani, yes, Rudy Giuliani's son, who's the director of the White House task force on the World Cup. He started calling the lawyers and supporters to pressure FIFA, all setting up the president for this eventful phone call that he just described, knowing, of course, that he's good friends with Johnny, as he likes to call him. And so we wanted to get to this, at least the political aspects of it. But before we bring in our political panel, we want to get to the real sports here of the matter with Randall Williams, Bloomberg News Business of Sports reporter. He's with us from World Headquarters in New York. And Randall, I love that you're on the program. We're big fans of yours. I never thought we'd actually have a reason to meet. What do you think of all of this? What's going through your head, and how much of an international incident did the president just set up for tonight?
It's a firestorm. It's an absolute firestorm. And what I would tell you is that all of the lawyers on these planes that contacted FIFA that were trying to figure out an appeal for Flo Balogun, they were doing all of their work, but there was one superpowered person who could press their thumb on this scale, and it was President Trump. And there was a lot of murkiness around what happened, who called and what was said. But President Trump said it himself. He made a call and asked them to review. But if the lawyers were already reviewing things, and FIFA rules at the time of all of our understanding before yesterday was that Flo was to sit out today's match. And so President Trump asked them to review, and now Flo is playing.
Wow.
Well, so is there precedent for this, Randall, in any previous World Cup? Just how rare is it for this to happen?
And not exactly at the knockout stage. So if you recall, months ago, Cristiano Ronaldo received a red card. He, sat out one match, and then he was supposed to sit out 2 matches of the qualifying rounds. FIFA waived that, and so Ronaldo was allowed to play. Now, the issue with that, in effect, is that Ronaldo said this is going to be his last World Cup. If this is truly his last World Cup, and then how is he going to serve those 2 suspended games? Flo's suspension, similarly, has been, pushed off. So when is he going to serve that suspension, if he is going to at all? It's one of those things where the rules that FIFA has about appeals is the issue here. The larger issue, however, is that President Trump pressed his thumb on the scale, asked them to review it, and FIFA, they reviewed it and found a loophole that allows Flo to play. So what's stopping the UK, who had a player go off yesterday with a red card as well, from calling FIFA and saying, look, we think similarly. Why can't our guy play?
Yeah, well, I don't think Keir Starmer is going to get that same phone call.
I don't think so either.
That Donald Trump had. The Royal Belgian Football Association, Randall, says it's astonished, investigating all potential options. There'll be some sort of appeal process, or is this as good as done?
It's as good as done. There is no FIFA, they made a ruling, and the rules were the rules, in saying that, Flo was not to play against Belgium. Then they went back against that rule. I think we would all be astonished if Flo was not going to play today. I expect him to. I think the world should expect him to. But the global, soccer ecosystem is at a loss for words. They have never seen anything like this, and it just begs the question as to what the rules are and who can press for what.
Indeed, it does. Just quickly, Randall, 30 seconds. You saw the play. Did it deserve a red card, in your opinion?
By the rules, yes. Now, I think the rules are bad. I think that if it's incidental contact, that it shouldn't be, you shouldn't have to sit out. Now, do I think that President Trump should have pressed his thumb on the scale? Absolutely not.
All right, that's the take from Randall Williams, Bloomberg Business of Sports reporter. Really appreciate you joining us live from World Headquarters in New York. And let's get the take of our political panel as well as we assemble Lester Munson, a Republican strategist and principal of the international practice at BGR Group, alongside Jamie Jackson, Democratic strategist, former senior counsel to House Majority Leader Steny Hoyer, and founder of Vantage Global Media. Welcome to you both. Lester, I got to come to you on this one. Is the president using his power here for good, or does this raise serious concerns as these matches move forward?
Kaylee, this may be the most popular thing he's done all year. There is no rule against calling the head of FIFA. I think the head of FIFA likes hearing from heads of state. In fact, Keir Starmer, who was mentioned earlier, called about the timing of England's match yesterday. So this is something FIFA does. We're the home team. I know something about sports too. The home team is supposed to, get a little bit of an edge here. Good for President Trump for calling. The penalty seemed way out of bounds. And don't you want to have the best players play against the best players? I think everybody wins here. I really don't understand why this is a problem.
What do you think about this, Jamie? Are you glad your president picked up the phone and took action here?
I agree with Les. This definitely unified American soccer fans. But ultimately, I think the president should get out of this one. Regardless of what happens, whether the U.S. male team wins, it's always going to be a stigma as to whether or not there was a fairness issue with regard to this call. And so personally, I think they should have played with one less man and moved forward, because I think the fact also that the game is happening in North America, it makes this look even more untoward when you have the president putting his finger on the scale. So I think he should have stayed out of this one. But to Les's point, I definitely think this may have unified athletes and soccer fans.
Well, and perhaps unified the Belgians against the U.S., at least for this. Oh, we just got a headline from FIFA, a statement. FIFA has rejected Belgium's appeal on Balogun's red card. So we were just talking about this with Randall, that there was potentially an appeal process, but apparently that appeal will not go forward, and he will be playing this evening as planned. So that's incredibly timely news. But let's talk about the Belgians or the Europeans, as the European Football Association. Lester obviously has taken issue with this, knowing that the president is about to head not to Brussels, where NATO is headquartered, but to the NATO summit in Ankara. Is this going to create any issues diplomatically?
Yeah, which international organization is he disrupting more? Is it NATO or is it FIFA? I think that's the big question of the week. A lot of the things President Trump has done with respect to NATO are positive. He's causing member states to increase their defense budgets and related budgets for intelligence and things like that. That's a good thing. Some of the rhetoric's over the top, and clearly our allies are not thrilled with what happened over Greenland last year. So there are some issues here to be sorted out. President Trump remains the center of attention now of the soccer world and NATO world. I think he's exactly where he wants to be. We'll see how this kind of plays out with American voters come November. But I think you do have to give President Trump some credit here for being the man of the week, for sure.
How quickly we forget Greenland. Jamie, will there be takeaways from this NATO summit, or is the whole point not to make news?
This may be another U.S.-China summit where there's a lot of big rhetoric, but unfortunately not a lot of tangible takeaways. I mean, it's my hope that the president goes in and reaffirms the U.S. commitment to this longstanding partnership. I mean, even the own Secretary of State, Marco Rubio, put forward legislation to block any U.S. president from leaving NATO without congressional approval. And so the president may be alone with regard to tension with NATO, but I'm hoping that he's there to really get some serious business done. Talks with Ukraine and Russia need to continue. There needs to be more security cooperation dialogue around normalizing shipping in the Strait of Hormuz. And the president also has kind of some of these one-off tensions, what we saw with the Prime Minister of Italy saying that she needs a restraining order. So I hope the president can put some of his personal issues aside and really get some business done while he's over there in Turkey.
All right, Jamie, thanks for a great panel, both of you. Jamie Jackson, Vantage Global Media, Lester Munson, BGR Group, and Kaylee, we're hearing again from FIFA. Apparently, the Royal Belgian Football Association was not party to proceedings and has no standing to appeal. I think we are done here. The game starts at 8 o'clock.
Yep, on procedural grounds, FIFA rejects the appeal, and Balogun will be playing tonight against Belgium. Belgium is a match we're all going to watch. Meantime, you should keep watching us here on Bloomberg TV and listening on radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are seeing an AI trade revival today with the Dow, the S&P, NASDAQ, all in the green. S&P off session highs, but still advancing 46 points now to 75.30. That is a gain of 0.6%. Dow Industrials up 18, little changed, up under 0.1%. Tech, though, is what is driving equities today with the NASDAQ Composite Index up 1%. The NASDAQ 100 Index doing a little bit better, up 1.2%. But the stocks, the Philadelphia Stock Exchange's Semiconductor Index, is up now by 2.3%. The VIX below 16, the 10-year 4.48%, but the 2-year 4.12%. Gold is down 0.4%. Spot gold 41.58 the ounce, and West Texas Intermediate crude oil down 0.3%. WTI now at 68.45 a barrel. Bitcoin is up 1.6%. Bitcoin 63,700. Meanwhile, Michael Saylor's strategy has sold 216 million of Bitcoin last week, marking the first major step in the financing overhaul that the company unveiled in recent days. Shares of Strategy, formerly known as MicroStrategy, up now by 1.3%. Recapping, Dow just turning negative, little change, down a point. S&P up 0.6%. NASDAQ higher now by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Joe and Kaylee. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. As Charlie mentioned, the Dow essentially flat on the day, as we're seeing gains in the other benchmarks. Tech stocks leading the way. The NASDAQ 100 up more than 1%. Semiconductors, the SOX index up more than 2%. I thought we were rotating away from technology into the cyclicals, or at least that was the case. Certainly it's not the case as trading week gets going this week, but this does seem to be a very volatile story that we are dealing with as the market contends with artificial intelligence and ways to play it in terms of equity exposure. And one voice weighing in on that, Joe, recently, this morning, in fact, on Bloomberg Surveillance, is Mike Wilson of Morgan Stanley, who has a 8,000 target on the S&P 500 for year-end, mind you. We got about, 470 points to go until we reach there. But he has argued that this market will be resilient on the basis of fundamentals on actual corporate earnings, and also suggests that, yes, while you may see some money leaving semiconductors, that there could be a correction due there. The focus is going to shift toward the hyperscalers, which to this point have been lagging.
So how do we qualify the rotation? Now we're rotating within technology.
Right.
It's not that we're going back to value or something, although the broadening is the other cliche we hear so much about, and that has been happening with the equal weight indexes hitting all-time highs. So we're turning away from chips, going back to Mag 7. We're kind of splitting hairs at this point within the tech sector, or are we? Wilson says there's more where that came from, too, when it comes to biotech, consumer discretionary. But all of this noise and all of the questions have a lot to do with changes at the Fed, is part of his point that he was making earlier today on Bloomberg TV. Let's listen.
With the new chair probably not giving as much guidance, he's going to allow the market to kind of figure it out on its own and have these different views. We're in that adjustment period now. And I think that's one of the reasons why the market's been a little choppy or even correcting in the last month or so, is we're getting used to this new regime, which is going to be higher volatility and potentially the bond market. But over time, I think what's going to end up happening is the market's going to settle down. It's actually more estimates, a wider dispersion of estimates, actually leads to lower volatility in the pricing over time, but we're in that adjustment period. So we think rates are lower ultimately, particularly at the back end. And oh, by the way, we've talked about this on the show many times. New Treasury Secretary, new Fed chair, this kind of new Fed Treasury accord to really anchor the back end. That's what they're focused on. You got to get the back end down, or at least anchored, because you have so much debt that you have to basically finance.
Do you think in the meantime we're confusing a reduction in guidance with an increase in hawkishness?
Yes.
Just in the meantime?
Yeah, I think that's right. And the market is pricing that now. So that's the good news, is that we've already had that adjustment. And that adjustment started 4 months ago, right? This is why precious metals have traded really poorly. The day that Warsh was announced as a nominee, the gold market peaked. And that was a sign the dollar has been stronger. So once again, the market has really gotten ahead of this.
So rates have reset. We've come down from around 4.2% to 4.1. There's a belief this morning, at least, we've removed the urgency to hike as soon as July. So we can put that story to bed. Crude's decline, massive reset in crude from triple digits down to the 60s on WTIs. Does that open the door within the equity market? And let's talk about the stock market exclusively. Does that open the door to the broadening trade again?
Yeah, that's our call, basically, is that was happening at the beginning of the year. Then we had Venezuela and then Iran. By the way, the market priced Iran before the invasion even happened, or the attacks happened, because once again, it was pretty well signaled. And so that's when the broadening trade stopped. The broadening trade literally stopped the day that the attacks happened, and we had the big spike in oil, and then the pricing of the Fed to hike rates. Since, I say mid-May, which is when we reiterated the broadening call, we had a different view than most. We thought oil prices would come down. And that has allowed now Fed pricing to sort of stabilize, and that has allowed the broadening trade to reignite.
The chief U.S. equity strategist at Morgan Stanley, Mike Wilson. As we said, when Mike Wilson speaks, the market tends to listen. And Kaylee, it's interesting to watch. This won't all manifest itself today with what he's saying, of course. But we're seeing traders turn away from pharmaceuticals that were very much in favor last week. Financials are mixed, and sure enough, we are seeing the hyperscalers snap to attention in some cases. Amazon's got a bid, so does Alphabet, and sure enough, we're seeing some weakness in the chips. So we're certainly witnessing this rotation. Whether it sticks, I guess, is another question.
Yeah, as the story on Monday feels very differently than the story when we were ending this week. We have seen a lot of volatility in these markets, certainly, even if the bias does seem to be mostly in the upward direction. And this is something we hear frequently about from President Trump, who continually, almost every time he speaks, touts the gains we've seen in the equity markets, and when facing questions around his own financial dealings. Remember, 21,000 trades that those who manage his money on his behalf that he says he doesn't directly communicate with, 21,000 trades made in 2025. And when he was pressed about it, he just suggested, look, everybody is riding this tide.
He
that
said,
it's not
thank
just
you
him
very much, President Trump.
Money. Yeah, exactly. How's your 401k doing? A refrain we often hear.
That's
Although now
correct.
It's not just 401ks either. It's potentially Trump accounts too.
That's right, which is why the president was ringing the opening bell, or simulated ringing the opening bell from the Oval Office this morning. And that's going to be hundreds of millions of dollars invested in this market, something that we wanted to talk to Joe Lavorgna about. We're going to connect with him in just a moment to get a sense of what that means, where these investments might go, and how the idea of growing wealthy slowly might appeal to a new generation. It's interesting. We've got a couple of important stops on the road here tonight as well. We're watching shares of SpaceX. After the bell, SpaceX will be added to the NASDAQ 100, and that's going to force some institutional, well, I guess, forced buying that could give this stock another leg up. I guess the question, though, is since everyone knew this was coming, was that already factored into those early trades?
Well, it potentially was, as we saw that monster debut first few days of trading, even if the stock, no pun intended, has come a bit more back down to earth. But of course, it's not just a matter of what joining the indices means for SpaceX's stock. It's also what SpaceX stock joining big benchmarks like this will mean for the overall market, because this company is one of the largest that is publicly traded, and it will have the potential to drag everyone else up or down with it, in theory, of course, depending on the situation. Mind you, the president was asked about SpaceX potentially making its own contributions to Trump accounts in the Oval Office, and I guess maybe things aren't finalized with Elon Musk on that.
That is something that's being discussed, as we understand. And when you think about the point that Mike Wilson was making too, toward the end of this week, we could have some additional volatility when SK Hynix goes forth with a U.S. listing. This is one of the three memory makers that we spend so much time talking about, traded in Korea. And those are ADRs. The fact that it's going to list here, it's not moving its headquarters or anything, but the fact that it's going to list here could be another reason to challenge the money flows into some of these other companies. Are they going to use Micron, for instance, to harvest gains and buy SK? These are the kind of questions that the strategists are going to be asking here. The questions we have, though, more broadly about the markets, what it means for the Trump accounts, and how they might both meet, we now pose to Joe Lavorgna, the chief economist at SMBC Americas, has spent some time, of course, as the president's chief economic advisor in the first term and was former counselor to Secretary Scott Bessent at the Treasury Department in this term before going back out into the wild. Joe, it's great to see you. I'm sure that this is an idea that you're in favor of, and most Democrats and Republicans seem to be meeting in the middle on this one. I'm curious if there's an actual impact on the market, though. When you show up with hundreds of millions of dollars to invest, will we see it in the indexes?
In the past week, Joe, thank you for having me on again. In the past week, about 800 million did go into the market. The market's so big that you're looking at trillions and trillions of dollars of market cap. I think the bigger issue, Joe, is the fact that it gives young boys and girls that are just newly born, and of course those that don't even qualify for the $1,000, but then could get the $5,000 contribution up to age 18. The point is they become young capitalists. They learn the powers of compound interest, and they become owners in the American system. I think that's the big part. I'm not really sure it's going to lift the market on its own. The earnings have been excellent, and I wish, if I was a political pundit, I'd be telling my friends and former colleagues, look, talk about the Trump accounts as much as you can, because I could tell you it was hugely bipartisan. People on both sides of the aisle really liked it, and I think it's a great program that we'll look back decades from now and say, wow, this was a great way for us to to democratize the stock market, if you will.
Well, so is this going to be, Joe, the lasting long-term positive economic impact from last year's One Big Beautiful Bill, knowing that a lot of the, say, larger tax refunds that came as a result of that legislation were then eroded by higher gas prices that we'd seen earlier this year, and perhaps didn't have the kind of stimulative juice you may have thought for that reason?
Well, the thing is, on the One Big Beautiful Bill, to me, the big part of it was the CapEx, permanency of the CapEx, and then also the factories. You could now you could fully expense. So we're having an economic boom. It's not the disinflationary boom I thought it was, in part because of what happened in the Middle East, but it's a boom with some pricing power, which means the Fed will be hiking rates. Of course, as you know, the AI spend is just remarkable, and that's leading to these huge earnings. That huge earnings is powering the stock market, even though the performance of the equity market has been quite incredible. The earnings have been there, so the economy is still really healthy. I like to see inflation lower. That to me is a problem, but the general contours of the economy are in good shape, and the One Big Beautiful Bill is a large part of it.
Where's your head on the AI spend right now, Joe? It's been a manic market. It's a bubble one day. We're just barely starting. We're in the second inning the next day. There's a catch-up trade. There's a FOMO trade. There's a YOLO trade. But the market is trying to figure out if we're due for a correction, if we've maybe gotten a little over our skis here. President of the United States just today was talking about in the Oval Office how quickly data centers can go up, for instance, in this country because of the red tape that he has cut. And he said it's the only reason that we are beating and will beat China in the AI race. What does that mean for the investor?
Right now, for the investor, Joe, it's an arms race. And at some point, clearly the spending will slow. But unlike the internet boom back in the late 90s, when there weren't a lot of earnings behind those companies, this time around, there is tremendous amount of earnings. And having been in the markets for a while and seeing what the internet could do, or the promised internet, it was pretty remarkable. But the AI and what these technologies can do and what I'm using them for are truly stunning. So to me, the fundamentals match the hype. Will it slow at some point? Absolutely. But I don't think it's going to slow yet. Historically, the equity market does not peak in the summer months, or doesn't hit its high typically in the summer months. It's going to have some room to run. If the Fed hikes rates, then maybe we'll have a correction, but that does not mean a bear market or a recession or anything terrible like that.
If the Fed hikes rates, Joe, and you told us last time you joined us that you did think that maybe in the cards for this year, that certainly rate cuts were not going to be something the Fed would be able to pursue. In the aftermath of Thursday's jobs report, are you feeling as confident around the hike idea?
Yes, I do. I mean, Kevin Warsh was clear that they're not going to look at one data point. They're going to look at trends. Unfortunately, the inflation trends aren't great at the moment. But even in July, I don't expect the Fed to hike in July. Bloomberg has the probabilities at about 25%. What's interesting, and what I'm sure Kevin will tell the president, is that if he does raise rates, he may actually get lower long-term rates in response to higher Fed rates. And we know that because when the market was selling off this spring, break-even rates were rising and real rates were rising. But recently, when the market started to come around to view the Fed's going to hike rates, you know what happened to break-even rates? They've come down. So if the Fed hikes and keeps credibility, those longer rates, and that's what the president and what homeowners and business care most about, they may actually fall.
All right, we'll leave it on that note. Joe Livornia, of course, former official at the Treasury Department in the second Trump term, now chief economist at SMB Nego Americas. Thank you so much for joining us on this early edition of Balance of Power. Of course, we'll be back for more on the late edition. We'll just bring us closer to the start of the match between the U.S. and Belgium. Just got to bring it around to this story. Yes, the president called FIFA, and yes, the red card is overturned. It will not be appealed.
That's true. We'll be watching at 8 o'clock tonight. I'm guessing the president will as well from Air Force One. This is...
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. This is Bloomberg Business Week Daily. It is another Monday. It's a Monday in July. It's raining in New York, but we've got sunshine with us.
Exactly.
In the way of Emily Griffeo.
Thank you.
So nice to have you.
I wore yellow for the sun. Bring a little bit of that positive energy into this Monday after holiday weekend and a rainy one in New York at that.
It's pretty gloomy out there. Not so gloomy, I feel like, though, when it comes to the trade today, although we're definitely off our best levels of the session. But once again, Emily, it feels like tech names in particular, semiconductors are up about, 2.3%. They're back in favor.
Yeah, snapping a two-day losing streak here, at least set to snap that. The NASDAQ 100 up about 1%, but S&P 500 also in the green. Even small caps are in positive territory today.
I heard you say earlier, I think it was on Surveillance with Tom and Paul, that is it SpaceX that goes into the NASDAQ 100 tonight?
Yes.
Okay.
That's coming later today.
That's at play. We're going to talk a lot about semiconductors this hour, too, because you have SK Hynix. They're kicking off their $28 billion U.S. listing. So we're thinking a lot about memory chips. It also, I feel like, Emily, plays to the AI narrative. It was all about NVIDIA for such a long time, and now we're looking at all the memory names. And so that narrative, that invest, that spend kind of continues to evolve.
And of course, the macro is still very important here, Carol. We're going to talk ahead this hour about the latest economic and business commentary from the Fed regional banks, and a lot of comments coming out of D.C. from global leaders at the IMF annual spring meeting.
Yeah, we're going to get into that. And I also thought there was an interesting story in the Bloomberg. It definitely caught our attention this morning on why President Trump's war, we're talking about the U.S. war in Iran, why that means higher global interest rates. We're going to see that for years to come. So we've got that. And then kind of I feel like this rolls into it, and that is oil prices, which has been one of the big concerns. We've seen higher oil prices, Emily, right, in terms of this war. They've come down a lot since mid-May. But we're going to get into Saudi slashed in its main oil prices. Saudi Aramco, right? This massive company, I remember the listing years ago. We couldn't wait. It was just anything and everything that people could talk about, and the really role of Saudi Arabia and this company in particular globally. But it feels like it's a different era.
It's just been incredible to watch the path of oil prices over the last couple months. It's been up, it's been down, and now, as you said, we are back to levels that we haven't seen in several months here.
Dare I say they're sliding? Okay, it's really lame. Okay, let's get to it, though. Let's get a look at the trade on this Monday. With us, of course, is Charlie Pellet. Charlie, take it away.
All right, thank you very much, Carol and Emily. We have got the Dow, the S&P, NASDAQ, as you both mentioned, solidly in the green right now. We've got tech giants driving today's stock gains, specifically semiconductors. Yes, NASDAQ up by 1%. The NASDAQ 100 index up 1.2%. But the big story, what's going on with the SOX? It is up now by 2.6%. The SOX, of course, the Philadelphia Stock Exchange's semiconductor index. S&P keeping it all in context, up by 51 points, up 0.7%. With the Dow up 42, Dow Industrials up 0.1%. Little change there. NASDAQ up by 1%. All of this with the VIX trading below 16, a 10-year at 4.48%, with a 2-year 4.12%. Gold is down 0.4%, 41.58 the ounce, and West Texas Intermediate crude back in the red. WTI falling to 68.52 a barrel, a drop there of 0.2%. Two super tankers hauling Saudi crude are heading to the U.S. for the first time since February. It is a step in normalizing global energy flows after the reopening of the Strait of Hormuz. Oil majors, they are trading lower. ExxonMobil, little change now, down under 0.1%. Chevron is down 0.5%, and ConocoPhillips lower now by 0.7%. Recapping, S&P up 0.7, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. I know you mentioned an IMF meeting. You apparently were looking at something old. I just want to clarity that there's
no IMF meeting.
It's a Monday in July after a long holiday weekend, and it's been hot, and now it's rainy. So just be patient with us today. And I got something to add to it, to maybe add to your doom and gloom, because President Donald Trump's war against Iran may be over. We know that. We continue to see movements towards things calming down. Things have calmed down, let's be fair. But the repercussions for global monetary policy are here to stay, and this is certainly something to keep in mind. Let's not forget, Emily, we've got the Fed minutes from the most recent FOMC meeting, the first one overseen by Kevin Warsh. That happens on Wednesday.
Right, a little dated, but like you said, the first with Warsh, so we'll get maybe more insight into this new era, this post-Powell era of the Fed, but an era in which there is supposedly going to be less forward guidance from the Fed in the traditional sense that we're used to.
So do we get anything on inflation and kind of the impact of the war? So let's get to it, because our economics team really writing about this war's impact, certainly on global monetary policy. Let's get to it. In our Bloomberg News Washington, D.C. bureau, with us is Bloomberg Economics Chief Economist Tom Orlik. Hey, Tom, good to have you here with Emily and me. Happy Monday. We're all trying to get back into business. Tell us about the work that the Bloomberg Economics team did specifically, and why the world will continue to feel the repercussions of the U.S.'s war with Iran, President Trump's war with Iran, to be fair, and how that plays out in terms of monetary policy.
Thanks, Carol. Great to be here. So, in normal times, if there's an oil price move, central banks will try to look through it. Oil prices go up, oil prices go down. Generally, it's just a one-off. Generally, central banks can't do anything about it, so they tend to try and focus more on underlying dynamics. This time round, though, that's not really been the case for a couple of reasons. First, the oil price shock from President Trump's war in Iran has been really, really big. Prices were about $65 a barrel before the war started. At their peak, they rose close to $120 a barrel. So really big move in oil prices. And then, of course, we are still kind of not yet fully recovered from that post-pandemic inflation shock. Prices never really got back to central banks' 2% target following the COVID pandemic. And what that means is that this time around, central banks don't really have the luxury of looking through the oil price shock. So what we saw was, when the war started, rhetoric from the Fed, the ECB, the Bank of England, and other central banks became noticeably more hawkish. And even as we've had that welcome news that we have a ceasefire, that oil is flowing through the Strait of Hormuz again, even though we now see oil coming back towards $70 a barrel, well, that hawkish rhetoric hasn't really gone away. So at Bloomberg Economics, our latest forecasts suggest actually we're looking at a higher profile for central bank rates heading into the end of the year and into 2027.
Yeah, Tom, why does Bloomberg Economics disagree with some of the market pricing, not in all the countries, but Canada, ECB? It looks like you guys are forecasting more hikes than what markets are pricing in. Explain the difference, that divergence here.
So, I mean, if there weren't a range of views, Emily, we wouldn't have a market. So
of course.
We're delighted to find ourselves having a difference of opinion with some of the other really smart economists in the market. If we focus in on the European Central Bank, I do think there's a genuine uncertainty here. The ECB has hiked once. They've signaled that there's a chance that they're going to go again. But really, I think that trajectory still hinges a lot on how we see the Iran war playing out. If the ceasefire holds, if we see oil prices coming back to $65 a barrel, or even perhaps lower as we get back to that global oil oversupply story, I wouldn't be surprised if we saw expectations for that second ECB hike dropping out of the markets.
Well, and to be fair, just got about 30 seconds left. We're going to talk with Ellen Wald, who wrote a book about Saudi Aramco about 8 years ago. It is interesting to see what that institution has done in terms of oil prices even today, in terms of cutting them. So it does feel like the impact might be diminishing somewhat, Tom. And if it does, that kind of maybe makes you guys think differently, perhaps, going forward, just quickly.
So I think Saudi are certainly one of the producers that can operate really, really low oil prices. So interesting to see that dynamic right now. I think the other thing to keep in mind is that even as we hope for the best in the Middle East, there are still some pretty significant differences between Washington, D.C., Tehran, and of course the interests of Prime Minister Netanyahu in Israel. And what that means is that whilst the trajectory for oil prices right now is good for inflation, good for central banks, I think it's far from guaranteed we're going to stay on that trajectory in the weeks and months ahead.
I think that's super fair. I mean, considering the ups and downs, the 2 steps forward, 2 steps back that we've seen, and we certainly know that Iran knows it has a very powerful tool when it comes to shutting down the Strait of Hormuz. Good stuff, as always. Tom, glad you could jump on with us. That is, of course, Bloomberg Economics Chief Economist Tom Orlick there in our D.C. bureau. We think about things that move markets, global rates, global inflation, no doubt about it. So, too, is the recent run-up and focus that we've seen on chip stocks, and that's where we kind of want to go right now. The stocks has been on a tear this, as you know, but there's been, I feel like, the narrative changing a little bit as the focus goes from the likes of something like NVIDIA to more of those memory names.
Yeah, memory becoming a huge trade right now. And with the SK Hynix U.S. listing later this week, it's just bringing that trade further into momentum here, Carol. We have 2 great reads on the group today. As you said, SK Hynix debuting a U.S. listing on Friday, Samsung reporting later today.
Yeah, so some good stuff. The first person that we thought of that we wanted to talk about with this is Ed Ludlow, who came to town because of this massive listing. He is here, of course, he's host of Bloomberg Tech, Monday through Friday at 11 a.m. on Bloomberg TV. Hi.
Hi.
I mean, this is, first of all, size and scope. This is a big deal.
Yeah, it's a big deal for like lots of reasons. One, it's the biggest U.S. listing of a foreign entity ever, like, you know, $28 billion deal. But like the story is a lot more nuanced than that. It's like the AI investor knows that memory is important now. They've come to understand that there aren't enough high bandwidth memory chips. Those go into the data centers embedded around the outside of the GPU. And SK Hynix has like 57% share in that market. But from a sort of valuations perspective, they're kind of seen as the like discount name to Micron and Samsung. And so they just want a piece of that like US investor story. If the US investor loves AI so much, then SK Hynix needs to be here. It's kind of as simple as that.
And explain kind of the mechanics of, you know, the significance of what a U.S. listing means, because investors can already buy this company in other countries, of course. Now, U.S. investors will get access through ADRs later this week. How much bigger does the company get because of this?
Well, realistically, it represents proportionately, the ADRs represent a very small proportion of the Korean listed common shares. So while it's big, you know, in terms of the proceeds raised, and they'll use that cash for really interesting reasons, it is accounting for what is basically a lack of liquidity in the Korean market and availability there, but also like maybe just testing the waters a little bit.
Yeah.
You know, giving them something but not everything. SK, it's kind of an interesting market because high bandwidth memory is just DRAM, which is pretty standard memory layered on top of each other. And what's happened is we've come apparently by surprise to a world where we don't have enough. It's just that SK would argue it kind of pioneered the technology a bit. And so in the first instance, it's been able to work with NVIDIA in a greater way than Samsung or Micron have, and is able to say with pride, like, our technology is kind of what's driven this to this point.
Right.
The stock in Korea has not reflected that kind of leadership position.
I get where they're coming from. I have to say, Ed, though, it makes me wonder, is it a sign of a top in just everything that's going on here, or is it just the reality and demand and need for memory?
So, interesting and academic debate. You know, one of the rationales for SK doing this is not just to raise proceeds to grow their capacity. SK feels that they trade at a discount, a valuation discount to Micron and Samsung. To answer your question, the difficulty is that right now we've seen a huge run up in memory stocks because the thing they sell, supply is tight. But on a sort of valuation perspective, they trade very reasonably,
right?
Relative to historic norms and the rest of the technology sector. And so the question is, well, do they continue running up in that way? Does investor enthusiasm for memory names keep going? Well, if you just do it based on fundamentals, you know, forward 12-month earnings, then yeah, there's every argument that they could.
Yeah, I'm taking a look at the Round Hill Memory ETF. The ticker is DRAM, D-R-A-M, 22 billion in assets. Oh, did I say it wrong?
So about
DRAM.
7 years ago, I said DRAM in the San Francisco
Well, you might
newsroom.
have as a dram of scotch or
No,
something.
DRAM. And also,
DRAM.
like at that time, like shout out Bloomberg's Mark Gurman and Ian King. This is true story. I'll find the tape and post it on socials. I said it at the newsroom, Cam DRAM, and their entire row stood up and went, DRAM, while I was live on TV. So
That's
yeah.
Bloomberg in a nutshell.
Yeah, it is. Yeah.
We love you, but we want to make sure you have it right.
Keep going. I didn't mean to interrupt you. I'm sorry.
No, thank you. I mean, this has just been guzzling cash. Over the last couple months, it's 22 billion is huge for an ETF, and I think
In terms
really
of flows, you mean people have been going into it? Yeah.
Yes, and the assets now at 22 billion, just a signal that retail investors want to get in on this trade. It's not showing any signs of slowing down, at least just yet.
Yeah, so historically, memory chips have been cyclical. They've been boom and bust. Memory has found a home in consumer electronics, your computer, your smartphone, your video games console. And when consumer demand tapers off for those consumer electronics, so does the pricing and demand for memory. This time it appears so far to be different. It's kind of a straight line up because they keep telling us that demand outpaces supply and that situation continues over a multi-year horizon.
I love that you went there, and I'm sure you've had conversations with Ian King out there on the West Coast.
Yeah.
Like this whole idea of is it different this time, or is it just, again, we're seeing semiconductors, which we know have these cycles. I know I say this over and over again, but there is that incredible demand, and then there's the build out, and then there's a glut, and then you see these names come down. I mean, 3 years ago, I think Ian keeps reminding us, memory chips were in the dumps.
Yeah, so the interesting thing about DRAM is it's almost like a commodity. It has a spot price that one can track. You can do it through the Bloomberg or just on any available public data. But in the real world, the tension is in Micron, SK Hynix, and Samsung being convinced to fundamentally alter the footprint of their production, build chip fabs for memory, which are billions and millions of dollars and take time. What happens if they do that and in the end it is cyclical? And they've done all this investment for what reason? Now, Jensen Huang, the NVIDIA CEO, would argue, well, I told the memory chip makers 5 years ago that this would happen. And it's a case of I told you so. And so if he is to be believed, as he in other parts of the AI market, he's right, then they should have already done the expansion.
I'm glad you brought up NVIDIA because it was on, I was reading in this morning, and it says, NVIDIA said, our roadmap is intact. That was a quote after a report on a server delay jolted tech shares. That was overnight in Asia. Where is NVIDIA in all of this, Ed?
Yeah, so really structurally important. NVIDIA-based architectures for AI, for training and running AI, use GPUs. GPU-based servers use DRAM, high bandwidth memory. So for one GPU, there's a corresponding number of HBM chips, typically 8 per GPU. That's not the only technological design. So one reason Cerebras, for example, has found some momentum is it doesn't use high bandwidth memory at all. It's able to argue that it's insulated from the tightness in that market because there's no HBM at all in their server. So NVIDIA would say, like, okay, it's an issue insofar as when supply is tight, the pricing of HBM memory is high, but the pricing of NVIDIA chips is also very high. They have pricing power is the point.
All right, listen, you're going to stick around because we've got an interesting guest coming up. Ed, of course, is the host of Bloomberg Tech. He's going to stay with us because we're going to get into why is everyone, though, seemingly starting to hate on some of the chip sectors and pull back. We've had a couple of guests that were on air. You'll hear from them about kind of saying the focus now is really on hyperscalers. So we're going to get into that. It all has to do with the changing narrative around AI. We've got a good guest. Ed's going to stay with us. We're going to continue this conversation. Emily and I are back in just a moment.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We do have the S&P 500 index trading at the best level of the session right now. The S&P is at 7542, gaining 59 points, up by about 0.8%. The Dow solidly in the green once again, up by 0.1%, while NASDAQ is advancing 1.2%. The NASDAQ 100 index doing a little bit better, up now by 1.4%. And the Russell 2000 index of small cap shares higher by about 0.8%. We are seeing a rally in several tech giants. They are lifting stocks amid speculation that the AI trade that has powered the bull market does have more room to run. The stocks, the Philadelphia Stock Exchange Semiconductor Index up by 3%, with a VIX below 16 and a 10-year now at 4.48%. We've got the 2-year yielding 4.12%, the 30-year right at 4.99%. Gold lower by 0.4%, 41.60 the ounce, while West Texas Intermediate crude trading down by 0.3%, 68.50 a barrel. Brent 71.96, barrel of Brent down by 0.2%. Job cuts at a major tech company. Microsoft's Xbox plans to eliminate 3,200 jobs, roughly 20% of its staff over the next year, all part of a massive reorganization to spur growth in the struggling gaming division. Microsoft shares today, they are trading down by 1.2%. Recapping, NASDAQ up 1.2%, the SOX gaining 2.9% with a 10-year 4.48%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Well, it feels like folks are homing in again on the hyperscalers. Feels that way, at least based on some of the Wall Street chatter. Just this morning, two voices on Bloomberg Surveillance weighing in on why it might be time for the hyperscalers to shine again. Here's Max Kettner. He's Chief Multi-Asset Strategist over at HSBC Holdings on Bloomberg TV's Surveillance again this morning. Mike Wilson, who leads Morgan Stanley's team of strategists, he also joined the surveillance team again this morning.
Given that drawdown in the hyperscalers, the expectations now are much, much lower. We're starting from a much, much lower base. I do worry that people once again are too neutral, a little bit too much on the sidelines, too worried about things going wrong. And actually, we are getting a bit of a summer melt up into July and August.
I expect the hyperscalers now to stabilize. That's what's going on in the last couple of weeks. And the semiconductor stocks are going to correct. That's a good development. That doesn't mean the CapEx cycle is over, but that ebbing and flowing between the two is a natural kind of governing factor.
Just some of the things that make this market so interesting. That Max Kettner over at HSBC, Mike Wilson of Morgan Stanley, again, earlier on Bloomberg TV Surveillance. Everyone watching the run-up in chips, we just talked about with our Ed Ludlow, SK Hynix getting ready for its U.S. listing on Friday. We want to get into, though, what we feel like is the evolving AI story. Ed is here with us in studio, and then we want to bring in longtime investor Rudina Cesari. She's founder and managing partner at Glassweek Ventures. She invests in companies where AI is the core architectural foundation, and so she's been thinking about the next generation of winners. She joins us from Boston. Hey, great to have you here, Rudina, with Emily and, of course, with Ed. I'm curious about how this conversation around AI continues to evolve. We are now talking so much about the memory names. How do you see it?
Well, hello, Carolyn. Good to see everyone. I think fundamentally we are seeing the overall demand for AI-related infrastructure and all the way up to the application layer continue to be strong. And in my view, the shifts that we are seeing in the market sort of reflect the scarcity or overestimation of scarcity along the value chain. So on the point around NVIDIA and others, are we seeing the correction because we expected more scarcity? Well, on the hyperscalers, are the valuations coming back because it's becoming a lot easier to track the sources of revenue that these players will have? And oh, by the way, we think of the hyperscalers as that sort of fundamental layer at the software infrastructure layer, but each of them are much more vertically integrated with their own chips. So in many ways, we're seeing the market move toward vertically integrated players from the chip layer all the way to the foundation models rather than just the CapEx spend. I don't know that we're out of the CapEx demand. I think there's a multi-cycle, multi-year level of demand. I do think that perhaps we're correcting a bit for the overestimation of scarcity.
You mentioned revenue, and I'm curious, Radina, if you can talk a little bit more about just how critical it is for investors like you to be able to pinpoint whether the spending on AI is actually translating into tangible revenue and whether we've seen that yet.
Thank you, Emily. I think it's interesting because I'm a very early stage investor, so I often say I back two brilliant researchers out of a lab and we build out a monetization plan. If anything, I would bifurcate between the next gen application layer AI companies, where not only are we seeing revenue, but the scale from 0 to multi-million, hundreds of millions is a matter of months, rather than a matter of years. So if anything, we are seeing acceleration. Now, beneath that, two fundamental questions. Why? Is it because, especially on the enterprise side and even consumers, we are all experimenting and trying a lot of things, thus is the revenue sustainable, or is it a leaky bucket? Second question, though, is really pertaining to the adoption of AI more systematically. So having moved beyond the, I'm going to experiment with this in-house build tool or with a, chat function of Claude or ChatGPT to something more serious. In that case, we're seeing demand for AI products to become much more of a important component, not just to the tech stack of enterprises, but to their actually business models and go-to-markets.
Radina, what's interesting about what you and the team at Glasswing are looking at, it's so timely for today with this Morgan Stanley hyperscaler story. So you are looking at AI native SaaS, various layers of the software stack. Every time I speak to one of the CEOs at the hyperscalers, I always ask them, you seem to be pitching and working on the same kinds of technologies that your customers already do. So how do you respond to that? The idea that the hyperscalers, the cloud computing companies, let's call them what they actually are going to want to offer the same tools that you might back at that early stage?
So thank you, Ed. The underlying question is, where is the moat for the startups relative to the incumbents? And I think the moat depends. Some of it has to do with, vertical plays. I recently backed a company called Modern Industrials. They are developing an end-to-end demand planning for distributors of lumber and building materials. Very, very specific, tens of billions type of opportunity a year in terms of the revenue they can generate. But if Microsoft or Anthropic or OpenAI are going to that level of specificity, we have something to worry about. By the same token, who will be their customers? So they have to draw a line, to your very astute question, around where am I going to stop competing with my customers? And, oh, by the way, is there value in being highly, highly specialized? My view is that there is, and the value doesn't necessarily lie in the models. It actually lies in the highly specific, albeit not as broad data sets, which then, deliver much, superior outputs.
I would say if I'm a pharmaceutical maker or like in the medical field, right? And I would say that I want a data set that I'm going to play with and that's very related to my field. I don't need to know about the rest of the stuff that some of the large language models are doing.
Yeah, or they
100%.
Or Radina, something you said a moment ago is really interesting. You are backing not companies necessarily. We'll work out the business plan later. You're backing the researchers out of the lab, and that applies at the late stage as well, right? The founder-led thesis. But those people also have specialisms, right? Does it matter to you if they have a core team of not just computer scientists, but in biology, biochemistry, etc.?
Yeah. So let me parse what I intended with what I shared. In the case of the Modern Industrial, I'm very much going in with a very clear understanding of how it's monetized, what's the ROI for the customer. So in many ways, that's extremely tangible and very clear around the TAM, pricing, competitive dynamics. My earlier comment related more to what I would call frontier tech. So we have already achieved what we have achieved with the large language models. What comes next? We backed a company called Recursive AI. It's about the models correcting themselves to get around the next set of issues like hallucination and other problems that the large language models have. There's a whole paradigm of neo labs and new researchers that are bypassing in many ways the capabilities of the current incumbents. Think about Liquid AI, multi-billion-dollar company. They're actually doing all the processing at the edge. It's actually a whole different sort of way to bypass the need that we currently have on compute. So in those cases, you solve one of the compute problems or the energy problem or the the performance of the models, and then you worry about monetization. So it's not pie in the sky, I'll beg these smart people, and someday they will deliver something. It has a purpose, but you might not know the pricing. Kind of like how many of us would have guessed that pure consumption pricing was going to be the model. Does that make sense?
One contemporary difference, though, is that group of 3 or 4 people can raise $1 billion out of the gate or several $100 million seed round at crazy valuation based on the value of their own intellectual capital. How does Glasswing even participate in early stage valuations like that?
Very good question. So our core product is actually, the more typical pre-seed seed stage rounds. We have a pool of capital and a product called access checks, where we write, small $1 to $2 million access checks in these gigantic rounds to have a seat at the table, to have a seat to the ecosystem, to support the founders and participate with those that actually make it big. So while our core checks are focused on building the companies from the ground up in the more typical fashion that you think of early stage venture, we absolutely get access to the big guys, and it's important. There are benefits for both.
Hey, speaking of the big guys, I just got time for maybe 1 or 2 more last questions. I'm thinking about SpaceX, which does go into the NASDAQ 100 at the end of trading today. XAI, what's your thought about that company, which seems to be, to some extent, coming from behind, but it's got certainly deep, deep pockets?
It's emerging more and more. I think, in many ways, I think of Elon's companies as all being intertwined with one holding, and the holding being Elon himself. I think it will be interesting to see what he does with XAI vis-a-vis SpaceX, and maybe even what happens with Tesla eventually. They are catching up. I think performance has improved, and to be perfectly honest, in the circles that sort of are leveraging the most cutting-edge models, XAI is starting to become a real contender. Definitely coming from behind, though.
Are people are talking more about XAI?
Yeah, increasingly.
A lot more than before.
Increasingly because of Cursor,
more.
Right? Like the Cursor acquisition moving so quickly, people pay close attention because it's such a widely used tool.
All right.
And yet, even with Cursor now, the next generation is saying we've bypassed Cursor. So things are moving so very fast. I go back to what becomes sustainable versus what is the flavor du jour. We shall see.
And it's fascinating, too. Radina, thank you so much. Radina Cesari, founder and managing partner, Glasswing Ventures. We always appreciate your view. I have to say, more and more conversations I have with folks where companies are using a lot of different LLMs. They're saying they're starting to get more discretionary in terms of who's got access to what, because there is a cost.
Well, real quick, the reason people loved Cursor is you could swap in Anthropic, OpenAI, Gemini model and change it. Now Elon owns it. They're going to be allowed to do that? It's a big question.
It is a big question. Hey, listen, I'm so glad you're here this week. We're going to reach out to you a bunch. Sure. Of course, our Ed Ludlow. Catch him on Bloomberg Tech, 11 a.m. on Bloomberg Television. Coming up, when we come back, we've got to talk a little bit about oil and the catalyst, Saudi Aramco. That's coming up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all advancing right now. We're looking at a rally in several tech giants. That is lifting the overall market amid speculation that the AI trade that has powered the bull market does have more room to run. Right now, the S&P is at 75.38, a gain of 55 points, up by about 0.7%. Dow Industrials now higher by 61, up 0.1%. NASDAQ up 1.1%, with the NASDAQ 100 index up 1.3%. This with the SOX up by 2.6%. That is the Philadelphia Stock Exchange's semiconductor index. The VIX right now just below 16, with the 10-year at 4.47%, the 2-year 4.12%. And spot gold now down $11 the ounce to $41.64, down by about 0.3%. West Texas Intermediate crude oil down 0.3 now, $68.49 a barrel. Brent, the global benchmark, $71.94, down 0.2%. Keeping an eye on Bitcoin at 63,746 on Bitcoin, up by 1.7%. Michael Saylor's Strategy did sell 216 million of Bitcoin last week, marking the first major step in the financing overhaul that the company unveiled in recent days. Shares of Strategy, formerly known as MicroStrategy, up now by 0.6%. Again, recapping, S&P higher by 57, up 0.8%. The NASDAQ 100 index rallying by 1.4%, with the SOX up by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, Charlie there with a market update. Hey, among our most read stories on the Bloomberg today, Saudi Arabia making big reductions to its main crude oil price for buyers in Asia, selling barrels at a discount for the first time since it embarked on a price war in 2020 as a surge of global supply is heightening competition to find buyers. State producer Saudi Aramco will lower Arab light oil for next month by $11 a barrel to $150 below the regional benchmark. This is according to a price list that they put out today. The retreat, though, underscoring the speed that we've seen with Persian Gulf producers that have really ramped up flows through the Strait of Hormuz after an interim U.S.-Iran deal. I mean, this is something, Emily, I think it happened faster than we thought. We've seen either more oil come out on the market. I think we were concerned about the repairing, the rebuild, as a result of the U.S. war in Iran, but it does feel like there's a lot more oil that's come through.
Yeah, and you're seeing there was already pressure on prices already after the ceasefire. Oil prices were coming down. You have to wonder how much more now this is going to weigh on global oil markets, and I think we have a perfect guest to talk about all this, Carol.
We have a great guest, and we do see both WTI and Brent crude slightly lower today. Both have slid about 30% since mid-May, so we've seen quite a pullback. Dr. Ellen Wald is the voice that we wanted to talk to. She's president of Transversal Consulting, senior fellow at the Atlantic Council. She's also the author, of Saudi Inc. It was published in 2018. It detailed the history of what is, I don't know if it still is, the most profitable company in the world. We're talking about Saudi Aramco. Ellen is with us once again in Boca Raton, Florida. Ellen, you are the voice that we wanted to talk to. What's your read on this? Is it a surprise? Does it make sense in terms of what we're seeing out of Saudi Arabia and Saudi Aramco?
So I think it's interesting, mostly because Aramco has traditionally done most of its business, in Asia in long-term contracts. So they've got long-term contracts for crude with Chinese refineries, Chinese petrochemicals, Korean, Japanese. They've got a lot of their kind of long-term contracts. They've got that basically locked up. And so what we're really seeing here, I think, is a very temporary situation in which there's a lot of crude oil that needs to move out of the Persian Gulf, basically to get things unplugged and get things moving again. So you had oil that was sitting in tankers, that had already basically been, bought, that was just waiting to go. And we've seen a lot of that start to get moving out of the Gulf. But now we're seeing oil that's basically sitting in storage tanks onshore storage that also needs to get moving. And they've got to get this stuff moving in order to get back to, what we call normal business. Remember, we're also seeing, a lot of declines in terms of gasoline, diesel, and other petrochemicals. oil and other petroleum products in the Middle East, they've got to get this stuff unplugged so that they can get back to selling these other cargoes as well, if that's possible, to move them out of the Strait of Hormuz. And so the lower price, I think, reflects a lot of that backup, that they've got to lower the price enough to make it to make it likely that Asian buyers will snap up these cargoes, and also to make it worthwhile to charter a tanker to go into the Persian Gulf, collect this stuff, and get out, because that is in no way assured. That process is still very much up in the air. And so I think that this is not necessarily something that we're going to see happen in the long term. This is a temporary thing just to get that market unplugged, so to say.
Okay, so you have to imagine, though, right, that if one producer is cutting prices, that's going to weigh on global oil markets more broadly, right?
Exactly. And it is weighing on global oil markets more broadly, but it doesn't necessarily indicate that we're in some sort of oil glut. It's sort of like there's a glut in the Middle East because there's a backup getting things out, and that does impact prices all over the place. But for example, someone who's trying to sell oil in, say Houston, or sell it in the Gulf of Mexico, isn't going to have the same tanker issues as someone in Saudi Arabia. So they can command a higher price, not necessarily as high as they would like to on the market, but because what's going on in one place does affect prices elsewhere, but they don't face the same issues getting a tanker in and out, for example. So we're really just seeing a lot of disconnect in the market. We're also seeing these issues with gasoline and diesel. Gasoline prices are much higher than oil prices would indicate they should be. And that's really because, we don't have enough refining capacity for the oil. And so they can't reduce their prices until either we get all of these kind of kinks worked out of the system, or we see more refining capacity come online.
So, Ellen, it isn't like a bigger story of Saudi Aramco, or are they as powerful as they were when you wrote that book back in 2018?
They're extremely powerful. They've made a lot of money off of this crisis. I mean, it's not ideal for them. Okay, they prefer to have oil prices fairly stable. They prefer to sell their oil and deliver it to their customers with great regularity. They would prefer not to have had to have cut production. But overall, this price cut is probably not seen as a major blow for them. I mean, there was a point where they were selling cargoes for over $140 a barrel. Mm-hmm. So they've made plenty of money. I think what they'd like to do is get things back to where they were. They'd like to be pumping more oil, producing more products, selling those cargoes on, get the supply chains running again. And if they have to cut the price on their oil to get it out there, to get China to buy it, to make it worthwhile for China to buy it, just so they can, fix the plumbing, so to speak, then they see that as worthwhile. Because they're in it for the long run.
Right. How long does it take to get the plumbing fixed, essentially? Like, are we talking about a couple of weeks here?
Have you ever tried to call a plumber? It just takes a while.
That is definitely the question. It could take several months. It could take less. The market is incredibly resilient, but it also depends on a lot of factors, such as whether China is going to be enticed by these lower prices and willing to, remember, China cut between 4 and 5 million barrels that it was importing. Is China going to say, hey, these are great prices, so we're just going to, send those tankers in and, whatever happens, we'll see what happens. We're willing to take the chance because the price is so good, or are they going to be more hesitant? Are they going to get back to, producing a lot of gasoline and selling it around Asia, or are they going to be more hesitant? That's definitely one factor. And so the same thing is with Iran. Are they going to clear the mines from the main corridor in the Strait of Hormuz, and will that be able to be used reliably, say, in a month? Or are we stuck with these, Iranian northern lanes and American southern lanes?
Ellen, I have to jump in just because we got 30 seconds left here. I am curious about China because they are, of course, so important in terms of being a buyer of oil, and in particular Iranian oil. But they have showed that they want to move towards make a greener transition even more quickly. And this has happened before, where nations don't want to be dependent on another country for oil, and China doesn't make its own. So are we just going to see more of that? Just quickly.
Well, I think we've seen that China is not dependent on foreign oil for necessarily. They managed to cut their imports by a lot and still maintain economic function. But I don't think the answer is because of green improvements.
All right. Good stuff. As always, thank you so much. You're a gem. Thanks for coming on this Monday. Dr. Ellen Wald, President of Transversal Consulting, Senior Fellow at the Atlantic Council. Her book back in 2018, Saudi Inc. Hey, when we come back, we're watching the markets and we're watching stocks on the move. Emily Grafeo and I, back in a moment.